A redhead earlier in the hour, they no longer expect to meet their full-year volume guidance. And then we have BBVA, the CEO, saying that he expects the vast majority of their institutional investors who hold shares in Sabadell to accept his bank's offer for the smaller rival. So all of those in focus at the open, Guy.
Absolutely. We turn our attention, though, first and foremost to what is happening in France today. Here we go. It is time for the opening trade this Monday morning. French politics back in the spotlight as we watch what happens with the French government or where it goes next. The FTSE 100, as ever, out of the gate first, but it is doing very little this morning. We'll break down the sector components in just a moment and see what is happening with those mining names, plus also some of the oil names could be in focus as well. The IBEX, the Spanish bank story, is present there. We're watching what's happening with BBVA and Sabadell as the clock continues to click down to the final moments of whether or not we are going to see investors backing or not backing that deal. The CAC is the story there. That was the moment I was waiting for. There you go. The French market is down by 0.6%. If you're looking for a theme this morning that's running through all of these markets, it is politics. You can see it in Japan. You can see it in Europe, in France. You can also see it in the Czech Republic as well. But you can also see it over in the United States. Politics is one of the key drivers right now in the way that it hasn't been for a while, but it certainly is now. And the CAC Quarante is now down by 0.7%, Lizzie and Val, as it continues to drop. What are we seeing in terms of the component breakdown of that move?
Look, well, let's take an eye on the sectors. We do have only 5 in the green, the remaining 15 in the red, and at the bottom of the basket there is banks, down some 0.5% as a sector. If I open up there, that sector, we do see French banks trading lower. Soc Gen down 3%, Credit Ag down 2%, BNP Paribas down 2%. So this is a macro story, at least for the OAT market, now hitting some single stocks so far in the first moments of trade. At the top of the basket, we do have energy. Now that is down to OPEC Plus, their decision over the weekend to increase production, but not as much as some had penciled in. That boost in oil prices is seeing some of these energy stocks trade higher this morning.
Yeah, so Brent up 1.5%, the oats bun spread at 84 basis points at this point. Just some of the other stocks that we had flagged, of course, coming back to the macro moves, we have gold flirting with $4,000 and Fresnillo benefiting again this morning, up 2.4%. Similar moves actually for Stellantis. We'd flagged that they're planning $10 billion of investment in the US, so those shares benefiting as well. BBVA, another one that we'd mentioned, those shares down 0.9% at the moment. And also, I had just added to my stocks to watch EssilorLuxottica, because you'd flagged, Guy, that Nikon shares had jumped about 6% after EssilorLuxottica had raised its stake. So on the flip side, those shares down a little touch.
Tech is up.
Yeah.
ASML, yeah, biggest points.
Second day in a row.
Biggest points gainer, up by another near 2% this morning. More positive news continuing as we watch the foundry into NVIDIA, into end market kind of use case continuing. But ASML obviously at the bottom of that food, well, top of that food chain, depending on your point of view. It starts off the whole process. Lithography equipment is the kits that you use to make the chips and kind of make the machines to make the chips, and kind of it sits at that kind of critical point. It is up very nicely. The real kind of mix in terms of the pharmaceutical stocks, though, this morning. Astra up by 0.8%. But you're seeing GSK down by nearly 2% this morning. So a much more mixed and less concentrated pharmaceutical trade. Roche is also tracking a little bit higher. Novo Nordisk is also tracking a little bit higher. So that's interesting that we are seeing a little bit of a breakdown. We'll break into that and figure out what is happening and why GSK is moving to the downside in just a moment.
Well, let's focus in on French banks and perhaps what the French market is telling us so far this morning, and bring in our guests here around the table. John Bilton, the head of global multi-asset strategy at JP Morgan Asset Management. John, we're seeing French banks in the red, OAT yields up some 6 basis points in the 30-year sector. When do French politics start to erode your bull case for European equities?
Well, I think if anything, they probably give us an entry point. I mean, look, this is Europe. We have 20 countries in a single currency with an average election cycle of every 4 to 5 years. We have an election every quarter. You know, this is not something that is new news. The French deficit has been an issue for some time, and the fractious nature of the French Parliament is something which I think markets are absorbing. I think the move we're seeing in the French banks, remember, bear in mind, the interesting thing about Eurozone banks as a whole is over the last 5 years, in dollar terms, they've actually outperformed the Mag 7. So any excuse to take a bit of profit may happen, but also bear in mind that in this single market, we actually have very few areas where we can express a political view through markets. And banks, together with the OATs, are really the best way for investors to be thinking about how they might hedge an otherwise constructive Eurozone view. So I don't see this as being something which is necessarily new news. I think it's a reasonably lucid reaction, and it gives me a bit of comfort that investors are treating this as being a local French issue as opposed to something which is affecting overall Eurozone confidence.
Well, it's interesting to see this local French issue happen at the same time that we had a surprise election result out of Japan that has also tempted their own back-end yields higher. So now we have 2 governments at the moment having issues in the back end, small issues, nothing is destabilized. But does that perhaps worry you that we're having these fiscal dominance moments happen at the same time to some of these governments?
Well, look, I think it's part of a bigger trend. If we look over the long run, we spent a decade and more with this big monetary experiment where we tried to bring down debt to GDP by shrinking the amount of debt. And eventually, you know, governments, voters, policymakers got sick and tired of the drag on growth. So this is another attempt to address this by building out fiscal side to potentially invest in productive assets. Whether that will work or not, open question. But it is a marked change in policy and something which is affecting the US, the UK, Japan, Germany, everywhere. So yes, this fiscal dominance we do think is becoming a feature, and it does warrant steeper curves. But bear in mind, at the same time, we have a reasonable amount of savings, particularly across the Eurozone. 15.3% is the highest level of savings we've had, excluding the pandemic years. Japan is a famously high savings rates economy. So as a result, you steepen those curves are, it will bring demand in at the back end. So to my mind, this is a lucid and rational repricing of that fiscal position, as opposed to necessarily something which is bond markets in panic.
John, can we turn to the US? In your notes, you see the US re-accelerating. Does the private survey data from last week change your mind at all?
Not really. I mean, I think the issue at the moment, obviously notwithstanding the shutdown and the lack of data, we know that there's some volatility coming through in labour markets. So we know that we've got to account for some of the workers who took the buyout offer at the beginning of the year. We know that some of the temporary permits that have been issued are expiring and not being replaced. That may affect payrolls, won't affect jobless claims. So we think that we're coming up on a period of relative noise in the data as a matter of course. But if we look at job openings, quit rates from some of the private sector data, actually it's showing a labour market which is sluggish but not rolling over. So we feel fairly confident there.
So the Fed doesn't need to cut then?
Well, does the Fed need to cut or not? The answer to our mind is the Fed probably is sitting a little bit above what its long-term fair rate is. So if we've got a situation where you are worried about the inflation rate, the jobless rate, and when you look at the inflation rate, the view is, okay, if we get tariffs coming through, it's a one-off price level reset, as opposed to the acceleration, then judgment call probably is to bring it back more to neutral. So does the Fed need to cut aggressively? No. Is the Fed in a position where it can get away with bringing forward some cuts, which is what we think has happened? Yes, we think on balance they probably can be justified. There
were so many articles this weekend about whether or not there is an AI bubble. So many. They were everywhere. How many client conversations are you having about that subject at the moment? What is your answer to those that ask that question?
Well, now we've got no payroll data, probably more questions about that.
Well,
but
yeah.
you know, devil makes work for idle hands and all that. But the point being that I think, you know, when you see assets trade strongly upwards, it makes sense to ask what's going to drive them further.
Yep.
And if the answer comes away as, not very much, it's greater fool theory now, then sure, start thinking about bubbles. If the answer turns out to be strong cash flow generation, strong earnings growth, strong demand growth coming from end consumers, then actually you'd have to argue.
Can you answer any of those? Can you answer any of those questions yet?
Well, I think that what we can see is the cash flow growth. I mean, if we look at earnings growth on some of the big tech names, we're seeing these compounding up at 50% year on year. What we're seeing is around about a 25% cash flow generation rate that's growing at 5% a year across the large tech firms. So we're seeing firms which also, if you leave them going sideways for very long, because of that cash flow and earnings generation, they cease being growth stocks. They become value stocks very, very quickly. So right here and now, I think we're not in what one would argue is an AI bubble. We are in a chasing earnings growth. And at some point, if that were to disappoint, then I do think that you have some potential for profit taking. But these are well-run, strong businesses that are actually doing what they're supposed to do, generate profits and generate cash. It's very different from the 2000s when we were seeing a lot of money chase profitless companies. So I would argue, by all means, absolutely should be checking regularly bubble statistics, but it's a check and verify mode at the moment. And at the moment, I'm confident that we're seeing the earnings coming through.
Same argument with gold?
Gold's an interesting one.
There's a quite sharp intake of breath there.
I heard you saying on your previous segment that, you know, when are we going to see a turnaround? I think at the moment, it does feel like a momentum trade. I guess the thing that concerns me about gold is not that it makes sense in a portfolio context, it's uncorrelated, it gives an inflation hedge, etc. It's the characterization of it as a purely safe asset. Here's an interesting thing. US Treasuries, past 10 years, average volatility 30-day, about 5.25%. Volatility S&P 500, 16%. Gold, 13.5%. It's much more like a stock market type of volatility than a bond market type of volatility. So it does a job in a portfolio, hedging against deficits, as we talked a moment ago, hedging against inflation fears and currency debasement. But at the end of the day, it's not a replacement for your stock of treasuries.
John, in your mind, what's the biggest risk event in Q4?
Well, I think the biggest risk event in Q4 is probably, to my mind, would be an overstatement of some of the geopolitical risks that are doing the rounds. I think as investors, you know, we spend a lot of time wondering what could unseat markets. But if you actually look over the long run, actually markets pay little attention to geopolitics. If you go back and you take a simple 60-40 balanced portfolio and you look at it against cash and you invest it 1 month before a major risk event, actually after 3 years, it's outperformed cash in every case by an average of about 20%. So the biggest risk to me is investors getting overly worried and then end up having to chase a market which recovers quickly. There's a lot of cash on the sidelines. I think we can see that from the price action in Tokyo. I think we can see it from the $7-odd trillion that is sat in money market funds right now. To my mind, investors getting spun around and getting out of markets too soon on geopolitical tension is, to my mind, a bigger risk that investors have got to weigh up when they're asking questions about bubbles, deficits, currency debasement, Fed, etc.
Stay invested.
Robo, risk of being out.
Just the amount of money that flows into passives is kind of fascinating as well on that front, and just kind of this mechanical process of money moving in. Great to see you.
Good to see you too. Thank you.
John Bilton, Head of Global Multi-Asset Strategy at JP Morgan Asset Management. Let's take a look at the Core 6 this morning, figure out what is happening there. We are obviously watching very carefully what is happening with French assets. Tech, though, is on the front foot. It's interesting, defence stocks are holding their ground this morning. Very mixed picture in the pharma space. Elsewhere, as I say, we are watching what is happening with the French stock story. We're also watching very carefully what is happening with some of these auto names too. Chloe Melly, what's going on?
Good morning, Guy. Let's start with Stellantis. So Stellantis is actually up this morning. So this should be a thing that says that it is up this morning on the back of that report about the $10 billion in investment in the US. So this is a shift in strategy away from investing a lot in Europe and moving production to Mexico, and instead moving towards refocusing on that US market. So the shares are up this morning on the back of that shift in strategy. Moving over to French stocks. The French stocks are a little bit weaker this morning as the Vinci, Eiffage, Société Générale, BNP Paribas all in the red this morning as the French government is on the brink of collapse. So Macron's decision to appoint a broadly unchanged cabinet really sparked backlash among opposition parties, and now it makes it really a make or break week for Sébastien Lecornu, the Prime Minister. And so we see that weakness across those construction names, so Vinci and Eiffage, but then also the banks, so Société Générale, BNP are also weak on the back of that this morning. Moving over to Fresnillo, the gold miner is up after gold hit yet another record. That is because the US government shutdown is dragging on and is really spurring on that flight to safe haven assets, and it's making it's really good news for Fresnillo, which is up 2% this morning and is up 3 digits so far this year. And finally, let's move on to SEB Group, which is a French company that makes household appliances, and it is down taking a real beating this morning after cutting its sales outlook because of weakness in Europe, and we can see the shares now down 23% this morning for SEB.
All right, what a move. Chloe Melly from our equities team, we thank you for those stocks on the move at the open. And we're going to dive into one of them in just a moment. Stellantis reportedly planning $10 billion of US investments as the car maker looks to boost its brands. We'll have more on that story for you next. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China? When they wanted to poke holes in the relevance of something. Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back to the opening trade. We're 18 minutes into today's session, and we're treading water really across the European continent, except in France. Shares down 0.7% off the back of the politics. This new cabinet, pretty much very similar to what we've seen before. So not a lot of traders impressed by this, and we are seeing the reaction in the bond space as well. But in terms of our stocks to watch this morning, we already flagged Stellantis. Those shares currently up 1.8%. This after our Bloomberg scoop that Stellantis is reportedly planning $10 billion of US investments as the car maker looks to reclaim the past success of the Jeep brand. We can get more now on this story with our Global Automotives editor, Craig Trudell, who joins us around the table. Craig, how fast is this money going to come through, and how much of it is actually new money?
So earlier this year, there was an announcement. Conveniently, it was right after Trump retook office. It was about $5 billion worth of investment. Some of that was committed to as part of the latest agreement with the United Auto Workers Union, reopening a plant in Belvidere, Illinois, that had been closed under Carlos Tavares. Building a mid-sized pickup there. I think there's a lot of investment that is needed for this company after the amount of sort of starving that was done under Tavares. And also, this is a company that, despite the fact that they are just coming off of a little bit of a pickup in sales, has seen this really sustained decline in sales over the last few years in the U.S. And before this return to the White House on Trump's part, you had actually a senator a new senator talking about maybe this European company led by Europeans should offload their U.S. brand. So there's kind of this bit of animosity in Washington that has been soothed by the fact that we've seen John Elkann try to patch things up the last few months.
Well, Craig, balance this out for us. How much is this investment really needed, or is this really seen by a move by Stellantis to placate the White House?
I think this will take part over several years. I think a real question will be just how much in the process of trying to satisfy this White House do they end up kind of starving Europe the way they starved North America for a time. And there's real concerns, I think, in France and in Italy in particular. Some of those brands, Alfa Romeo, Fiat, really are underperforming and probably need some of the TLC that now Jeep and Ram are getting. So will there be maybe some satisfaction in the White House? I suspect so. I think another thing that's coming into play here is recently the Trump administration announced new tariffs on medium and heavy trucks. And Stellantis builds Ram pickups down in Mexico. If they don't make an investment to address that fact, that will be something that we reported just last week. There's this sort of intra-Detroit debate over that fact that GM and Ford make their big pickups in the U.S. and Stellantis does not.
Talking the White House, Aston Martin makes its cars and SUVs in Wales and in Warwickshire. Quite a long way away from the United States. Indeed. And that's a bit of a problem.
It really is. And so we're seeing them, do a profit warning second time this year.
Yep.
There's a funky sort of quota system that was in the fine print of this agreement between the U.S. and the U.K., where somehow, some way, as an industry, we're going to have to agree to who can ship what.
Yep.
I think our very own Chris Bryant in Bloomberg Opinion did a great column about this a few months ago. How the heck do you make that work practically? There should be plenty of room for a company of Aston Martin's size being able to, sort of get its portion of that, especially now that we've just in the last few weeks had Jaguar Land Rover with its cyber attack. Maybe that makes things less urgent, particularly over the next year. But this is absolutely going to be a mess if it's not addressed a little bit more clearly. And I think we should also call out the fact that this is a company in Aston Martin that just has not executed well for years and years now.
All right, Craig Trudell, Bloomberg's global automotive editor. Thanks for joining us on the latest on the auto space. Well, over to the banking sector. Just 4 days to go into the deal deadline, and BBVA's chief executive says he expects the vast majority of institutional investors will hold shares in Banco Sabadell to accept his bank's offer for its smaller rival. Bloomberg's Spain bureau chief, Rodrigo Orella, has the details. Rodrigo?
Yes, the bank, the bidder, BBVA, is convinced that this is their big winning card. They think that there's as many as 30% of Sabadel's shareholders who are institutionals, and that these, because they are quite complex and educated in financial issues, they will all see the advantage of this and will all go to the deal, because staying in Sabadell doesn't make much sense in BBVA's argument. So that would give them 30% of Sabadell, in their view, ahead of the deadline on the 4th. The big question then is what happens with the passive investors, which they say is maybe hold about 20 to 25%. BBVA believes half of those will, just because of how passive investment works, go to the tender as well. And that leaves the big issue in Sabadell, which is 41% of the shareholders who are retail investors. And most of those are also Sabadell clients. So the big fight right now is going on around there. Either way, if BBVA's numbers are correct, and all these investors, institutional and passive investors go, they would already be pretty close to the 50%. Now, what we're all wondering is their maths, are they doing the maths right or not?
Absolutely. And the clock is ticking. Rodrigo, thank you very much indeed. Spain Bureau Chief, our Spanish Bureau Chief, Rodrigo Orihuela. Bloomberg is learning that Boeing is guiding its suppliers towards the fact that the 737 MAX output could be about to be hiked. Remember, it's FAA restricted at the moment in terms of the capacity that it can deliver. It's a sign of growing optimism that the plane maker is going to get a little bit more wiggle room from US regulators. Joining us now, our aerospace reporter, Kate Duffy. Kate, what does this mean for Boeing? What does it mean particularly for its customers that are waiting these aircraft?
Well, this is a crucial step for Boeing because it means it can increase the production of its cash cow jet. That's the 737 MAX. So the more MAXes it delivers, ultimately the more cash that brings to its balance sheet. So the latest that we're hearing is that the 737 MAX output could be increased to 42 jets this month. And we could have 2 more hikes next year, meaning that the output could be up to 53 a month. And so this is something that Boeing has really pushed for a while for the FAA, and this follows obviously the door plug blowout on the Alaska Airlines jet last year. And this is really music to customers' ears, especially the likes of Ryanair. You know, they've been blasting Boeing for the past year about how they're not able to ramp up their growth and their network because of the lack of aircraft coming through, and especially for the 737. So this seems like it's likely to happen. Chief Executive Officer Michael O'Leary was really optimistic about Boeing last month when he spoke to us on the ground in London. So this really takes Boeing, matches Boeing with Airbus almost, and yeah, I mean, we'll wait to see what happens.
All right, thank you for the update, Kate Duffy, our aerospace reporter. Really helpful to get that. But coming up on the programme, we're going to take a look at oil. OPEC Plus cautiously increasing its oil supply despite the signs of an emerging surplus. You can see that Brent at $65 a barrel on this more modest increase than perhaps expected. And we're going to dig into this next with Carol Narkley, CEO of Crystal Energy. That conversation coming up next. This is Bloomberg.
Said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive. getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance. Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets. This is the opening trade. We're 30 minutes into today's session, and you wouldn't know it by looking at this screen that we've had the Nikkei hitting an all-time high on the victory of the Japanese Iron Lady, that pushing US futures higher. It's not very enthusiastic when it comes to this because we here in Europe are focused on French politics. The CAC 40, really the underperformer this morning, down 0.6%. Not much of a change when it comes to that new cabinet named, and disappointment when it comes to the oats bund spread, disappointment when it comes to French banks weighing down the CAC 40. Guy, what are you looking at under the hood?
The European market doesn't know which way to go this morning. Does it go down or does it go up? It's kind of just sitting there doing nothing. We're not Japan, we're not the United States, we're doing nothing today in Europe. 300 stocks are up, 273 are down. That tells you everything you need to know. Nice balanced market, no volatility, everything balances itself out. Volume's up a little bit versus the 20-day average. We're up by 18% this morning. But it's a very balanced market. There are actually some quite interesting 52-week highs and lows, so I'm going to give you the excitement of those now. ThyssenKrupp is up by nearly 2%. Look at ASML. The tech trade is on once again. ASML is the key beneficiary of that. AstraZeneca also rising quite nicely, up by 0.9%. There's a number of big stocks making 52-week highs today in Europe. That is worth paying attention to. There's a few lows, but they're less well-known names. SEB. So Val and I both made the same mistake. We saw the headline this morning, and we thought, my lord, this is a Scandinavian bank that is having a major crisis this morning. It's not. It's the maker of kettles and dishwashers and all that kind of stuff in France. SK is actually the code you need to go to if you are looking for this stock. It's had an update this morning, third quarter update. The market does not like what it hears. It's hearing basically that they're telling a story of low demand in Europe. And look at what is happening with the stock. It's being absolutely battered. On a one-year basis, we're now down by nearly 50%, and we take a sharp leg lower, Val, this morning. It wasn't SEB, it was SK.
Kettles, not banks. So here's what else you need to know this morning. The Nikkei soars more than 4.5% after a surprise ruling party vote puts pro-stimulus Takaichi on course to become Japan's first female prime minister. The victory has reduced expectations that the Bank of Japan may hike interest rates while raising worries about more debt supply to finance the stimulus. And over to France, where the French President Emmanuel Macron's decision to bring back a largely unchanged cabinet is sparking an immediate backlash from his opposition parties. The decision threatens Prime Minister Sébastien Lecornu's chances of surviving a crucial week in Parliament. Macron reconfirmed most senior members of the cabinet to their original post, but named a close ally, Roland Lescure, as finance minister. Oil has jumped after OPEC Plus agreed to raise production by a modest amount. staving off traders' fears of a supersized increase. At a meeting on Sunday, OPEC and partners, including Russia, backed a 137,000 barrel a day increment. The group's latest decision came despite an earlier difference of position between co-leaders Saudi Arabia and Russia. Guy?
Let's talk a little bit about what is happening with that oil story. Carol Nachle, CEO of Crystal Energy, joins us now to give us a take on what we learned from OPEC. Carol, in some ways, this was a much more muted response from OPEC. Are we reaching the limits now of what it can do? Are we getting to a period of stability?
Yeah, it depends really on how you read it, because yes, you can say it's a modest increase because some people were expecting a much higher unwinding of barrels of the voluntary cuts of the 1.65 million barrels a day voluntary cut, which were the second tranche of voluntary cut introduced by 8 members, especially after we saw how over the summer they unwinded their first tranche of 2.2 million barrels a day quite rapidly. So therefore, today to see 137 barrels a day, maybe some people must have seen this as modest or not on par with what happened over the summer. But it is nevertheless a continuity in terms of the direction of the travel, because last month for October, they already announced a similar amount. So they are continuing with this cautious approach. And also, it's still an increase. It's still putting more barrels in the market, bearing in mind that the seasonality of the demand, both in the Western Hemisphere with the holiday season over, the driving season over, but also domestically in the region, especially in the Middle East, where we use lots of oil to cool our houses in the summer, that the seasonality of the demand is also tapering off. So that has encouraged a more cautious approach. Now, some people would say, oh, OPEC is still testing the market because prices have not crashed. That is true, but we have to keep in mind that what is OPEC is announcing on paper is not actually what is being released in the market, with some claiming that only around 60% of the 2.2 million barrels a day made it to the market, because some producers have to compensate and others, like Russia, don't have the capacity to put more barrels in the market.
Carol, I understand that from a supply side point of view, that actually in reality we don't see these barrels arriving. I'm also aware of what is happening on the demand side as well. The Chinese in particular are buying a lot of crude and putting it into storage. Is that one of the key reasons why we haven't seen oil prices coming sharply lower? And then that begs the question, will the Chinese continue to buy?
Absolutely. I mean, if I look at the demand side, I think China is the main component in terms of keeping a floor to oil prices. So what we have seen so far, I think if you take China out of the equation, prices would have been much lower. But the Chinese are buying not because their economy is booming, it's primarily for stockpiling, including strategic petroleum reserves, and especially when they have access to discounted, attractive, cheaper oil to buy from Russia and other places as well. So of course they are buying, and the big question as we go into 2026, and this is where you can see the kind of consensus among analysts observing the market, observing the Chinese economy, observing domestic consumption and their imports need. The big question is, for how long and for how much more will the Chinese continue to buy and salvage oil demand, especially in the absence of a global growth in the economy that would fuel a global growth in oil demand. So all eyes are on China in terms of the strategy, and nobody really knows. All the numbers that we have are primarily guesswork, because the figures when it comes to inventories in China are not publicly available. There are lots of opacity around the Chinese figures. So we're all a bit engaging in some guesswork about what's happening in that part of the world.
Carol, good morning. It's Lizzie. The desire to hike supply clearly is driven by Saudi Arabia, not by Russia. I wonder how fragile you think the alliance is here behind the scenes.
I mean, look, there's no doubt that what we are seeing, these short meetings, few minutes long and online, and reaching such an important decision, they are showing a united front. But we are not naive. We know very well that OPEC, and OPEC Plus in particular, is not a coherent entity. And if you look at individual countries, they do have different interests and different needs. But let me here pick on the two main players, Saudi Arabia and Russia, especially given their different needs when it comes to oil prices. Now, of course, they are both oil-dependent economy, but the Saudis are comfortable with the prices where they are and even a bit lower, not only from a domestic perspective or economic perspective. Of course, they will do much better with higher prices, but they can borrow. They have the safety cushion. They are sitting on a lot of spare capacity that they would like to put in the market and then regain market share. But also there is a strategic dimension which is not often discussed, but I'm not naive to ignore it, which is having an important ally such as the US on board, with President Trump being very clear that he doesn't want to see prices going higher. Russia, on the contrary, it's a war economy. It's hugely dependent on oil and gas revenues. They are under sanctions, and sanctions might be tightened further with the G7 warning of further sanctions coming their way to reduce Russia's oil revenues. So Russia needs these higher prices. It doesn't want to see the market flooded. But at the end, we don't see that. We're all speculating. We don't know what's happening behind closed doors. But at the end, OPEC Plus, we have to recognize that despite the fragility of what's happening behind closed doors, they continue to maintain a united front.
But how are you factoring the geopolitics, Carol? Because we've seen this step up in drone incursions across Europe. We're potentially on the brink of a Gaza peace plan. How does that change your outlook for pricing?
I mean, geopolitics will always be there, right? And even if there is a kind of peace deal in Gaza, I wouldn't say that that's it. It's fait accompli across the Middle East. I come from the Middle East, and I don't recall having a really long period of stability. So that's the harsh reality of the Middle East. Also in Europe, what's happening between Ukraine and Russia, with the Ukrainians stepping up their attacks on the energy infrastructure and vice versa, Russia stepping up its attacks on Ukraine. So the geopolitical risk is there, but somehow it has been factored in oil markets and oil prices analysis. However, what we need to start talking about is put into perspective the barrels that OPEC Plus is releasing versus the spare capacity, because the geopolitical risk premium tends to be dampened when you have sufficient spare capacity in the system. And as OPEC Plus releases more barrels, then that spare capacity is reducing gradually. So at some point, we're going to feel more the impact of geopolitical tensions than what we are feeling today because of this increase in the barrels that OPEC Plus is putting in the market. But at this moment, there haven't been any supply disruptions despite the geopolitical tensions, but it's still a wild card and a risk that we have to factor in our analysis going forward.
Carol, what about also the risks of the Saudi Arabia's relationship with the White House? The Saudi Crown Prince, MBS, is going to be in Washington in sometime in November. Is there perhaps a catalyst for their relationship changing?
I mean, the relationship between the White House under the Trump administration and Saudi Arabia under the leadership of the Crown Prince Mohammed bin Salman, I mean, that couldn't have been better, especially compared to what we saw under the Biden administration. We're talking here, interestingly, about the two largest producers of oil in the world. So they do have common interest, which is to see, yes?
I'm just going to have to jump in. We've got some breaking news out of France, which we need to get to straight away. Thank you so much indeed for joining us. Carol Naclay, the CEO of Crystal Energy, on what is happening in the oil markets. Let's talk about France.
Yes, the French Prime Minister Sébastien Lecornu has resigned. This news just breaking across the terminal now. The euro dropping 0.5% to 1.16 per dollar. The oat-spun spread widening to 87 basis points off the back of this. They had just named the new cabinet, pretty much similar to what we have seen before. We had seen the disappointment in these markets off the back of that, the difficulties faced to reach a budget consensus, yet again seeming to rear their heads with Lecornu. And here we have the downfall of another French Prime Minister this morning.
That's fast. Even by French standards, this is now getting the rate of change, the half-life of this process. The acceleration is extraordinary now. So the CAC 40 is now down by 1.75% and dropping rapidly. You are obviously seeing French banks getting hit and hit hard this morning. We are watching to see what will happen next. It is unclear at this point what the catalyst was. Is it a conversation within the government, or is it basically a realization that actually this new cabinet is not a sustainable force, and therefore actually we are likely to see this government falling at some point? Maybe he has decided, the early indications are from the socialists and the far right, that this is not something that is going to be sustainable, and as a result of which he's gone early.
You're looking at BNP Paribas shares down 3.5%, Crédit Agricole down 3.4%, SocGen down 4.8% off the back of this. You had noted the French oats moves as well. The 10-year French oat yields higher, 8 basis points at 3.5%, Val.
Well, look, I mean, perhaps he has just come to terms that this is not the kind of cabinet that is going to pass a budget, so he does not want to sit and be leader of it. But that, again, is spooking markets' thoughts that a general election could be way quicker than we think.
So you get a parliamentary election, which appears to be obviously the first thing that potentially could be coming down the pike towards us. Is Macron's position untenable in all of this as well? He is trying.
Could he resign?
I don't know, but he doesn't have to. Obviously, we've got the presidential election is a long way away. He is term limited, and therefore it would effectively be an end of his political career. Let's try and answer some of these questions. Our correspondent in Paris, Caroline Carnan, joins now. Caroline, do we have any idea why this has happened?
Well, it's probably because of the situation with the Republicans. I mean, obviously, the Republican Party reacted pretty badly last night after the nomination of this cabinet. Even though Bruno Retailleau kept his job as Interior Minister, they were disappointed, for example, with the comeback of Bruno Le Maire. And they were supposed to have a crisis meeting in just a couple hours from now to decide whether or not they were going to stay in this government. In fact, we had lots of emails this morning from the French government saying there would be a handover at this time for Le Cornu, for Roland Lescure. There would be another handover for Bruno Le Maire. And now everything is collapsing already. 3.5 weeks with this Prime Minister, Sébastien Lecornu. And as many analysts have been saying all morning, we are now getting very, very close to perhaps new fresh legislative elections.
In terms of where Macron therefore stands, what does he do now? We've been through a series of governments. None of them are able to deliver what he needs them to be able to deliver. Is there another person that he can tap near term to run a government? What happens next in this process now that Lecornu has gone?
It's a very tough question right now. Obviously, he still hasn't tried the center-left option, which is what Olivier Faure, the first secretary of the Socialist Party, has been calling. And Olivier Faure was just on the radio on France Inter just an hour ago saying that he was not necessarily going to make Le Cornu collapse this week unless there was a comeback of the debate on the retirement reform in Parliament. So that's kind of one last option, but clearly we could also head towards fresh presidential elections. That's another option. Of course, something that the National Rally and the far left have been calling. It's very unclear at this stage what options are remaining for President Macron. His popularity is at a record low, 16% of positive opinion, I think was the latest poll last week. So clearly within his own camp, it's almost impossible for him to keep any sort of coalition together, even with the center-right. So the options appear to be very, very limited. The only issue, of course, and that's also what political analysts have been telling us this morning, is that even if there are fresh legislative elections planned over the next few weeks, they will probably lead to a similar fragmented parliament with possibly the National Rally gaining seats and becoming the biggest bloc in parliament, but no majority in parliament still. So the options, again, are very limited for President Macron. And perhaps this idea of fresh legislative elections and perhaps even a resignation of President Macron are going to come back on the tables over the next few hours.
So we've been through Barnier, Bayrou, Le Cornu. Who could be next, Caroline? I know that Madame Lagarde doesn't seem to be up for the job.
I don't think Madame Lagarde would be an option. I mean, she's pretty busy, I guess, at the presidency of the ECB, and she's also considered very center-right. So I don't think at this stage she would necessarily be the option. As I was mentioning, when we had the nomination of Sébastien Lecornu just 3.5 weeks ago, after the collapse of François Bayrou, we thought President Macron was going to go this time for a socialist prime minister. And clearly, this is the only option he hasn't tried. And with the departure of the Republicans from this local new government, clearly Macron cannot reappoint someone from within his own camp at this stage, because even the very fragile center-right coalition has today collapsed.
Caroline, if there was an election tomorrow, would it change enough within the National Assembly to give France a clear sense of direction?
No, and that's the problem. All the polls have been saying that perhaps the far left would lose a few seats, the National Rally would gain a few seats, but all in all, the parliament would still be fragmented into 3 blocks if you had fresh legislative elections happening tomorrow.
And in terms of, therefore, what happened, is there a sense that there is a way out? We talk about the fact that clearly appointing government after government is no longer tenable, and then the next logical step is French parliamentary elections. But if that doesn't produce a clear winner, a clear exit route from the current crisis, does Macron ultimately have to decide that he has to go? And I'm just wondering kind of what the French papers, what the French sort of thought is at the moment about whether or not that would be the kind of clearing mechanism in this process.
Yeah, I mean, clearly the resignation of Emmanuel Macron would be the next step, because at some point there is no way out. France has a parliament regime, even though there is a president in place. The parliament still controls the government and has the power, as we've seen over the past year several times, to make the government collapse. So if the parliament cannot have any majority, and if there is no coalition spirit really created in France, then clearly resignation of Emmanuel Macron would probably have to be the next step.
Caroline, thank you very much indeed. We'll probably be back to you very, very shortly as well, as we continue to watch what is happening with French politics. We started the show this morning talking about the fact that politics is the kind of story at the moment. You look at what is happening in the United States. You have a government shutdown. We still don't know what the ultimate outcome of that is going to be. We're watching what is happening in France very carefully this morning. We've had breaking news there. We've had news overnight out of Japan. French politics is very hard to read at the moment, but in some ways there's a big market reaction on the screen in front of us at the moment. Which one of these events kind of start to cause a more global
reaction? But I think what we're seeing today is we've had 2 big moments happen in the same 24 hours, in the same 12 hours. These are kind of risk events that the market fears, that you don't just get Japan bonds blowing up, you also get OATs happening at the same time. I mean, gilts are rising in sympathy with this in yield as well. We're 6 basis points higher in the long end of the gilt market. The big worry for the market is the fiscal dominance moments happens all at once for those countries that the bond vigilantes have their eye on.
But it's kind of, everything happens slowly.
Yeah.
And then it accelerates. And are we kind of anywhere near that acceleration moment?
But you're asking what is it going to take to force some fiscal responsibility. And in the UK, the situation with Liz Truss happened because you had LDIs, right? So surely you need to have that sort of idiosyncrasy in Japan or in France to force the hands of the governments there. That was what was unique to the UK to get that sort of market reaction.
Well, joining us now is Paul Dobson, Bloomberg's Asia Markets Executive Editor. Paul, thanks for joining us on this breaking news out of France. What, in your mind, is the big risk for the market?
I think, as you're discussing, people are worried about the back end of the yield curve and whether there will be demand there when people have all of these concerns about government fiscal irresponsibility, essentially. You're seeing it with France's yield premium over Germany widening out quite steeply, and as you said, the sell-off that we saw in Japanese government bonds earlier as well. And because Japanese government bonds in particular are such a huge part of global bond markets, that sort of anchor, as we've talked about in the past, for global yields, as that rises, it pushes up yields everywhere else. We have Goldman talking about the knock-on impact from a JGB sell-off on US Treasuries and gilts and how they see spillover effects. Add into that as well more turmoil in France as well. You're getting a little bit of a difficult cocktail for bond investors to come to terms with. And, you know, all of that turbulence in what is supposed to be risk-free assets is not good for the rest of the world either.
All right, Paul Dobson, we thank you for that analysis. We're looking at the CAC 40 down 1.8%, euro-dollar down 0.6% at 116. The French banks suffering, the likes of Crédit Agricole down 4.4%, same for BNP Paribas, SocGen down 5.5%, and the Oatsbund spread on the 10-year at 87 basis points now, Guy.
Okay, let's talk about kind of how the connections work in these kinds of markets as we start to see politics really casting a long shadow over various asset classes. Bloomberg Senior EMEA Market Strategist Michael Masika joining us around the table. Your thoughts on this? Where are the connections now that we need to be looking for? Val talking about kind of the impacts of fiscal dominance and kind of whether or not we start to get cracks appearing. Are cracks appearing?
Well, look, to be honest with you, it was always a bit of a tricky situation here because you got a government that's been named, which is very similar to the previous one. So, I mean, you know...
They asked for it, is what you're saying.
No, but so the expectation was that he was always going to fail, but he's failed very quickly.
He's failed a bit quicker than expected, let's put it this way. Now, having said that, if you look at the impact on markets, it's like indiscriminate selling. Once again, It's like you sell French assets, everything is gone. Like you sell LVMH. LVMH has no exposure to France. They don't care. So that's the kind of thing that's happening now. I think it's kind of a very excessive reaction right now. I mean, that government was... Like you said, like he was destined to fail anyway. Yep.
But does it just bring forward the risk of French parliamentary elections in which maybe you don't get a clearing moment, but you get a clearer indication of the fact that the far right is ultimately stepping towards the Elysee?
Possibly. The thing is, it's always difficult to predict what would be the political outcome here. But the thing is, the French government falling and this impact on market and the risk that was here, it was always like a very, very expected risk, I would say. It's funny because this morning, a JP Morgan strategist came with a note saying like one of the big risks for the Eurozone was the French political uncertainty rising and the government falling. And at the same time, he said, if that happens and you get weakness, that's when you buy the market because peak uncertainty will be there. Yeah. And I think we're kind of in that situation right now.
Yeah, John Bilton was bullish on Europe earlier in the programme. This is a dip he might buy, perhaps. But, you know, is this just noise? Do we just rinse and repeat new PM every 3 weeks? He was 3 weeks, Le Cornu. And then you just keep on buying dips. I mean, Guy keeps asking, what is it going to take, crisis-wise, to get the government to be fiscally responsible? How much more of a crisis could we see?
We'll see a bit of ups and downs, I think. I mean, obviously, you know, we're kind of the new Belgium. I mean, Belgium didn't have a government for a while back in the days.
It's going to really annoy the French to say that. I can't believe you said it.
So, you know, it's okay. I don't think it's a huge problem for a lot of companies, especially for the CAC 40. Yes, domestic stocks will suffer, and people will keep avoiding them. Investors will keep avoiding them. But at the end of the day, when you have dips like that on like large caps that are mostly exposed to international revenues, then, you know, the dips will be bought.
Okay.
Paris just had a great fashion week.
Ending on a positive note, but should we recap some of the assets and the movements we've seen? We have euro dollar 0.7 weaker, CAC 40 down 2%, and my eye goes over to the bond market. We're seeing 8 basis points higher when it comes to that 10-year yield in France, way surpassing the 2 basis point rise in German 10-year yields. Well, that's it for the opening trade. This is a story we'll be monitoring for the rest of the session. The Pulse is up next. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersachi in Tehran, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance. Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
French Prime Minister Sébastien Lecornu quits after less than a month in the job. It comes a day after President Macron named a new government that was broadly criticised. French bonds fall, pushing the yield premium of German bonds to the highest level this year, over German bonds, of course, while stocks in France tumble. The Nikkei, meanwhile, soars and the yen plunges after Japan's ruling party elects Sanae Takaichi. The pro-stimulus leader is on course to become the country's first female prime minister. But for now, it is all about France, with that breaking news in the last few minutes around the resignation of the French Prime Minister and that ripple effect across the asset classes of France and Europe more broadly as well. Here's the US futures picture, just briefly nodding to the expected session stateside then, with US stocks at near record highs, up 0.2%. But again, the Eurozone is in focus right now, with France at the heart. The euro at 1.16, the single currency taking a knock, down 0.7% on the back of that news. Over in France, the debt then yields up across the curve. This is the 10-year, 3.57, closing in on 3.58, a move of 7 basis points. At one point, briefly after that news line crossed, you saw a jump of 10 basis points on the sell-off of French sovereign debt. The yield spread then, the highest versus its German counterpart this year. Gold, meanwhile, getting another lift, up 1.4% for the yellow metal, closing in on $4,000. Let's flip the board and have a look at the regional map. And again, the screaming pain over in France. The CAC current down 2%. The banks taking a big hit. Almost every single major stock in France is down on the back of this news. But it's the French banks that are really feeling the pain right now. The broad index down more than 2%. Over in France, the DAX just off by 0.1%. Here in the UK, a little bit of softness on the FTSE 100 as well. And over in Spain, the IBEX dropping 0.4%. We bring you the analysis on France, the political ramifications, the market readjustments. The show starts right now.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Tom McKenzie in London. So the French Prime Minister, Sébastien Lecornu, has resigned just hours after his cabinet was unveiled. Let's get more then from Bloomberg's Caroline Cornat on the ground for us in Paris. Caroline, do we know the reasons for the resignation of the French Prime Minister?
Clearly, the announcement of the cabinet last night was seen as a provocation by everyone, including his own camp. And we had the Republican Party of Bruno Retailleau, who was reappointed Interior Minister, saying as soon as last night that themselves, even though they were supposed to be in the presidential camp, they were disappointed, especially with the comeback of Bruno Le Maire as defense minister. They were supposed to hold a crisis meeting in just 1 hour from now. That crisis meeting obviously is not going to happen because there is no government anymore, so there is no need to decide whether the Republicans will stay or not in this government. And perhaps that is what prompted this sudden resignation, because if you are losing as well the support of the center-right Republicans, which were already kind of hesitating over the weekend to join this government, you clearly lose the very fragile center majority you may try to build. So now the center-left clearly is something that, again, President Macron could look at, something he didn't do last time, 3.5 weeks ago, when he decided to choose Le Cornu as prime minister, someone who has been a very close ally of President Macron since the very beginning in the first mandate in 2017. So what happens next is very uncertain. Will President Macron decide to go left, full left-wing this time, or will he actually decide to go further and present his own resignation?
Well, I guess that's another market shock, potentially, if that was to come through. And again, you've made the point, Caroline, that the president has reiterated he plans, of course, to see out the full term. But we watch for that as a potential additional risk event then over in France. Caroline, what do we watch for then in the next few hours and days in terms of how the president is likely to respond? And what happens in terms of the opposition parties and their reaction to this event?
Yeah, and we're going to watch that really closely. I mean, the first immediate reaction from the far left was obviously that Macron needs to resign, but we knew that that's something they've been already calling since the collapse of François Bayrou just a month ago. So now the interesting reaction will be from obviously the Republicans, center-right, and the Socialist center-left. What are they going to do? We heard from Olivier Faure, the first secretary of the Socialist Party, earlier this morning, just a couple of hours ago, saying that we don't really care so much about the casting, we don't really care so much about who is in this cabinet. What we care about is to respond to the French, and what they want to see, for example, is a return of the retirement reform in front of Parliament. Of course, the next step, and this is something we're edging closer every day, is a call for new, fresh legislative elections. This is something that President Macron didn't want to do, but clearly with this situation, with a third collapse in less than a year of a government, he may have no choice but calling new, fresh legislative elections. The issue with that is that we would likely see a very fragmented parliament as well, pretty similar to the one we have today, with no one having the majority. Perhaps the National Rally would get a bigger share in parliament, but not enough to get a National Rally majority. So we are clearly at the end of the road here for President Macron, and something else has to move, not just the Prime Minister.
Really interesting and an important update, of course, out of Paris. Bloomberg's Caroline Cornat in Paris. Thank you for the reaction, of course, the context, the analysis around that. Let's get more insights right now from the market perspective and bring in Sophie Hyun, portfolio manager and strategist at BNP Paribas Asset Management. Fantastic to have you around the desk on this breaking news then, Sophie. What is your expectation in terms of the market reaction going from here, what they're watching for? I mean, clearly this was not priced in. If we look at the yield jump across the curve over in France, the sell-off of French debt, euro down, equities taking a big hit. The markets had not anticipated this one.
I think, as Caroline was saying, it's too early to have like a clear path on what's going to happen. As Michael was saying earlier as well, if you look at French equities, most of them, like I think 60-70% of revenues are generated abroad. So you need to look beyond the domestic problems. And something to keep in mind as well is we haven't seen yet any contagion to the rest of Europe. If anything, I think what's happening today in Japan is going to be a much bigger risk event for markets than the French elections.
Very interesting. Okay, so what's happening in Japan could be a bigger risk event for these markets. Just unpack that for us then, Sophie.
I think if you look at the new Prime Minister, as we're saying, Takeishi, the fact that she's in favor of loose monetary policy as well as like a more slower normalization of monetary policy, it means that you're going to have higher yield at the back end of the curve, as well as a weaker yen. That was not expected as well. So what I'm a bit scared of is what if the contagion effects of higher yield in Japan starts feeding into other DM markets at the point where having duration exposure at this point is a bit touchy at this point.
Okay, so we'll watch for that on Japan, and maybe we'll come back to that. But I just obviously want to get more of your views in terms of France and the risks that we're seeing. Is the next kind of scenario that we're watching for then in terms of how this is orchestrated? And Caroline Conard pointing out that possibly you get another round of elections, or possibly even the markets need to be thinking about President Macron himself resigning. On those two scenarios, what is the likely market reaction? How much sensitivity is there in these markets domestically in France to either of those scenarios?
I think to some extent, if we have another snap election, that's going to start feed into other risky assets in Europe, as in like contagion effect, and that's going to be a bigger event in my view, as in you're going to need to review why you're investing in European equities. But against that, I'm just wondering if it's not going to be good entry points at a time where, if you look at, we've been into 1.5 years of monetary easing, fiscal policy is expected to be loose, no tightening in sight, and then you start to have a consumer demand in China that starts to come alive through the equity market rally. So I'm just wondering if you take a step back, we have some risk in Europe to some extent. If we have snap election, is it going to be good entry points where, you know, the benefit from monetary easing is going to start feeding into the system, and actually you might have some kind of cyclical recovery in Europe?
Okay, so that is a constructive view on possibly some opportunity here. But you touched on something around contagion risk, which I think is really important, which is that if there are snap elections in France, that could cause some level of contagion into other Eurozone nations. Just unpack that view in a little bit more detail and what the potential impacts could be then from the market's perspective.
So for now, if you look at what's priced into markets, it's not as if the political premium has totally disappeared in France for the past 2 years. So if you look at the BTP bond and OAT bond spread, you always had some political premium in OAT bonds, so it's not really a surprise. The risk is if the political premium in France start feeding into other spreads, but also start feeding into euro, for example, and we see the reaction today. So that's all of, I think it's going to be all the stories about debt sustainability, potentially fiscal policy that needs to be tightened, which is not the case at the moment, where it's really on the other side of the... Look at Germany, for example. We're expecting a positive fiscal impulse next year. So I'm just... And I think if you think about it, it's not as if the outperformance of Europe in the second quarter really worked, Europe versus US. So I'm just wondering, we're going to look at the Q3 earnings season in the US. We're going to look into the end of the year. What if we start to have earnings upgrades in Europe thanks to the weaker euro?
And maybe weaker euro will be something of a catalyst. That's been a headwind for European earnings. So you paint a scenario as well where potentially this is an opportunity and an opening for investors either to add to exposure or get some exposure to European assets. What would you favour in that scenario? What would fit into that basket if indeed this becomes a value play and an opportunity to add exposure?
So in our portfolio at the moment in Europe, we're still holding Eurozone banks.
And you're comfortable holding French banks at this point?
At this point, we're not really doing any differentiation. We think that European banks have a fundamental story that makes sense. The fact that now the ECB is on hold, probably cutting next year, I think from a balance sheet and earnings standpoint, financials and Eurozone banks are still solid. I think what we've seen over the summer is really interesting, where if you look at stocks at 100 sectors, the sectors like basic resources, chemicals, autos, and more recently retail, you're starting to see analyst upgrades. So clearly some more, like momentum on the cyclical laggards that markets have started to pay attention at least last week.
Gold is getting another lift today, and clearly the gains year to date have been impressive, up almost 50%, closing in on $4,000 per troy ounce. Has gold run too far, or in an environment of political risk, is it an important hedge in your portfolio?
So we've been long gold for almost 2 years now, so it has worked really well. It has played this duration replacements given the debt sustainability, but I think to some extent the rally we've seen is also due to central banks buying. If you look at what retail investors have been buying, they have been buying gold as well. So overall, I think the gold story makes sense. Any fair value doesn't work anymore. Like if you look at some kind of regression on real rates, dollar, VIX, fair value is around 2,400. It's nowhere where it is now. Wow. So I think the bid for gold is here to stay. The fair value you could get doesn't really make sense. We see gold forecasts at 4,000, 5,000. I think in the trend context, and if duration doesn't work, gold is still going to be bought.
Okay, Sophie, fantastic to get your views and analysis on a big day, of course, for French politics and the French market. Sophie Hyun, portfolio manager and strategist at BNP Paribas Asset Management. Maybe an opportunity as well. This could be an opportunity for those who want to take on some of that risk exposure in the French markets. Now to Japan and the election of a pro-stimulus leader in that nation, shaking up global markets, as Sophie was saying as well, sending the Nikkei surging and the yen tumbling on prospects for more government spending. Let's bring in Bloomberg's Paul Jackson, who's in Tokyo for us. Paul, is the market rally then sustainable? How short-lived would it be? It's been a pretty remarkable day for Japanese stocks.
Yeah, absolutely. I think we're still in the middle of the knee-jerk reaction to this victory, and I think how things play out over the longer term is yet to be seen. Why have markets moved in this way? As you mentioned, she's the pro-stimulus candidate. In particular, there's the view that she's very cautious about the Bank of Japan raising interest rates. In fact, last week she said that they shouldn't raise interest rates for the time being. So that helps feed into yen weakness. Yen weakness then bumps the stocks. The idea of extra spending also feeds into stocks. We've also seen the short-term government bond yields come down and the longer 20-year go up, both reflecting the interest rate prospects and also the spending that might come down the line. But we're seeing now what kind of team she's putting together to run her administration. I think the interesting thing that we've seen today is the floating of former heavyweight finance ministers like Taro Aso and Suzuki. And I think the signal that this sends is that she is going to be plowing this line of, hey, I'm going to be expansive fiscally, but it's going to be responsible. So I think the first checkbox that this ticks is, hey, look, Japan is not heading towards some kind of Liz Truss moment. Yes, there could be more spending, could be more expansion there. The Bank of Japan may move more slowly, but this isn't going to be something off the charts. It's going to be a bit more measured, a bit more controlled. I think the second point to consider is that markets have been kind of lining up for a rate hike by the Bank of Japan at this end of this month, and it looked like the ducks were getting pretty much lined up for that. Now that puts Governor Ueda in a difficult spot, doesn't it? Because if he goes ahead now, that sends a signal that he's perhaps ignoring who we expect to be the new Prime Minister. If he doesn't go, then she's got too much influence over monetary policy. And what happens to the yen then?
Okay, Bloomberg's Paul Jackson on the ground in Tokyo with the context around the person who could become the next Prime Minister of Japan. Responsible fiscal stimulus potentially is what's going to come down the pike. Paul, thank you very much indeed. Coming up, more reaction, of course, to the resignation of the French Prime Minister. That breaking news story, of course, all the reaction. The markets are moving on this. We bring you more insights. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome back. So, France's Prime Minister has resigned. Monsieur Le Cornu, next steps are known. Let's get the analysis now from Fabrice Potier, CEO of Rasmussen Global and former NATO Policy Planning Director. Fabrice, thank you for your time. Your reaction then to the resignation of the latest French Prime Minister?
Well, it is both shocking and not surprising. Prime Minister Le Cornu had always this mission impossible to come up with a new formula, whilst he's obviously one of the closest, if not the closest, Macron-compatible politicians in France. So he was a keeper of the Macron economic doctrine, not giving ground on pension reform, and therefore could not have that kind of clean break from previous governments. And that was therefore always a bit of a mission impossible for him to put together something that he announced as a kind of brand new government, which actually, when you hear the names, was 2/3 recycling.
2/3 recycling. Wasn't it? I mean, Fabrice, was it not pretty inevitable, looking at the cabinet, that there would be a negative reaction from the Socialist Party and the National Rally?
Well, and I think also from Les Républicains, from the conservative right-wing party, which didn't see very well to see one of its former stars, Bruno Le Maire, to come back to the Ministry of Defense, whilst he was actually at the helm of the economic ministry when France was borrowing heavily and led to the current situation. So I think he lost on all the key fronts, both with the Socialists, le Rassemblement National, and Les Républicains. Now the question is really what's next? And what's next, I think there are two scenarios. One is the president triggers a snap election, which probably could mean, French people will have to go back to the voting booth and might actually end up with the same kind of parliament, or the president takes an even bolder step and offers le Rassemblement National, which is the largest party in the current parliament, to form a government, which will be a way to put this party, which is obviously highly controversial, in front of its own responsibilities.
How likely do you think that outcome is at this point, Fabrice?
I think all the crazy extreme outcomes are actually right now more possible because all the more reasonable mainstream ones have been exhausted. This is the third prime minister that Emmanuel Macron is putting forward, and clearly the experiment keeps on getting worse. What fundamentally I think is the reality is that there has been a rejection that you agree with it or not. There's been a rejection of the Macron mandate and the Macron legacy, and therefore him trying to have a prime minister that is going to keep this legacy together is obviously a big tension from what French people have been asking for, which is a change and some reform of the previous reforms.
Fabrice, given that rejection that you outline, at least, to the Macron policy, the Macron agenda, how viable is it that he remains as president through 2027?
Well, again, all the crazy scenarios are probably a bit more possible this morning than they were a few weeks ago. But I think this is still a very remote one, given that he sees himself as the keeper of this French Fifth Republic, and therefore he will not want to give away his position, which would be really the last straw breaking the camel's back, and definitely burying his legacy and his 7 years at the helm trying to reform France. So I don't think he will want to do that unless there's really, I would imagine, a first scenario where you have snap election and you still have very inconclusive outcome like we have now, in which case France will be again stuck into a kind of limbo, and therefore there might be no other way than to have also presidential election. But I think this is still a second order priority.
And Fabrice, the different scenarios that you outline, and you basically message that we should brace for the unexpected to some extent right now. I'm not seeing on any of those scenarios necessarily a scenario where we get a lower deficit out of France and an adjustment in terms of what, a debt to GDP, or at least a deficit of plus 5% by the end of this year, and a trajectory lower in 2026. It doesn't seem that that is now viable with these different scenarios, or am I missing something?
Well, I would say the markets will have to sit put until probably 2027, quite frankly. More than a year ago, we had the Prime Minister who proposed 60 billion euro of cuts. Then you had the second Prime Minister who proposed something like 40 billion. And then you had the third Prime Minister who just basically resigned after 3 weeks. So I think France is in political turmoil. It's time to acknowledge it and probably accept that the fact it's going to be like this for another year and a half until you can really address the fundamental political grievance of the French voters through both general and presidential elections.
What does this mean for France's domestic policy agenda and its international relationships?
The domestic agenda is obviously the most affected because at the end, this is what the government is about. And so what it means is that this is a status quo, but in a negative way because of the public debt level, the fact that you can't have a budget. And if you can't have a budget, you can't have spending priorities and saving priorities. So it's both bad for French people, for French consumers, but also for the markets. On the foreign policy, security policy front, I think this is a bit more protected from this turmoil for the simple fact is the French president under the Fifth Republic Constitution holds most of the executive decision powers on foreign policy. Therefore, as we could see, President Macron has been as active as ever on this front, and I don't think it will be fundamentally affected. Obviously, his weight on the international scene, including on the European scene, is affected.
Okay, Fabrice, really appreciate your time. Fabrice Potier, Rasmussen Global CEO and former NATO Policy Planning Director. Coming up, more on France with the CIO of Allianz, Ludovic Soubrain. That's coming up. This is Bloomberg.
In case you missed it on Bloomberg Surveillance.
We heard from Restoration Hardware, and the RH CEO was on the earnings call dropping F-bombs. And I imagine a lot of people are having similar issues at the moment trying to sell furniture. You're at a different price point. What's your experience this year?
People have less money. You can say still recovery from the pandemic when it comes to inflationary measures. But then again, our line of business is really about human basic needs. It's about the bunk bed when the kids grow up. It's about the chair and table and so on.
Anne-Marie had one final question.
How are the meatballs? And you're lowering the cost of the meatballs,
I am myself, I'm an intellectual vegetarian. I normally say down here I struggle. I love the meatballs. We're actually running today about 40% of our sales is actually vegetables and plant balls. And personally, I don't love the vegetables, but the plant balls is a great exception. But meatballs is part of our legacy, so there you go.
I love your honesty.
Don't miss Bloomberg Surveillance live every weekday.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Good morning. Welcome to the Pulse. I'm Tom Mackenzie in London. These are your top stories. French Prime Minister Sébastien Lecornu quits after less than a month in the job. It comes a day after President Macron named a new cabinet that was broadly criticised. French stocks and bonds tumble, pushing the yield premium over German bonds to the highest level this year. Meanwhile, in Japan, the Nikkei soars and the yen plunges after Japan's ruling party elects Sanae Takaichi. The pro-stimulus leader is on course to become the country's first female prime minister. So European stocks under pressure as a result of the sell-off in France. US futures, though, pointing modestly higher by 0.3%. US stocks, of course, at record levels. The euro under pressure, falling 0.6% on the single currency at 116. French debt, the sell-off is there, yields up 7 basis points. So the sell-off has moderated to some extent, but the benchmark is at 358 right now on OATs. The French sovereign debt picture is there. And gold getting another lift, partly on the political uncertainty in France, but also partly on the continuing shutdown in the US. We are in week 2 of the US government shutdown. So politics certainly part of the mix for these global markets. Gold up 1.4% in the session, closing in on $4,000 per troy ounce. Let's get more now from the situation on the ground in France and bring in Jean Dalbat, economist at Bloomberg Economics. Jean, just get us up to speed in terms of the developments, of course, the Prime Minister resigning. Where does that leave your analysis as to the time frame in terms of how we think about sequencing for France and any potential budget, or is that impossible to forecast at this point?
I mean, it is pretty hard to forecast at the moment. The uncertainty is really, really high. Prime Minister Lecornu is expected to speak in 10 minutes on TV in France, and then we will wait for President Macron to make some announcement later on today. So it's pretty hard to forecast at the moment. We just know that tomorrow, under constitutional requirement, there's a need to have a budget at Parliament tomorrow. So that's the only thing we know. But it should be impossible for the next Prime Minister to do it. So uncertainty is pretty high, and we are waiting for more information to come.
Uncertainty is high, and we're seeing that reflected, of course, in the bond markets. How much further does this sell-off, do you think, have to go? Is this a knee-jerk reaction? Is there a lot of this risk already priced in, or are the various scenarios still key risk factors for the sovereign debt of France, whether that is fresh elections or even the possibility of the resignation of the French president himself?
So we think it is not a least stress moment, for example. It is a bit different what we are living in France at the moment. It is still a serious situation, but it is only a political crisis yet, and it doesn't look like a fiscal nor an economic crisis. What are the options ahead, as you asked? I mean, it will be for President Macron to decide. A resignation, we think it's pretty unlikely. So either he appoints a new prime minister or he calls for a new general elections. But we don't think it will solve the situation because the political situation is so fragmented in France that even new general elections won't solve the problem.
Jean, I know you and the team work hard on putting out forecasts and analysis, of course, of the health and state of the French economy. How does this change things? I mean, the political uncertainty, we're just getting that underscored again today, but I guess on some levels it's not new. Does this change your forecasts for the growth picture for France?
So basically, the political uncertainty is the main impediment to French growth at the moment. It weighs on business and households' confidence a lot, and we think that the forecast will end up at the growth will end up at 0.7% in 2025 and 1% in 2026. And that rebound in political uncertainty is a new risk to that forecast. We haven't updated yet, but it could change later on. And under our new modeling, it could trim up to 0.25 percentage points of GDP growth in 2026. So it can be pretty substantial for 2026, but at the moment it isn't reflected in our forecast yet.
Okay, the biggest risk factor for this French economy is the political uncertainty. Jean Dalbar, really important update, of course. Economist at Bloomberg Economics. Jean, thank you to you and the team and the quick reaction, of course. Let's bring in Ludovic Soubrun right now, Chief Investment Officer and Chief Economist at Allianz for another take on this. Ludovic, what a day. I mean, how much surprise is there within the ranks of your firm? How much concern is there? I mean, is this a Liz Truss moment for France?
No, absolutely not. It's not. It's not a surprise either. Unfortunately, we've seen a bit the risks looming. I was still hopeful. It's the shortest serving prime minister in the Fifth Republic in France. So I think, gone too soon. That's what comes to mind right now. So is it a concern? I think the concern is what type of budget France is going to get. I mean, Jean explained the situation. It's not something where we are in crisis situation, but of course it means the adjustment speed for France will be longer, the uncertainty cost on growth will be higher. And of course, this is at a moment where Europe needs to get their act together on a series of policies. So having France being in that, corner where they have, no government to pass the budget is something that is not helpful, I would say. But, push come to shove, we're going to have a continuation budget. So it's going to be a provisional budget. And yes, we're going to still have 5% deficit next year. 2.5% debt servicing in GDP terms is not catastrophic. It just means we're dragging along at a moment where we would need to get our house in order much faster.
What would take France then from a political crisis to an economic crisis? You're pretty clear we're not there yet, and maybe we're not even close to being there. But is there a scenario under which the political crisis does metastasize into an economic crisis?
I mean, for international investors, I think resignation of President Macron would be something that could form an economic crisis. And again, an economic crisis that would mean an overreaction by market actors on the cost to lend to France. So a spread may be widening by another 50 or 100 basis points. That would be something that would consider a crisis. Why? Because it would trigger a conversation about what type of tools Europe needs to enact, especially the TPI by the ECB, or what type of discussion we should have at the European level with giving some slack to France, right? We are far from there, but as we know, this is something that happens in the market. I think another route through which France would be in danger zone would be if for the next 2 years, which is when the next presidential election is happening, we don't have any clarity on the economic policy toolbox and playbook. And I think that's also something that is possible. If we go, for example, for a technocratic government or a snap election with, as Jean described, an a hung parliament with a minority government for Rassemblement National, right? That would be something also testing with the limits. Why? Because Rassemblement National has never been in power, and they are very bad when it comes to economic policies. And so they would have to find a way to accompany themselves with people that have a clue about economics, which is what other governments have done. So these two options of the decision tree are rather riskier branches. All in all, France, again, debt servicing to GDP is still 2%. It's half of Italy or Greece. So I don't see the issue. I just see the slow deterioration of our signature if we go this route. And so it could take a few years, but right now it would be less costly to act for sure. So everybody's hoping for a political solution so that we can get on with things that matter.
Well, yeah, indeed. And look, if this continues for 1 or 2 years, Ludovic, what does that mean for the risk premium being priced into the sovereign debt of France?
Look, a lot more volatility for sure, and we've seen that already. This is one of the most volatile bond space that is there right now, especially in the European government spreads and bonds. I would say that 4% for the 10-year French is possible. And so that would mean indeed that little by little we are creeping up to an area where the debt to GDP, the service of the debt to GDP is going to 3 and then 4%. So that could happen very much before 2027. And then we are in the league with Italy and Greece. And of course, the rating could be migrated to even a lower notch. So that's, of course, the downside scenario that people need to watch.
Yeah,
the solution, though,
the next
Tom,
update from Moody's is October the 24th. Just remind our viewers what that solution would be, Ludo.
Well, it's very clear. If we don't make any progress, then it will be higher taxation. That's the problem. I think the main risk is this one right now. If we cannot make an agreement on how we cut expenditures, of course, France has one magic bullet that has worked over the past crisis. If you remember 2012, when François Hollande was elected, it's raising taxation. And right now there is 2 points of lower taxes that Macron passed that have not been financed. So of course the ultimate cost would be for the French savers and the French taxpayers. So it's going to be an increase of taxation again. So that's why having a solution now is much better. For the international investor, I'm not worried. The risk of default is peanuts. Yeah.
The risk of default is peanuts. We heard from Sophie Hyun of BNP Paribas earlier in this show, and she was suggesting that there might be an opportunity, in fact, to get exposure to French assets at this point. It could be a buying opportunity. Would you be advising any international investors to dip their toe at this point? Is anything looking well valued at this point in France?
I think you need to wait a little bit more. So I would wait for a re-entry tactically that the spreads go up for another 70 to 80 basis points. So again, even 4% and above 10-year, I would consider it, a topic for consideration. 4.5, I would re-enter anytime. Because of course, then, you have every tool on the ECB is armed now to respond to this type of crisis. And so I think, we've learned our lessons for the past 15 years. We had a crisis. We made the Eurozone much stronger. Now we know we cannot tolerate much more stress. And because the contagion risk will be too strong, by the way, France's idiosyncratic risk will just spill over to the other countries. So of course, I trust the euro to not be reversible, and I trust Europe to do whatever it takes, if needs be, to calm down any pressure on the financing of our sovereigns. We see that in the US, we will see that in the UK, and we'll certainly see that in Europe. Yeah.
And Ludo, we're showing live pictures right now. You mentioned, and we've been hearing from our correspondent on the ground, our economist on the ground, Jean Barbar, talking about the fact that we're going to be hearing from the French Prime Minister. We're bringing you live shots right now, of course, and we are expecting the French Prime Minister to speak in the next few minutes, and we'll bring that to our audience, of course, live when that happens, Mr. Lecornu, on that resignation. On the contagion risks, Ludovic, what would trigger? When does this become a contagion risk?
Well, I think it becomes a contagion risk when people don't play collaborative with France, and this is why, for example, if we have some people in the in the political sphere in France have been, unsure about whether they want to get out of the euro, whether they want to pay their due to the European Commission. I think that would put us in a spot where there would be questions again about whether Europe is optional and a la carte. That would be bad, and so that would be a point where people then would question other countries. A form of uncooperative game also with other countries. I can imagine the Germans being like, oh, hey, there is a problem. You guys are not adjusting, and we're still trying to find tax revenue to finance our defense expenditures. But again, Europe is not where it was 15 years ago. And so if I look at even parties like the National Rally, come back on their euro stance. Clearly, there is a very collegiate approach between Germany and France right now, between Italy and France too, even though it may be where there is a bit more tension as we speak. Globally, I think there are very few concerns about the euro reversibility, but that would be, I think, where the contagion risk would be massive if we get into that corner.
What would bring the ECB off the sidelines, and what would the ECB response look like? Would it be rate cuts or another tool that they might reach for?
It can be a range of tools. I think the ECB will have to wait till the financial stress to be heightened and quite long, so they cannot be too early and too quick to act. So I think we're talking about yields of the French 10-year above 5%. And they could use the TPI, for example. The Italian yields are also above 6 or even 6.5%. So this is where the ECB would act. I would also see this would be a way for the ECB to act in a conditioned way. So without having the IMF or whatnot knocking on the door, we could have a situation where we solve the problem among ourselves instead of what we did with Greece, where the central bank was negotiating on the other side of the table, which was bad. I think it was the original scene 101 of the euro crisis. And then more importantly, we also have, I think, indeed, lower rates for the entirety of the Eurozone. Inflation is under control, and potentially also QE. I wouldn't completely, and this is TPI is a form of truncated QE. So the transmission policy instrument is a form of conditional, selective, and a form of QE that is supposed to be enough to ill quote Mario Draghi with an instrument that was designed after he left.
Ludo, just before we let you go, across the equity markets of France, we're seeing some heavy selling across the banking space over in France. I wonder, is there a case to look at some of those French names that have more of an international exposure in an environment, for example, where the Fed is cutting interest rates, where there is stimulus coming to play in countries like Japan, but also the US as well? Are those internationally exposed French names possibly looking attractive?
Sure. I mean, the bank is a good example of the so-called doom loop test, right? When we know basically that the French banks are less exposed than other banks to their sovereigns, right? But still, this is a play. This is not the first time that we see that the French banks are particularly reactive to whatever is happening on the political uncertainty. And on the opposite side of the spectrum, you're right. International companies exposed to, the fact that the trade war is only 10% of trade, the fact that there is better financing conditions globally with the Fed cutting. These companies are certainly bringing in higher earnings expectation that companies that are a bit stuck in the domestic market that will be affected by the cost of uncertainty. So indeed, I would be looking for sector rotation in the French equity markets, and certainly looking at some companies that are in high capex intensive sectors, places where trade deals have been formed, and these companies are well placed in some of these markets, potentially the US, and so forth, right? Yes, so there is an opportunity there.
Okay, sector rotation, potentially something to consider for investors exposed to France. As we look at the 10-year yield at 358, close to 359, yields up 8 basis points, and Ludovic suggesting that at 4% and above, you might want to start thinking potentially about getting exposure to the sovereign debt of France. Ludovic Souperin, always smart on the French markets and the politics as well that now interlap and interweave. Of course, CIO and Chief Economist at Allianz. Ludo, thank you. We're bringing you live pictures, as we mentioned, from outside the Prime Minister's office in Paris. Sébastien Lecornu has resigned. We're expecting to hear from the French Prime Minister imminently. We will bring you that live, of course. Stay with us. This is Bloomberg. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Welcome back. We are bringing you live pictures from Paris. The office of the Prime Minister, Sébastien Lecornu, is speaking now. We hope to bring this to you live. He has, of course, resigned, underscoring the political crisis in France. The market reaction is there. The euro is down. The sovereign debt of France is selling off, and the equity markets in France are down as well. The banks being badly hit. The French Prime Minister speaking. Will bring you the lines as they cross. We've been hearing as well from Marine Le Pen of National Rally calling on Macron, the president, to dissolve the National Assembly. Clearly, this is one potential scenario for France right now. Elections could be in the cards. Nothing has been confirmed on that front, but clearly that is a potential scenario. Others, of course, have called for the resignation of the president himself. Previously, Macron has insisted he will serve out his full term. We are seeing and bringing you live pictures of the outgoing Prime Minister, Monsieur Lecornu, of course, the third Prime Minister in recent times under Macron, of course. He called those snap elections, and France has not been able to pull itself out of political crisis since then. French sovereign debt selling off, yields up 8 basis points on the benchmark 10-year at 3.59. Let's bring in Bloomberg's Caroline Connor on the ground for us in Paris, no doubt listening in as well to the French Prime Minister. So we'll ask for Caroline to juggle this act. Caroline, talk us through what we've been hearing from the Prime Minister and the rationale for him standing down.
Well, I'd love to hear what he's saying at the moment, currently speaking. I didn't have the return of his speech currently happening at the Prime Minister's office in Matignon. He's probably trying to explain exactly what brought his very sudden resignation this morning, less than 24 hours after detailing his cabinet last night, a cabinet that was widely seen as a provocation by the opposition parties, but not only, also within his own camp. The Republicans appearing very upset last night, for example, with the return of Bruno Le Maire as defense minister, and they are maintaining their crisis meeting later this morning to decide what's coming next. Of course, what's coming next pretty much depends on what President Macron is going to do. He has 3 scenarios. We're kind of back to square one. One scenario is to name, again, another prime minister, the 6th prime minister in less than 2 years, perhaps opening to the center-left, the Socialist Party, who have been saying many times that they want to join the government. And we heard from the first secretary of the Socialist Party earlier today saying that he was actually ready to give Lecornu a chance if the retirement reform would come back in Parliament, something that Macron has ruled out at the moment. Second scenario, of course, for President Macron would be to call new snap legislative elections, something that has basically prompted this whole political crisis. When he called snap elections back in June 2024, that's when the entire political crisis started. A lot of parties, including Marine Le Pen, the National Rally head, calling just right now for President Macron to dissolve the National Assembly, the far left as well calling for new legislative elections. Even people within the Republican camp, such as David Linard, the mayor of Cannes in the south of France, for example, saying just right now that Macron has no choice really between resignation and new snap elections. There is no room anymore to just name a new prime minister. That's not going to be enough to please public opinion, to please the oppositions. The only issue, Tom, is that new snap legislative elections would probably create a similar fragmented parliament into 3 blocks.
Okay, Bloomberg's Caroline Connor in Paris. Caroline, thank you for that update. We see the French Prime Minister, of course, outgoing Prime Minister Sébastien Lecornu, continuing, of course, to speak outside his office in the French capital. We'll hope to bring you some lines from that when we can get them. For the moment, let's bring in, though, Bloomberg Senior EMEA Market Strategist Michael Masika. And Michael, we're seeing that significant sell-off across French equities and French banks really coming under pressure today. How do you see the equity story in France evolving in the days ahead?
Well, the reaction is the knee-jerk one. Like, you have more uncertainty building, you sell the market, you sell pretty much everything. Banks are being hit harder, and that makes a lot of sense because they've also been the best performers this year, not just in France, but everywhere in Europe. So you want to reduce your exposure to the country, they expose domestically, you sell those. It's kind of like expected. Now you see there's also other companies that are being sold like pretty heavily, like LVMH, for example. Those, they have very, very little exposure to the French domestic market. So it's kind of like just reducing your portfolio exposure to the country in general. And that's what's been happening for like a year now. I mean, the CAC is trailing the rest of the markets. French domestic stocks are trailing the rest of the markets. It's just an ongoing situation. And we could have more of that over the next few months until that uncertainty kind of clears out, if it does.
Okay, and I want to get your forward view as well. But let's just meditate a little bit on what you said around the bank. So maybe there's some profit taking when it comes to French banks that perform very well. Ludovic Soubrin of Allianz saying that he would suggest and recommend a rotation, maybe out of domestically focused French stocks into those international names. And you named LVMH as one of them. So that could be a move that we see a rotation into some of those internationally exposed French names.
Yes, definitely. If you look at the performance of French domestically exposed stocks, they've been performing extremely well this year, just like the rest of domestically exposed European peers, because that's been the theme in Europe this year. It's like domestic exposure more than the international one. Why? Because you have the tariffs, you have China uncertainty, US uncertainty, and all of that pushed investors to invest massively into the domestic economy. And also in Europe, you have fiscal stimulus, you have the interest rates that are very low, much lower than in the rest of the world and in the US, for example. So the domestic exposure was like the main theme. So now you have obviously some kind of switch starting, and after like such a strong outperformance, you will have a rotation, yes.
And you highlighted the fact that French stocks have been laggards. Does that story continue to turn in 2026? What do we need to see a budget passed, new elections? What gives French stocks the ability to catch up with their European peers?
You have two things. First, the uncertainty is unlikely to dissipate. The problem is, even if there's a snap election called now, it's very, very unlikely that we get a very clear parliament. So like where is going to be the majority? It's very tricky. So we might have more uncertainty on that front. What you could have is investors starting to buy dips. Just because French stocks are now undervalued compared to their European peers. They have some of them have a very good exposure, and that investor would want. So you could have a bit of that as well.
Michael, fantastic. Thank you for your views and your insights, of course. Bloomberg Senior EMEA Market Strategist Michael Masika. We're going to leave you with live pictures. In fact, the outgoing French Prime Minister Sébastien Lecornu has just returned to his office. He's just walked back indoors, having addressed the media. We continue to keep across this story for you. French stocks are down. This is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
talking to they have not stopped the work of looking through their supply chains with ESG in mind, because that is just where the puck is going.
Our focus is really to understand what are the technologies that are part of our portfolio for the future, and scaling those technologies so that we can meet our demand with clean energy.
Resiliency is just not an operational response to what is happening out there. Resiliency could and will be a strategic advantage that companies will start to look at.
There is still hope to actually get back down to something of a livable world if we get our act together.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Layoff risk. Federal workers go to court as U.S. government agencies prepare to take action on firing plans. Global bond jitters. Yields are climbing as the French Prime Minister resigns, and Japan is set for a new leader. And Boeing signals an output hike for its 737 MAX jets as early as October. So remember we finished with records last week, the S&P up more than 1%, same for the NASDAQ. Well, it looks like we are pointed higher once again this week. Russell, NASDAQ 100, S&P all higher. The action might be elsewhere though. Let's look at the bond universe, because we are seeing bonds sell off around the world. Not quite as significant here in the United States. Nevertheless, we are seeing a move lower in yields. 475 on the 30-year. The 2-year is up to 357, so a little bit of curve flattening there. If we look around the world, though, that's where the action is. In the last hour and 15 minutes, you had the French Prime Minister resign, after a cabinet was named that was basically the same as the old cabinet. Opposition to that, and you can see a much weaker euro today. In fact, it weakened substantially since that resignation. 116.68. It had been trading earlier this morning above 117. And then in Japan, Takaichi is said to be the next LDP leader and the presumptive new prime minister, and that has the yen weakening by 2% today, even though we thought it had been at least partially priced in. The yen trading well above 150. Let's get over to London now and some individual movers to watch. And Valerie Teitel. Valerie, good morning.
Good morning, Bonnie. Let's start with what's going on in France. We are seeing French banks very much on a back foot so far this morning. SocGen down 5.4%. BNP Paribas down 4.5%. This is on the back of that surprise resignation from the Prime Minister, Le Cornu, lasting just 27 days in office. But Bonnie, the market is starting to question just when this political crisis could morph into an economic one. And hence, we're seeing banks on the back foot as well of those OAT bond yields spiking. Well, we have an eye on French politics. We also have to keep an eye on what the White House is up to. A Reuters report that the U.S. is eyeing an equity stake in critical minerals. We're seeing critical metals jump 77% in pre-market trade. This would give the U.S. access to one of the largest rare mineral mines in Greenland. They want to convert essentially a loan into an equity stake. This is something they did similar with Intel a few months ago. It would give them around an 8% equity stake in Critical Metals Group. Lastly, let's move on to some upgrades. Morgan Stanley upgrading Micron to a buy. That share is up 3.5%. Morgan Stanley very bullish on their memory chips and thinking you can get double-digit growth in the next few quarters. Bonnie?
Valerie, thank you so much. Valerie Titel there in London. And later this hour, we'll discuss the economic risks around the world with Callum Pickering of Peel Hunt. Plus, Chris Watling of Longview Economics joins us as he sees bubble traits in the US stock market. But first, our reporters around the world for the latest political developments. We have Caroline Conan in Paris, Alice French in Tokyo, and Kasia Klimashinska in Washington, D.C. A lot to discuss. Let's start with France. Prime Minister Sébastien Lecornu just resigning about an hour and 15 minutes ago, hours after his cabinet was unveiled. French stocks declining, bond yields rising substantially on the back of this development. Let's get straight now to Caroline Conan in Paris. Caroline, did President Macron really think this new cabinet, which is basically the same as the old cabinet, would satisfy the populace?
Well, clearly that's the entire question. The resignation of Sébastien Lecornu was very quick, less than 24 hours after he named his new cabinet last night. But clearly this new cabinet was almost a copy and paste of the previous government of François Bayrou, who collapsed, as you know, early September. And you had some unexpected comebacks in the government, such as Bruno Le Maire coming back as defense minister, which angered the Republican Party. The problem is that within the Macron's camp, you needed the support as well of the Republican Party. So they had a crisis meeting planned, in fact, just happening right now that they maintain, but the government has already collapsed, so they were supposed to discuss whether they were going to withdraw from this government. Lecornu didn't really see any outcome with what he said just now in Matignon, the Prime Minister's office. There was too much partisanship with a view to the next presidential elections, and every single party trying to defend their own program, every single party thinking that their own budget proposals would be adopted, which is something that is not really possible when you have a parliament that is still fragmented into 3 blocks. And Lecornu speaking just a few minutes ago, also saying the opposition didn't acknowledge that there was a change in method, that he promised not to use Article 49.3 in the Constitution, which allows you to force a bill through Parliament. He wanted to give power to Parliament back. That wasn't enough. He decided to resign.
So what happens next, Caroline? Where does France go from here? Because it's not just the electorate, right? It's the markets. We're seeing a massive move in markets today.
Yes, and this market move is not going to end anytime soon. 86 basis points currently on the spread between the French and the German 10-year. Some analysts saying this could reach 100 basis points if we see new snap elections. Clearly, everything is in the hands of President Emmanuel Macron right now. Will he speak tonight? Will he address the nation to kind of understand what is going to be his next move? He doesn't have many cards left in his hands. One card is obviously naming a new prime minister, but he's done that 5 times already. Another card would be to resign or call new snap legislative elections.
Caroline Conan in Paris, thank you. We'll be watching very closely. In Japan, the election of a pro-stimulus leader has shaken up global markets too. The Nikkei surging in the session, while the yen and longer-term bond yields are tumbling. Bloomberg's Alice French is in Tokyo. Alice, what are these market moves signaling about expectations?
Morning. Yes, you join me after what's been a very busy day in Tokyo. Of course, we now know that we have Sanae Takaichi as the new leader of the ruling LDP. As you mentioned, she's pro-stimulus, she's pretty conservative, and she's also a heavy metal fan, if that's at all relevant. But yes, it's been a good day for stocks. We're seeing this revival of this so-called Takaichi trade. We know that Takaichi has talked about more investment into strategic industries. So that's things like defense, tech, chips, software, etc. And so we've seen those sectors really rising today. The big defense names up over 10%, chips rising. Overall good sentiment for stocks. On the other end, you know, we have seen bonds pressured. We're seeing the 10-year JGB yield up at the highest since 2008. We've seen the yen pressured, as you mentioned, and this is around concerns that, you know, we know that Takaichi is going to push for more government spending. That's bound to kind of fuel nerves around the public deficit. She's also a slightly sort of dovish take on monetary policy, which may potentially weigh on the BOJ. We know that we have another rate hike decision coming at the end of this month, and we are seeing expectations receding for that near-term rate hike, which is also pressuring the yen, and also not great news for banking stocks. So we shall see how that plays out. We know that obviously the LDP is in a minority in both houses of parliament, so whether or not she can actually move forward with all of these policies that she's spoken about sort of remains to be seen. But at least in the short term, we're definitely seeing, you know, positive sentiment for equities, but some nerves around bonds and the yen.
It's fascinating because you say pro-stimulus and dovish, but she's also been likened to Margaret Thatcher as well. President Trump is going to be in Tokyo at the end of this month. Does Takaichi's win have any implications for US-Japan relations?
Yeah, as you mentioned, she has been likened to Thatcher. She's also pretty similar to Abe in quite a lot of her policy stances, the late Shinzo Abe, previous Prime Minister of Japan, who we know was pretty close with Trump. That may help her. But yeah, we're expecting Trump in town just before Halloween. And we know that during her campaign, Takaichi had, you know, mentioned that if the US-Japan trade deal that was agreed back in July, if it's implemented and it doesn't really benefit Japan, or it doesn't go particularly smoothly, she might consider renegotiation. Now, that may not go down well with Trump, so we'll have to see how that goes. But you know, it's going to be a really big first job for her as Prime Minister, we assume.
Alice, thank you so much. That is Bloomberg's Alice French in Tokyo. And back in the US then, the government is into its 6th day of a shutdown now. Unions representing hundreds of thousands of federal workers have gone to court to try and block mass firings by the Trump administration, which could start coming later today. For more, I'm joined by Bloomberg's Kasia Klimaszinska, who leads our breaking news coverage in Washington. So, Kasia, where does this legal challenge leave the risk of mass layoffs?
Hello. As you mentioned, we are now in the 6th day of this shutdown that started on October 1st because lawmakers couldn't agree on how to fund the government going forward. So all the non-essential operations of the government are halted, and those workers are concerned that they may lose their jobs permanently because around October 1st, President Trump said so. He threatened that he will look at the agencies that don't align their mission with the views of this administration might see cuts. There's about 650,000 employees of the federal government that are now staying at home and not receiving pay. And so they use their union to ask a judge to make sure that Trump doesn't make any of those cuts permanent. The unions argue that there's basically no law that would allow for such a thing, that the lapse in funding is just temporary and really shouldn't lead to any permanent changes at those agencies. Also, over the weekend, unfortunately, we didn't see any progress between the two sides, so between Democrats and Republicans. They were just trading accusations, but there was no progress towards reopening the government.
Well, elsewhere, talks between Israel and Hamas begin today to discuss the U.S.'s peace plan for Gaza. What do we know about the state of diplomacy in the Middle East right now?
So we had this fascinating report from Axios. We know that President Trump presented a 20-point plan for the Middle East. He hosted Prime Minister Benjamin Netanyahu of Israel here at the White House last Monday. And then on Friday, Hamas came back with this kind of yes, bet response. So Trump got on the phone with Bibi again, and according to Axios, he kind of snapped back at Netanyahu when Netanyahu wasn't entirely pleased with Hamas's response. Trump said, this is a win. Take it. So today, the two sides, Hamas and Israel, are negotiating via intermediaries. The representatives of the U.S. are there as well, including Trump's envoy, Steve Witkoff, and his son-in-law, Jared Kushner.
All right, Kasia, thank you so much. That is Bloomberg's Kasia Klimaszinska in Washington. Now, to other top stories trending on the terminal this morning. Boeing is said to be preparing suppliers for increased production of its 737 MAX planes as early as this month. Sources say the plane maker may make 42 jets a month. Boeing's monthly rate had been capped at 38 last year after a near catastrophic incident. Shares of Aston Martin are falling after paring back its outlook for a second time this year, citing the impact of U.S. tariffs and broader economic challenges. The company now expects sales to fall by a mid to high single-digit percentage this year and no longer anticipates positive cash flow during the second half. And sources say Stellantis is planning to invest about $10 billion in the U.S. The investments could be funneled into plants in states such as Illinois and Michigan and may include fresh investments into Dodge and possibly the Chrysler brand. It's preparing the announcement while lobbying the Trump administration in recent days to waive or soften a possible 25% tariff. Coming up, more on the political spillover effect of the shutdown with Callum Pickering of Peel Hunt. That's next. This is Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg. Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
We had from March until now to try to work this thing out, but Republicans refused to talk to and work with Democrats so that we could come to a meeting of the minds. They waited to the last second and then walk away, not being in Washington, D.C.
U.S. government shutdown then extending into a 6th day. Federal workers asking a U.S. judge to immediately block any mass firings threatened by the Trump administration. National Economic Council Director Kevin Hassett telling CNN, quote, "I think that everybody is still hopeful that when we get a fresh start at the beginning of the week, that we can get the Democrats to see that it's just common sense to avoid layoffs." Callum Pickering of Peel Hunt weighs in on the rising risks, writing this. The risk to watch is that a political storm generates market and economic spillovers. He's chief economist at Peel Hunt and joins us now. So, Callum, what are the immediate risks if this does continue?
Well, I think the first point to note here is that the base case that government shutdowns add to uncertainty, reduce confidence, and put downside risks to growth, I think that still plays out. But what I would just note, and this is not just true for the US, this is true for all advanced economies, the bond market, which is really the conductor of the global market orchestra at the moment. The bond market moves, everyone else has to just dance to the tune. The bond market is not reacting in the same way to weaker growth expectations than it normally would. So conventional wisdom would be anything that slows growth pushes down yields. This is not happening. What slows growth adds to worries about long-term debt and pushes up yields. And so I think what you've got here is actually basically badly behaved politicians on a collision course with the bond market. This is true in America, as it is in France, as it is in Japan, as it is in the UK, Italy, and Germany. This is basically now the standard playbook around the world. And every 2 weeks, I'm on here basically discussing the same thing. And until someone actually just faces down these long-term debt issues, this is going to be the story as far as the eye can see it, as far as I can tell.
Yeah, we're seeing huge moves in the French bond market. The OAT bund spread now at almost 90 basis points. How concerned are you that this is going to create contagion around Europe and the broader universe? I mean, you just mentioned that we were seeing bonds sell off really around the world, Japan as well today.
Yeah. Well, we can talk about spreads as much as we want, but just notice, if one of the G7 countries has any political issue, any fiscal issue, the whole bond market now sells off. Right? February, we had UK, US. April, we had US. 6 weeks ago, we had France. 2 weeks ago, we had the US. Now we have France and Japan again. We're all in this together, which is that just as the advanced world is at the foothills of a 3 to 4 factor order increase in debt to GDP as populations age, we've had this normalization of inflation, this normalization of interest rates, and the natural buyer of this stuff, which is basically pension funds, has said, we've got all we need, really. And so now we're paying prices for this debt that the private sector cannot tolerate. I don't see an easy way out of this until, again, one country just says, okay, let's just deal with these long-term debt issues. I think then the market rewards them. The situation France has got is, actually, I don't really see a way out for France while it's in the euro. It had the chance with Macron 7 years ago to basically reform its economy, bring down the unemployment rate, boost business growth, and balance the books.
Yes.
It then got hit by COVID and the Russian invasion of Ukraine through the economy, of course. Voters said, well, you've made us poorer with these reforms. It hasn't boosted the economy. Now we don't like your politics anymore. And now you have a situation where the euro is too expensive for France. It won't do any political reform. And the bond market is breathing down its neck. And no one wants now to take the decision of either reform or exit the euro. I think you're basically stuck for a while, and this is just the new playbook.
That's a really difficult challenge. I do want to bring it back to the US, though, because we don't have that debt ceiling issue this time around in this shutdown that we did before. That debt ceiling has been lifted. So the bond market here is reacting maybe to something else, Federal Reserve, potential for cuts and so on. How much do you think the Fed can work off the data that it's getting right now, assuming this shutdown continues?
Yeah. Well, I think the Fed is probably the most well-endowed central bank in the world when it comes to the data. So, of course, it's always bad news that we can't get excited on a Friday afternoon once a month about non-farm payrolls. But the Fed, with all of its surveys and some other hard data, has a good handle on what's going on critically in the labor market and then also in inflation. The key thing for me is that over the course of summer, the Fed has basically been trying to figure out, will these tariffs, these are anti-growth inflationary policies, will they push the economy further away from the employment mandate or the inflation mandate? Over the last, say, 4 to 6 weeks, it seems to be decisively the case that employment is suffering more than inflation. That's where we're getting the surprises. And so the Fed has started to move on with its rate cutting cycle. The problem that you have now with these tariffs, with the shutdown, is that you're now adding uncertainty into the mix. And so what does the Fed do? Does the Fed now say, well, we should start thinking about 50 basis points? I'd be very nervous about leaning more into economic weakness if the long end of the bond market is moving up. Because if the long end starts sniffing inflation because the Fed goes too soon, I think there was a nice headline over the weekend, is the US facing a re-acceleration risk?
Exactly.
I think this is really the question for the Fed.
Yeah, it's a really tough situation to be in. Callum, thank you so much. Great to have you give us some context. That is Callum Pickering of Peel Hunt. Coming up, President Trump's National Guard deployment blocked once again. That and a look at what else is making headlines in your front page news. This is Bloomberg.
for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up on the New York Times, a federal judge once again blocks the National Guard deployment to Oregon. The judge accused the administration of circumventing her order as President Trump turned to Texas for troops aimed at Chicago and other Democratic cities. The judge is a Trump appointee. Next up, the Wall Street Journal reporting that China has found a way to secretly pay Iran for oil, avoiding U.S. sanctions. According to sources, it's a barter-like system where Iranian oil is shipped to China. In return, state-backed Chinese companies build infrastructure in Iran. The arrangement sidesteps the international banking system. And on the Washington Post front page, Gaza ceasefire talks to begin in Egypt. Israeli and Hamas officials are expected to gather today in Egypt for high-stakes talks to end the war in Gaza. The negotiations over the U.S.-backed plan are set to happen even as Israel continues strikes on Gaza. Coming up, federal workers' unions go to court. More on the shutdown next. In the meantime, futures pointed higher in the United States even as political turmoil rocks Europe and also Japan. Global bonds are selling off, yields higher across the board. This is Bloomberg.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I never doing that again.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Layoff risk. Federal workers go to court as U.S. government agencies prepare to take action on firing plans. Global bond jitters, yields climb as the French Prime Minister resigns this morning, and Japan is set for a new leader. And Boeing signals an output hike for its 737 MAX jets as early as October. Let's take a look at those markets, because the U.S. certainly seems to be moving blithely upwards, with those futures pointed once again higher after gains of more than 1% apiece for the major indices last week. We have gold at a record above 3,900. We had Bitcoin trading above 125,000 over the weekend. And everything seems to be just hunky-dory in the United States, even as the shutdown enters the 6th day and we don't have any government data. Let's look globally, though, because the French markets are down 2% and the bond vigilantes are out in force. Here in the U.S., we're seeing a small movement in bonds, particularly at the longer end, 475 now on the 30-year, less of a movement on the 2-year, it's at 357. But we're seeing French bonds sell off dramatically. We're also seeing a movement in Japan, and you can see that through the currencies as well. Japanese currency moved 2% today. It's trading above 150, well above 150. The euro, which had been trading at 117 and above, trading well below that now after we got the resignation of the French Prime Minister, who, by the way, has only been Prime Minister for less than a month. He was appointed September 9th, I should say, and he is already out of office. Let's get to some individual stocks to watch now. Here's Valerie Teitel in London. Val.
Good morning, Ivani. Let's start with a check on French banks. They are sliding on the back of the surprise resignation from the Prime Minister. SocGen down nearly 6%. BNP Paribas down nearly 5%. The market is really starting to ask the question, just when will this political crisis really turn into an economic one? We're seeing jitters in the OAT market and jitters in the French bond market on the back of this. Well, with an eye on what's going on in France, let's also keep an eye on the Trump administration. There was a Reuters report out over the weekend that they are looking to convert a loan into an equity stake when it comes to Critical Metals Group. We're seeing those shares surge 75% in pre-market trade. Now, this will be very similar to what they did with Intel, converting a loan into an equity stake, with Reuters reporting could be about 8% of Critical Metals, who has access to the largest rare earth mine in Greenland. Lastly, let's end with Micron, a street upgrade from Morgan Stanley, bullish on their memory chips. They think that this stock could put back-to-back gains, quarter on quarter of double-digit growth in that sector. So Micron Technology up nearly 4% on the back of the Morgan Stanley upgrade. Funny?
Never a dull moment. Valerie Teitel there in London. Thank you. The U.S. government entering its 6th day of a shutdown. Unions of federal workers have gone to court to try and block mass layoffs by the Trump administration, as officials signal that agencies could start taking action as soon as today. Bloomberg's Kasia Klimashinska joins us now from Washington. Kasia, where does the legal challenge leave the risk of mass layoffs?
Hello. So the federal workers that basically haven't been going to work since October 1st used their unions to intervene and perhaps try to prevent permanent firing. So President Trump has threatened that he will use this gap in funding for the federal government to cut staff at some agencies, especially the ones that he described as Democrats agencies, the mission of which doesn't align with the mission of this administration. He didn't specify any targets yet, but those details could come as early as today. Trump's top economic aide, Kevin Hassett, spoke to the media on Sunday, and he said that the administration will still wait for the outcome of the vote in the Senate today, but after that, there could be some details. Now, those federal workers, as you mentioned, the unions filed a lawsuit, and I asked a judge to stop this move. The workers, via their unions, argued that it's illegal to take any permanent steps because the lapse in funding is only, relatively short term. We are now in the 6th day, but of course, at some point, lawmakers will reach an agreement.
Well, lots of legal challenges. Elsewhere, a judge in Portland has blocked the president's efforts to send California's National Guard troops to the city. What's the latest there?
So this is the issue of the Trump administration trying to federalize law enforcement in cities that are run by Democrats. D.C. is a good example of that. Memphis is another. And now Trump focused on Portland, saying that he needs to send National Guard there to stop the protests. He was first trying to use the Oregon National Guard, and the judge stopped that on Saturday. So then the Trump administration was trying to deploy the National Guard from California, and the judge stopped that yesterday as well. Interestingly, it's a Trump appointee, but saying that this isn't needed, that those protests are relatively mild. It's apparently around 20 people each week outside one of the ICE offices outside of downtown Portland, and that the local law enforcement can take care of that, that there's no need to send National Guard.
Kasia, thank you so much. Kasia Klimashinska in Washington, D.C. Now to some stocks that we're keeping an eye on in the early going. First up is Boeing, guiding its suppliers that a production hike for 737 MAX jets could come as early as this month. It's a sign of growing optimism at the plane maker as it works to win approval for the move from U.S. regulators. Bloomberg's Danny Lee joins us now for more. Danny, we've had so much bad news about Boeing. What does this item of news mean for Boeing and its customers?
Yeah, Bonnie, good morning. So Boeing has signaled to suppliers that it could raise output of its most profitable and most successful single-aisle jet. And that's a real turning point 20 months on after a near catastrophic crash involving one of its jets it makes, flown by Alaska Airlines. So what it's telling suppliers is that the rate of production could go from 38 a month to 42 a month as soon as this month, and a series of increases then could lead it to increase production furthermore to around 53 aircraft a month by the end of 2026. Now, this has many financial implications, many upsides for it to improve its finances, particularly to pay down debt, to generate more cash, and to potentially turn around 12 consecutive quarters of losses. Boeing can only do this, though, in conjunction with the U.S. Federal Aviation Administration, if they can prove with its suppliers that it can increase production and the quality of that safely. Now, this is great news for airlines who are waiting on these jets, purely because we have seen this huge global supply chain crunch for new jets. And Boeing has not been immune, nor has Airbus, from delaying deliveries of new aircraft. And the airline industry, airlines are really keen to grow, and they can't do so quickly because plane makers like Boeing and Airbus cannot produce the planes nearly as quickly enough.
And it already has to convince the FAA that it can, up its quality, with the amount that it's already putting out per month, never mind upping the amount that it's putting out. But if it could get this hike into gear, would that bring it up to speed with Airbus?
It's really fascinating because it has fallen behind over the last several years. Particularly it stems back to this fatal twin crashes of the 737 MAX in 2018 and 2019. And it is a bit of a watershed moment because as of this month, despite the fact that Boeing has had a 20-year lead in the production of the 737, the fact that Boeing and Airbus has been able to come on the scene later is actually now producing as many jets and has delivered as many as Boeing. So for Boeing. It really has to catch up and to try and nullify this fast and very, very well sold Airbus rivaling jet. So clearly there's a lot for Boeing to catch up on, and this is really the start of hopefully a clear turnaround under CEO Kelly Ottberg.
Exactly. Danny, thank you so much. Bloomberg Aviation and Transport reporter Danny Lee there. Well, we're staying in the space, turning to autos. Shares of Aston Martin falling pretty precipitously after the company cut its outlook for the second time, citing US tariffs. Joining us now is Bloomberg's Craig Trudell. What does this mean for Aston Martin, Craig?
Yeah, I mean, in short, this is a bit of a mess for UK car makers broadly, where while there was an agreement with the US government to, get some relief for car makers from higher duties that were put in place by the US, it was done so in a very, sort of curious way of across the industry. Car makers are going to have to work out, 100,000 units allowed by the U.S. under a lower tariff rate, but after that 100,000 units, imports will be subject to higher tariffs, and so Aston Martin is citing, still, despite the fact that there has been some relief, car makers are still going to be subject to higher duties, just not quite as stringent as was initially announced, and also just real confusion. I think sort of abounds for this industry of how exactly that 100,000 unit cap is going to work out in the future. So Aston Martin, has also had, we should note, the last few years, plenty of its own sort of missteps, and that's leading to some real frustration from its investor base this morning.
We need a new Bond movie. Meanwhile, Stellantis planning to invest about $10 billion in the United States. Stellantis already with problems of its own, so how can it afford this? Or is this a ploy to get President Trump to be maybe a little bit more, amenable to Stellantis?
I think there's definitely some currying of favor being attempted here, no doubt about it. This is also a case where, the amount of investment in North America under Carlos Tavares, I think, you could fairly say was, sort of underdone, and unions were really sort of had it with him by the time late last year that the board finally showed him the door. I think this is also a case where you have certain brands like Chrysler, where they've really been neglected. It's down to a single minivan in that brand's lineup, and so you've seen more investment maybe in the likes of France, and the electrification needed to better compete in the European market. This is now a case where Antonio Filosa, the still relatively new CEO, is really turning his attention to North America and sort of seeing that market for what it is, which is that it's absolutely pivotal to this company engineering a turnaround.
Yeah, absolutely. Craig, thank you so much. Bloomberg's Craig Trudell there. Now to other top stories trending on the terminal this morning. NVIDIA's production partner, Foxconn, reports 11% growth in quarterly sales, signaling healthy demand for chips and servers needed to develop AI. It's expanding capacity in the US, adding AI server production in Wisconsin and Texas. Pro-stimulus lawmaker Sanae Takaichi near certain elevation as Japan's next prime minister is jolting financial markets today. Her pretty surprise victory reduced expectations that the Bank of Japan may hike interest rates soon. The Nikkei closed at a fresh record. French Prime Minister Sébastien Lecornu has resigned. His resignation comes just a day after President Macron named a new government, which retained most senior members from previous cabinets. And that did not please investors. Let's take a look at where French assets are trading right now. We had the CAC 40 down 2% at one point, so we are off our lows, but it's still down 1.5%. Now, the euro dropped precipitously after Lecornu's resignation, down to 116.64. It had been trading above 117. The 10-year yield, as you can see, 3.58, up another 7 basis points. The 30-year yield up 8 basis points. A huge sell-off in French bonds. The bond vigilantes out in force in France, and we're going to talk more about that next, as well as, of course, the U.S. stock market, which seems to be blithely ignoring everything, with Chris Watling of Longview Economics. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Political changes today causing turmoil in markets around the world. Obviously, you have the LDP leader now being Sanae Takaichi. She's likely to be the next Prime Minister of Japan. And then in France, just a couple of hours ago, literally 2 hours ago, Le Cornu, the Prime Minister who wasn't in the job a full month, resigned. And that caused chaos, including the euro to depress even more. 116.58 it's trading at now. You have the CAC 40 down 1.5%, which is well off its lows of the day. The 10-year yield at 3.58 and the 30-year yield up to 4.41, up 9 basis points. Well, joining us now is Chris Watling, CEO and Chief Market Strategist at Longview Economics. We want to talk about all of this and, of course, the U.S. stock market. But those market reactions, particularly French markets, how do you say bon vigilante in French, Chris? Is that what's happening?
Well, that's testing my French, yeah. That's a great question. Well, I mean, it's interesting how the bonds sold off, the euro sold off, and it's come back a bit.
Yeah.
You know, the CAC's up a bit off its lows, isn't it?
True.
It's kind of, which I think actually encapsulates the whole story. It's a bit of a shock that he's resigned, although we're used to French prime ministers resigning. This is hardly new news in a sense. And the idea he was going to be able to craft a budget was ambitious at best. And the market's like, okay, oh, that's a bit of a shock, but actually, how much has really changed in the French story?
And, you know, we're still at extremes to a certain extent. You know, for 90 basis points, you know, spread from OATs to bonds, then that's already telling us a lot. But at what point does this really deteriorate for France? Because if, you know, this government collapses, what's next?
Well, I think, as long as Macron doesn't resign, there's some sort of semblance of stability, let's put it that way. I think the problem with French politics is it's so disparate. There's so many different political parties making some sort of progress, obviously with the sort of right-wing party. Then, of course, you've got the centrists and the left-wing. I think there's no clear path to a strong government. And there's no clear path to a strong government that would have fiscal discipline. So I suspect that the real risk here is you know, the politics falls over, and as I said, I don't think it will because Macron's probably going to stay. We'll find out, but I would imagine he would. But it's if you get new governments who aren't fiscally prudent, who are happy to open their purse strings, then I think you'll see basically the ECB effectively becoming the disciplining mechanism on French government bonds. It's ultimate. The backstop here is the TPI. You know, the ECB will enact the TPI if there's a real problem. But they'll only enact it if the French accept some sort of discipline. So that's the interesting dynamic, I think.
And as you say, we're seeing somebody elected in Japan who may open the purse strings, and that's causing Japanese markets to rally big today, but the yen to weaken as well. Let's move back to the US because we are entering day 6 of a shutdown. And you said in your note that this bull market is showing signs of frothiness, speculative excess, and euphoria. So you wrote this. Increasingly, this market has the key features of a bubble, including strong momentum, making it hard to bet against it. So if that's the case, are you all in?
How about that for advice?
Right. Are you all in or are
It's
you
not very helpful, is it?
No.
Well, I mean, it's clearly got so many. I mean, just look at the way some of these stocks behaved in the last month. I mean, Oracle's the one everyone talks about, but there's tons of them. Or the revaluation of OpenAI up to 500 billion from 400 billion earlier this year, even though it's losing more money. And if you look at something stock like Palantir, I know I was off a lot on Friday, but pre-Friday it was trading, I think, on 70 times sales. Now, if you go back to March 2000, there are no stocks as expensive as that on price to sales in the S&P 500. So the surge in large cap stocks, the valuation excess, all of this is very bubble-like. There's no two ways about it. And I think if you layer on top of that, a lot of this CapEx is a very short CapEx cycle. This is not like we're laying railroads that are still here and we're still using them. After 2 or 3 years, they've got to double down. If you're doubling down, you've got to make money quick. So there's a lot of supply, which is classic of bubble. You've got CapEx cycles that are short. You've got crazy valuations. So, and on top of that, everything else you mentioned, froth, speculative excess, greediness, etc.
Well, and the idea that we don't quite know where the profits are going to come from either. How are these, products going to make money? So sure, storage, yes, that's fine. You know how that's going to make money for you, but what about the rest of it? So what would you advise somebody to do right now if they had money to play around, or gains?
Well, I memean, in the US market, we had a very good first half of the year, and we're sort of kind of just standing back and going flat, if you like, not betting against it, but not. But I wouldn't be surprised if it had a bit of quite a pullback in the next month. And I think I would use that as an opportunity to step in. But also what I'd do is I'd look to broaden across global markets. You talked about France. Okay, fine. I wouldn't bother with France, frankly. I mean, I don't mean that. I love France, but I wouldn't bother with French assets. Wait till there's some more stability. But the rest of the world, some of it is really breaking out. China's doing well.
But it's done. That's the thing. Are they done? So you saw 20% gains already for Japan this year. You've seen the same for China this year. I mean, 20% is a good gain.
It is a good gain, but I think when you look beyond, I think what we're seeing is a broadening of this global stock market away from just the US. And it's been brewing for 12, 18 months. You look at someone like Spain. We've been pushing Spain for a while. It's outperforming the S&P. It's pretty much outperforming the NASDAQ over certain time frames. It's doing very, very well. So, okay, you can't put a lot of money in there if you're a big US investor, but you can put a bit. South Korea's doing well. Taiwan, South Africa's doing. There's so many countries where there are good gains. And I think the point is we're in a global rate cutting cycle. So liquidity is getting freer. So equities globally can do well and they can broaden out. And I actually think we're going to get a global cyclical recovery coming through over the next 12, 18 months.
What about the bond universe? Too jittery, too yippy to play with?
Well, go to ones you're more confident on the fiscal side. I mean, I actually think British bonds, apart from there's a lot of chat about problems in Britain, but I don't think it's nearly as bad as it is in France. And I don't say that as a Briton, our classic sort of, British-French relationship. We love the French, but I think that it's more governable, Britain, than France is at the moment, politically more governable. And the Labour Party's trying to get a hold of the public finances, and therefore the bonds are quite attractive.
Think Rachel Reeves is doing a good job?
I wouldn't go that far. I mean, I'm not the biggest fan, but she's doing a good enough job.
Yeah.
And I think with Keir Starmer seemingly backing her, they can do enough to make those bonds interesting.
We actually have to leave it there, Chris. Could speak to you all day with Chris Watling of Longview Economics. Coming up, we'll get you set up for your week ahead. That's next. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. Now look at what's ahead this week. Talks between Israel and Hamas begin today. The latest Fed minutes coming out on Wednesday, and Chair Powell's remarks will come on Thursday. Lots more to be watched this week, of course, including the government shutdown, but those are some of the things that the markets will be eyeing. Today, markets are looking at some of these stocks, moving higher, all of them in the pre-market. Boeing, of course, said to be preparing for a 737 output hike as soon as October, if it can get the FAA on board as well, of course. Micron higher. Morgan Stanley is upgrading that stock to overweight on earnings potential, says it sees double-digit price increases for the next several quarters. And we have NVIDIA as well, higher on the back of that. We also have critical metals higher. Reuters reporting the U.S. may take a loan for equity stake. Let's take a look at the macro environment, because we have a lot going on today. We have a lot going on in Europe with the French Prime Minister resigning, Japan as well with the new LDP leader, presumptive next Prime Minister. S&P futures pointing higher after more records last week. The U.S. dollar is stronger, as you can imagine. We're seeing a weaker yen by 2% today and a much weaker euro to the tune of about 0.7%. The 10-year yield up 3 basis points. That's it for Bloomberg Brief. Surveillance is right next.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
I don't see much of a change to the leadership fabric of the market.
It's a different structure in terms of the market itself, in terms of participants.
You are seeing a broader now.
Every market is pricing in this AI structural theme.
People are willing to put up some serious money to be a part of that story.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday, fiscal risk unleashed. A pro-stimulus leader in line to become Japan's next prime minister, as another French leader is resigning following just 1 month in the job, adding fuel to debasement trade, sending gold to fresh all-time highs. Gold up 50% year to date.
This is a clear signal that developed markets are losing clout as good stewards of capital, as we've seen over the past 5-6 decades of the dollar standard, of the euro being a counterweight to the dollar. Where do you go? If you're not going to go to euro, hello France. If you're not going to go to the yen, hello Japan. If you're not going to go to the dollar, hello government that still is shut down.
France and Japan are the epicenter of some of these bond moves so far this morning. Japan potentially hitting the accelerator. France struggling to hit the brakes. We've talked about this a million times when it comes to the French. The French government isn't going to fix things until doing nothing becomes more painful than doing something. And the fact of the matter is we're not there yet, and it could get a whole lot worse.
Because there is this belief in the bond market, even as yields climb, that there will be some sort of discipline foisted upon the government, so it becomes a chicken and egg kind of race. Does the bond market have to really freak out before the government does? And as long as they have faith that the government will respond to them, will they ultimately have that freak out? I mean, this is really sort of the circular thinking, but in the meantime, it looks like Japan is having a bit more of that more acceleration higher in yields.
The US, the bastion of stability so far for global markets this morning. Futures up by 1/3% on the S&P. Coming up this hour, Jordan Rochester of Mizuho as Japan selects a pro-stimulus leader. Andrew Sheets of Morgan Stanley as another French Prime Minister resigns. And Paul Donovan of UBS as the government shutdown holds back economic data. We begin this hour with our top story. Japan's ruling party lining up the country's next Prime Minister in a surprise pick, sending risk assets soaring. Joining us now is Bloomberg's Isabel Reynolds from Tokyo. Isabel, walk us through who the new leader is, and let's go through the policy platform. What can we expect policy to look like?
Right. Well, I mean, I think we should take a little minute just to acknowledge that this is a really historic moment for Japan. I mean, I've been covering Japanese politics for literally decades, and I always wondered whether I would ever actually see the day when a woman took the top job. But it seems almost certain that's what's exactly going to happen. She is known as a very tough person. She's worked her way up to this position, not from one of Japan's political dynasties, which is where prime ministers often come from, but just from an ordinary middle-class family. So that's the kind of person she is. She's known for being tough, but her policies are basically biased towards more spending and towards a more dovish central bank policy. So those are the bets that the market's making at the moment. They think there's going to be more spending in terms of whether it be maybe handouts or tax cuts for households, or whether it's going to be defense spending. She's pretty hawkish on defense as well. We're also looking at the Bank of Japan. I mean, bets that the Bank of Japan will raise rates at the end of this month. Those bets are sort of fading away a bit as people are assuming that there'll be some pressure from her. Although the Bank of Japan is officially independent, there will be some pressure from her to slow down those hikes that have been promised. So that's why we've seen these huge ructions in the markets today. She's also seen as basically as a nationalist. So she's been pretty hawkish on what she's said on China in the past. And she's even in recent weeks, she's hinted that she might want to try and renegotiate the trade deal Japan has with the US, which is quite a bold proposition. She has walked back on that a bit. But those diplomatic skills, if they exist, will be put to the test at the end of this month. We're expecting Donald Trump on a visit to Japan. So then these two tough leaders will be meeting.
Mark that one on the calendar. Isabel, appreciate the update. Isabel Reynolds in Tokyo with the latest. To extend the conversation, joining us now is Jordan Rochester of Mizuho. Jordan, welcome to the program, sir. Let's get into this. This could be a big moment, and I think the market's trying to work out what kind of moment. Is this an Abe-like type moment for the FX market, or dare I say a trust-like moment for the bond market? Which one?
It's not trust, but it could be, is what the market's saying. This is Saneomics. This is the new version of Abenomics is what the market's thinking. But I think, John, we need to have some level of caution. There's what politicians say and there's what they do. And what she can do with this current setup is pretty difficult because the Abenomics faction, the Abe faction of the LDP, is much weaker after a lot of election defeats in their seats. So roughly half the size of what they were a year ago. So the message we've been giving clients just now this morning and over the weekend is that Takaichi, whilst she stands for a lot of the policies that Abenomics had, so that would lead to looser monetary policy for sure than what should be the case, and that would lead to a weaker yen. It's not really clear cut to me because in order to win the LDP election, she needed other factions to help her get over the line. And a key part of that was the ASO faction, who are more fiscally prudent, and the intervention from the former Prime Minister Aso himself to arguing to respect the party member vote, where Takaichi overwhelmingly won, is the key reason why she won this weekend. But it also means that she'll probably have to appoint a finance minister who might actually see the market move the other way, John. We might see the yen sell-off and the sort of long yen sell-off in JGBs relax a bit once we know who the finance minister is, if they are fiscally prudent and a sort of continuation candidate for that role from the previous administration.
Jordan, how high is your conviction level that what she does is somewhat different from what she says? Meaning, are you recommending to clients that they buy the yen here at, with the dollar at 150, surpassing that 150 level versus the Japanese currency?
I'd say it depends on the timeline. So medium to high, I'd say high conviction that with the current setup in the parliament, the LDP don't have a mandate. They don't have a majority. They rely on a coalition party, Comito. That doesn't even get them over the line. So they're entering into coalition talks. So I've got a pretty high conviction she can't suddenly do very large, bold policies because she might lose members of her own party or make those coalition talks quite difficult. For example, the consumption tax cut, which was all the talk last time around in the elections last year, when it comes to Takaichi's own view on that, watered down significantly. So I don't think we're going to have a big fiscal agenda. That is until we see her polling. Once we see the polling, if the LDP shoots up to something of a 40 to 50 handle, if you see her own personal ratings improve, then we can't rule out elections. And once if that happens, Lisa, if we get an election this time or early next year, let's say, then I can't rule that out.
It feels somewhat different, though, even than a Liz Truss moment, Jordan, or potentially what could become a Liz Truss moment, because this is global. This is Japan. This is France. This is the United States, where the government is shut down, where a lot of governments are showing a real reluctance to clamp down on deficits that have been climbing. They want to still lean on that deficit lever, which is the reason why you see bond yields creeping higher, particularly in the 30-year denomination. At what point does the collective story take on a life of its own?
It already is. I think it is happening right now. So as you mentioned, the US with its own fiscal issuance, Germany with its own fiscal issuance, and now France, of course, has been with the largest deficit in the Euro area, all flagging that point. The only one that stands out as not actually joining in with the party is the UK because of the fiscal rules that the Chancellor has thrown on themselves. But Japan is very acutely aware of this problem. The Ministry of Finance has been reducing the auction sizes in the long end to try and deal with that. But what's changed in the sort of functioning of the Japanese JGB market is the demand from life insurers for long-end JGBs has collapsed versus what it used to be. And actually, the majority of the trading volumes in JGBs from the 10-year onwards is from foreigners. And so this means that you get these sort of big moves, as you've seen today, thanks to foreigners being the overwhelmingly large share of trading volume in ultra long-end JGBs, but also around the 10-year bucket onwards as well. So all in all, when everyone's issuing at the same time, something will break. I'm not sure when politicians will take note, but I think they are already. And I think that's why the LDP's fiscal prudence wing has played a large influence in Takaichi's change in her opinions.
Jordan, in addition to that, the role of the central bank. I think there's a big question up in the air about that, so let's discuss it. Traditionally, if this was the United States, we'd be talking about a pro-fiscal stimulus party or leader. We'd be talking about tighter monetary policy to offset some of that. That wasn't a conversation in Japan overnight. In fact, the pricing of rate hikes in the future actually came in. Now, Jordan, I wonder, is this really a unique independent central bank? What is going on with the central bank story and the relationship between the government and the BOJ?
All these independent central banks, they for example, the Fed, they answer to Congress. So there is a political sort of influence on all of them, the Bank of England, the ECB, etc. When it comes to the BOJ, there is a pretty strong level of political cooperation. It's written into the Bank of Japan's charter. Now, we've seen this before. Abenomics is a clear case of this, where most people assume that Abenomics was both fiscal easing and monetary. Sure, it was, but Abenomics actually leaned heavily on the monetary policy side of that story, and we saw the Bank of Japan expand their QE and so forth, and eventually go negative rates too. So there is the potential for Takaichi to play a large role. If you think back to last year, Prime Minister Ishiba, there's history behind this, John. One day after becoming Prime Minister, he said now is probably not the right time for the BOJ to raise rates. And they delayed that rate hike from October to January. So Takaichi might say the same thing. We've only had one tweet from her and one victory speech so far. And so we haven't got enough information. But what I will say is it's very different to Abenomics when inflation was at near zero. Inflation's been above 2 for the past 2 to 3 years in Japan. And the aim of this government is to try and bring inflation down. You don't really achieve that by stopping the Bank of Japan from raising rates. So John, I think they still raise rates. October is clearly much less likely now because the BOJ might want to wait and see what the budget will be. So that makes December or January still live meetings. But if you were to ask me, John, I'd be paid the October meeting. I think the risk reward is still there. The Bank of Japan has lined up loads of speeches this month. We'll hear from Governor Ueda himself later this week as well. The data's strong in Japan. It all adds up to a rate hike, John, apart from the politics and the uncertainty.
Watch this space. Jordan, thanks for jumping on a breaking news over the weekend. Thank you, sir. Jordan Rochester there of Mizuho. Big move in dollar yen. Up by 2%, back through 150. Japanese yields, particularly at the long end of the curve, much higher as well. There's a feeling listening to Jordan that Takaichi is going to be more constrained than the late Shinzo Abe ever was.
Maybe that's the reason why you're not seeing an even greater sell-off in the currency and even higher yields, something like 14 basis points in terms of the increase in 30-year yields in Japan. Goldman Sachs analyst came out and said this is going to be a global move, and that for every 10 basis points higher in Japanese yields, you're going to see 2 or 3 basis points higher in the likes of the U.S. and in Europe. A real question, though, about whether this is just going to be rumor or whether that's going to be essentially what's actually going to happen.
U.S. curve steeper today, 10-year bond yields higher by 3 basis points, getting back up to 415. Let's give an update on stories worldwide. What a morning already with your Bloomberg brief. Let's cross over to Yahara Anand. Hey, Yahara.
Hi, John. Japan's ruling Conservative Party has elected Sanae Takaichi as its new leader. The pro-stimulus lawmaker is a former government minister, avid heavy metal drummer, and longtime fan of Britain's Margaret Thatcher. The yen weakened and Japanese long bond yields climbed following her election, which fuels expectations of continued policy easing. Meanwhile, in Europe, French Prime Minister Sébastien Lecornu has resigned after less than a month on the job and just one day after a controversial cabinet reshuffle. President Emmanuel Macron now has to decide whether to name a new prime minister, call a parliamentary election, or resign himself. And here in the U.S., the government shutdown is entering its 6th day. The Senate is set to vote again today on a stopgap spending bill that's already failed 4 times. Senate Minority Leader Chuck Schumer says House Speaker Mike Johnson has refused to negotiate with Democrats on extending health care subsidies. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara a little bit later in the program. Up next, there goes another one.
À son parti, il faut savoir écouter ses militants, mais toujours penser aux Françaises et aux Français. Merci à toutes et à tous. Je vous remercie.
Another French Prime Minister resigns. Andrew Sheets of Morgan Stanley joins us next.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Live from New York City, welcome back to the program. Here's the week ahead, is shaping up as follows. Look out for earnings from Delta Airlines on Thursday, kicking off earnings season. That's going to be one to watch because we could be light on data again. Likewise, the Fed minutes on Wednesday. Where is the Fed? How divided is that committee right now, with or without economic data? On Wednesday, too, look out for $39 billion of 10-year notes coming to market. 30-year bonds coming a day later. What a week to issue some long bonds.
Yeah, it's really important to note that what you just said is absolutely correct. That Delta is going to be so important and earnings are going to be so important because of the incredible dearth of other data. We're just in rumor and speculation, which is the reason why I'm even more excited about these auctions. $58 billion of 2 notes on Thursday, 10-year notes at $39 billion on Wednesday, as you mentioned, and $22 billion of 30 notes on Thursday, given the fact that people are in this rumored strange zone of, are we losing the idea of some sort of credibility in developed markets?
And then you've got the influence of France and Japan laid on top of all of that. It's a lot to think about at the moment. For equities, not much to think about, just up. Up and up, and that was Max Kettner of HSBC a week ago, and that's exactly what this equity market has done. 6 days, no losses. Equities up again by 1/3% on the S&P, on the Nasdaq, up by 0.5. Let's talk about France and what's happening in Europe. Under surveillance this morning, there goes another one.
À son parti, il faut savoir écouter ses militants, mais toujours penser aux Françaises et aux Français. Merci à toutes et à tous. Je vous remercie.
So here's the latest this morning. The French Prime Minister, Sébastien Lecornu, resigning, a surprise move that deepens France's political crisis. The Premier stepping down less than 24 hours after President Macron named a new cabinet. Joining us now to explain all of this is Bloomberg's Caroline Conan. Caroline, welcome back to the program. We've done this a few times in the last 12 months already. What's new about this one?
Well, the new thing is that he is the shortest-lived prime minister in the Fifth Republic that was created by Charles de Gaulle in 1958. 3.5 weeks only for Sébastien Lecornu, and as you were mentioning, we've done this quite a few times already. We've seen François Bayrou collapse 3 weeks ago. Michel Barnier collapsed last December. So clearly, there was some really misunderstanding after the nomination of this cabinet last night, seen as a provocation by opposition parties, because it was broadly unchanged compared to his predecessor, François Bayrou, and you had the return of Bruno Le Maire as defense minister, which didn't go very well with the Republicans, who were threatening to leave the boat entirely. The socialists also didn't really agree with Lecornu, even though he tried to change the method by saying he will not force any bill through Parliament. He would let the Parliament decide on the budget. He would let the Parliament debate all the details on the budget. He didn't want to have the retirement reform come back to the National Assembly, this reform that was adopted back in 2023 after months of protests. So now all eyes turn to President Emmanuel Macron, to the Élysée. Is he going to speak today? Is he going to announce what happens next? He has 3 options: renaming a new prime minister, but he's done it many times over the past year, or he could perhaps call new snap legislative elections again after the ones in 2024, or he could also resign, which some parties from both the far right and the far left are now calling for.
The pressure keeps building. Caroline, thank you. Caroline Conan over in Paris. You see the spillover in the FX market. Euro dollar down by 0.7%, 116.58. Big winner of the year. European banks, French banks this morning, hammered.
Yeah, well, I can imagine going forward, if there is this idea of political dysfunction and potentially yields rising in the wrong manner, I just wonder, the fact that the dollar is strengthening today, not because it's a fantastic bastion of functionality, but rather everything else is more dysfunctional, gives you a sense of where we're at.
I had a quick sneak peek of SocGen this morning, down 5%, and then looked at year to date. I think year to date is up something like 90+% for 2025. So just bear in mind, these moves this morning are big, they're important, but relative to the year so far, they're like this, they're nothing.
Well, this is the reason why I think that there is a bigger move, outsized move, regardless of what happens, just because people have gotten so on one side of the trade, this bet in European stimulus and this bet in some sort of stability amid all of this.
Andrew Sheets of Morgan Stanley joins us now for more. Andrew, let's talk about all of this. Japan, France, the UK as well. It's either an inability or unwillingness to do something about the fiscal trajectory, Andrew. As someone who has to look across fixed income, what does that mean to you?
Yeah, thanks. Good morning. So look, I think you have a global phenomenon of pretty challenging fiscal situations, right? The U.S. is running a deficit of 6.5% of GDP. Japan appears to be looking at more fiscal easing. The French budget is in a challenging state. And the UK is clearly in focus. So one, I think this is an issue that is a global phenomenon, and one where there's a lot of longer-term momentum towards weaker fiscal positions. We do think that the UK might be in a somewhat better place than appreciated. Its deficit's moving in a different direction than these other countries, which is a reason why we do think you could see somewhat weaker growth in the near term, more Bank of England cuts, but ultimately better gilt performance. But I also think this is a situation where, in some levels, this could work to credit's advantage. Because if we think about the better relative state of corporate balance sheets, the fact that, say in the US, right, it is tax cuts for corporations that is in one level widening the federal public budget deficit, that kind of some of the same factors that are driving the public deficits wider are making the private sector balance sheets better, and that can work to credit's advantage.
At this point, Andrew, we talked previously about the possibility of corporate spreads trading inside of where government rates are. Do you see that as an increasing likelihood? We've already seen that with a couple of issuances from Microsoft. I'm just wondering if you see that as the path of travel.
Yeah, I do think, I think the best way that I would probably think about that is we can still look at very narrow corporate spreads, probably relative to where one would otherwise expect the macroeconomic environment to dictate it. And as you mentioned, I think it's very high quality spreads that can trade very tight. You know, as this is the 90th anniversary of Morgan Stanley, we were looking back at the first bond deal that Morgan Stanley brought 90 years ago. It was kind of a high quality piece of AA paper. I mean, in 1935, you know, that paper was trading, we think, at kind of 70 over treasuries. So there's a lot of historical precedent for high quality bonds trading tight generally. And I think in an environment where the market is looking for safety, a lack of drama, a lack of headline risk, that can be very valuable and lead some of these high quality parts of the market to trade quite expensive.
How immune are strong corporations to the country they're in? And I ask this at a time when we're talking about the government debt markets displaying a bit of concern about dysfunction in a variety of places. How much does it matter for the corporations what domain they reside in?
Yeah, so I do think an interesting part of this is that the reason why corporates should not trade through governments, I think has always been based on a pretty reasonable idea that the governments ultimately hold the power of taxation. And so in a scenario where the budget deficit was so troubling that they would turn to the corporate sector and they would tax back that money and create more of a credit challenge. Now, I think you've seen it certainly in the U.S., the opposite. You've seen corporate taxes being lowered on a going forward basis. In Europe, the trajectory is certainly not towards corporate tax raises kind of in the main. So I think that's important because that is one kind of strong counterweight, to this idea. So I think for the moment, the trajectory is very much towards corporates still being in a relatively better position and government still in a number of these different jurisdictions not being ready, not being willing, not wanting to raise and change that corporate tax burden in a way that would shift that balance back.
Andrew, as you know, the sovereign also has a backstop in Europe, the Transmission Protection Instrument, TPI, at the ECB. What kind of levels would we have to see French yields break out to introduce the ECB, the idea of it stepping in?
Yeah, I think we're still a little ways away from that. I mean, and again, I do think as we kind of digest the price action that we've seen so far, this morning, this is something that we do think was relatively expected, maybe not necessarily today, but on a relatively near-term basis. And I think the ECB is also going to care about just the broader functioning of markets, the broader level of financial stability, and whether we see kind of any levels of kind of undue tightening. So, overall, as you mentioned, the markets might be down, but many of these institutions have performed quite well over a long period of time. Going back to breaking some of that sovereign versus corporate dynamic of your last question, again, I think we've generally seen the correlation of equities and credits within these countries be lower than we saw in previous bouts of volatility, and I think that also helps. Now, that being said, we at Morgan Stanley do think the ECB will ease policy more than the market's expecting over the next 6 months. We think inflation will come down more than the market's expecting, but we're not expecting any kind of immediate stepping in here.
Andrew, this was great. It's good to see you. Thanks for coming in. Andrew Sheets there of Morgan Stanley. My takeaway there, and there are many, number one may be, spreads are super tight, but perhaps that tells you more about the sovereign issuer than it does the corporate.
The idea that corporations just look relatively better, and it raises the question, when does the sovereignty start to say, hey, corporations, you're doing pretty well. Can you give us some?
This wasn't a slow start to the week, was it?
No, my goodness,
Anything but. Anything but. From New York City this morning, good morning to you all. You're watching Bloomberg TV.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Six days, no losses on the S&P 500. The gains continue, up around 1/3% on the S&P. On the Nasdaq 100, higher by 0.6. In the bond market, check out this, 2s, 10s, 30s. Not a big move. Yields bleeding high at the long end, up by 4 basis points. 10s at about 4.1579. You want a bigger move? Look to France. Switch up the board. Euro dollar, negative. Off the back of some more French political turmoil. What's new, I know. 116.63. Euro dollar down by 0.7%. French bond yields higher by 8 basis points. Check out that move on dollar yen. Dollar yen, 2% move, 150.40. New leader for the LBP. Pro-stimulus could shake things up in the same way Abe did. Let's see about that, but ultimately that's a conversation to kick off the trading week. Just take the year. Take the year so far. US government bond yields on a 10-year maturity down 40 basis points. French yields up 40 basis points. Japanese 10-year bond yields higher by something like 60 basis points. On the 30, by a whole lot more. All this conversation about the US and fiscal risk, the US and fiscal risk. US government bonds have really outperformed France and Japan in a material way so far year to date.
And I don't think you could take that and say that's because the U.S. has a fantastic fiscal house in order. This is really a question of everywhere else seeing the same fiscal issues that the United States is seeing and then some, and the expectations were better for them. So this raises a question. Does the story take on a life of its own when it's global like this? Is it a different story than just, oh yeah, the budget deficit and those concerns that people had for decades before?
Yields bleeding higher across the curve, steeper curves, as Lisa pointed out, ahead of some supply later this week. That's the bond market, the global bond market story. 3 hours away from the cash open. Let's get you some morning movers. Here's Danny Berger. Hey, Danny.
Good morning, John. It does seem like the concerns about what's happening with governments around the world and here in the U.S. with the shutdown ongoing is igniting this so-called debasement trade. At least that's what our reporters are running with. And you're seeing Bitcoin over the weekend hitting all-time highs, 125,000. So the crypto-linked stocks are taking off. Circle up nearly 5%, Strategy up 2.3%, Coinbase up 2.3%. An analyst even telling our reporters that apparently Pokemon cards are also trading at an all-time high as part of this trade. So make of that what you will. Elsewhere, some sell-side action for you. Micron shares, one of the biggest gainers in the S&P 500 in the pre-market trade, up 3.5%. Joseph Moore over at Morgan Stanley upgrading from hold to overweight, saying that this has a lot more run to go in its prices. And yes, that valuation is a concern, but Micron has very strong pricing power that it's going to be able to retain. So that's the latest with Micron. Elsewhere, Reuters report this morning that the Trump administration has been in talks with Critical Metals about taking a stake. There is a loan currently out to them, so it would be one of those conversions to equity, something that the U.S. has been doing with other companies. It is a rare earths company based in Greenland. Again, those shares up 68% off the back of that Reuters report, John.
Danny, thank you. Thank you very much. The news keeps coming. This headline crossed on a Bloomberg terminal. Fifth Third Tobacco America for $82.88 per share. Fifth Third Tobacco America all-stock deal valued at $10.9 billion. We've been told 1 million times we're going to start to see this. You're going to see more of it. Now it's starting to happen.
Yeah, and this comes as capital markets are clearly wide open, particularly for the banks, where you do see a more familiar regulatory environment in Washington, D.C. I found this interesting. We have a couple of different projections from Julian Emanuel of Evercore ISI for the end of next year in terms of the S&P 500. 7750 is what he said. He said there is a 30% chance of a bubble-like condition that could push the S&P to 9,000. And he said this: capital market acceleration is key to the continuation of the bull market. So hello Fifth Third, hello Comerica. These deals just keep mounting.
The door's wide open. The regulator's ready to let it happen in the minds of many, and we're seeing the headlines cross. Fifth Third, Bank of America, 82.88 per share. More on that story throughout this morning. Elsewhere on our radar, what a morning. French Prime Minister Sébastien Lecornu resigning just one day after a controversial cabinet reshuffle. French bond yields rising on the renewed political turmoil. Elsewhere, Japanese markets surging after pro-stimulus lawmaker Sanae Takaichi secured the ruling party's vote to become Japan's next leader. Speculation over Takaichi's demand-boosting policies sending the Nikkei higher and the yen lower against the dollar. And finally, federal unions are suing to stop mass firings of government workers during the government shutdown. Layoffs are being held off until today's Senate vote, but National Economic Council Director Kevin Hassett warning cuts will start if negotiations go nowhere.
Yeah, ultimately this really comes down to whether the Democrats show signs of progress in those talks. That's what Kevin Hassett said on CNN State of the Union yesterday. A real question here about what this means for markets. Right now they're shrugging it off, even though there's a more than 70% chance priced into betting markets that you are going to get a shutdown that extends longer than October 15th. If you start to see those layoffs, watch for the potential economic impacts to get priced into the market a little bit more. That's what I think is going to be different about this shutdown.
Just to build on that, you're absolutely right. The difference between furloughs and firings. Paul Donovan of UBS will join us a little bit later. Typically, we'd look through this. Why? Because it's just economic activity delayed, not derailed. You bounce back. This would be very different if we started talking about firings and not furloughs.
Yeah, because ultimately the billions of dollars that people say gets removed from GDP in a given quarter wouldn't just come back in the form of paychecks that then would get spent. And that's the reason why people are looking at this and saying that could make this shutdown, and we're used to a lot of them, they happen often, very different from others.
Paul is going to join us in about 10 minutes' time, so look out for that. Let's turn to commodities. Growing fiscal concerns in the US, Japan, and Europe, fueling a so-called debasement trade, pushing gold to fresh all-time highs. Dan Stroyven of Goldman Sachs writing, gold remains our highest conviction long commodity recommendation. Dan joins us now for more. Dan, good morning.
Good morning.
It's good to see you. Go through the price targets now for year end and for next year, and we'll take it from there. What are you looking for at the moment?
Yeah, so we have gold rising another 10% to 4,300 by the end of next year, but with significant upside, both because the recent drivers of the rally are driven by the pretty sticky inflows from both central banks and ETF holdings. It's not driven by spec positioning, which tends to be more mean reverting. And second, in September, we saw that ETF inflows were 6 times larger than what our rates-based model predicts, suggesting that private sector diversification into this relatively small market, and the gold market is about 70 times smaller than the US Treasury market, that this is causing potential significant additional upsides to our already above the forwards and above consensus target.
So let's try and separate those individual drivers. Let's go for the first of all, and then we'll get to the second and third point later. The central bank diversification has been a story that's been building now for a number of years, and we've seen that in the performance of gold. Why do you think that story is not just a one-off diversification, that you actually believe that's an ongoing trend, something that could persist?
Yes, so we think that EM central banks remain underweight gold. We think that the freezing of Russia's central bank's reserves in 2022 was a significant wake-up call, with reserve managers in central banks realizing that the truly only safe asset, if you hold it in your domestic vaults, is gold. We estimate that, for instance, the Chinese central bank has about 8% of its reserves in gold. The global average is 20%. That's also where Russia went by 2022. If you look at central bank surveys of gold purchase intentions, they are at a record high. So we think central banks remain underweight gold. We estimate that you probably have another roughly 3 years of very rapid purchases that have been 5 times faster since 22 than the pre-2022 average. So that is really the main structural driver of our bullish gold call. Cyclically, with 100 basis points of additional Fed cuts, you get an additional boost because ETF holdings tend to rise in the gold markets when rates come down.
So right now we're looking at almost 4,000 on gold. You have a price target of 4,300 by the end of next year. What's the likelihood that it is substantially higher than that? And do you have a target?
So I think it's quite plausible. The risk to our forecasts, as we have flagged, are skewed significantly to the upside. And I think one way to think about it is that, in contrast to most other commodities, high gold prices don't cure high prices. If this were to happen in the oil or natural gas market, you would see a very big supply response. Higher supply would pull prices down. The gold market is different. If you look at annual mine production of gold, it's only 1% of the total gold that's outstanding, that has ever been mined. So the supply side doesn't respond significantly to higher prices, and demand from what we call the two high conviction buyers in our gold pricing framework, central banks and ETFs, they don't buy or sell for price considerations. They buy because they have convictions about the risks to the macroeconomy, because they want to hedge risk, because they want to diversify. And so in contrast to most other physical commodities that are consumed, I think that there is significant upside to the gold price where high prices don't cure high prices.
So can we get a sense of how much the gold story really is central bank buying and diversification away from the U.S. or other areas that could potentially seize their assets, et cetera? And how much is actually a vote about inflation, a vote about the idea of fiscal irresponsibility in developed markets around the world?
Yes, so I think you want to break down the rally since 22 into two parts. The rallies in 22, 23, and 24, when it was really driven by central bank diversification into gold, because rates were high and rising. But this year, we're up 50%. You have the two sources of diversification pushing in the same direction. Why? Because rates are coming down, and when rates come down, because gold is a non-yielding asset, the private sector also steps into the gold market. And so the rally has accelerated because both sticky buyers in our high conviction buyer framework are pushing in the same direction. And in September, we actually think that ETF, so the private sector, was the biggest driver of the rally.
You mentioned also limited depth in this market. That's a really important factor. Does that raise questions about potential spillover to other markets, that the depth just isn't there for everyone to get the kind of diversification they might be looking for?
Yes, so I think you're seeing an across-the-board rally in precious metals this year, with silver actually outperforming gold this year, despite the fact that banks, they are buying gold, they're not buying silver. Why is that? Because I think some of those diversification motives that are pushing flows into the gold market are also happening in other precious markets like the silver market. And so I said that the gold market is about 70 times smaller than the treasury market, but guess what? The silver market is 10 times smaller than the gold market. So any small diversification step into these relatively small markets can cause very spectacular price upside.
Is Bitcoin a precious commodity?
That's it's an interesting question. We think that from a portfolio investor perspective, the properties are very different. Both precious metals and Bitcoin prices can rise very, very quickly. But if you, for instance, look at the correlation with the S&P 500, and one of the reasons to hold gold is that it's a safe haven, the correlation between Bitcoin and, for instance, the S&P 500 tends to be significantly higher. So it's a more volatile, more correlated, more pro-risk asset than gold, which is still a safe haven.
Do you think that's changed this year? The correlation, the relationship between gold and risk? Because certainly just to take a step back and to eyeball this, the chart is pretty clear. Year to date, stocks up, gold up. Right. What's the relationship between gold and risk?
Can indeed change over time. But I think if you look at some of the macro considerations that have led investors into the gold market, I think they're more clearly reflected in bond performance. You mentioned, for instance, the Japanese or French bond underperformance this year, and some of those questions about macro fiscal policy, I think are putting upward pressure on bond yield premium and are also helping the gold price to move higher.
39.43. If you'd said 12 months ago 4K, we would have laughed, and now we're pretty much at 4K. Dan, it's good to see you. Thanks for dropping by. Thank you, sir. Dan Stuyven of Goldman Sachs on a major rally for gold this year. We're up 50% year to date. Let's get you an update on stories worldwide this morning with your Bloomberg Brief. Here's Yahara Anand. Hi, Yahara.
Hi, John. President Trump is urging Israel and Hamas to reach a settlement to end the 2-year war in Gaza. Mediated talks begin today in Egypt with U.S. envoy Steve Witkoff attending. The first test of progress will be whether Hamas releases its remaining hostages in exchange for Israel freeing Palestinian prisoners. Meanwhile, here, California Governor Gavin Newsom says he'll sue the Trump administration over its order to send his state's National Guard troops to Portland. Newsom argues the deployment defies a federal court ruling that found no legal basis for using state troops. It's the latest flashpoint in the president's push to federalize law enforcement in Democratic-led states. And shares of Comerica are soaring up 13% this morning after the bank announced a definitive merger agreement with Fifth Third Bancorp. Fifth Third will acquire Comerica in an all-stock transaction valued at $10.9 billion. The deal is expected to close at the end of the first quarter of 2026. That's your Bloomberg Brief. John?
Yahira, thank you. Appreciate it. Thank you very much. More from Yahira in about 30 minutes' time. Up next on the program, distorted data.
This shutdown is compounding an existing problem, which is that our data is being substantially distorted by tariff developments, front-loading, inventories.
That conversation up next with Paul Donovan of UBS, live from New York City. You're watching Bloomberg TV.
In case you missed it on Bloomberg Surveillance.
We heard from Restoration Hardware, and the RH CEO was on the earnings call dropping F-bombs. And I imagine a lot of people are having similar issues at the moment trying to sell furniture. You're at a different price point. What's your experience this year?
People have less money. You can say still recovery from the pandemic when it comes to inflationary measures. But then again, our line of business is really about human basic needs. It's about the bunk bed when the kids grow up. It's about the chair and table and so on.
Anne-Marie had one final question.
How are the meatballs?
How
And
are
you're
the
lowering the
meatballs?
cost of the meatballs.
So I am myself, I'm an intellectual vegetarian. I normally say down here I struggle. I love the meatballs. We actually are running today about 40% of our sales is actually vegetables and plant balls. And personally, I don't love the vegetables, but the plant balls is a great exception. But meatballs is part of our legacy, so there you go.
I love your honesty.
Don't miss Bloomberg Surveillance live every weekday.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Stocks are higher. I sound like a broken record over the last week, up by 0.4% on the S&P. On the Nasdaq 100, higher by 0.6. Stuart Kaiser of Citi, no news is good news. Nadia Lovell saying this on Friday of UBS, we continue to recommend staying structurally long as evidence of a possible melt-up into year-end grows. Melt-ups and bubbles. Lisa mentioned Evercore. Julian Emmanuel, increased probability of a bubble in his note over the weekend.
Yeah, talking about a 30% chance of the S&P 500 rising to, yes, you heard it, 9,000 by the end of next year. So, you know, John Stoltzfus, the biggest bull? I don't think so. We're looking at the potential upside scenario that is significantly higher, which raises the question that you asked earlier. What is the connection between gold and risk? It is that the money printer is in action. It is going. It is making its noises. And a lot of people are taking note and following it.
Based on those calls, who needs economic data, hey? Under surveillance this morning, distorted data.
This shutdown is compounding an existing problem, which is that our data is being substantially distorted by tariff developments, front-loading, inventories. There is already a giant question mark around what data should we be using.
We don't have good reads, and our month-to-month data is not telling us the true story of the American economy or the American consumer.
So here's the latest this morning. Another week of economic data at risk as the government shutdown enters its 6th day. Paul Donovan of UBS Global Wealth Management writing the following. The problem is that alternatives like sentiment surveys are even worse, and that's all the markets will be left to work with. Paul joins us now for more. Paul, you're one of our favourites. It's great to finally catch up with you after a period of time. Paul, I wanted to get your opinion on this. I've heard a lot of people say we're flying blind without the data. Were we flying blind already?
We weren't flying blind. We were perhaps flying in quite a thick fog. So for about 15 years, economists have been complaining about the deteriorating quality of economic data. Nobody fills in surveys anymore. Structural change means that we're missing parts of the economy. You know, where in the employment report is the TikTok content creator? And partisan bias, the political bias in the States is getting extreme, and people are answering according to their political views, not according to what's actually happening in their lives. So we've had this problem for some time, but the official data did the best of a bad job. It did the best that it could in order to filter out some of this noise and give us an idea about where the economy was performing in real time.
So how does it change going forward that we don't even have that, right? That we end up in the realm of speculation and rumor at a time where people just take all of that, put it together and say, well, stocks have to just keep going up.
So this is where I think things do start to get tricky. Perhaps a little bit less for the equity market than for the bond market, because of course, corporate data, as long as companies are honest, is going to be still reliable. So the earnings reports that come out, the corporate announcements that are legally obliged, companies are legally obliged to put out, that should all be okay. But the bigger macro picture is getting more confused. And some of it is reliant on what we're seeing elsewhere in the world. How do we judge US trade data? Well, let's see what other countries are saying when they're talking about exports to the States, for example. We're having to back out data some of the time.
You made a really good point, Paul, in your recent notes that right now the market is treating the shutdown that's going on in Washington, D.C. as negligible, as something that will maybe cause a loss of economic activity. It will just be recouped potentially in a couple weeks and months' time. Why do you think this time really could be different?
So as a baseline, I don't think it is going to be different. We get this with every shutdown. You get a period where economic activity is suppressed, and then you get a period where you rebound. The back pay is paid back, that kind of thing. The only real difference this time is that US President Trump has talked about possibly firing some more government employees. Now that is different because then of course you're not getting the rebound from those employees. You are also potentially creating some fear of unemployment amongst people both in and outside the government sector. That would be a more troubling situation because you would get the slowdown, but the rebound that we normally would see would be a lot more muted. I would regard that very much as the risk case, not as the base case. The base case, I think, is this is going to be like every other shutdown, down in week 1, up in week 2, that kind of thing. But there is that risk if some employees are going to lose their jobs permanently as a result of the shutdown.
Paul, I think we all hope you're absolutely right. We do bounce back and just get back to work, get back to business, and this economy grows. The other thing we wanted to talk to you about was inflation. Market-based expectations of inflation, how the Fed measures things, and ultimately how consumers experience it. Paul, I've heard you in the past talk about frequency bias. Could you explain that as a concept in economics and why that's important to the difference between how consumers feel and what the Fed is tracking?
So this is a very important point. Everybody is guilty of frequency bias. That is to say, you remember the price of the Snickers bar you buy every day. You do not remember the price of a television you buy every 3, 4, 5 years. And so as a result, when prices change in high frequency purchases, it sort of sticks in your mind. And every time I go to the vending machine at work, I think, oh, that price has gone up. I remember when it used to cost 70 pence and now it's costing me 90 pence. And it sticks in your mind. And that then colors the view of inflation that you have. The fact that the television is 20% cheaper than the last one you bought 7 years ago, you don't remember that because you can't remember what you paid in the past. So the problem that we have is that when you see basically rising food and rising fuel prices, those are prices that consumers will remember, and that will create a sense of dissatisfaction when you have food and fuel inflation. If you have an overall fairly benign inflation environment and there's something weird going on with food supply, that can create a peculiar situation where the central banker is saying, no, inflation isn't a problem at all. And the consumer is saying, no, the cost of living goes up. Look how much I had to pay the supermarket this week. So that's really the issue.
Paul, is that the situation now? Is that how you describe things? And does it shape consumer behaviour?
Well, what we've got at the moment is quite interesting. It's sort of a reverse of what happened under the last administration. So in the last administration, inflation was coming down. Nobody really believed it because food price inflation was very high. There was an episode of profit-led inflation from food retail. What has been happening this year until recently is fuel prices have been subdued. Food prices until recently have not been a particularly big problem, but durable goods prices have gone from falling to rising. And so you've got the reverse problem there, that you've got inflation that people are not necessarily so aware of. But what we've been seeing more recently in the States is food price inflation has been ticking up. Things like the price of beef, for example, has gone up very, very dramatically. Coffee prices are soaring, and that is going to be more visible. So I think the noise from consumers about inflation, the political anxiety about inflation is likely to be ramping up as we see these higher food prices starting to emerge.
Paul, this was great. Lots to think about, and hopefully we can do this again. Paul Donovan there of UBS on the economic situation, distorted data, and the consumer experience of this economy at the moment. Check this out. Got a stock moving for you. Breaking news just moments ago. AMD, with a 20% move in the pre-market, inking a deal with OpenAI to roll out AI infrastructure in a pact the chipmaker is saying this morning could generate tens of billions of dollars in new revenue.
This comes after NVIDIA's connection with OpenAI and their huge investment where they are essentially selling chips at a discount to OpenAI to engage with certain different types of programming and machine learning technologies. It just keeps AMD in the mix. This is sort of the bar for AMD. It keeps it on a level playing field with the likes of NVIDIA, and it's the reason why you're seeing Intel shares actually lose a little bit, because maybe it puts them a bit on the back foot. When are they going to ink their billion-dollar deal with OpenAI?
Just how much are we leveraging the success of this equity market, not to NVIDIA, but to that one name that's not even in public equity markets?
Exactly, the $500 billion private market company that has such incredible clout and so many dollars attached to it from a lot of mega cap companies around the world.
Unreal. 22% move on AMD so far this morning. More on that in just a moment. Aaron Kennedy, Clear Harbor Asset Management, joins us. Henrietta Trays of Veda Partners, David Steinberg of Zeta Global, Amanda Lynham of BlackRock. The second hour of Bloomberg Surveillance up next.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think The question is, yeah, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The bigger concern in a prolonged shutdown is the quality of that inflation data.
October, I think the Fed's cutting, even if the shutdown lasts for a while.
This economy is becoming less sensitive to the Fed's next move and much more sensitive to what's happening in Washington.
All of the polls show so far Republicans getting a disproportionate amount of the blame.
Both parties may ultimately suffer from this.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. All-time high, 6 days, no losses. The S&P 500 up again this morning by 0.3, up by 0.7 on the NASDAQ, and this move in the pre-market. A 20% move in the pre-market on AMD off the back of this story from Ian King here at Bloomberg. AMD inking a deal with OpenAI to roll out AI infrastructure.
Yeah, that's worth tens of billions of dollars, and this comes after OpenAI has inked deals with Oracle, with NVIDIA, with Microsoft. OpenAI, which pioneered ChatGPT in 2022, that really launched this move into AI. A real question, you raised this last hour, I think it is the takeaway question. How much is the entire tech story increasingly levered to OpenAI, given how quickly it's risen and how much money has been invested with it?
Such an interesting moment, living this in real time and trying to work out how we'll look back on, say, this program in 5 years' time, looking back 5 years, whether it is really the fourth industrial revolution, or as our next guest is speculating, whether it is peak exuberance.
Yeah, especially at a time where it comes with other capital market activity. Earlier this morning, we were talking about Fifth Third Bank buying Comerica, this idea of mergers and acquisitions picking up, this exuberance around the globe, this sense of the money printer going, even amid a lot of questions around government functioning, as well as just what the longer-term trajectory really is.
This is such a fascinating time to be tracking these stories. You know, Rick Reeder of BlackRock said recently, he said this a few times, the most interesting time in his whole career in financial markets. It's not just tech, it's cross-asset, it's global. Check this out. The move in euro-dollar today, the move in dollar-yen today, the move we're seeing in the Japanese government bond market, the French government bond market, new leadership in Japan, a lack of leadership in France.
And all of it is leading to a real question around bond yields long-term and how much they potentially could rise, given the fact that a lot of countries don't have the ability or willingness to pay back a lot of the deficits. And it raises this larger question, especially as we look at gold. And we were talking with Dan Stuyven earlier about just how much that precious metal could potentially rally. Are we moving to a new era, talking about big philosophical questions, where the industrial world actually gives the returns that the monetary world gave over the past 4 decades. Is that what people are looking at, given the fact that there is a lack of conviction that developed markets can really provide the same type of haven for people's capital?
Gold this morning, this far away from 4K. 39.40 so far this morning. Coming up this hour, Aaron Cannon of Clear Harbor Asset Management with stocks on a 6-day winning streak. Henrietta Trays of Veda Partners as the shutdown deadlock stretches into a second week. And Amanda Liner of BlackRock as fiscal risk is unleashed in Japan and France. We begin this hour with stocks at all-time highs. Aaron Cannon of Clear Harbor Asset Management writing, US tech's weight has climbed to dot-com era highs, with debates raging of whether we are in the early innings of the fourth industrial revolution or near peak exuberance. Aaron joins us now for more. Aaron, welcome to the program. Your words, you're posing a question. Help me answer it. Peak exuberance or the fourth industrial revolution?
I think we're certainly, if you look at the CapEx spend, analysts are hesitant, Jonathan, to even look out more than 12 to 24 months. And I think the reality is the AI boom is real. It's not going to be a question around hundreds of billions of dollars of CapEx, but rather trillions. And it's not a question of just how it's going to impact the hyperscalers, the large language models like OpenAI, but in my opinion, in our opinion here at Clear Harbor, how it's really going to impact and benefit multiple sectors of the U.S. and the global economy. Not just technology, but utilities, not just industrials, but healthcare. And there's a race to bring electrons, more electricity generation in this country, and all of the companies and all the sectors that are involved with that. And we hear a lot about nuclear, for example, trying to sort of play an important role in bringing those electrons online. But we think that commercial solar still has a role to play here because that's the fastest way to do that. So lots of opportunity for productivity gains and ultimately maybe a surprise to the upside and growth over the next several years.
Aaron, a lot to play here. The finance, the capital providers, the energy providers, together with the tech players, it's all becoming one sector. But we've been conditioned by the late 90s, Aaron. I think a lot of people are still conditioned by that a mass misallocation of capital comes before you identify the long-term winners. And how do you navigate the risks around that in the years to come?
Well, it's interesting. I mean, certainly there needs to be an attention to capital and earnings and free cash flow. But there really is, to a great extent. If you look at the late, 1990s or really March of 2000 at the peak, you look at the trailing PE multiple of the NASDAQ, and that was trading at probably 185 times multiple. Well, the NASDAQ today on a trailing basis is trading in the 30s, and on a forward basis, trading in the mid to high 20s multiple. If you look at sort of the earnings that were generated from the NASDAQ at the peak, March of 2000, it represented about 4% of all U.S. listed companies, the total earnings of the NASDAQ in March of 2000. Now we look at, and the market cap was 40% of the entire listed market cap. Today, the market cap of the NASDAQ is about a third of all U.S. listed companies, and yet the earnings that they're generating relative to all listed U.S. companies is about 40%. So I think, that ultimately comes down to the PE multiple. Now, there's concentration in those names within technology today, representing the NASDAQ, and we have to be very mindful of that. The NVIDIAs, the Microsofts, the Alphabets. And so that's certainly something we need to be mindful of. But the valuation picture is very different today.
I want to pick up on the concentration risk, especially given the conversation that Judd and I were just having about this deal with OpenAI and AMD. And this question around, if we're looking at a very different type of systemic risk this time around, what is the sort of interconnectedness of all of these companies? Should there be a problem with one of them?
Well, it's a good question. I mean, I think that the technologies are unique. They're not AMD. I think that the question to a great extent may be, or at least we're thinking about this, is to what extent does the efficiency of large language models evolve so quickly and so dramatically in ways we can't comprehend that the demand for the hyperscalers, for the AMD chips, for the NVIDIA products and chips, for Broadcom's chip, that demand somehow surprises to the downside, not because there isn't growth in massive opportunity that I just outlined, but because of the efficiency that's brought to bear. And I think that's a huge question right now.
At this point, it seems clear that the technology story is one that people can get behind. Is it something that makes you able to just ignore what's going on globally with the fiscal dysfunction that we're seeing around the world? I mean, how connected are these two stories? On one hand, we're talking about a sea change in technology that's going to make us all live forever and make our lives fantastic, and then we're talking about the fact that governments are collapsing. So, how do you put these two together?
Yeah, I think we have to keep our eyes on the economic reality of the global economy. I think geopolitics have been with us for a long time, the uncertainty factor. We've had shutdowns before. We've had changes of a prime minister in Japan in the past. We've had assassinations. Now we have, what's going on in France in terms of a lack of a government. But if you look at what's happening in Europe, for example, for the first time in my lifetime, their deficit spending to rearm their country, to build infrastructure, that has huge positive tailwinds for Europe. This has been the story of 2025. I know I sound like a broken record, but I think there needs to be a greater awareness of that. If you look at Mr. and Mrs. Watanabe, the saver in Japan, in a rising interest rate environment, in an incrementally stronger Japanese yen year to date, although there's argument whether or not that's going to continue to weaken further over the next several months with the new leadership at hand. But those assets, that capital, that was once domesticated in 1980s and 1970s and into 1990 was sent overseas as being brought home. And now international investors see the opportunity set, not just because of what Japanese savers are doing, investors are doing, but you look at the regulatory environment in a place like Japan, where return on equity is once again the focal point of corporate Japan, where buybacks and dividends are happening. There are opportunity sets all over the developed world, but they're also in the emerging markets where you can see China. What's China doing? They realize they can't flood the U.S. markets because we now have tariffs in place. They're trying to flood the European markets. That may become a problem as European policymakers raise tariffs as well. So they're flooding the EM markets to even a greater extent. That could boost currencies in EM in places like South Africa, Turkey, Brazil, and other places. Could also boost the bond market prices there, lower yields in those, and it could augur higher asset prices in those regions. So there's a lot at play here, and everything, to your point, Lisa, is connected to everything.
And I just want to unpack one piece of what you just said, and it was the Japanese piece of it. If that money is truly going home and will go home, that creates opportunities in Japan. It introduces vulnerabilities in other places. Where's the money coming from? Who's vulnerable?
Yeah, it's interesting. It's not really EM. It could be on the margin places like New Zealand, places like Australia, where there's more of a significant impact. Of course, the United States, right? The U.S. Treasury purchases in Japan in the early 2000s were extraordinarily high. Could be in Europe as well. So certainly, we're going to need to find ways to fund our deficits. Our deficit spending's out of control in the United States. 120% debt to GDP, we're running 7% type deficit spending. But in Germany, we're 65% debt to GDP in their deficit spending there. So they have a little more wiggle room relative to the United States. But certainly a challenge, Jonathan.
Aaron Kennard of Clear Harbor Asset Management. Aaron, thank you, sir. Appreciate it. You'll hear lots about concentration risk. A lot of these bets are very concentrated around the same theme.
Yeah, well, especially given the fact that they all are betting that AI can come overwhelm the productivity side of the story. So it's going to mean inflation isn't going to go up that much, can overwhelm any kind of questions around dysfunction in governments. I love this. If you're really pessimistic about what you're seeing in the government, if you're really pessimistic when you read the news headlines, just look at the S&P 500 and feel good. Take a look at NVIDIA, take a look at OpenAI. That warm, fuzzy feeling comes roaring back.
There's something for both the optimists and the pessimists alike, because everything's become so concentrated, you're potentially exacerbating downside risk. This is also a chip in the geopolitical negotiations between China and the United States as well. Do you have to think about that as a potential factor too? All of this stuff is just layer upon layer. I mentioned the sector story. Banks and energy and tech, those three things, I know this is a stretch, but they are becoming almost the same trade at the moment.
Absolutely they are, because take a look at JP Morgan when they talk about being a tech company and how much they're investing in the technology that could potentially make them much more efficient, keep the same footprint of personnel, but expand their book of business. We hear the same thing at Bank of America, the same thing at other big banks. At the same time, energy. How much are people pouring billions upon billions of dollars into nuclear power plants and beyond? You put all this together, and you can either get on the train of optimism, You could ride the train of optimism, or you could fight against it, get a bar of gold, sit in your room with a bad look on your face, and that's what some people are doing as well.
Or chase tech stocks. NASDAQ 100 futures right now up by 0.6%. The gains continue. Let's get you an update on stories worldwide with your Bloomberg Brief. What a start to the week. Here's Yahira. Hey, Yahira.
Exactly, John. We are seeing a monster move in AMD shares, up more than 27% in the pre-market. Following news, it signed a deal with OpenAI. OpenAI will deploy 6 gigawatts of AMD GPUs over multiple years. The deal is expected to deliver tens of billions of dollars in revenue for AMD while accelerating OpenAI's infrastructure build-out. Meanwhile, shares of Comerica also soaring more than nearly 12% in the pre-market. Fifth Third will acquire Comerica in an all-stock transaction valued at $10.9 billion. It's the latest sign regional banks are looking to take advantage of the new deregulatory environment under President Trump. The deal is expected to close at the end of the first quarter of 2026. And Boeing is hoping to increase its manufacturing output as soon as this month. Sources telling us here at Bloomberg that 737 MAX output could reach 42 jets monthly. The company is also laying the groundwork to increase its manufacturing pace again in April and in late 2026, which could boost production to about 53 jets a month. That's your Bloomberg Brief. John?
Yahira, thank you. More from Yahira in about 30 minutes. Up next on the program, neither side is blinking.
I think that if the president decides that the negotiations are absolutely going nowhere, then there will start to be layoffs. But I think that everybody's still hopeful.
That conversation up next with Henrietta Trays of Veda Partners, live from New York City this morning. Good morning.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays, only on Bloomberg.
We might be light on economic data again this week, so look out for a couple of things. On the economy, look out for Delta. It's not going to be a read on the complete economy, but particularly the high-end consumer and how they're flying, and they're flying a lot. Delta Airlines, that comes out on Thursday, and look out for the Fed minutes on Wednesday. We know based on the communication so far, there is a massive divide on the FOMC. Going into month end, what does it mean for policy and the next move? That's your week ahead right there. Here's your day ahead. Stocks are up. On the S&P 500, once again, up by 0.3%. The advance continues. 6 days, no losses. It's day 7. It might be the same story. On the Nasdaq 100, high by 0.6. On the Russell, up by 0.5. This market is not preoccupied with the latest down in Washington, D.C. Under surveillance this morning, neither side is blinking.
I think that if the president decides that the negotiations are absolutely going nowhere, then there will start to be layoffs. But I think that everybody's still hopeful that when we get a fresh start at the beginning of the week, that we can get the Democrats to see that it's just common sense to avoid layoffs like that. I think that we think the Democrats, there's a chance that they'll be reasonable.
So here's the latest this morning. The White House threatening mass layoffs as the government shutdown heads into its 6th day. Joining us now is Bloomberg's Laura Davidson. Laura, I had a feeling we'd be talking Monday morning about the same thing all over again. Here we are, the shutdown continues. Do you see any sign of a breakthrough?
Right now, there was basically no movement over the weekend. As we head into this week, there are a couple things that could potentially start to move feelings one way or another. One is those layoffs. The White House makes good on that threat, which so far they have sort of held off of doing that. You could potentially see some Democrats, wanting to end the shutdown sooner rather than later. The other piece of information that came from Politico this morning is that there are some White House aides that are very concerned about their position on the ACA subsidies. You remember, this is Democrats' big ask in this. They want to renew these Obamacare tax credits that expire at the end of the year, or else people will see large spikes in premium rates. And that you have some Republicans who are close to Trump who are saying that this position is untenable and they actually need to support this, which is what Democrats want to do. So there's a couple different pieces here. Right now, both sides think they have the upper hand. Polling is quite split, so it could take several weeks before we really get to see where the public sentiment is on which side they blame, and that could mean that we're still in a shutdown, here several weeks from now.
Laura, I think it was Speaker Johnson over the weekend that tried to make the point that this is not about making good policy in Washington. This is just about Minority Leader Chuck Schumer trying to secure his political future. What's the reaction down in Washington to that?
This is something that Democrats have really rejected and pushed back on. One of the things that the Republicans have brought up is that, he's very worried about a primary race from the left, someone like Alexandria Ocasio-Cortez. But this is, really kind of the entire Democratic Party, at least for now, is behind Schumer and saying, look, the lesson we learned from 2024 is that we don't fight hard enough. This is our opportunity to fight and get a key policy win that we want.
Laura, appreciate the update. Thanks for joining us. Bloomberg's Laura Davison there, down in Washington, D.C. To build on that conversation, Henrietta Trace of Vader Partners joins us now for more. Henrietta, welcome to the programme. The politics of old would suggest that this doesn't last very long. Is that the wrong way of looking at this current situation?
That is a fair question. I think we're probably going to already be able to say that this week is a lost cause. I know that they're not even back in D.C. yet. Nobody's voted yet again this week, but I don't see movement happening this week. We're probably going to be going into the week of the 15th at this juncture.
Henrietta, do you think that ultimately this is going to look worse on one party or the other? Or do you think that ultimately people don't care, they won't care unless there are some sort of mass layoff moves?
I think that's interesting. So with the president, he's got a basket of support, his 38% or so of the American electorate that just will not ever break free of the president. So he's going to be able to shore up that basket, and that keeps him on his same trajectory of shutting the government down and using executive authority to, go into Portland, go into Illinois, and do a lot of things that are very aggressive, but nonetheless will not lose his base. And then you have the Democratic side, who their own conference is so mad at them that there's almost no pain because they're already so mad in the first place. So you might as well just try to change something up. So they have conflicting rationales for both staying the course, Trump keeping the government shut down, and Democrats trying something new and different. And that's what they're doing here.
It strikes me, Henrietta, that we're talking about a government shutdown at a time where there's a lot of potential noise and action on the foreign policy point of view. And I'm thinking about, yes, Israel and Hamas, but also what's going on with Russia and Ukraine. The Supreme Court is also going to potentially be ruling on the tariffs. This week, Supreme Court comes back after its recess and is probably going to vote on a number of these matters. How does that add to the complication of the government being shut down in this period?
Yeah, well, again, it's all these three items that are eligible for executive action. That's what the president's done. It's been our rationale for having such a strong and robust call on the president taking these tariff actions that he promised on the campaign trail seriously. He can do all this without Congress for now. So when I look at these data sets about whether it's Russia, whether it's Israel, whether it's the tariffs specifically, I look at what are the American public's top three issues, and they're the economy, inflation, and healthcare. and every single one of those items the president is underwater on. So Americans famously don't follow foreign policy. It's interesting to niche groups of the American public who feel uniquely impacted or are otherwise following the Russia-Ukraine situation. But most Americans literally just don't follow foreign policy. You see it time and again. So those three major items, the economy, inflation, and healthcare, are where we should concentrate. And the president is material underwater on all three. And the Democrats are seizing on healthcare to try to get out of this government shutdown situation.
Do you think that Republicans could join them, given the fact that this is an area where there might be some openness to curry favor with the population?
I think so on healthcare. Those subsidies cannot expire. They disproportionately go to red states. And you have members of the United States Senate like Tommy Tuberville who are running for statewide office in a state like Alabama that takes a tremendous amount of those subsidies, and they need to vote for it. So I think given the opportunity to put this Democratic position of extending the ACA subsidies on the floor, it would pass. Indeed, my colleague Spencer Perlman, who is our healthcare expert, has 75% odds that they'll pass by the end of the year. And I think that's exactly correct. The whip count is strong for that position.
Do you think we're beginning to frame the midterm debate? Is this ultimately what it's going to sound like?
There's still some infighting amongst Democrats about whether or not they want to just prioritize healthcare, which has historically been sufficient to get them some gains. But I would, really say that there's a fight brewing at the Ways and Means Committee and other key decision-making factors to say, where are we going to go with tariffs? What is the Democratic position on tariffs? They've got to get one. It is a 60-40, sometimes even 70-30 issue that the president is on the wrong side of. Americans know that tariffs are taxes, and they don't like them. So, I've said this before to y'all, if you're raising the cost of beer, it's a pretty easy campaign message. But Democrats aren't really unified around what they want to do on tariffs yet. We'll see if they get there.
Do the politics lead ultimately to rebates, to use that money from tariffs and give it back to the consumers ahead of the midterms?
That's really expensive. So the rebates that the president authorized in his first term cost $289 billion, if I'm not mistaken. That's more than the revenue that's come in from tariffs so far. So I think the bond market would react very negatively to that. I don't think you have the votes, but if we get a reconciliation bill, which I put 30% odds on, you can bet that'll be a part of the discussion. We're going to get farmers bailout, but maybe not a rebate check.
Henrietta, thank you. Henrietta Trace of Veda Partners, thank you very much. Now, if you're a bond bull, you might like the tariffs now in a way that you didn't back in April. Sure, the Treasury Secretary is pleased with the revenue and what it means for the deficit, all of those things over the next 12 months. But as you get closer and closer to the midterms, the conversation can become illogical when it comes to these kind of things because of the politics.
Yeah, and if you start talking about rebates, not only is it expensive when it comes to the expenditure side of the balance sheet, but guess what? It's going to cause some sort of boost to inflation. Even without that, Torsten Slok put this out just moments ago, that it's beginning to look like 2021, even without the rebate checks, talking about annualized month-over-month growth rates showing that 60% of the items in the CPI basket are growing faster than 3%. So that inflationary pressure already there, even without that kind of turbocharging from rebates on the tariffs.
Next time we get inflation data, no idea when that is, but next time it may well have a 3 handle going into year end.
And do people care? And I'm talking about the Fed. They're the people who we actually care about, given the fact that they're probably going to cut rates at least 2 more times this year.
They meet at the end of the month. Up next on the program, David Steinberg of Zeta Global finding alternative figures in a data vacuum. Plus, Danny has your morning movers. AMD absolutely surging higher by 23% in the pre-market. It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
The rally resumes. It continues. High by a third of 1% on the S&P 500, on the Nasdaq 100. Up again this morning by 0.65. Tons of movers out there. Let's get a few. Your morning movers with Danny Berger. Hey, Danny.
Hey, John. It's another day, another AI infrastructure deal, this time between OpenAI and AMD. You can see AMD up 24.3%. The competition, Intel, for example, shares did move lower off the back of that news. NVIDIA also trading down by 1.8%. AMD saying that this would give them tens of billions of dollars in revenue. So you can see just why that's having such an impact on stocks. Elsewhere in the market this morning, sources telling Bloomberg that Boeing plans to up the pace of its jet output, specifically looking at 42 jets a month starting this month, and by the end of next year, getting to a place where they're at 53 jets a month. That is a big output hike, and it also underscores the fact that they're getting more control over their processes, so that's a 0.7% rise for them. Finally, the other bit of breaking news that's moving shares this morning, Fifth Third Bank Corp buying Comerica, a $10.9 billion deal. It would give them $288 billion in assets as well, so putting them over that $250 billion threshold, making it more easy to compete with the banking giants, giving them more exposure in the Southwest in places like California and Texas. So Fifth Third shares are off about 4%, while Comerica jumps just under 12%, John.
Danny, thanks. Thanks for the update. More from Danny in the next hour. More on that deal right now with Herman Chad, Senior Analyst for U.S. Regional Banks at Bloomberg Intelligence. Herman, you've been talking about it for years. We've been having that conversation with you. It's coming. It's coming. These guys are going to get together. Here it is. How widely expected was this particular tie-up?
Yeah, so this deal actually reinforces the fact that larger Midwest regional banks are expanding into higher growth markets. You've seen this with PNC in the First Bank transaction. You've seen this with Huntington in Ohio, expanding into Texas with Veritex. And this is a continuation of that. Fifth Third, based in Cincinnati, going into California and Texas. Comerica has been rumored to be on the market to sell itself over the past several quarters, considering the fact that some of its position with its interest rates hasn't been as the best positioned. And so there's been a lot of scutterbutt in terms of activist investors pushing Comerica for a sale.
And based on what we've heard, there's more to come. What kind of banks, which banks are you focused on now, given the track record of the year so far?
Yeah, I guess the question is squarely what's next for a bank like KeyCorp that's also based in Ohio in the Midwest. You've seen its rivals in Ohio expanding. And so the question, I think, on the next 3Q earnings call is how welcome are they for a potential transaction going forward?
Herman Chan of Bloomberg Intelligence. Herman, thanks for jumping on. Busy morning for you. I know. Herman Chan there following this deal. Fifth Third to buy Comerica for $82.88 per share, a deal valued at $10.9 billion. First thing you talked about when this deal came out earlier this morning, Bramo, capital markets activity, M&A, all of these things. These banks are very, very busy this year. That activity they've been talking up for a long time is actually starting to build up big time.
Yeah, and if Jefferies is any clue as to what to expect when JP Morgan kicks off earnings next week, you can imagine they had a record revenue from their deals unit because of this kind of activity. Specifically with the banks, we saw PNC, we saw Pinnacle combining with Synovus. So we've seen a host of this type of action. How much more to come? And what's the main motivating driver? Is it that the market's open? Is it because the regulatory environment is good? Or is it because ultimately they have to at a time where they want to be the leader, even if it's in middle market or larger companies that maybe don't get the same kind of white glove service at the biggest banks in the world?
M&A, debt supply in September was through the roof as well. The pipeline, how many times have we heard the pipeline is full? It's full and we're waiting. We were like, yeah, okay, all right, keep on talking. And now we're really seeing it.
Yeah, and this also coming from the Financial Times right now that Carlyle is nearing a $7 billion deal for BASF coatings unit. So even the private equity firms getting in on the game, capital markets roaring. So financial conditions, let's ease them more. This raises a question of what the purpose is for the Fed, or whether markets have already front-loaded all of those rate cuts, and that's essentially what you're seeing right now in the markets.
The door is open and regulators potentially greasing that door a little bit over the last year. Comerica higher by 12.3% at the pre-market. On our radar this morning, three big stories. French stocks are down after Prime Minister Sébastien Lecornu's resignation, deepening the country's political crisis. Over in Japan, Tsunai Takaichi's victory, sending stocks surging and the yen falling against the US dollar. Elsewhere, AMD inking a deal with OpenAI to roll out AI infrastructure in a deal that could generate tens of billions of dollars in new revenue. AMD giving OpenAI a warrant for up to 160 million shares. And finally, the shutdown rolling into its second week. Unions representing thousands of federal workers asking a judge to block possible mass firings by the Trump administration. The disruption also delaying economic reports and data collection. Let's stick with the data. The lack of government figures forcing Wall Street to turn to alternative sources. The Zeta Economic Index, an AI-powered real-time consumer analysis tool, finding the economy is holding up better than expected despite mixed signals in September. The US economy showed resilience. David Steinberg, the co-founder, chairman and CEO of Zeta, joins us now for more. David, welcome to the program, sir. Thanks for making some time for us. Let's just talk about your indicator. What are you tracking, one? And I know there's many things you're tracking. And two, what's it telling you?
Well, first of all, thank you for having me, Jonathan. We are looking in real time at 242 million Americans. What are they researching? What are they buying? Where are they going? Everything that they do. And we feed that into this index to build a score to see what we believe the health of the U.S. economy is. It then goes into different categories, everything from retail to automotive. And, we believe the Zeta Economic Index is the best view into the consumer-driven U.S. economy.
We've seen a lot of rumors, speculation that the labor market is falling off quite considerably, and that was really built on with the non-farm payrolls that we got in August. Does your data indicate a different picture?
It indicates that there are some categories where we're going to see some job slipping, but we're also seeing hiring. We've seen the consumer, as it relates to spending, be very resilient. By way of example, our economic stability index was flat month over month into September, which is a very good sign that consumers are feeling comfortable to spend.
How much are you parsing out the consumer as it relates to the upper income versus the middle income versus the lower income? In other words, the consumer being the wealthier individuals, especially with the stock market on a new tear every single day. Yes, they're spending. They're going to the front of the cabin. We're going to see that with Delta on Thursday. But at what point is this really a global kind of up, rising up of all of the potential tiers of income earners?
That's a really good question. So we do see the wealthy driving the vast majority of spending. So if you look at the top 10% of U.S. from a wealth perspective, they continue to drive a disproportionate percentage of spend. But we're not seeing a massive slowdown towards the bottom. It's just it's always been low and it stays low. What we are seeing, the big difference over the last few months, is we're seeing a lot more spending going to essential items and less spending to luxury items. And I think that's even affecting the wealthy. Listen, as you guys have been saying on the program, there's a lot of uncertainty out there. What's the Fed going to do? Job data is being revised down. budgets, tariffs, people, I think, continue to be nervous about risk for big ticket items. And I think that's causing a little consternation with even the wealthy. But to your question, the wealthy continue to spend at a very high pace.
David, especially given the fact that you're saying people are spending more on essentials, it raises a question about inflation, given the fact that a lot of people have sort of dismissed this. Even if we have inflation above 2% for a fifth straight year, people are saying that isn't going to be the main driver. Are you saying that actually there is enough spending power and resilience, especially if there is more certainty, for inflation to become much more of a consideration? Does your data track that?
We don't track that per band. It's a good question. We could probably add it as an indication point as we look at our data. We just did the largest acquisition in our company's history. We announced it last week, buying Marigold, specifically to get additional data points so we can answer questions like this in addition to the operations of that business. But what I would say is, it, to me, and from our data, appears as if most consumers at this point continue to look through inflation and continue to spend. And, the economic index, as I said, would put sort of GDP growth at a 2 to 3% growth rate. That does not totally take into effect how long a government shutdown could be and what type of uncertainty would come from that.
David, as I'm sure you know, the economy is changing somewhat, and the contribution of a handful of tech CEOs is certainly rising based on the announcements we've seen over this year alone. Can you tell us how traditionally your index would correlate with, say, broader GDP, and whether that might change given the contributions coming from elsewhere now?
Yeah, there's no question we're starting to see infrastructure spending as a part of GDP go up, and we do track that because we have a B2B component to the Zeta Economic Index as well that's looking at all of these infrastructure purchases. So, whereas the economy has always been sort of 66 to 70% consumer spending, 15, 20% corporate, and then the balance is government, we're seeing corporate go up exponentially. And a lot of that, I think, is coming in infrastructure. That will be a part of GDP growth. And I think it might be part, Jonathan, to your question, I think it might be part of the surprise to the upside last quarter on GDP.
Interesting. I imagine you've been busier over the last week. Is that true?
Yeah, we, doing our biggest deal and trying to get this report done. And then we have our annual conference. We have 2,000 people coming to New York this week. It's for Zeta Live. It's been a crazy period for us.
Well, best of luck. No doubt we'll catch up again soon. David, thank you, sir. David Steinberg there of Zeta Global. People are starved of data at the moment. I imagine David's been busy, and it certainly looks like he has been.
Yeah, because ultimately people are going to look anywhere they can for the signals, the noise, something to give a sense of what to trade on. Torsten Slaka, I was mentioning him earlier, put out a book of all of the potential alternative sources: Open Table, Bloomberg data, Red Book data, Fed weekly data.
Broadway shows.
Yeah, exactly, Broadway shows. These are the types of peripheral data points that people are using increasingly because, guess what, there's nothing else.
I saw that note over the weekend. It's amazing Torsten just puts all that out. It's on a website.
It's fantastic. Honestly, it's really valuable. Just especially looking through this, weekly Broadway show attendance is actually, kind of fluctuated, but it's actually on the rise. And I went to a Broadway show.
You've been supporting it. I know
I've been supporting it. I've actually really enjoyed it.
I have not.
Well then, thank you.
It's just not my thing.
You have not. Well, have you gone?
I've been before, yeah.
Recently?
No, been a long time. I watched Hamilton years ago, which was actually very good, but it's still not my thing.
So I agree that in general, I don't like the nostalgia shows. I like the ones that are kind of new and quirky, and there are a lot of really new and quirky and interesting ones out there.
This might not be a popular opinion. I don't like the singing. It makes me feel uncomfortable. I don't like sing-alongs. I don't like any of those things.
It's actually not that unpopular. I think a lot of people would agree with you and applaud you.
Not a fan of that.
I know.
If I'm watching a movie and they break out into song, I'm like, why'd you have to do that?
You're not an ABBA kind of guy.
No. No, I like ABBA music. I just don't need the movie theatre singing it, okay?
All right, let's...
Futures up on the S&P by a third of 1%. Let's get you an update on stories elsewhere with your Bloomberg Brief. Here's Yahara. Hey, Yahara.
Hi, John. Japan's ruling Conservative Party has elected Sanae Takaichi as its new leader. She is a former government minister, TV host, and avid heavy metal drummer who has long admired Britain's Margaret Thatcher. The yen weakened and Japanese long bond yields climbed after Takaichi's election, which fueled expectations of continued policy easing. Meanwhile, Aston Martin shares are falling in London trade, down 7.2% after cutting its outlook for the second time this year. Tariffs and falling demand in North America and Asia are weighing on the British carmaker. Aston Martin saying it launched a broad spending review, a move that could delay and reshape upcoming models. And in sports, the MLB divisional round this weekend saw the Blue Jays jump to a dominant 2-0 series lead over the Yankees with 2 high-scoring victories. Meanwhile, the Mariners and Tigers are tied 1-1 after Julio Rodriguez's heroics gave Seattle its first home playoff win in 24 years. In the NL, both the Brewers and Dodgers hold 1-0 advantages as they head into Game 2 tonight. That's your Bloomberg Brief. John?
Yahara, thank you. Look who isn't here.
She's mourning them. I mean, ultimately, I think that's the reason why. This is an empty seat.
Just an empty space where Anne-Marie once was.
And guess what? Her mug is gone.
Oh, no, it's all pretty sad, isn't it?
Her Yankees mug disappeared.
I think she's back tomorrow. I can't confirm whether this is unrelated. All right? Up next, a global phenomenon.
I think this is an issue that is a global phenomenon and one where there's a lot of longer-term momentum towards weaker fiscal positions. This is a situation where, in some levels, this could work to credit's advantage.
That conversation up next with Amanda Lynham of BlackRock from New York City. This is Bloomberg.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum or we will never create the solutions that we need.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
New leadership in Japan. Look at this move off the back of that. 5%, almost 5% higher than Nikkei 225. Dollar yen up by 1.9%, 150.30. How pro-stimulus is Takaichi, and how constrained will she be by this market and potentially other things too?
Yeah, and there's one other question, and you raised this earlier. How much control did she have over the Bank of Japan? Because they were ostensibly going to raise rates at their next meeting, and now people are pricing that out because of her leadership. So what is the connection there at a time when people are talking about independent central banks?
BOJ came along for the ride with Abe.
Yeah.
But as Jordan Rochester of Nomura pointed out, back then, the inflation rate was in a very, very different place. Let's just put it that way.
I also wonder how much, when you start getting these stories, in a vacuum, it wouldn't be that significant because the inflation rate isn't run away in Japan by any means. But when you take it holistically, and this question of if every developed market government is spending with profligacy, without any sense of restraint, how does that change the global yield market?
The dollar yen, 150.29. Let's talk about the global yield market. Under surveillance this morning, a global phenomenon.
I think this is an issue that is a global phenomenon, and one where there's a lot of longer-term momentum towards weaker fiscal positions. The U.S. is running a deficit of 6.5% of GDP. Japan appears to be looking at more fiscal easing. The French budget is in a challenging state. And the UK is clearly in focus. This is a situation where, in some levels, this could work to credit's advantage.
So here's the latest this morning. Global yields moving higher as a pro-stimulus leader is elected in Japan. And French Prime Minister Sébastien Lecornu resigns after just a month on the job. Amanda Lynham of BlackRock joins us now for more. Amanda, good morning.
Good morning. Thank you for having me.
Andrew Sheets of Morgan Stanley there. He was talking about credit spreads. And he was saying that essentially that tells you more about what's happening with the sovereign than it does with corporate credit. Would you agree with that?
I would push back a little bit on the view that the fiscal situation globally is shining a spotlight on kind of credits being a better risk. I think it's absolutely true that credit is fundamentally in a good place. I don't disagree with his conclusion, however, that it could be good for credit because of the yield backdrop. And I think that's the distinction, is that higher yields, so long as they don't become disorderly, unleash a wave of technical yield-based demand in corporate credit, and there's a limited pot for those investors to deploy capital. And so I think on net, structurally higher rates across the globe actually does support yield-based demand for corporate credit. I think it just reinforces one of the points that we've been making, which is if you are allocating to corporate credit, you should be doing that for yield and income and carry, not because you expect a total return boost from tighter spreads because they're already tight, and not because you expect a total return boost from lower rates because we don't see scope for that much either.
There have been some credit events, and we should probably talk about them. The risk is all around sovereigns in that conversation, but First Brands is one, Tricolor is another. Can we just sit here and say they're both idiosyncratic, or is there something bigger happening here?
So I think quietly the default rate has actually been on the decline in aggregate, and we actually think the peak of defaults is behind us. Absolutely, there have been some idiosyncratic situations. I would say not even idiosyncratic, but common themes and pockets of stress, the subprime consumer among them, over-leveraged capital structures. I think it's hard for us to see making a new peak in defaults when we see actually borrowing costs become somewhat more accommodative, not easy, but accommodative. And then also growth has been pretty solid, and actually there's scope for it to reaccelerate in 2026. So I think with those two factors, it's hard to see a new peak in defaults. Absolutely, there are dispersion themes under the surface. I think the key question for investors is that enough to warrant a risk-off defensive posture full stop? We don't believe that it is, because if you actually look at the performance of leveraged finance, it's actually been quite resilient despite those default activities.
If maybe it's not necessarily risk-off, but does it prevent one from being fully risk-on? I'm looking, for example, if you're just an all-in yield kind of buyer, well, CCC bonds are yielding right now about 10%, 9.9%. They've come out substantially, but why not clip that coupon?
I think your point is exactly what we've been saying actually since early April. We are comfortable selectively moving down in credit quality, not chasing all the way down into the left tails of these markets, whether that's in liquid credit or in private credit. I think, unfortunately, in the corporate credit universe, there are still some capital structures that haven't fully grown into their debt capital structures with growth above trend over the past few years. And so So with growth now below trend, it's hard to see why that situation would become much easier for them. But again, going back to the point, dispersion and volatility under the surface hasn't been enough to derail overall performance, and we expect that trend to remain in place.
Is it better to go for all-in yields in the private markets or in the public markets, given some of this vetting process and this question around CCC companies that might not have gotten upgraded for a reason?
Sure. It depends on the illiquidity profile of the investor. Can they take that illiquid risk or not? I actually think one of the things that you're seeing over the past few years since the pandemic is increased fluidity between these markets. We're seeing the same borrower tap public and private credit market, refinancing between the two markets. So they're not as siloed as they used to be. Just like there's more fluidity across investment grade and high yield, there's actually more fluidity across private and public credit. We measure that in a few ways, not least of which is the number of jumbo loans that are issued in private credit, meaning they're lending to companies that could access the public markets if they wanted to. So there is an illiquidity premia to pick up in private credit. It just depends on whether the investor base is comfortable not being holding that illiquidity.
Are Japanese investors still really big in this market right now?
Sure. I mean, foreign investors own 25% of the corporate credit market. But I think actually one of the areas that has been notable, we talked about this in our fourth quarter piece, foreign demand is on track to rival 2023 and 2024 in terms of demand for U.S. corporate credit. So the concerns about the loss of U.S. exceptionalism that were very dominant in the first quarter, they haven't been borne out in the data. And I think that's a really important stat when we think about just the structural drivers of demand of U.S. corporate credit.
And this is something we've reflected on with Jordan Rochester, I mentioned earlier, not Nomura now, of course, over at Mizuho. We've been having this conversation all year. As Japanese yields continue to lift, is the money actually going to go home?
Right.
You're saying it's not. Do you think it will?
I think there's a delicate balance. There's just not a ton of alternatives, frankly, for high-quality credit product. Certainly, the U.S. market is the largest, followed by Europe, and then followed by Asia. You also have a weaker yen, right? So if in terms of balancing that trade-off between yield and what's going on in the currency, I think investors structurally will probably still err on the side of allocating to the U.S. On the margin, the incremental dollar could go home to Europe or to Japan, but I think in general that trend remains in place.
Starts with an E, doesn't it? Exceptionalism. We're back to that again at the end of the year.
Well, is it exceptionalism or is it not as badism or there's no other place to go-ism? I mean, at what point are we talking about just collective dysfunction and one place has a deep market and companies that are actually doing okay, so why not go into them?
Can't replace the depth of it. Even the gold conversation. Dan Stroiver made a fantastic point. You're trying to diversify away from dollar-denominated assets and you're going to a gold market that has nowhere near the depth of that market.
Which is a reason why, on the margins, he said in September, ETFs and retail investors really were the drivers behind some of the rally that has gone parabolic. I asked whether Bitcoin was a precious metal or a precious substance. He wasn't going to entertain that, but I do wonder how much that's at play just because it can be a deeper market because you can make it as big as you want it to be.
I think we've had 7 weeks of gains on gold, the longest weekly winning streak
since
since
even want to say the word Bitcoin.
Beginning of the year. I can say the word Bitcoin, no problem saying Bitcoin at all. He didn't want to say it.
He didn't want to say it.
No.
But don't you agree that it's something to pay attention to?
I think it's a similar story.
Exactly.
Surely. He was making the point that one was more correlated with risk than the other, but so far this year, everything is up and to the right. Gold, Bitcoin, and stocks too.
People are looking for alternatives because they've got a lot of money and it's got to go somewhere. And that, I think, is the point, which actually correlates risk and gold and Bitcoin.
I thought that was a conversation you wouldn't want a part of, so we've left you out of it. Amanda, I'm sorry. It's good to see you, as always. Thank you. Amanda Liner of BlackRock. Up next, Drew Mattis of MedLife, Jay Goldberg of Seaport, Lindsay Piegza of Stifel, Jim Turney of AllianceBernstein.
A cidade estava sitiada.
Isso ao começo eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
isu ta lagi ko ahmalep ahmata suara pangok ahmalep manjang lenya ay ko mamanya. Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
I don't see much of a change to the leadership fabric of the market.
It's a different structure in terms of the market itself, in terms of participants.
You are seeing a broaden out. Every market is pricing in this AI structural theme.
People are willing to put up some serious money to be a part of that story.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your scores look like this. The gains keep building, up 1/3% on the S&P, on the NASDAQ up by 0.8. You want a big move? Here's a big move. AMD in the pre-market higher by 27%. The story dropped about an hour ago. AMD inking a deal with OpenAI to roll out AI infrastructure.
This follows a whole host of deals that OpenAI has inked with other big tech companies. I'm thinking of NVIDIA for their chips. I'm thinking of Oracle, and I'm thinking of Microsoft. It raises a question about that you raised last hour, how leveraged this entire story is to OpenAI, but it also speaks to this incredible fervor in capital markets right now. They are wide open, especially for anything related to AI, and we're bringing Merger Monday back, and that is what we're seeing this morning.
Deal activity, seen a ton of it. Here's another one. Fifth Third to buy Comerica for $82.88 per share. Buying the company in an all-stock deal valued at $10.9 billion. Comerica up by 13%. I keep going back to that phrase that Jim Zauter of Apollo used back in spring, macro paralysis. That's what it felt like at the time. 6 months later, corporate America has moved on, and moved on big time.
Which raises this issue, are we seeing a reacceleration into the fourth quarter, which is something that we've heard from the likes of airline CEOs, and we've heard from banking executives when it comes to capital markets activity. Do corporate executives have enough conviction in the backdrop for financing, in the backdrop potentially for Fed rate cuts, in the backdrop potentially that we aren't going to see some sort of massive increase in tariff rates, that they can put these deals together, especially in the banking sector where regulators are saying, go for it and prosper?
So we don't know. We don't know because we've got no economic data. I'm half joking, of course, but we've got to rely on the corporations now for for the next few weeks. JP Morgan reports next week, Delta this week. I know that that's going to be the high-income side of things over at Delta, a story that you follow closely, but we're going to depend on them a lot if this government shutdown continues.
Yeah, they're going to set the tone. And how leveraged is this market to the idea of better than or worse than earnings reports coming out of a lot of these companies, as well as the commentary? I mean, CEOs in some way this year have turned into the diplomats, the central bankers, the politicians, and guess what? Here they're the economists, where they're coming out and they're telling you all of the information that we're not getting from the government, that we're not getting from some of the official sources. It really has been a notable shift when we see, the central bank of Jensen Huang, the central bank of Delta. That is what we're looking at right now.
It's quite a change, that's for sure. Coming up this hour, Drew Mattis of MetLife Investment Management with stocks at all-time highs. Jay Goldberg of Seaport on what he calls bubble-like behavior in the chip sector, and Lindsay Piegser of Stifel with the government shutdown jeopardizing more economic data. We begin this hour with stocks shaking off the political division in Washington. Drew Mattis of MetLife Investment Management writing, given the level of fragility in the labor market and already low level of consumer sentiment, this timing may make it worse, but it does not currently seem a cause for material concern. Drew joins us now for more. Drew, welcome to the show. Based on a market move, certainly not. All-time highs, and we had some weight to the rally this morning. Drew, do you think we're on the precipice of a melt-up or a melt-down?
I'm more worried about the latter, and the reason being is simply because everyone's very excited about AI. Everyone's talking about what it's going to do for productivity. And at the same time, they're saying, oh, well, maybe the reason jobs aren't being created is because of AI. So it's this really weird disconnect between like really just pricing in all the benefits or potential benefits from AI over the long term and ignoring the transition costs that always go along with some sort of transition like that. If you go back to the advent of the computer age and computers really making their way into companies, there was a lot of disruption there. It created a lot of issues for a lot of companies. And, you know, we're just kind of ignoring that. In order to get from point A to point B, there's a pretty rough road that you have to travel.
So, Drew, it sounds like you're reflecting on maybe the late 90s, for instance. This was a conversation we had in the previous hour, and whether you need a mass misallocation of resources before you can really identify the ultimate winners of the cycle, of the story, of the theme. Drew, do you see history repeating?
I'm not sure if it repeats, but it's certainly going to rhyme. And I think, you know, if we think about how you can do things with AI versus how you had to do things with computers before computers, you know, in computers, it was kind of easy, right? You kind of took individual job functions and you just kind of streamlined them. With AI, it enables you to go across multiple job functions, so across different silos. And so siloed companies are going to find it very difficult to compete with AI native companies that are designed around a technology that allows them to actually people to have a broader span of control of things and therefore be much more efficient.
Drew, are we looking at a market that isn't necessarily thinking rationally, and I don't mean to give some sort of anthropomorphic qualities to this market, but a market that just is reacting to the fact that there is plenty of money sloshing around, central banks easing, and governments that are more inclined to stimulate than to have fiscal prudence?
Well, so there's a lot of quirks going on there as well, right? The Fed is still shrinking its balance sheet. And we should ask ourselves why they're doing that. And, you know, it's a little bit like the Wizard of Oz, like, you know, pay attention to the rate cuts. Don't pay attention to the fact we're continuing to shrink our balance sheet, which is a tightening mechanism, even as we're easing interest rates, right? So I believe that there's, you know, they've identified something that they want to do with the balance sheet, and they're getting there. And quite frankly, I think that they're willing to trade rate cuts in order to keep reducing the size of the balance sheet. And I think it would behoove us to ask ourselves why they think that's necessary. And, you know, maybe the answer is there's too much liquidity sloshing around, and they need to get the amount of liquidity relative to the size of the economy back into some sort of balance.
Okay, but Drew, I guess that if the Fed is willing to cut rates, there is plenty of liquidity sloshing around. You're seeing yields climb higher. You're seeing a pullback in equities. Where does the money go if there is some sort of sell-off?
Well, I mean, usually when there's some kind of sell-off or there's some kind of event like that, it's a risk-off event. Risk-off event, you move into cash and kind of other things like that. And so, you know, and I also think when you have a lot of things going on, so we have, you know, tariffs, we have labor story, we've got these earnings numbers, and they don't match up. what happens is the volume of information coming in becomes too great for people to kind of internalize and make decisions on. And so they switch to kind of a more basic fight or flight instinct, which is kind of risk on, risk off. And so I think that when in an environment like this, you're much more prone to large market events as people decide, you know what, I don't understand what's happening. I'm just going to kind of take my money off the table today, and I'll figure out whether I want to put my money back on the table tomorrow.
So, Drew, let's pick an asset. Let's take gold. Massive rally so far this year, alongside the big rally we've seen in stocks. If we had that pullback, how do you think gold would correlate with broader risk?
Well, I'm not an expert on that, but I mean, I do think the move you're seeing in gold has a lot to do with kind of Fed credibility and whether or not, you know, people believe the Fed is up to the task. And what's interesting is that's happening despite the fact there's no sign of kind of inflation pressure or long-term inflation expectations becoming unhinged. But it's a relative trade versus equities. So I know they've been moving up in tandem, but gold has been outperforming equities. And when that kind of thing happens, it's usually a sign that people don't really have a lot of faith that Fed policy is kind of in the right spot or going to continue to be in the right spot for an indefinite period of time.
Drew, I'm just going to say this, and by all means disagree, but it sounds like you don't have much faith in the Fed's pursuit of their inflation mandate. Is that fair?
I think the Fed kind of got off course. You know, once you, I think that it's unimportant whether inflation is at 3% or 2%. What's really important is the volatility of inflation, right? Because volatility in inflation creates planning problems for corporations. If you tell a CEO that they're going to have 3% inflation for the next 10 years, guaranteed, that's a lot better than we're going to have between 0 and 2% inflation with 200 basis points of volatility in that. Right? Because the more concrete information you can provide to decision makers, the easier it is for them to make decisions and the more decisions they make, which means that the economy does more because they're more willing to invest, they're more willing to hire, they're more willing to kind of take those chances that they need to take because the volume of chances they have to take is being reduced.
To put it all together, Drew, is it better to hedge against a reacceleration in inflation, or is it better to hedge against some sort of downturn in growth right now?
Well, I'd say downturn in growth because I don't think there's a lot they can do to push inflation lower. And if you try to do that, what you're going to end up with is sticky inflation and much lower growth. So if you're going to have inflation, you might as well have the growth to go along with it.
I guess that the logical question would be, do bonds provide the hedge to lower growth if inflation is still a concern?
Well, I think that's why you're seeing the 10-year stick where it is, and that's our expectation for this year and next year, is that we're going to have the 10-year yield somewhere between kind of 4 and 4.5. And it's just going to be stuck there, which also tells you that whatever the Fed's rate cuts are going to do, they're probably not going to be as effective as they have been in the past, which might mean you might get a few more of them, right? And I think the market's kind of come around to the idea we're going to see maybe 100 basis points more in easing. That's in the rough right neighborhood in our minds. But you're not going to probably see a lot of movement in the long end, which means you're going to see a significant curve steepening.
Drew, just finally, how quickly do you think those 100 basis points come about?
Oh, I don't think they're in a rush, but I do think it's going to be sustained. And once again, same reason. You want to just keep signaling that you're doing something, but you understand that what you're doing might not, the material impact is going to be from the announcement of doing it, not from the actual act itself.
Got it. Drew, thank you, sir. Appreciate it. Drew Mattis of MetLife Investment Management. A lot of that stuff is priced.
Yeah, which is the reason why people are saying how much is the market already bringing forward rate cuts that have yet to happen, leaving a real potential disappointment risk if those Fed rate cuts don't come through.
Which means maybe they have to go more, which is what Drew was kind of bringing up then.
Which is the reason why you get to the sort of stagflation type of environment maybe if you're a bear.
The Governor Myron Dot isn't so crazy when you think about where this Fed could go under new leadership next year.
Especially given the fact that other banks, big Wall Street banks, say that the neutral rate could be near where he's talking about. It's not that outrageous. But did you see that Stephen Myron over the weekend said that if he did see rents pick up, that would be a concern for him and that he would reconsider how quickly to cut rates? So it does seem like there is some sort of economic check, even on the most dovish position on the central bank.
We are supposed to get inflation data next week, but stay tuned for that because we don't know what data we will and won't get given the government shutdown. Equity futures on the S&P just keep doing their thing, up by 0.4% on the S&P 500 with an update on stories worldwide with your Bloomberg Brief. Back with us, here's Yahara. Hey, Yahara.
Hi, John. The government shutdown, as you were just saying, is in its 6th day. The Senate
is set to vote again today on a stopgap spending bill that's already failed 4 times. Senate Minority Leader Chuck Schumer says House Speaker Mike Johnson has refused to negotiate with Democrats on extending health care subsidies. Meanwhile, AMD shares are surging 33% in the pre-market following news it signed a deal with OpenAI. OpenAI will deploy 6 gigawatts of AMD GPUs over multiple years. The deal is expected to deliver tens of billions of dollars in revenue for AMD while accelerating OpenAI's infrastructure build-out. And in sports, the NFL has no undefeated teams remaining after Week 5 action. The Philadelphia Eagles fell to the Denver Broncos, and the New England Patriots stunned the Buffalo Bills with a 23-20 upset. Elsewhere, the Baltimore Ravens fell to 1-4. The New York Jets lost to the Dallas Cowboys, and the Giants were defeated by the New Orleans Saints. That's your Bloomberg Brief, John.
Yahara, thank you. Thanks for the update. Up next, the Morning Calls Plus. We'll catch up with Jay Goldberg of Seaport on what he calls bubble-like behavior in the chip sector. That conversation just around the corner.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
I think the reality is the AI boom is real. It's not going to be a question around hundreds of billions of dollars of capex, but rather trillions. And in our opinion here at Clear Harbor, how it's really going to impact and benefit multiple sectors of the U.S. and the global economy. Lots of opportunity for productivity gains and ultimately maybe a surprise to the upside in growth.
So that was Aaron Canada, Clear Harbor Asset Management, joining us a little bit earlier this morning, following another big deal in this sector. Let's start with the index level stuff. We're positive by 0.4% on the S&P, on the Nasdaq up by 0.9%. The gains continue, largely thanks to this morning. This is AMD. AMD in the pre-market, now higher. Bramo, 33% move on that stock following this deal with OpenAI.
AMD has a seat at the table with the likes of NVIDIA, with the likes of Oracle, with the likes of Microsoft. Their chips are also going to be used with OpenAI, and it really goes to this question, how much is OpenAI almost at the center of all things having to do with algorithmic learning and a lot of these investments, and how intertwined are all of these companies at a time of incredibly elevated valuations?
We're going to build on this in just a moment. Before we get there, let's get get you some morning calls. First up, Wells Fargo raising its price target on Microsoft to $675, expecting it to benefit from higher cloud demand. Elsewhere, Morgan Stanley upgrading Micron to overweight, citing, quote, substantially higher earnings power. And finally, Goldman raising its price target on NVIDIA to $210, pointing to growth from its strategic investments and partnerships. Sticking with tech, Jay Goldberg of Seaport calling the recent moves in AI bubble-like behavior. Jay Goldberg joins us now for more. Jay, welcome to the program, sir. You've got a rare sell rating on NVIDIA. Let's just talk about that line, bubble-like behavior. Does the announcement from AMD and OpenAI speak to some of that for you?
Absolutely. It's quite an interesting thing to wake up to this morning. We have a company that's giving away 10% of its stock to a startup that doesn't have positive free cash flow to buy tens of billions of dollars of their products somewhere down the line, and that company's stock is up 30%. You know, on the face of it, I haven't had time to parse it, but it looks like a good deal for AMD over the long term. But it just, you know, the market reaction seems to be looking at only the positives and applying a 0% discount rate to future events, not looking through the whole deal.
At the same time, Jay, in the past, we've seen earnings outperform again and again and again from these companies. And a lot of people will come on and say, if you look at the price to the actual income level, you've seen multiples come down, not go up, even with prices going up significantly. What about that story doesn't work for you in the same way that it did, say, 3 years ago?
So I think... Look, I'm not a bear on AI in general. I think AI has the potential to be very important, but no technology gets adopted in a straight line. There are always going to be fits and starts. We saw that with the internet. We saw that with mobile. These things go up and down. They don't just keep running forever. And I think just drawing straight lines, extrapolating from where we are today into some sort of never-ending future, that's not how things are going to work. And I think we need just a little degree of caution around some of this stuff, where a lot of these things are getting very extended, just based on, you know, what the actual deployments are looking like and the returns that the hyperscalers are getting on their investments.
What do you think is the most speculative at this point, Jay? I know that your call is on NVIDIA, which is notable given all of the buy ratings that we see on it. But beyond that, is NVIDIA the biggest offender right now in your mind?
Well, I think the whole thing, we have this sort of massive AI spend taking place right now. But if you boil it all down, it's really 6 companies that are driving all of that. Right? Microsoft, Amazon, Google, Meta, OpenAI, Microsoft. And I understand their imperatives and why they're doing this. But I think it is worth reflecting on that. It's just 6 companies. And none of them actually have a very clear return on their investment, even in the works. They're sort of spending it because everyone else is spending. And then you have OpenAI, who is, you know, an incredibly capable company coming with great models, but at the same time, you know, they're free cash flow negative. So I think that sort of calls into question the sustainability of all this.
And Jay, it's bringing in multiple sectors. It's energy, it's the capital providers, it's tech. I know based on some of your writing that you think this could exacerbate problems further down the road. Could you build on that just a little bit, that the concentration exacerbates the downside risk?
I think that's absolutely the case, where, you know, when I hear my colleagues on the morning call talk about energy and pipelines and materials, you know, and they all talk about the AI element to their stock's growth, that just makes me pause. Like, I've been covering semiconductors for over 20 years now. And I've always had good relationships with my peers, but we usually never talk about each other's stocks. There's never been a lot of overlap. And here we have everybody talking about the same themes. It makes me wonder.
Jay, the energy piece of it is interesting. There has been a broader conversation. People acknowledge the potential for constraints. Do you think that's going to be the first constraint, the thing that shakes this up quickly?
Absolutely, right? I mean, and I look at NVIDIA, like I'm cautious on NVIDIA. I think of my rating here as more of an underperform than a sell. I wouldn't short NVIDIA. But the issue is, at this point, NVIDIA's kind of, all the good news is priced into NVIDIA, and none of the potential downside is priced in. There are a lot of things that can go wrong that are beyond their control. And, you know, top of that list is electricity. right? We don't know to the extent to which OpenAI is going to be able to deliver on all these electricity numbers they put out there. And like in just the last week, they've talked about adding 16 gigawatts of compute capacity. I don't think anyone knows exactly where all that power is going to come from. They have maybe some rough ideas, but I don't think all those are a lock. And that's a real problem. I think it's going to pause things somewhere down the road.
Jay, how far are we from some sort of energy-related constraint on how much the promises of expansion can really meet reality?
I think it's a little beyond my scope. Like I'm just a humble semiconductor analyst, but I do think we start to see more concern about that in next year.
At what point do you see this also being a question of the U.S. versus China, especially given DeepSeek? I mean, do you think that kind of issue is going to come to the fore, that there could be some new innovation that renders some of the big tech companies more obsolete in short order?
Well, I think it's this weird dichotomy we have where the U.S. has chips, but not enough electricity. China has all the electricity they need, but not enough chips. So both sides face their own constraints. But I do think there are going to be some pretty significant, I don't want to say breakthroughs, but sort of advances in China as companies like Huawei find new ways to build their own domestic supply chain that gets them out from under these U.S. restrictions. They probably won't be as good as the best that NVIDIA and AMD have to offer, but they may be good enough for them to push ahead. There's an immense amount of AI talent in China. I don't want to overstate it. I think the U.S. still has a pretty big lead in terms of just sort of fundamental foundational models, but there's an incredible amount of talent in China, and I think they're not as constrained as the U.S. government might think.
Jay, just to finish on that, when you frame it in the following terms, when you say that China has the electricity, not the chips, that the US has the chips, but maybe has the energy constraints, which problem is easier to fix?
I think it's going to be China getting around U.S. sanctions one way or another, probably by building their own supply chain.
Jay Goldberg of Seaport. Jay, come back soon. We've got a lot to talk about. That really is the bearish view, if we can call it that, the bearish view, relatively speaking to the exuberance elsewhere this morning at least.
Yeah, talking about how there are a lot of constraints that we haven't yet experienced, whether it's energy or whether it's just some of the competition coming from overseas. That last point, really interesting.
Yeah.
Essentially, China's constraints are less onerous than the U.S.'s constraints when it comes to just getting around sanctions and restrictions on U.S. sales versus creating an entirely new energy infrastructure over in the U.S.
You'd think it'd be easier to build out the energy infrastructure. I'm no expert on this matter. Clearly, Jay's got his views on the matter. But if you were just to ask the layperson, I think they'd come around to the idea that it would be easier to do something about energy. But ultimately, that's the downside case for NVIDIA, based on what Jay said, is the energy constraints that are going to basically materialize quicker than people think.
Yeah, well, how long does it take to build a nuclear plant? We've talked about that. It takes a long time. How long does it take to get the permitting necessary for a lot of these energy plants? The whole NIMBY, not in my backyard. Who wants a big energy plant in their backyard? Not a lot of people. All of these constraints really would have tied the hands of a lot of people in the U.S.
Listened carefully to what he said. Underperform, not a sell.
Yeah.
Difficult to sell this story right now. The NASDAQ up by 0.9%.
He's still a believer. This isn't someone saying, this is horrible, it's all a huge bubble, this is tulips. This is somebody saying, maybe we're getting a little set of ourselves in this whole circular financing thing. It's leaving me a little queasy.
If you get the melt up, trying to short that is painful.
Yeah.
Even if ultimately down the road, you might be right. NASDAQ 100 futures up by 0.9%. Up next, Lindsay Piegza of Stifel with the government shutdown jeopardizing more economic data.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersecci. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Live from New York City, welcome back to the program. 60 minutes away from the opening bow, 6 days, no losses, make it day 7. Up by 0.4% on the S&P 500, up by 0.9 on the Nasdaq 100. In the bond market, 2s, 10s, 30s, bond yields look like this. 2-year bond yields down last week. Weaker than expected economic data, dragging yields back towards 350. Up this morning by a couple of basis points, 359.24 on 2s, on 10s, 415.98. 10s in focus Wednesday. 30s in focus on Thursday. Bond supply coming through this week.
At a time when we're talking about global sell-offs in developed market bonds because of the fiscal backdrop, I just wonder how much of this also is a result of a lot of bond fund managers saying to a lot of people, this is the time to get into longer-term bonds. This is the income trade. Let's go. We saw those calls over the past couple of weeks, and then, oh yeah, hold on a second. Yields can also go up when you get some sort of global hiccup. And that's what we're seeing right now. How much staying power that has, let's see with the auctions.
Attempting to make this interesting. Of course, it is interesting, but compared to the moves we're seeing in the stock market elsewhere, AMD, these headlines just crossing. The AMD CEO, Lisa Su, speaking in a conference call, saying the OpenAI deal is not exclusive and that they can supply everyone. As we count you down to the opening bout, that is the #1 stock to watch. With more, here's Yahira. Hey, Yahira.
Exactly, John. And it is a monster move on AMD shares, rising 35% now in the pre-market after it signed a multi-year deal with OpenAI to supply 6 gigawatts of AI chips, a move that could bring AMD tens of billions of dollars in new revenue. The latest sign that the AI build-out shows no signs of slowing. NVIDIA down 1.2% on the move. Meanwhile, Intel rising 2%. And moving on to another tech player, and that is Tesla. Shares are up 2% in the pre-market after the company teased what looks like a new product reveal set for October 7th. A series of cryptic posts on X showed a spinning Tesla logo and headlights in the dark, sparking buzz about what could be next for Tesla. And we end on an M&A deal here. Fifth Third Bank Corp falling 2%. Comerica rising nearly 13% on news that Fifth Third Bank Corp is buying Comerica in a $10.9 billion deal. It's the latest regional bank merger as these companies try to take advantage of the Trump administration's deregulatory push. John?
Yahara, thank you. Appreciate it. Some of the moves to look for around the opening bell in about 58 minutes' time. Let's turn to the government shutdown, the continued standoff in Washington, plaguing the release of key U.S. economic data. Michael McKee has been struggling to keep up, as we all have. Mike McKee joins us now for more. Mike, what do we look at if we don't have the traditional economic indicators?
Well, you can watch a lot of Bloomberg surveillance. That's one thing you could do, because at this point, we got to buy into the idea that this is going to go on for a while. That seems to be the word out of Washington. In that case, the good news is we don't have a lot of significant data due out this week. We'll miss trade figures tomorrow, jobless claims on Thursday, inventories on Thursday. Not big indicators that are going to change anybody's mind about the Fed. We do get New York Fed inflation expectations today and the University of Michigan sentiment on Friday. Wednesday is probably the big day. Fed minutes, first meeting for Stephen Myron. What was it like? What did people say? And what did they say about continuing the rate cutting cycle? We will also get lots of Fed speak to that point. The question is, how much of it is really going to matter since they don't have something new to talk about? But you can see there's a tremendous number of speakers led off today by Jeffrey Schmidt. He's the Kansas City Fed president. He is the most hawkish, perhaps, on the board. And a lot of people speaking, but again, what are they going to say when there's no new data to talk about? Next week, that's what they're going to talk about. Next week is going to be a really good week. I'm just putting this out there to make you feel better about the things that we're going to miss if they don't get done. Jay Powell is speaking on Tuesday the 14th, and he is speaking about the economic outlook. That is going to be the highlight of the week, no doubt. Then we get CPI, PPI, retail sales, import prices, and housing starts. Or we don't get them if the government remains shut for a third week. So something to look forward to and keep your fingers crossed, maybe.
Well, Mike, let's go with CPI. That's about 9 days away. Is there a key collection period that would mean even if we opened up, say, the day before, that they wouldn't be able to produce the data?
It depends on how much time they have. They have been struggling with a lack of people to do all the work. In 2013, they did produce a CPI when the government finally reopened, and it was based on about 45% of the usual data, but wasn't revised significantly going forward. So they can do it. It's a question of how much credence you'll give the numbers and how much it's going to matter by the time they finally get it out.
Mike McKee with the latest. Mike, thank you. Struggling to keep up with this one, but ultimately looking forward to CPI and hoping that we actually get a read on US inflation next week. Lindsay Piegser of Stifel joined us now for more. Lindsay, we didn't get payrolls. We're still waiting for that. We might not get CPI. We will get a Fed meeting at the end of the month. I'm told they're essential. If they meet, Lindsay, and they don't have CPI and they don't have payrolls, do they make the decision to cut interest rates?
Well, I think even without an updated look at the data, I think the conversation is going to be very fierce in the sense that we do have this growing number of Fed officials that is increasingly concerned about the lingering level of inflation, that elevated level of inflation, and those that are focused more on the weakness of employment. So even without a new data point, I think this conversation is going to intensify and complicate the ability for the Fed to justify any further movement. And the lack of data, I think, is going to reinforce the need for a more patient, cautious approach to policy from here.
What data are you watching right now, Lindsay, given that the gold standard data, which is flawed, yes, but also is probably the best that we've got, what are you focusing on instead?
Well, I think right now, again, we still have a lot of information on the price side. We're still waiting to see whether or not we see an updated CPI and PPI report, but we have a lot of information coming down the pipeline to suggest that inflation is not necessarily headed back to that 2% price level. We see some of the Fed's preferred measures of inflation, the PCE, the core PCE, still up near 3%, with the most recent reports suggesting some upward momentum in the pipeline. So again, I think it's very important that the Fed stays focused on that mandate for price stability, even with early signs of a cooling in top-line hiring. The Fed should not completely abandon that price stability component, which it's failed to reinstate years now post the pandemic.
At the same time, we did see that job openings per unemployed people, that ratio fell to the lowest since 2021 in the recent JOLT survey. We did see the non-farm payrolls in August that was highly concerning to some people, and we did see pretty significant downward revisions to the overall payrolls figures for the year ended in March. At what point do you give credence to the idea that there really is a significant shift in the labor market that does also warrant attention by the Fed?
Well, we also see that jobless claims, while volatile, are still in a very low, tight range. We also see the unemployment rate is still stubbornly down near 4%-ish. So I think at the very least, the labor market data are not all pointing in the same direction, which isn't to say we ignore the data points that are on the weaker side, but it's to say it's not an alarm bell quite yet. It's something to watch. It's something to be aware of. That being said, this is a very aged recovery, and I would expect, particularly given the reduction in international flows, shows that the need for top-line hiring to slow. As we heard from Chair Powell, he previously noted that full employment was roughly around 125, 150,000 in terms of payrolls. Well, he has significantly revised that lower, and I think that's a more reasonable expectation for top-line growth, not necessarily an expanding labor market, but certainly enough to keep stability in place in today's labor market.
Lindsay, can we pair that view with what's happening in stock markets and more broadly financial conditions? Do you think the Federal Reserve is risking misplacing its anchor around the labor market, around the step down in payrolls, and ultimately fueling financial excesses and pockets of, let's call it, exuberance right now? Is that a financial stability concern they need to consider?
It really is, and this is something that we've seen before. We look at investors, and they seem to be trading up on good data. That means the economy is relatively solid. Trading up on bad data as well, because this is that Fed put, the expectation that the Fed will jump in and provide monetary policy support with additional policy easing, even at the expense of maintaining still elevated inflation. And so I do think that the market has become complacent, that the Fed will continue to support the economy, regardless of the balance in terms of the risks on both sides of the mandate tilting to one side or the other.
Lindsay, appreciate your time, as always. Lindsay Piegza there of Stifel on the economy and potential financial stability risks, certainly with regards to some of these moves. AMD is a $270 billion company, and we're seeing a 30% move off the back of an OpenAI deal. And OpenAI is a company that's not making money, and we're all leveraging a lot of bets on the idea that they can keep on spending and keep on spending and keep on spending.
This is the kind of move that we saw in Oracle, too. Remember, just in a couple of days. And again, these are huge companies, hundreds of billions of dollars of market capitalization, moving significantly off promises that haven't yet borne out and that don't have a lot of tangibility to them, which just highlights how much people are enthusiastic. It does raise a question about the idea of bubbles or incredible exuberance or whatever you want to call it. And I keep thinking about that 9,000 figure from Julian Emmanuel saying that he now sees a 30% chance that we could see the S&P rise to 9,000. I'm still trying to get my head around it by the end of next year as a result of some of these dynamics.
AMD's up 35% this morning.
And it's on its way.
Ed Ludlow is going to join us in just a moment to break down that particular agreement. Stay tuned for that. Let's get you an update on stories worldwide. Back with us with your Bloomberg Brief. Here's Yahira. Hi, Yahira.
Hi, John. French Prime Minister Sébastien Lecornu has resigned only 3 weeks after being named to the post by President Emmanuel Macron, and just 1 day after a controversial cabinet reshuffle. Macron now has to decide whether to name a new prime minister, call a parliamentary election, or resign himself. The rising political uncertainty sending French bond yields higher. Meanwhile, President Trump is urging Israel and Hamas to reach a settlement to end the 2-year war in Gaza. Mediated talks begin today in Egypt with U.S. envoy Steve Witkoff attending. The first test of progress will be whether Hamas releases its remaining hostages in exchange for Israel freeing Palestinian prisoners. And a change at the top at Verizon. Dan Schulman has been named as the company's new CEO, replacing Hans Vestberg. Vestberg, who has been CEO since 2019, will serve as a special advisor through October 4th of 2026. Schulman was the former CEO of PayPal. That's your Bloomberg Brief. John?
Yahira, thank you. Appreciate it. Thanks for this morning. Up next on the program, we'll set you up for the day ahead. We'll catch up with James Tierney of AllianceBernstein, plus Ed Ludlow on this move right here. AMD up in the pre-market by close to 35%. That's next. This is Bloomberg.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
AI has the potential to be very important, but no technology gets adopted in a straight line. There are always going to be fits and starts. Drawing straight lines and extrapolating from where we are today into some sort of never-ending future, that's not how things are going to work. All the good news is priced into NVIDIA, and none of the potential downside is priced in. There are a lot of things that can go wrong that are beyond their control.
A lot of things going right this morning for a lot of stocks. Equity futures on the S&P 500 firmer, the Nasdaq 100 up as well by 0.8%. One stock in particular getting our attention, shares of AMD absolutely soaring on the back of a deal with OpenAI. Their stock is up by more than 36%. Ed Ludlow has more. Ed, if I told you this deal ahead of time, would you have put a number, a move like that off the back of it? I'm not sure how many people would.
I would have said yes on the AMD move in the shares, the reaction to the story, but I'd still be surprised at the story, right? Because the structure of the deal is really important here. You know, it's 6 gigawatts, which is the capacity and peak time demand for a large city when you talk about electricity. So it's a serious deal, and AMD is talking about it on paper being tens of billions of dollars. But the thing that you really need to understand is OpenAI still has to spend money here. So AMD has issued a warrant for OpenAI to get up to 160 million AMD shares, but they are in tranches against deliverables. And unless OpenAI spends some money, which we need to discuss, like where's it going to get that from, then honestly, it's very hard to understand how this comes into fruition, into real life. But just like NVIDIA is kind of the golden ticket for AI, if you're a software company, you know, OpenAI is the golden ticket if you are a hardware company. And it's still some details to iron out, I think.
Just how much are we leveraging on the success of one company to keep on spending when they're not making any money?
Yeah. That's why I say that the structure of the deal is important, because there is a difference between what OpenAI and AMD have agreed to do versus what we have been calling circular financing. So in parallel, the NVIDIA OpenAI deal saw NVIDIA also against deliverables, but give OpenAI probably some kind of something in lieu of cash, let's call it chips, but they got OpenAI equity in return. In this instance, OpenAI is getting AMD equity. And so it's not OpenAI taking cash from AMD and funneling it straight back into the gear. It's really interesting. I think that the main thing is the simple question, you're all committing to this. What if 10 years down the line, you don't need any of that capacity and you've done your math wrong?
Ed Ludlow with the latest. Ed, I'm looking forward to the programme a little bit later this morning. Bloomberg Technology, 11 a.m. Eastern Time. Ed Ludlow and Caroline Hyde. Buying relevance is a conversation we're about to have AMD up by 35%.
Buying relevance because AMD wasn't in the game. And that, I think, is the really important thing, is that NVIDIA was the big chip maker and AMD kept getting lost in the dust. And this real question of the smartphone super cycle really was the one that was weighing on AMD. Suddenly, if they can come up with microprocessors for the likes of OpenAI, does that unleash a whole slew of value that hadn't yet been priced in?
Jim Tierney of AllianceBernstein writes the following. Here's the quote. Should the funding spigot turn off in 26 or 27, the entire ecosystem will slow down and the market is not currently pricing that in. Jim joins us now for more. Jim, good morning.
Good morning.
Buying relevance, not my phrase. That was the way you framed things walking into the studio. So let's talk about it. What do you think of this deal, and how does it differ to other things that have been announced in the last month?
I think it makes a lot of sense for AMD. Broadcom was a player, NVIDIA, they were the top two players. This buys them relevance, and the OpenAI seal of approval really matters.
Does it concern you that AI is the new Bitcoin or the new blockchain or something that we've seen before, that all you have to do is announce a deal that may or may not come to fruition in order to see your stock surge by this much?
I think the market is so binary right now that people are looking for an AI story, and this is a really big AI story. The question is, what is the productivity all of this is going to drive? And if the productivity is there, either through the ability to do more or do more with less, then we're going to see more of this.
There is also this question of creating capacity in the energy space that can really allow that productivity and allow some of the promises to come through the pipeline. We were just talking with the Seaport analyst who is noting that ultimately that might be the constraint that puts a stop to this. How far away are we from that? I mean, is that something that's very much on your radar?
Of course, many things have to go right here. We need to have the energy, we need to have the data centers, we need to have the chips. I think so many people are focused on this. That's not my biggest concern here.
What is your biggest concern?
That the productivity just doesn't play out.
We don't get the return on the investment.
Exactly.
Any sign of that right now? We're all waiting for these big revelations to come. When do we start to lose patience? Or are we seeing enough already?
We're seeing little bits of it right now. I think we need to see a heck of a lot more, particularly given the amount of spending that is going to be done over the next couple of years.
Spending's key, and you've reflected on that when we introduced you. There's a lot of spending. Is there any reason to believe that spigot is going to be turned off anytime soon on the spending? Or is that just linked to what you said previously about the fact that these companies need to show that they're generating some returns on the investment?
We'll hear a lot more over the next couple of weeks through earnings and see what 2026 CapEx budgets look like. But I think they're going up. The Stargate deal, the NVIDIA deal, this deal gives OpenAI some funding. So I don't think the spigot turns off in 26 or 27, to be blunt.
How much do you think the high valuations are simply because people cannot price in the macro environment right now and are losing faith in government-related assets? I mean, in a serious way, people say, well, I can't price in a macro environment that's a black box, but I can price in some of the potential gains in productivity, some of the potential gains just more broadly in quality of life from the likes of artificial intelligence.
In some ways, there's definitely a chase going on here. The amount of money that's been made in this space over the last couple of years is massive. So people want to say, what's the next opportunity? So there is a little bit of a chase here.
What are you doing? Are you letting up a little bit on some of the positioning, or are you getting in and doubling down because a bubble's going to bubble?
We have a variety of different exposures, things that are obvious like an NVIDIA, but things that are less obvious like an Eaton or an Amphenol. So we're playing it across a variety of different opportunities.
Can you build on that just a little bit more? Where are those opportunities, the sectors, the industries, the exposure you do want to get to things that might be still underpriced, if I can use that phrase, on a day like today when you see moves like this?
Some of the things we talked about, NVIDIA obviously on the chip side, you look at Amphenol in terms of their copper connectors being in the NVIDIA boxes. That's an opportunity. Eaton in the data centers in terms of providing the electrical equipment there. So not just one space, but having a number of bets across the spectrum.
Is it all becoming one trade? Are you sensing that from conversations you have? Is it all becoming one trade, one theme?
It's very correlated. You look at up days, you look at down days, and you see a whole basket of stocks that move together. Absolutely.
Does that make your job a lot harder?
For sure.
How different is it to the 90s based on that?
There are a lot of similarities, for sure.
Jim Tierney of AllianceBernstein. Jim, thanks for dropping by.
Thank you.
Appreciate it. Thank you, sir. Similarities to the 90s, not quite there yet. These are companies, OpenAI to one side, these are companies that are making a lot of money right now. And the CapEx plans that Jim were talking about, he thinks the spending is going to continue through 26, through 27, unless you see some kind of big upset.
Which I guess is really the key question. What could be that upset? Is it going to be the energy? Is it going to be productivity and where it is or isn't happening? Is it going to come in the form of some sort of downturn or some sort of turning off in the federal spigot when it comes to spending? Right now, people aren't seeing it. They're saying this is a sea change akin to the railroad, akin to the .com situation that did give rise to the internet, and that's the reason why people are piling in. I also think there's no alternative right now. If there's a viable kind of alternative, people might get more excited. That's why I think a lot of people are saying, I can analyze this, so let's go.
Julian Emmanuel of Evercore, you mentioned the potential of 9K on the S&P, which sounds crazy. He said increased probability of a bubble. Nadia Lovell of UBS, evidence of a possible melt-up into year-end. That's growing. Think about how many people since April have been on the sidelines and missed a lot of this over the last 6 months, waiting for the consequences of Liberation Day to finally bite. Waiting and waiting, and this market keeps getting away from them. And Nadia's point on Friday was ultimately that that's going to be the thing that pulls people in. Moves like this, 35% on AMD off the back of a deal like that.
Yeah, the FOMO trade really coming back in the fore. It kind of raises this question about the Reddit stocks. Who needs GameStop when you've got the likes of AMD rising 35% or 36%? You can go to the more traditional names. Look, I think when you take a step back, there is a real question about what the gut check will ultimately be. Is there going to be a company that comes out and says, we invested X, Y, and Z in AI and have seen no gain? Or we're still investing this, or we're going to pull back on our investment because we're not seeing the productivity gain. We're not hearing anything like that. And actually what you do see from an increasing number of studies is inconclusive, but corporate executives are incredibly excited about the productivity that they could potentially engender. So watch this space. It's a big unknown in a lot of ways, but you know, people are piling in because it's given the returns that it has.
You know, I'm not usually excited about bank earnings. I find bank earnings really tedious. You know that. We often talk about that. But this time, given the amount of activity we've seen, the amount of debt that came to the market in September, the amount of deal flow that's picked up, things like this, the regional banks deal that we had earlier this morning between Comerica and Fifth Third, I think it's going to be pretty interesting to talk about what they see at the moment and how much more of they expect into year-end and beyond.
Yeah, and what the justifications are for some of these tie-ups. Is it because the capital markets are wide open? Is it because you need size in this kind of environment? Or is it because of something else that they see going on that truly is some sort of industrial
bank sector as well? That's just an appetizer of things to come. We won't get any economic data and no one seems to care. Coming up tomorrow, Neil Dutta of Renmac, Dan Scully of Morgan Stanley, Libby Cantrell of PIMCO, Stephanie Roth of Wolfe Research from New York City this Monday morning. Good morning to you all. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
In case you missed it on Bloomberg Surveillance.
We heard from Restoration Hardware, and the RH CEO was on the earnings call dropping F-bombs. And I imagine a lot of people are having similar issues at the moment trying to sell furniture. You're at a different price point. What's your experience this year?
People have less money. You can say still recovery from the pandemic when it comes to inflationary measures. But then again, our line of business is really about human basic needs. It's about the bunk bed when the kids grow up. It's about the chair and table and so on.
Anne-Marie had one final question.
How are the meatballs? And you're lowering the cost of the meatballs,
I am myself, I'm an intellectual vegetarian. I normally say down here I struggle. I love the meatballs. We're actually running today about 40% of our sales is actually vegetables and plant balls. And personally, I don't love the vegetables, but the plant balls is a great exception. But meatballs is part of our legacy, so there you go.
I love your honesty.
Don't miss Bloomberg Surveillance live every weekday.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
Another day of a government shutdown, another day of record trading. We are up on this S&P 500 futures session. 30 minutes to go into the start of cash equity trading. I'm Danny Berger. Matt Miller is off today, and Bloomberg Open Interest starts right now. Coming up, OpenAI strikes again, inking a deal with AMD that's sending shockwaves through the chip industry. Meanwhile, Fifth Third scoops up Comerica for nearly $11 billion in the biggest U.S. bank deal of this year. And Tesla leads the Mag 7 higher. The electric car maker teases a product announcement in a series of cryptic posts. So a lot going on this morning, a lot of deals, and in the tech space, it's a big one. The stock to watch this morning is AMD. OpenAI having such an outsized impact on this public market. Shares up, check this out, nearly 36%. It signed a deal of a data center with OpenAI. It could get a nearly 10% stake in the chip maker. AMD expects the deal to lead to tens of billions of dollars in revenue. And let's get more into that story on the AMD OpenAI news with Bloomberg Tech's Ed Ludlow. Ed, what exactly was agreed upon here?
I mean, you have a great command of the basic details, but there's a lot of unanswered questions, right? So it's a multi-year agreement, 6 gigawatts of capacity, which is basically the peak energy demand of a sizable city. The questions that remain is, how is OpenAI going to finance this? Because yes, in the structure, AMD issues OpenAI a warrant for 160 million AMD shares, but they are deliverable in tranches against milestones that will require OpenAI to spend money, right? So the first tranche of stock is deliverable on completion of the first gigawatt of capacity. And what is not answered is, does OpenAI look to some other kind of financing mechanism to make this happen? For AMD, it's a way of getting a bigger foothold on a market in which it is a distant number 2, maybe even number 3 player behind NVIDIA, right? And so OpenAI, in this case, is their golden ticket to the inference level compute that we think we'll need in the future.
Ed, it's not just how do they finance this, it's how do they finance everything that they've been announcing, from deals with NVIDIA to CoreWeave to Oracle. We are talking at least over $1 trillion. Do they have the money to do this?
Yeah, the net commitment that OpenAI has to all of the parties you mentioned is somewhere between 26 and 30 gigawatts, right? So the AMD 6 gig is a significant chunk of it. You know, the question in this case is, how is the structure of the AMD deal different to the NVIDIA OpenAI deal, which had a value of 100 billion, but saw the different mechanism where NVIDIA basically gets a stake in OpenAI, and we don't know whether NVIDIA's commitment to OpenAI was cash or was it chips in lieu of cash. That's what raised the circular financing questions, because NVIDIA basically helps OpenAI to finance the purchase of NVIDIA gear. In this case, very different. You know, AMD is not doing that. They're giving out stock to OpenAI once OpenAI has spent the money. So I haven't answered your question. Does OpenAI have the money? Don't know. What are they going to have to do in debt markets, for example, on top of the other equity raises that they've done in the last 18 months? But we will at least get an opportunity to ask that question. It's critical.
Does this mean anything for some of AMD's competition? When this was announced, Intel shares immediately fell. They're back up. NVIDIA shares have been off all this morning. Does it make a difference to them?
So in the market for AI accelerators or high-performance GPUs, I think AMD would argue that this lets them fight back in some market share of a core player in the AI space. We know that OpenAI, once the capacity is online, is going to use the AMD gear for inference. In other words, running models as opposed to training them. That's very interesting. Does that signal to the market that AMD's technology is better at inference than NVIDIA's? We don't know, but that's a reasonable question to ask. Again, in the broader context of data center, the AI accelerators, but also CPU, AMD is very small compared to what NVIDIA is doing with a literal technical monopoly in this space. So, until the data center is built and it's not just sand and dirt in the ground, we won't know that.
All right, Ed, thank you for that update. That is Bloomberg Tech's Ed Ludlow with AMD shares up a giant amount this morning, gaining by more than a third. Now to a major deal in the banking world. Fifth Third will buy Comerica. It's an all-stock deal valued at $10.9 billion. Comerica shares are surging on the deal, and Fifth Third is in the red, down just less than 1%. For more, we're joined by Bloomberg finance editor Sally Bakewell. Sally, what is the thinking behind this deal?
So we have Fifth Third, which has a big presence in the Midwest, but has been wanting to grow in the Southeast, where population is expanding. And then we have Comerica, which had sort of muted results last year, has been under pressure to sell itself by an activist investor. And now we have this more friendly regulatory environment under Donald Trump, which is really starting to seep in. We've had a couple of deals this year already with PNC buying First Bank and Synovus merging with Pinnacle. And so this deal is now being seen as a bit of a win-win by analysts. It creates this $288 billion banking combined, and it's the 9th largest bank in the US.
How much of this, I mean, you mentioned a lot of these deals that have been happening, creating these super regionals this year. How much of this is just an easier regulatory environment that lets them do so?
I think it is a significant part of that. We have a very densely populated banking landscape in the US with more than 4,400 FDIC-insured commercial banks and saving institutions. A lot of them have been under a lot of pressure as bigger rivals and fintechs steal their depositors and checking account holders. So for a lot of them, and especially the smaller ones, to survive, they might need to merge, but to thrive, they probably do as well.
All right, Sally, thank you very much for that update. That is Bloomberg's Sally Bakewell. And just flagging in a few moments, we will be joined by the CEO of Fifth Third, Tim Spence, off the back of this nearly $11 billion agreement and acquisition to buy Comerica. Let's get back to big tech, though. Tesla is leading the Mag 7 higher today after a cryptic tease, a product announcement may be coming tomorrow. Let's bring in Bloomberg Global Autos editor Craig Trudell. Craig, I guess that's enough to get shareholders excited. The video is what, like a weird Tesla hubcap spinning or something like that? What announcement could we possibly be getting?
Yeah, I know a few companies that would love to get a 2.5% bump off of a couple of social media posts, but these couple of video clips that you see, I mean, the second one's maybe a little bit more revealing some headlights. I think in terms of what we know is in the product pipeline for this company, we know that they have a more affordable version of the Model Y coming, so that might be what we're seeing here. Might also be the Roadster, which we saw a prototype of a second-generation Roadster all the way back in 2017, and it's been kind of one of those products where every couple of years we hear Musk bring it up again, and yet it never sees the light of day. So maybe we'll actually see that coming to market as was promised early last year.
Yeah, these timelines tend to be a little bit squishy, don't they, Craig? Elsewhere, over the weekend, Stellantis planning a $10 billion investment. People familiar telling the team, why would Stellantis go all back in on America right now?
In short, I mean, this is a company whose operations in the U.S. Really could use a shot in the arm. You have brands like Chrysler that have really been sort of neglected the last few years. All you have left in that brand's portfolio is a minivan. And Jeep and Ram were two real money spinners for this company when there was the combination of Fiat Chrysler and PSA. You've seen a sort of steady decline in this company's sales in the years since then. And, I think there are plants that really could use some investment. You have some real clear examples of that in Belvidere, Illinois. It was a plant that was shuttered a couple of years ago that, under a deal with the United Auto Workers Union, it was agreed to this notion that product would go in there, and yet the company sort of dragged its feet. And I think, obviously, under President Trump, there's real emphasis on investing in the U.S. and building in the U.S. for U.S. consumers. It seems to be the case that, the amount of investment that was announced early this year, right after Trump retook office, is not going to be enough to satisfy the White House. So you're seeing Stellantis sort of go back with an even bigger number for the White House. Maybe also in the context as well, I should mention, of higher tariffs coming for medium and heavy-duty trucks, which would hit this company particularly hard since they make Ram pickups down in Mexico.
It's a great point. We'll see if $10 billion helps put them back in good favor. Craig, thank you so much. Bloomberg's Craig Trudell. A check on futures with this first trading day of the week, up 1/3% for the S&P 500 after on Friday we closed at your 31st record high for this equity market. A record high, I should say, coming even though gold is hitting a record high. Bitcoin also hitting a record high over the weekend. Yields have been coming in, that is thanks to the weaker private payrolls number last week. But it is a shutdown which rolls on. The NASDAQ up 0.7%. The Russell 2000 up 0.7. It also hit its own record on Friday. That was only the second time so far this year it has done so. So maybe this rally finally, after many calls and hopes that it would happen, is becoming more broad-based. Earnings season will kick off in earnest in a couple weeks' time. Coming up first, though, more on this morning's multi-billion bank deal. Fifth Third Bank CEO Tim Spence will be joining us next. Stay with us for that conversation. You're watching Bloomberg TV.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Let's get you some high-interest stories. A look at what's making headlines around the world. France's political crisis deepened today as Prime Minister Sébastien Lecornu quit after just one day under Macron reshuffled the cabinet, citing an unworkable parliament. That surprise move sent French stocks tumbling, bond yields climbing. Lecornu's exit, the third collapse in under a year, leaves Macron scrambling to form a new government, call elections, or risk paralysis just days before a budget deadline. Boeing, meanwhile, they're telling suppliers that it may ramp up 737 MAX production to 42 jets a month as early as this month. It's a sign that the plane maker is starting to regain its footing after years of setbacks. The company's long-term goal is about 53 planes a month. They're going to get that by late next year, they hope, pending FAA approval. Regulators are still reviewing Boeing's progress on safety and quality after last year's near disaster and leadership overhaul. And the government shutdown is now in its second week as the White House warns Democrats that they have one last chance to back a stopgap spending bill before mass federal layoffs. Over the weekend, House Speaker Mike Johnson said he needs Democrats to have a discussion on the Affordable Care Act as subsidies end on December 1st.
December 31st is when the subsidies end. And so we have effectively 3 months to negotiate, in the White House and in the halls of Congress. That's like an eternity. So we need the month of October to figure this out. There's a lot of thought that's gone into that on both sides of the aisle, but we need folks in good faith to come around the table and have that discussion, and we can't do it when the government is shut down.
Let's go back to one of our top stories this morning. One of the biggest U.S. bank deals this year, if not the biggest. Fifth Third is buying Comerica in an all-stock deal valued at $10.9 billion. The combined company will be the 9th largest bank in America. I'm pleased to say that joining the program now is Tim Spence, Chairman, President, and CEO of Fifth Third Bank. Tim, great to have you on. Congratulations on this. Why this deal? Why now?
Yeah, good morning, Danny. Thank you. And based on your last segment on Tesla, I think the next time we have a deal, we're going to announce it by tweeting a photo of a spinning hubcap.
Great idea.
Yeah, listen, we're big believers. We've been patient and quite deliberate as it relates to M&A because M&A is disruptive. And it's higher execution risk than the way that you would grow organically. So in order for us to ever be interested, we have to believe that it advances our strategic priorities, that there's enough of a return premium that we can compensate for additional execution risk, and that at the end of the integration process, we're not just going to be bigger, we're also going to be better. And I think this is one of those rare opportunities that meets all those requirements. The return premium on the deal here is a 22% IRR and about 9% earnings per share accretion to Fifth Third shareholders. It's neutral to tangible book value per share at close, meaning no earn back. And those measures are all better than we can achieve purely on an organic basis. And strategically, I'm really excited because the retail franchise is the thing that has really distinguished Fifth Third over the course of the past 4 or 5 years. We've been the fastest growing large bank in the Southeast, a large regional bank in the Southeast during that period of time. And we now get access to Texas as part of our expansion plan. And in Comerica's case, the crown jewel of their company is this is an incredibly strong, disciplined middle market and commercial banking franchise. And I just think the opportunities are so significant to unlock that franchise across the broader combined footprint here. So it's a great opportunity to do it. And I think the window seemed right.
Deals of this size also, Tim, $10.9 billion, they would easily take over a year to close just because of an elongated regulatory review process. What have you heard from regulators this time around regarding this deal? Is it a much easier environment?
Yeah, I think just empirically, if you look at the speed to approval of the deals that others have announced, including one that we saw on Friday, not long beyond 90 days, I believe, from the time of announcement, there's a strong indication here that the M&A approval process is fact-based and it's going to be quick. And that matters because the second that you make an announcement like this, you're essentially fighting a battle with time. and getting the deal closed quickly so that you can retain your clients, retain your bankers, and get the combined platform integrated and back to offense. So certainly the indications that there are accelerated merger approvals are an important consideration here. With that said, Fifth Third was approved to bid on the failed banks in 2023. I'm pretty confident we could have gotten a deal approved in the prior administration as well. It's just nice to know that the process here will be fact-based, but expedient if recent outcomes are any guide.
Well, Comerica seems like a ripe target, Tim. There have been lots of conversations, lots of swirling conversations, I should say, around Comerica, whether they would sail, because they had a lot of activists and investors pushing them because of some of the concerns that they mismanaged some of their interest rate exposure. Is there some right sizing that you're looking at to be done once this acquisition is finalized?
I think the CEO of Comerica, Kurt Farmer, if he were here, would tell you that the process that the journey the board was on as it related to their strategic options was deliberative, and it predates the involvement of the activists. Narrowly as it relates to interest rate risk, the things that make Comerica's business model great, the abundance of operational commercial deposits and all the floating rate commercial loans, are what makes it hard to manage interest rate risk. So, they put a hedging program in place, and rates moved more quickly than I think probably any of us anticipated. And the byproduct of that is the hedge positions have created a drag. I think we said on our announcement call, it was about $85 million in lost income in the second quarter. So purchase accounting will allow us to deal with that, and the broader Fifth Third balance sheet, and in particular, this diversified range of fixed rate loan origination engines that we operate are going to allow us to manage interest rate risk in a way that will be more neutral than Comerica had to, just given the nature of its business composition.
Well, with this deal, you also go above that $250 billion threshold where the next level of regulatory burdens, let's call it, kick in. Just how challenging and expensive does it get where you now need to do things like upgrade tech, legal, and accounting expertise?
Yeah, that's a great question. So we were one of the bidders on First Republic, and we had to contemplate 3 years ago crossing that line with a bullet. And when we came out of the process there, we elected just to start to pursue the build out of what we called Category 3 readiness, or 2Xing the bank inside the company. So the expenses associated with full Category 3 compliance are mostly in the run rate at Fifth Third today, and I consider them to be the incremental work that needs to be done here to be immaterial, and will be done well within the allowed time frame. So I'm confident in our ability to get that done.
I realize that you're still working through this, so I hate to jump the gun, Tim, but would you be interested in more M&A after this? You've already increased the threshold. Why not just go bigger?
We've bought one bank in the last 10 years. And we did it because we were not in a survivable strategic position in Chicago, which is a critical Midwest market for us. And the combination of Fifth Third and MB resulted in us actually gaining market share. And I think we're one of only a few large banks that actually has a higher market share 5 years after it closing a deal than it did at the time of the combination on a pro forma basis. And that is to say we're disciplined. We don't do things unless we believe that we can operate as a combined company and be better. And that really is going to be the focus for us now, is move through the shock of the communication that's inevitable for both companies, get focused on the actions we need to take to ensure that we deliver the financial outcomes, and start the investment, because the opportunities for Comerica's unique capabilities and for ours across this combined platform are things that we could live on for years.
All right, Tim, thank you so much for joining after the announcement. A busy day ahead of you, I am sure. Tim Spence of Fifth Third Bank, after their announcement, $10.9 billion deal to buy Comerica. All right, happening elsewhere right now, Bloomberg's Francine Lacqua is speaking to former ECB President Mario Draghi at Citadel's Future of Global Markets conference in New York. Later, she'll also sit down with Citadel founder and CEO Ken Griffin. That's at 4:30 p.m. New York time. Conversations you don't want to miss. You can watch them on Live Go on your Bloomberg terminal. You're watching Bloomberg Open Interest.
to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Less than 5 minutes until the start of cash equity trading, headed for another record high, up 0.33% for the S&P. The NASDAQ up 0.8%. That thing is off like a rocket after OpenAI agreeing to another deal with AMD. OpenAI has agreed to so many deals with public companies, be it Oracle, be it NVIDIA, things that have seen their stock take off. I'll add CoreWeave into that, but the question is, how do they afford all this? Committing $1.5 trillion so far this year. Even so, we are still looking at stocks going higher. Russell 2000 up 0.7%. Coming up, we have your opening bell and Empower's Martin Norton saying it could be time for some profit taking as the AI trade gets frothy. That's coming up. This is Bloomberg.
Break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment? If that ends up being the case, of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
Just seconds away from your opening bell, you are watching Bloomberg Open Interest. I'm Danny Berger. 32 record highs this year. Is that what we're headed for? And it continues to be really just slimly led by the chip makers. After that AMD and OpenAI announcement, you can see the NASDAQ easily outperforming, up 0.9%. The S&P 500 goes up by another 0.4 with gold, Bitcoin, apparently Pokemon cards, apparently everything is hitting a record. Over at the New York Stock Exchange, we have PJT celebrating 10 years of being publicly listed. There you go, PJT himself up there at the podium, Paul J. Taubman ringing the opening bell. You definitely have a kind of a financial services feel to the bell ringing this morning because you've got Capital Southwest down over at the NASDAQ. They are a publicly listed BDC, a private equity company, and yeah, they all seem very happy about ringing the opening bell. And most people should be happy if you're bullish about the opening bell this morning because of this company. Thank you, AMD, for the big tech rally that we're witnessing this morning, up 35% here at the opening minutes of the cash equity trade. OpenAI and AMD have signed a data center deal that could lead OpenAI to get nearly 10% of the chip maker. AMD expects the deal to lead to tens of billions of dollars in revenue. So the gains keep on coming for tech, for this stock market. And we've seen Goldman Sachs and Morgan Stanley strategists both out with bullish calls overnight. Goldman's David Kostin says that companies have a low bar for the upcoming earnings, with consensus estimates, quote, too conservative in light of economic data during the quarter. Meanwhile, Morgan Stanley's Mike Wilson sees potential return of U.S. inflation as boosting companies' pricing power and therefore a boon for their earnings in 2026. Let's bring in another expert view to the conversation. Empower Chief Investment Strategist Martin Norton joins us now. Martin, I should say it's not just them too. It's also Yardeni going back to 7K for his year-end target. Julian Emanuel at Evercore says that we could get a bubble of 9,000 price target for the S&P 500. Are you joining in on these ever increasingly more bullish calls?
Well, I can certainly understand the enthusiasm. I mean, what we've seen from an earnings perspective, really localized in the tech space and, of course, related to the AI trade, is strength upon strength. And a lot of that relates to just this untethered belief in where AI is going to take us. And so we see these huge CapEx spends, the deal making within the AI space, including the US government. And when you take a look at just kind of the earnings momentum, you even see analysts upgrading earnings estimates as we head into Q3, which isn't a typical activity. There really does seem to be some momentum there. You have the One Big Beautiful Bill Act, the 100% expensing that comes from that. You have the deregulation theme, which of course could be spurring activity in the finance area of things. So I think there's a lot of momentum. The trouble is how much do valuations express that already? And when you take a look at where they sit, they're at pretty extreme levels.
It's a great point. And just sitting on tech for a moment too, just the announcements that we've gotten, let's just take today's with a huge deal between OpenAI and AMD. It also comes off the back of OpenAI committing capital to CoreWeave, to Oracle, to NVIDIA, to Stargate. We are talking about over $1 trillion. And Marta, we don't know where that money is coming from, yet we are bidding up all the public companies that are involved. Is there a degree to which we are just buying now, asking questions later, and that could lead to pain down the road?
There's no question that there's a buy now, ask questions later. There's almost this momentum on its own just from the competitive force moving into AI. No one wants to be left behind. And so everyone's kind of trying to outpace the spend of their competitors. And deal makings across kind of producers, suppliers, buyers. So it's a real incestuous bid war at this moment. I think the question that we have to ask is, I think most of us look at AI and think this is a transformative technology. This is innovation at its finest, and it's going to change the U.S. economy, but that doesn't mean it's a straight line higher. There will be fits and starts, and we had a taste of that with DeepSeek earlier this year, and how much that can really prick enthusiasm and cause for a pullback. So if I'm looking into the AI space, I think I'm looking more for those pullbacks and looking to invest at those moments rather than trying to chase the momentum.
I was going to say, what do you do when you see something like this unfolding, that there is some serious momentum power going up? And even things for just trying to hedge the overall S&P, you have seen some pickup in options there. But Marta, considering we keep hitting record high after record high, it gets painful to try to hedge that. So what do you do to give yourself a little bit of protection as you get a little bit nervous about where valuations stand?
Well, I think one thing that value investors have gotten wrong repeatedly is this desire to time the market, is to kind of pull out and out of these areas that are so incredible from a fundamental perspective. But I do think people can take on a bit of risk management by profit taking as things move away from, you know, the targets that they've established in their portfolios, pulling those back to target, allocating again to those areas that have been forgotten. And I think one thing that is lost in moments of euphoria like this is that the AI trade ultimately should benefit the broader economy. So when we look at some of these, you know, forgotten sectors, and I know healthcare has had a little bit of momentum more recently, but broadly speaking, it has been left behind. AI should be a benefit for that area of the economy as well. So we don't just have to localize all of our AI exposure within the AI names themselves.
But other parts of this economy, Marta, I'm assuming won't do better for AI, and they might even do worse. There's been this real conversation, Neil Dutta has been great at leading this, that it's gonna make power and energy more expensive. So everyday consumers are all of a sudden looking at a higher energy bill. Can you, at the same time, see a better economy, but a more K-shaped economy, and maybe not be as enthusiastic about some of those consumer, especially lower-end consumer-exposed equities?
Well, I think that's a very fair point. I think when we take a look at the economy broadly, and this relates to AI, but it also relates more to the economic moment that we're in, it looks to be a bit splintering. So you can look at that from AI's impact on the labor market. There are certain areas that seem, you know, to stand to benefit from AI workflows and from the AI build, and then there are areas that seem to stand to be at the losing end of those things, entry-level jobs that are being removed and that kind of thing. But you see that also with housing. You see that also with the low-income and the high-income consumer. So I do think that there has to be a little bit of, I guess, circumspect investing as we're taking a look at this. And we see this with earnings too. There are certain areas of, you know, the sectors of the U.S. economy that are not really seeing their earnings accelerate. So I think some of those consumer names are a good example of those maybe more fraught areas.
Are you thinking about gold, Marta, up 50% year to date at 3,900? It's a level I think we would have thought would be crazy to reach if we were to have this discussion last year, but here we are.
It's so interesting because as stocks are powering higher, we're also seeing gold power higher. And I think many of us think of those two things as polarized. I think one thing that's really interesting for gold investors is just to remember how much technicals drive this market. We first started seeing gold make its move as central bankers several years ago started moving in more aggressively, diversifying and maybe moving away from the US dollar exposure. And those technicals are starting to fuel institutional investors and individual investors moving into the space. And I think there's also that question around the Federal Reserve, concerns about inflation, concerns about government debt, all of those narratives coming together, pushing gold higher. But what I come back to is, you know, gold might be a great way to preserve capital, but is it a way to grow wealth? And I think that question is a bit less supported by historical evidence.
All right, Marta, really great to get your thoughts this morning. Please come back and join us again soon. Empowered Chief Investment Strategist, Marta Norton. And as Marta and I were discussing, it is tech. Thank you, tech. Thank you, AMD. Thank you, OpenAI, that is leading this market higher. We're up 1/3 of 1%, pretty even in terms of gainers and losers. You don't need me to tell you what is leading this market higher. It's, of course, AMD. After that deal with OpenAI about building more data centers, more AI infrastructure, they say it will lead to tens of billions in dollars. Tesla's up there too. Wouldn't it be nice to be a company and you could just tweet a picture of a rotating hubcap and you gain nearly 3%? I think maybe Elon Musk has that luxury, which is exactly what happened. People are excited about some sort of deal tease that he maybe has done through that. NVIDIA leading the top of the pile in terms of things moving this equity market down. Does it face more competition for AMD, or does it just mean the money that was promised to them from OpenAI, where does it even come from? Where does OpenAI get over $1 trillion in the capital commitments that it has promised? Looking at the sectors this morning, too, it is, of course, tech at the top of the pile, too. That's up 0.7%, followed by utilities. Again, you could say, hey, it's a safety sector, but utilities, again, also really benefits off of the AI data center build out, too, followed by industrials and energy. Oil is moving higher this morning at the same time. At the bottom, you have communications, and then consumer staples. It's a really tough day for the likes of Pepsi, of Campbell, a lot of those really brand name consumer stocks feeling the challenge this morning. Okay, coming up, we're going to get more on the thing moving the market this morning, and that is AMD's new deal with OpenAI. It could send chip revenue soaring in the coming quarters. We have the details. That's up next on Bloomberg Open Interest.
At what point do you say, we made a mistake and we're getting out? How long do you give it before you say, this isn't working?
That's one of the most critical differentiators between great investors and just mediocre investors. Because on one hand, you have to have confidence and conviction in all the work you've done, the decision you've made, that if you have a little stumble here and there, if you immediately are selling out, you're never really going to fully realize the depth of potential long-term success. And yet, on the other hand, if you're stubborn and you refuse to admit I'm wrong, you continue to think the market's wrong and I'm always right, then you'll get caught in some very, very difficult positions over time. So that ability to have a fresh perspective, take in the new information, even when things aren't going the way that you'd expect or to hope, and to really understand from this price point today, is this still going to be one of the most compelling investments or not?
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China? When they wanted to poke holes in the relevance of something. Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Get you some top calls. Some of the analyst action that we are watching this morning. First, Ford gets an upgrade over at Jefferies. Jefferies analyst saying that the automaker could see some improvement in earnings and may benefit from its EV strategy shift. Even so, shares are down 0.4% this morning. Next up, Boston Beer gets a downgrade at Citi. Analysts say that the makers of Sam Adams beer saw weak demand this summer and cites a challenging backdrop in the second half of the year thanks to tariffs and the price of aluminum. aluminum, those shares down just under 4%. Finally, Micron, that gets upgraded to a buy at Morgan Stanley. Analysts there say the chip maker is headed for multiple quarters of double-digit price increases, and even though valuation might be a worry, they still will retain pricing power. Those shares up 6.33%. Let's stay on chips because it is yet again powering this market higher. OpenAI's latest deal is with AMD, and it could help AMD's AI chip revenue jump from under $7 billion in 2025 to more than $100 billion in the near future. Bloomberg Tech co-host Caroline Hyde joins us now. Caroline, what exactly is AMD, and is OpenAI getting out of this deal?
Another creative bit of financing, because we've got so much compute that's necessary. How are they going to finance this? This time, remember, we were talking about $100 billion deal of NVIDIA taking OpenAI equity. This time, OpenAI is taking equity in AMD, but under warrant form. So they have to meet certain milestones in terms of the amount of GPUs. Particularly, it seems as though the reporting goes that it's being used for inference, and as much, we'll dig into that with Lisa Su and Greg Brockman of OpenAI a bit more later in the show. But broadly, you're seeing both of them benefit from the relationship with each other. OpenAI, of course, gets access to GPU that isn't just NVIDIA's, and they're able to train their models and satiate all of our demand to use ChatGPT and what we're using in enterprise as well. But they also get upside in AMD's own share price rally. If we see them going up to, at some point, $600 per share, that would mean you've got about $1 trillion market cap, up from what is currently $350 billion. Well, they get to benefit in that and buying it basically at a penny. Then on the other side, AMD is going to be benefiting from basically OpenAI anointing them as the key player other than NVIDIA. The fact that their GPUs are going to be used to help all of our demands for generative AI, they're almost getting anointed as, we like your stuff, we like your tech, you can grow into this. So AMD's gets OpenAI as a clear, dedicated demand source for the next however many years that they run out to give these 6 gigawatts. I mean, that's the whole of Massachusetts, like energy demand in a year, 6 gigawatts of power.
I know this is incredibly simplifying it, but just listening to you describe it, it almost feels like OpenAI is running like a hedge fund or an investment fund, just like putting out a bunch of different bets and saying, hopefully some of these will work out.
But it depends who's getting bets from who as well. I mean, usually it was NVIDIA that had all the chips here, pardon the pun, but they were like the ones that were at the table being able to like dole out who I'm going to be putting money into and how I'm going to pay my future demand source to use my GPUs. Now AMD's having to get creative as well, but more they're having to share in the upside of their own share price rally with those that are going to be demanding their GPUs in the future. But it really does feel like bankers out there and the executives, the C-suite of these businesses having to get ever more creative, because where is the money coming from for all of this? And that's the key question. How is OpenAI going to ultimately be affording 6 gigawatt necessities of GPUs? Interestingly, though, the GPUs from AMD could be coming directly from source, but also via their cloud partners as well. Remember, they have a $300 billion deal with Oracle to provide cloud. Maybe Oracle could be buying some AMD chips, not just NVIDIA.
Well, it's not just how do they afford this deal itself, where does the money come from? It's also what CoreWeave, Oracle, you're looking at some of those deals that we had there. What is it, like over $1 trillion now we must be talking about that OpenAI is committed. That is a lot of cash that they need to put to work.
And that's where we saw at that time last month, Oracle and OpenAI in Texas at their key thus far data center that they put in the ground, but their promise is to scale this into other states, more in Texas, more in Ohio, more in middle America. And yes, this desire from Sam Altman to say this is going to be $1 trillion of compute, at least, that we're going to need, but we're all going to rise together. Look, there's a lot of hope, there's a lot of prayer, but there's a lot of demand that needs to be satiated. And basically, everyone has to bet that together we're going to build the compute, build the infrastructure, and then be able to get the productivity outcome. But we need more proof of the productivity and the revenue run rates for companies like OpenAI.
I guess to what degree is this a wave that lifts all boats? Because immediately after the deal was announced, you saw NVIDIA fall, for example, Intel fell. Is it a problem for competition, or just the plethora of money that's being promised mean that this is an environment where all of these chip makers can do well?
I think NVIDIA's, it's only down a percentage point or so, and I think there is a case that, at the moment it has about 70% of market share. It's never going to be able to bring all of its GPUs to absolutely everyone. They need other players in there. And look, you have OpenAI already saying, look, we're going to be building our own chips with Broadcom. We've had hints of this, that basically there are going to be other players in the game. The key question now for Lisa Su is how much market share can she take? How much can she scale into this moment with her own GPU and AI accelerators? Because at the moment, she's been a very far distant second. Can she start to make waves?
And we can't wait for your conversation with her. Really looking forward to that. Caroline. Thank you so much for joining. That is Caroline Hyde of Bloomberg Tech. And again, don't miss her conversation alongside Ed Ludlow, 11 a.m. with AMD CEO Lisa Su and OpenAI President Greg Brockman. That will happen, again, Bloomberg Tech, a conversation you don't want to miss. Coming up on this show, Verizon names its new CEO. We'll have the breakdown for you next as shares fall nearly 2%. That's coming up next.
Up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg. Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
20 minutes into your cash equity trade, you're watching Bloomberg Open Interest. Well, we get another day of another record. This is getting repetitive, isn't it? It's not only another record, it's another government shutdown, but who cares? Stock's up 0.1%. We are losing some of the steam across markets, but tech is still outperforming, up 0.6% for the NASDAQ. The Russell 2000 hit its second record high of the year on Friday, is today a third. And again, it's chip stocks. This continues to be the story of the past month, year, really. The Philadelphia Semiconductor Index up 0.4%. Gold, that's also at another record at just under 4,000, up 50% year to date. Looking at some of the other things, NVIDIA, that moves lower. Again, maybe more competition from AMD. AMD shares up 29% off the back of that deal. Stellantis agreeing a $10 billion investment in the U.S. That's a big strategy that they are undertaking. Shares not moving a whole lot, but Tesla is, because Elon Musk tweeted out a video of a rotating hubcap, and we get all excited. Okay, is there going to be some sort of product launch coming to market? The telecom companies having a rough day of it. AT&T down 2%, with Verizon shares falling 1.6%. But let's stay on that story, because Verizon announcing a new CEO. We are joined now by Bloomberg Intelligence senior telecom analyst John Butler. John, that announcement coming in the early hours of this morning. Why the change? What's going on there?
So my sense is that Verizon is looking for answers for its growth problem. They really have trailed AT&T and Verizon for several quarters, actually a couple of years now. And you know, they've made a lot of moves, taken a lot of action to try and course correct here and go from share donor to share gainer in that postpaid wireless business, the contract business. And it just hasn't worked. And I think they're looking for change here. And so they named the head of the board, Dan Schulman, to be CEO. And Dan has a background as CEO of Virgin Mobile. He also worked at AT&T for almost 20 years. So, you know, the thought hopefully here is that Dan brings in a fresh perspective.
Yeah, but shares are off this morning, John. Is that just a factor of changes to come, or is there something behind it that investors are less enthused that this can be a welcome change?
I think the big surprise to the street was the fact that Sam Path, who's head of the consumer unit and who was being groomed for the CEO spot here for a couple of years now, didn't get named CEO. I was really shocked at this news. I thought Sam Path would be named CEO somewhere in the next 6 months here. He's a young guy, he brings great energy to the consumer group. But again, all the actions they've taken have yet to work to really turn around growth there. And I think the board looked at it and said, you know, he's a dynamic personality, but the report card is still not great here, so let's try bringing in someone who has outside perspective. And I'd note one thing, by the way, Schulman has executive experience at American Express and PayPal. And so my sense is Verizon may begin to test some adjacent markets like consumer finance as a way of jump-starting growth here in coming years.
That could be interesting. Is there a model that echoes that they could look to that's been successful of some of these other telecom operators, John?
So the one example that jumps out, I was thinking about this in the wake of the news, is T-Mobile is moving into the outdoor advertising market. And so far, so good there. I think what's interesting is if you look at outdoor advertising, it's almost or even in excess of a double-digit growth market. And I think that's probably what's needed down the road for all telecoms to begin to edge out of that core consumer wireless business. And make no mistake, by the way, consumer wireless is consumer retailing. It's very similar to what you might see with the specialty retailers. You know, they have thousands of retail stores. They advertise during sporting events. They run promotions. That kind of behavior, I think, would carry well over into some market adjacencies that are consumer-facing as well.
Yeah, and John, it's a great point, especially given some of the tension in consumer sectors right now, the changes that need to be undergone. Thank you so much for joining us, Bloomberg Intelligence Senior Telecoms Analyst John Butler, off the back of an announcement of a new CEO at Verizon. Coming up in the next hour, HSBC's Raquel Odin says the government shutdown is historically good for stocks. Does history play out again? Plus, we talk space exploration and NASA's Mars mission with Voyager CEO Dylan Taylor. You're watching Bloomberg Open Interest on a day where we head to another day of record highs on this equity market.
Villa. Very traditional. A lot of things of the past.
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse, the philosophy they believe, yin, yang, 5 elements, the concept of the life, of the happiness. They build this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, lucky man because not everyone should have the experience of the war and peace, poor and rich, technology progress, a change during my life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human beings, for the world.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Alberta, Canada, and this is Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. The president has suffered a second setback in his bid to send National Guard troops into Oregon. Correspondent Michael Toscano.
Trump appointee U.S. District Judge Karen Immergut had to step in again late last night after President Trump tried to get around her Saturday order against deploying Oregon National Guard troops into Portland. He had Defense Secretary Pete Hegseth call up Guard troops from California and Texas to go there. Portland Mayor Keith Wilson wasn't having it.
This action circumvents the judge's decision and threatens to inflame a community that has remained peaceful.
This is day 6 of a government shutdown, and Republicans and Democrats at a standstill. CBS's Jared Hill.
Yesterday, President Trump and Republican House Speaker Mike Johnson said they want to look at ways to address federal health care subsidies, but after the shutdown ends.
The Supreme Court has begun a new term by rejecting an appeal by Jeffrey Epstein's imprisoned associate, Ghislaine Maxwell. Justices declining to take up her case, which would have renewed attention on the Epstein files. CBS's Jan Crawford on the rest of the court's docket.
Some terms, there's one big case that overwhelms all the other ones. This term is not like that. The justices will decide some of the most controversial and consequential issues in society, all of which will have enormous consequences for everyday life. You've got gun rights, the constitutionality of a key section of the Voting Rights Act, campaign finance reform, as well as the Trump cases. And they'll continue adding cases as the term progresses.
Israeli and Hamas representatives are in Egypt for talks on President Trump's proposed peace plan for Gaza. Almost 2 years after the October 7th attacks, CBS's Deborah Patta is speaking to residents of kibbutz near Oz. 9 taken hostage there are still being held in Gaza.
Do you trust your government to do the right thing this time and make sure this deal happens?
No. I think Netanyahu will try everything in his hands to destroy this chance.
Our parent company here at CBS News, Paramount Skydance, has just announced it's purchased the independent subscription website, The Free Press. Its founder, Barry Weiss, will become editor-in-chief of CBS News. A press release from Paramount says the two will unite in the pursuit of setting a new standard for trusted journalism in America. In Tibet, crews have rescued about 350 hikers at a tourist camp on Mount Everest. About 200 more are still trapped. The BBC's Stephen McDonald from Beijing.
We spoke to one woman whose husband was on a 12-day trek there. 2 days into the trek, he called her via satellite phone and said, "You've got to speak to the police. There's way too much snow here."
This is CBS News.
TradeMasters.com.
Another multi-billion-dollar chip deal for OpenAI.
Just days after making a $100 billion deal to buy chips from NVIDIA, OpenAI has signed a similar deal with AMD, which hopes to chip into NVIDIA's leading market share to power artificial intelligence technologies. The New York Times reports OpenAI will start using AMD chips late next year as it builds new data centers, which could use enough power to supply the entire state of Massachusetts. Peter King, CBS News.
The first supermoon of the year will reach its full phase just before 9 p.m. Eastern Time tonight, when it reaches the point in the sky 180 degrees opposite the sun. That'll make it appear much larger and brighter than usual. It's called a harvest moon because its timing is closest to the beginning of fall. And before electricity, farmers counted on its light to harvest crops late into the night. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube as well, so check us out there. Scarlett Fu and Paul Sweeney with you. Coming up, a lot going on out there in the marketplace. Boy, the first 3 hours of surveillance was just nonstop news flow, and we'll try to stay on top of it. We're going to check in with Ed Ludlow. He's the BTech co-anchor, talking about this OpenAI AMD deal. Tens of billions of dollars, lots of money being thrown around. AI just never stops. David Bonson's going to join us. He's the Chief Investment Officer of the Bonson Group. One of the smarter voices we talk to. We'll get his thoughts on these markets. Matt Winkler, Bloomberg News Editor-in-Chief Emeritus and the founder of Bloomberg News way back in the day. He's going to join us here in studio, talking to us about the great state of New Jersey. There's a little election coming up, and he's got some thoughts about the economics of the state of New Jersey. Herman Chan, he covers the regional banks, and so we need to talk to him because there was a pretty big deal out there in the world of regional banks. Fifth Third to purchase Comerica for $10.9 billion in stock. That's what we're talking about. Some more M&A on a Monday morning. So lots to get through. Let's kick it all off with John Tucker and a Bloomberg Business Flash.
All right, where do you start? Well, this Bloomberg Business Flash being brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around the clock. The major stock averages mixed right now, but you have the S&P 500 and the NASDAQ pushing through their records that we set on Friday. The Dow Jones Industrial Average right now, that is lower, down 274 points, a decline of 0.6%. Well, let's start there, Paul. Comerica surging after Fifth Third Bancorp agreed to buy the financial services firm. Right now, Comerica shares 12% higher. And then the best performing stock right now, the S&P 500, that belongs to Advanced Micro Devices. Those shares up 27%. After this deal with OpenAI to roll out AI infrastructure, this is a pack that at least the chipmaker says could generate tens of billions of dollars in new revenue. Then you have shares of Tesla. They are up right now about 2.5% after teasing a product announcement. In the meantime, Cameron Dawson at New Edge Wealth says for now, the lofty stock prices are supported by earnings.
You still have 12-month forward earnings estimates that are hitting new highs, which is supporting this idea that the overall market could hit new highs. But of course, that will be put to the test starting next week because that's when the third quarter earnings season really kicks off in earnest.
And right now you have gold, $39.68, flirting with another record, looming interest rate cuts, the prospect of a prolonged federal government shutdown, lifting demand there. And then you had Bitcoin hitting a record over the weekend. In the meantime, company earnings this week include Delta Airlines, PepsiCo, and the big banks. They start reporting the week of October. It seems like we just ended earnings season, didn't we? Yep. Just October 13th, the banks
Every 3 months, John Tucker.
Yeah, quarters, right?
Or maybe every 6 months if President Trump gets his way.
That's right. That is true. And the Fed, of course, meeting at the end of the month. So plenty to chew on for investors. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul, happy Monday.
Happy Monday.
Absolutely. I love Mondays. Who doesn't? John Tucker, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio and streaming live on YouTube. Market Drivers today is brought to you by Van Eck, founded in 1955. Van Eck has been guided by conviction, not convention, spotting change early and turning it into opportunity from the very start here. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu. We're joined by Bloomberg's Christina Aquino. Christine, what are you looking at?
We got to take a look at AMD, of course, Paul, right? It's biggest gainer in the S&P 500. So shares of that, ticker AMD, that's up 26%. So pairing a little bit of those opening gains, but that is still on track for its biggest one-day gain since 2016, if that holds through the close. So let's dig into this deal. What is it exactly? So Bloomberg Intelligence's framing of this deal is essentially that OpenAI this is still a continuation of their efforts to diversify their chip supply, right? Because we did get earlier on their alliance with NVIDIA, 10 gigawatts of capacity. So now the deal with AMD is that OpenAI will deploy 6 gigawatts of AMD graphic processing units, GPUs, over multiple years. And then AMD is also giving OpenAI a warrant for as many as 160 million shares at a penny a piece. That's equivalent to about 10% of its outstanding stock. Now, the vesting of that will depend on milestones being achieved, but this really looks like a mutually beneficial, very profitable, potentially, deal for both companies, and the shares are reflecting that today for sure.
All right, let's also take a look at another company, and we're going to stay in the chip space, but memory chip maker Micron.
Absolutely, Scarlett. So that's also doing pretty well today. So Micron shares, ticker MU, those shares are up 3.9%, nearly 4% at the moment, extending those opening gains. And we did get Morgan Stanley upgrading the company to overweight from equal weight. Analysts there are saying that it is headed for multiple quarters of double-digit price increases. And they're also saying that they're pushing the envelope on valuation, but price increases will substantially power their earnings higher. So the price target set at $220 versus $187 at the close on Friday. So that implies a 17% increase. Very interesting, though, the sea change with Micron, because just last month we did get the results, and their forecast for fiscal first quarter revenue, $12.5 billion, topping estimates, but still was deemed disappointing. So maybe that's working its way through now in terms of the optimism in the space, but those shares are enjoying that today.
All right, one more. What do you got?
Let's take a look at Verizon. So
New
ticker
CEO,
VZ, exactly. And shares not doing too well, so they're not necessarily receiving that as good news. Shares currently down more than 2% now, 2.9%, so extending opening losses. And so they have named Dan Schulman as the new CEO. He was previously CEO of PayPal. But yeah, the real struggle with Verizon is really about its subscriber numbers, because, they posted a loss of 51,000 subscribers in July in July they announced that was for the second quarter. Analysts were saying they were supposed to gain 12,000. So big discrepancy there. And get this, they are the second of the big three mobile providers to announce a leadership change following the changes that we saw at T-Mobile. So a lot of sea change in telecom providers at the moment.
Although it is interesting that you have a 67-year-old guy succeeding a 60-year-old guy.
Yeah. And John Butler's going to join us. He covers the telecoms for Bloomberg Intelligence later this morning. He just sent a note to me saying this was a surprise to the street. They were expecting someone internally to come in. So, but again, a lot of change, as you mentioned, Christine, in the telecom space. So, Christina Aquino, thanks so much for that report. For more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. A couple of Bloomberg headlines: crossing the terminal, Illinois sues over National Guard deployment to the Chicago area. And then another Bloomberg, Lula's call with Trump was positive, Brazil's Haddad says. So a couple of headlines crossing the Bloomberg terminal, and we'll have more reporting on that. The big, I think, news that probably really surprised people to the upside was this news on Advanced Micro Devices signing that deal with OpenAI, and AMD just adding $100 million in market cap today on that news. The numbers around these AI stories are just bigger and bigger every single time. I tell you, it makes me feel uncomfortable, some of the numbers that are being thrown around. It makes me think about I woke up this morning looking at this news. I felt like, man, it just feels toppy to me, this whole AI story.
Toppy as in early 2007 or like mid 2007 or late 2007?
I don't know. It just feels like there's just too many big numbers being thrown around too quickly. I'm not sure where the returns are. It's one of those types of things. But Ed Ludlow, this is his bailiwick. He's a Bloomberg Tech co-host. He is out there in Silicon Valley, supposedly. Who knows where this guy is all the time. Ed, what do you make of this news? These are some big names, OpenAI, AMD.
Yeah, I mean, the deal... The specifics of the deal are really important. What is OpenAI going to use AMD's technology for? It's going to use it for inference. In other words, running the models that already exist, not training them. It is 6 gigawatts of capacity. The reason that figure is critical is that it equates to the peak electricity demand of most major US cities. Like, these are huge numbers, as you say, but it just speaks to what's happening to the mind of the participants in the industry, which is they will need this capacity. You guys are using words like top and bubble, and I think that's completely fair. Maybe you saw my column this morning on the debt role that in what's happening. But I would say that AMD has done something interesting here, which is different to what NVIDIA did, which is they will issue stock to OpenAI, AMD shares going to OpenAI, but only once OpenAI has spent some money and actually built some stuff. So where's OpenAI going to get the money?
Well, that's why Sam Altman has been traveling the world, meeting with all kinds of investors, trying to get some funding. You said the specifics matter, Ed, but we don't know how much this partnership, this deal is worth beyond the very generic tens of billions of dollars, right? That could be $10 billion, that could be $99 billion.
Yes, that's correct. I mean, AMD CFO framed it as being tens of billion dollars of revenue opportunity. But that's why I think the specifics of the terms, I've made a careful examination of them, are really important to understand versus what NVIDIA did with OpenAI. So NVIDIA said it was going to invest $100 billion into OpenAI. We don't even know if that was cash or chips in lieu of cash, but basically NVIDIA would get some equity in OpenAI in return. In this instance, AMD and OpenAI is getting AMD shares, but they are deliverable in tranches against milestones which relate to literally building the data centers. So for each gigawatt of capacity that comes online, NVIDIA would then say, AMD would then say, here is this tranche of stock. And that's why I'm saying focus on the OpenAI obligation here. They need actual money to dig up the dirt, put the foundations in, get the data center up and put the servers in before any of this stock comes into play.
So, Ed, you and Caroline Hyde will be speaking with OpenAI's president, co-founder Greg Brockman, and the CEO of AMD, Lisa Su, in the next hour of BTech. What's the number one question you want to hear from them, or the number one answer you want to hear from them?
Yeah, so for OpenAI, does AMD have better technology than NVIDIA? That's a really interesting question because, as you guys know, Sam Altman posted on X this morning saying they're actually still going to be buying more NVIDIA, and he called this incremental to that. So that's the question for OpenAI. Talk to me about the technology benefit of using AMD's MI450 generation for inference. And then for Lisa, what kind of guarantees did you get in here? How do you know OpenAI is good for this stuff? Come on, give us the terms of the contract. That's how I look at it.
All right, we're going to tune into that. That'll be a fascinating conversation. Look forward to that coming up in the next hour. Ed Ludlow, Bloomberg Tech co-host, joining us there on this news on AMD. Stock hitting a 52-week all-time high, adding $100 billion in market cap today on press announcement. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. And we are being brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Well, the S&P 500 and the NASDAQ hanging on to the records that we saw on Friday. A best performing stock in the S&P 500 will begin there again. AMD, right now those shares are up just about 27% on word of this pack with OpenAI. And then you have Verizon Communications. Those shares are actually down 3.3%. They're naming Dan Schulman, Chief Executive Officer, replacing Hans Vestberg. Effective immediately, the 67-year-old Schulman was previously the CEO of PayPal Holdings. And I'm not sure what it is with wireless companies and changing up their CEOs.
Yeah, it's true.
But just another one. S&P 500 right now, 12 points higher. That's up 0.2% at 6728 on the index. The Dow Jones Industrial Average, that's lower, down 253 points. And again, the NASDAQ Composite Index, 109 points higher, and that is up just about 0.5%. Let me give you a quote on gold, because that has been hovering near 4,000. $39.70 an ounce. That's up 1.5%. And we did see the record for Bitcoin over the weekend. It continues higher.
I always forget that Bitcoin trades over the weekend, because I come in on Monday, I'm like, what happened?
It's like, when does it not? So 124,830, whatever, it keeps changing for a single token. Oh, and Taylor Swift. Did you see the sing-along movie? Did you go?
I did not. I'm not naturally a Taylor Swift fan because I don't have daughters.
Amy Silverman went, remember?
Oh, with
yes.
She was, I remember
Capital.
from Friday.
Yeah.
Anyway, the release party album nabbing $33 million in ticket sales. This is the movie about the release thing. Anyway, the sing-along, The Life of a Showgirl, generating $13 million more internationally. So I'm going to say that puts it as the #1 movie sing-along thingy over the weekend.
It's its own category.
We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right, good stuff. Thank you so much, John Tucker. We're looking at these markets right now, and there is green, certainly for the S&P and the NASDAQ. And the big advancer on the day is AMD, up some 25% on this OpenAI deal worth a very specific tens of billions of dollars. Let's bring in David Bahnsen right now. He is CIO of the Bahnsen Group, which is a private wealth management firm. And David, Paul was mentioning earlier how, the OpenAI AMD deal here, which is very non-specific with the tens of billions of dollars in value created, feels a little bit toppy, maybe reminiscent of 2007. What's your take?
Oh, 2007, 1999, there's a few of these movies we've seen before, and all of them have some differences, and the doesn't repeat but does rhyme cliche kind of makes sense. I don't think you're going to see anything play out identically to past moments of toppiness and frothiness, but that is different than saying that this isn't toppiness and frothiness, because it most certainly is.
Yeah, I know it's, valuation typically doesn't topple a market here, David, so as it relates to some of this AI technology-driven market, are you telling your clients to kind of ride the momentum, or what's the message?
No, because my clients are not going to play with momentum-oriented things, because we are fundamentally more value-oriented dividend growth investors. So there's a significant amount of benefit with the AI story in the way we manage money. It's just not riding the frothiness and toppiness and momentum of it. It has to be a bit more price conscious, value conscious. And what we continue to say is the debate about whether or not the AI thing is going to play out is not really the debate. It's what the investable story out of it is. And when people think that NVIDIA and AMD are the AI plays and Procter & Gamble and McDonald's are not,
I think they fail to understand that there is no benefit or ROI to the CapEx that we're seeing unless it's benefiting your Procter & Gamble's and McDonald's or whatever company example you want to use of the world. And so there is a great story playing out, but unfortunately, a lot of people are playing it in a way they played the 1999 story, and that is not the way people made money on the internet.
Yeah, that didn't end well. So, David, you mentioned a price-conscious, value-conscious way. What is a price-conscious, value-conscious way to approach the AI play? Is it something like Caterpillar, which our Matthew Griffin was writing about last week, how, this is a company that, because it makes power generation turbines, is seen as benefiting from the AI boom?
Yeah, Caterpillar's been a little bit too cyclical and too volatile with their dividend for us over the years, but a very similar story would be Cummins, the ticker CMI. If you look at what it's done this year, people might think it is an AI story. It's had an incredible run, but this is just a regularly valued industrial type company that's moved a great deal, grown their dividend for years and years, and yet is benefiting from a lot of the story as it plays out. Everyone's also familiar, of course, with the data center story, and that's adjacent to AI. But look at the stories that are adjacent to data center pipelines. Natural gas provides about 40% of electricity in the country. It needs to provide over 70% of the power for data center. We don't have the ability to do that right now. We need more pipelines, more production. So there's adjacent ways in which people can play this story and have it play out for years with cash flows. And I think, yes, value and price not being something they have to get way out of line with.
All right, let's get right to it, David. Big game in Southern California coming up. Michigan at USC. What's your view?
Well, I will be there and ready for USC to show that they can improve a bit on the defensive side. Their offense looks wonderful. They had Michigan beat last year in the Big House, and on one fourth down play, gave up a 70-yard run that cost them the game. This is deeply personal for me, and I'm glad we're finally talking about something really important for people.
Exactly. So it will be a big game. USC having a good year out there. I have no idea what conference they play in anymore, so we'll see how it goes.
Something
David,
that involves a lot of travel.
A lot of travel for the West Coast teams. David Bahnsen, Chief Investment Officer of the Bahnsen Group, joining us from Newport Beach, California. In and of itself is a scam. Working from Newport Beach, California. I'm not buying it. I'm not buying this whole PIMCO thing, and you can manage money out on the beach in California, but people do it. So we'll see how that goes. All right, let's get right to it. Aaron David Miller joins us. He's a senior fellow at the Carnegie Endowment for International Peace. Aaron, it seems like President Trump and his team are making some pretty significant headway here in trying to get some type of peace agreement in that part of the world here. What do you make of it?
I mean, I think, first of all, thanks for having me, and go blue. 8 years in Ann Arbor. I know who I'll be rooting for. Look, I think what's possible here is a hostage release in exchange for limited Israeli withdrawal and the prospects of maybe a diminution in Israel's comprehensive military effort in Gaza. Anything else, international stabilization force, technocratic Palestinian government, taking away Hamas's weapons, decommissioning them, let alone building a bridge to a broader Israeli-Palestinian, I use the word peace agreement, but having negotiated for 20 plus years under Republican and Democratic administrations in this part of the world, peace really is a long way away. But I think we have a better chance than ever now for getting a partial deal. I don't think there's much doubt in my mind.
Okay, a partial deal is a partial deal, and for a lot of people, they'll take it. There does seem to feel like there's a sense of urgency here that maybe was not here 2 weeks ago or a month ago. How much do you think that is tied to the president's campaign to win the Nobel Peace Prize, which will be announced on October 10th at the end of this week?
Yeah, I mean, whether or not the president and Europeans are going to nominate the president for Nobel, who knows? I mean, if he could produce an Israeli-Saudi normalization agreement and a regional peace, and ending the war in Gaza would be the first step to that. Toward that end, I think he could make a serious bid. Look, it's less than Nobel in the reality. I worked for the Democratic and Republican presidents, his relationship with Netanyahu, the pressure that he has placed on an Israeli prime minister is virtually unprecedented. No American president that I ever worked for, Republican or Democrat, ever put the kind of pressure on an Israeli prime minister on an issue that prime minister considered vital to his political survival or to the nation's security, as Benjamin Netanyahu defines it. And Netanyahu has alienated every Republican and Democratic president. In 96, Bill Clinton, after his first meeting with Netanyahu, came out and exploded and said, "Who's the effing superpower here?" Donald Trump has answered that question in Benjamin Netanyahu's mind. And since he needs Trump to get reelected, probably elections in the spring of 2026, maybe a few months later, Netanyahu had no choice, it seems to me, to comply. Without Trump, let's be clear, we wouldn't be having this conversation and we wouldn't be as close as we are.
With Mr. Netanyahu in power, with Hamas supposedly still, I guess, representing that part of the world, the Palestinians, with those two parties in power, can there be a peace?
I think you, Paul, I think you broke the code here. Not if we're talking serious peace as normal humans, the three of us presumably would define the word. You need leadership. You need leaders who are masters of their political houses, not prisoners of their ideologies. You need them in Israel, you don't have it. You need it among Palestinians, you definitely don't have it. And you're going to need it in Washington as well. So I think with the current crop, hard to imagine we'll get beyond what I would call managing. I don't think without a leadership change, we can seriously have a conversation about resolving and talking about a conflict-ending solution between Israelis and Palestinians that basically puts to rest the 5 core issues, right? Jerusalem, borders, security, refugees, and recognition of all end of claims and irredenta. That requires heroic leadership. That requires a Sadat and a Begin. It requires a Mandela and a de Klerk, King Hussein and a late Prime Minister Rabin, for example. You're going to need people with that sort of reach and credibility and power. And I don't see them anywhere.
Very quickly, Aaron, which of the principals, Israel or Hamas, is most likely to get a leadership change?
Hamas will be in power if we're having this conversation next year at this time. I'm not sure I'd bet on Benjamin Netanyahu, but he's now the longest governing prime minister in Israel's history, and he could very well win another election in 2026. To answer your question, Scarlett, we could end up, these two leaders, Hamas and Netanyahu, could well be in power. Yep.
All right, Aaron, thank you so much. Appreciate it. Aaron David Miller, he's a senior fellow at the Carnegie Endowment for International Peace, getting the latest on coming out of the Middle East. Again, some strong movement by all sides. Talks ongoing in Egypt. And we'll see if some progress can be made here. It seems like there is movement. We'll have more coming up.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We're being brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centered support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to Commonwealth.com to learn how. Right now, the major stock averages, they are mixed. The S&P 500 and the NASDAQ are gaining after Friday's record close. S&P 500 13 points higher, 0.2% higher at 6729. And 6 of the 11 major industry groups in the index higher right now. It's information technology that's in the lead, and the best performing individual stock that belongs to Advanced Micro Devices. Those shares right now 27% higher after that pact with OpenAI for AI infrastructure. If that's not good enough for you, the largest U.S. bank deal this year coming this morning, the announcement with Fifth Third Bancorp agreeing to buy Comerica. The price tag there, $10.9 billion. That looks like an all-stock transaction. In the meantime, no word on any movement on Capitol Hill. And Paul Donovan, he's the chief economist at UBS, says the impact of the government shutdown depends on whether or not the Trump administration fires any of the furloughed federal workers.
The base case, I think, is this is going to be like every other shutdown, down in week 1, up in week 2, that kind of thing. But there is that risk if some employees are going to lose their jobs permanently as a result of the shutdown.
Those two yields, the 2-year right now unchanged, 358. The benchmark 10-year yield in the U.S., 2 basis points higher. That is at 414. And just bringing you this world of national news, Illinois now suing over the National Guard deployment to the Chicago area, then on the Bloomberg terminal. And we check the markets and news for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker studio, and we're streaming live on YouTube as well. For those of us in the great state of New Jersey, we've got a governor's race coming up in like a couple of weeks.
Yeah, it's a big deal.
It's a big deal. So it's one of those things that, it's an off calendar, so it gets maybe some more attention nationally than maybe it would otherwise. Matt Winkler joins us. He's editor-in-chief emeritus and the founder of Bloomberg News. He's joining us live here in our Bloomberg Interactive Broker studio. Matt, you live in Jersey as well as John Tucker and I, so we're kind of all knee-deep into this race coming up. Talk to us about the economics of the state of New Jersey. I know you've done a column recently on that. What did you find?
Well, great to be with you. And yes, 4 decades and then some in New Jersey. And the issue has always been about cost. And if that's what people are concerned about, and the debate between Jack Ciattarelli and Mikey Sherrill was all about cost, then you have to turn to what are the economics of New Jersey. And the economics of New Jersey actually under Phil Murphy have been better than they've been in a very long time. And that's reflected in a number of things, some of which are initiatives. But he's really one of 7 governors who in the preceding 3.5 years had one of the best economies in the country. Only 7 states had improving conditions measured by employment, personal income, home prices, tax receipts, mortgage delinquencies, the equity of public companies. That's all according to data compiled by Bloomberg. And then he was reelected. And, when you look at his initiatives, all of them have been constructive. The biggest issue that nobody talks about in New Jersey is something in the past, and that is during the financial crisis and the ensuing Great Recession, Senator Frank Lautenberg delivered for New Jersey something that had never happened before, because New Jersey gives much of its money to the federal government, doesn't get much back. In fact, it's a one-sided story all the way through. But Lautenberg got the federal government to give New Jersey $3 billion to rebuild the tunnels under the Hudson River, which were severely damaged since they were opened in 1910. And during the recession, when interest rates were historically low and there was disinflation, Chris Christie said, I'm not having it, and he canceled the project. Jack Ciattarelli supported that policy, which you could say cost New Jerseyans a great deal, because if you think about New Jersey, it's the state that sends more people out of state for jobs than any other state in the country.
Look at the three of you.
So this is a big deal. So it's surprising to me that in the race so far, nobody's talking about this. And yet last week, Donald Trump said, you know what I'm going to do? There's a second tunnel project called the Gateway Project, and I'm going to withhold funding from it. And Jack Ciattarelli supports that too. So if New Jerseyans care about cost, which they should, care about commuting, which they should, care about construction jobs, which they should, it shouldn't be a close race.
People who live in New Jersey and commute to the city certainly care about it, but what about the rest of the state? What about those who don't actually come into New York or go to Pennsylvania and make their livelihoods inside the state? Is this as much of a big ticket issue for them?
Of course it is, because if you go back to the financial crisis and the ensuing Great Recession, had Chris Christie let that Frank Lautenberg project continue, you would have had thousands of construction jobs, tens of thousands of construction jobs. Think about that and what that would have done for the economy at precisely the time that it needed it most.
And it would be finished.
And it would have been finished. Yep. So this isn't just about people getting on a train, going to New York, or driving, by the way, to the Lincoln Tunnel or the Holland Tunnel. This is about really every part of the New Jersey economy. And that's why this is so important. And it's surprising that our fellow travelers in the Fourth Estate aren't mentioning any of this in the context of the debate or the race between these two candidates.
I think I speak for a lot of residents in New Jersey, a lifelong resident. Boy, the property taxes are high. They seem like they're just really high. Are they too high? Do we get what we pay for? What's the data show you, Matt?
Well, the data shows that actually...
I mean, my schools are awesome.
Well, the data shows a number of things. One is Murphy in his second term actually had the slowest, let's put it this way, the slowest rate of growth for property taxes in a very long time, and maybe in the entire century. So that is significant, and I'm talking about the Affordable New Jersey Communities for Homeowners and Renters program, and it was the slowest period of property tax growth on record. But here's something else that we do at Bloomberg that nobody else does. We can look at borrowing, and borrowing under Murphy was dramatically better than borrowing under Chris Christie. What I mean by that is if you look at it, it's an auditor's report, it just shows that New Jersey is performing better in the bond market than at any point in the century. And its debt obligations have gained 25%, according to Bloomberg Index, and that amounts to, 0.75 percentage point annual advantage compared to the rest of the country. And it's decidedly better under Murphy than it was under Christie. So you could say that the leadership of the state, the political leadership of the state under Murphy, has done a good job cutting costs or saving money for people like you.
So you're making the argument that based on economics and market outcome, one candidate is better than the other. But what are voters looking at beyond the economics? What is it that their vote is hinged on?
Well, they should be looking at reproductive rights. Jack Ciattarelli, when he ran the last time and lost to Murphy, made no commitment to the law that was pending in the legislature to guarantee reproductive rights to everyone in New Jersey. Murphy, immediately upon being reelected, signed it. So that's an issue you would have thought to at least half the population, maybe more, counts for something, particularly since Roe v. Wade was repealed and the Trump administration and many other Republican leaders are against reproductive rights.
Matt, thanks so much for joining us. Matt Winkler, Editor-in-Chief Emeritus for Bloomberg News, discussing his latest Bloomberg Opinion column. GOP's New Jersey governor candidate is already a burden. So take a look at that on the Bloomberg terminal and at Bloomberg.com/opinion. Coming up, we're going to talk more about these markets. We got mixed tape out there as a way to phrase it. This is Bloomberg. Good morning.
is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. Got an M&A trade in the regional bank business. I think it's kind of a big one. I like this one. Fifth Third Bancorp buying Comerica for about $10.9 billion in stock. J.P. Morgan, Goldman Sachs, and Keefe, Bruyette & Woods. Those are the bankers getting paid. And I always take a look at that first and foremost. I go to the last paragraph of every column, every story about an M&A trade to see who gets paid. Herman Chan joins us here. He covers the regional banks for Bloomberg Intelligence. You like this deal, Herman?
Yeah, I think it's a win-win for both. Comerica's been sort of in the doldrums over the past couple of years after the SVB debacle. It's taken some long time to get it under its own footing, and they've gotten a lot of agitated investors and activists pushing for a sale, and this was a great outcome. On the other hand, for Fifth Third, it's a great deal. It moves them into growthier markets in Texas and California, supplements their Michigan presence, and really builds out their branching presence across the Southeast and Southwest.
So within the regional banking space, what does this deal put pressure on? Who does this deal put pressure on to make a move of their own?
Yeah, so that's a question, the follow-on question, like who's next? So there are other banks that are operating within the size of a Fifth Third that have also done deals, like a PNC and Huntington. And the others that are still on the sidelines are banks like Regions in the Southeast, KeyCorp in Ohio as well, and M&T and Citizens in the Northeast. So those are the ones that probably are going to get asked a lot of questions on the 3-2 earnings call about M&A.
So what do we know about the Trump administration and its view towards bank consolidation? Are they opined on this at all?
Yeah, so we can see that these bank deals are getting approved at a much faster clip. So I mentioned Huntington earlier. They're buying a bank in Texas named Veritex. That's right. And it's going to take them about 98 days from deal close from merger announcements. And that contrasts with under the Biden administration, it's taken 400 to 600 days for a large bank M&A deal. So these deals under Trump are being fast-tracked, and it's really encouraging the management teams to really go out there and search for deals.
So for so long, a lot of people had commented that the U.S. is overbanked. By one count, there's almost 4,500 FDIC-insured banking institutions here. Yeah. Are we still overbanked, Herman?
I would say so. There's a lot of competition. And that's the reason why Comerica is looking to sell, because they were lacking in a retail branch presence. They mostly bank middle market commercial customers that are great, but it doesn't create the diversity that they needed during times of stress like the SVB environment. And so that was a lesson learned for a lot of the banking industry, that you need to diversify your deposit base, and one way to diversify is to sell to a larger organization.
Which segment of the banking industry is bloated, needs to streamline the most?
Yeah, so there, you mentioned 4,500 banks. Like, does there need to be that many banks within the United States? Probably not. They don't have the scale to operate a retail branch presence. They don't have the capabilities on the fee side and the advisory side to really help their customers on the commercial side. And you see so much competition from not only larger banks, but also the fintechs that are just biting at the heels on the consumer side. So it's a really tough operating environment, and we expect more consolidation over the next several years.
All right, riddle me this year. Why do banks even have branches? I hear banks talking about adding branches. I haven't been into a branch in years.
Across the street from Bloomberg headquarters, Citigroup just opened.
Yeah, Citi branch right across. A lot of it is marketing, because and a lot of it is scale. So for a bank like Fifth Third, they're growing organically in the Southeast, and that's been a major growth driver for them.
But I need a branch to...
You don't need a branch, but you need the branch for a marketing aspect. So you need
it's like
ubiquity.
A big billboard.
Right. It's a big billboard.
Big, expensive billboard.
In markets where you have a lot of foot traffic and higher growth markets. So it's a big billboard, and it's been a proven growth driver for banks. But on the other hand, branches are declining. So if you have critical mass and scale in your existing markets, you can trim your branch presence and not affect your depositors. But if you're entering new markets, then opening new branches is the way to go.
I don't think I could find my checkbook.
Well, that raises a question. Does a fintech that wants to be a bank need to therefore have a retail presence?
Right.
Do they need to open up a branch also across the street from our office?
Right. So that's the beauty of the fintech model, is that they're issuing the branches. It's not a requirement. It's a lower cost to serve because you don't have the physical retail presence. And it's one way to really compete effectively with these legacy banks, where you have a really easy to use app and you aren't burdened by this cost basis of owning the physical presence.
All right, so when we had a couple little blow-ups in your world a couple years ago, I found this KRE, the Spider S&P Regional Banking ETF.
That's right.
How are the regional banks trading these days?
Yeah, so they're really doing all right. We're talking about price to tangibles around 1.5 to 1 times ish. During the height of the weakest point during the SVB debacle, it was less than 1 time. So they've rebounded really nicely, despite some of the uncertainty on the economy and with tariffs. And so we've seen some growth from them, especially on the commercial lending side. That's really helped grow their top line.
Good. All right, Herman Chan, there you go. We like talking to them when banks are not blowing up.
Yes, that is preferable.
There was a time there when we talked to them when something bad was happening in the regional banks. Herman Chan, Senior Analyst for U.S. Regional Banks at Bloomberg Intelligence. Again, a nice M&A trade in the regional bank space. Fifth Third buying Comerica in the year's biggest bank deal. How about that? S&P 500 up 15, the Dow off 117, and the NASDAQ up 96 points. We'll have more coming up. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, Scarlett Fu, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. The big story, you got AMD, OpenAI. How about that? Coming up right now. How cool is this? OpenAI president and co-founder Greg Brockman and AMD CEO Lisa Su speaking with B-Tech anchors Ed Ludlow and Caroline Hyde on this transformative deal. Let's listen in right now.
Welcome to Bloomberg Radio and TV audiences around the world. AMD has signed a definitive agreement with OpenAI to deploy 6 gigawatts of AMD GPUs. AMD says it will equate to tens of billions of dollars in revenue. OpenAI will get up to 160 million AMD shares in tranches and set against both operational and financial milestones. The focus is inference. Let's bring in AMD CEO Lisa Su and OpenAI President Greg Brockman, both of whom join us on set here at Bloomberg Tech in San Francisco. Good morning.
Good morning. It's great to see you.
Good to be here.
Let's frame the opportunity, Lisa. You know, the market reaction is very clear, but for AMD and the AI industry at large, what do you think this represents?
Well, look, this is a huge milestone for AMD. You know, we are so thrilled with the partnership with the OpenAI team. And it's also, you know, a huge moment for the AI industry because, you know, when you get to the right down to it, you need more AI compute. I mean, that's where we are today. Compute is the foundation for all of the intelligence we can get from AI. And, you know, we are a compute provider. We have spent years on our roadmap. We've spent years working with OpenAI and the team. And, you know, together now we're embarking on, you know, a massive build out of 6 gigawatts of AI compute. And it's a big deal for us, for our shareholders, for our teams, and for really, you know, the partnership and the overall AI ecosystem.
Greg, I said at the top, the focus is inference. I think that's really important to be specific about what you will do with this capacity. So literally explain that part. And I'm conscious that, you know, in the first instance, the first target is 1 gigawatt and then eventually 6 gigawatts. But what will you use it for?
Well, I think that the world continues to underestimate the amount of demand for AI compute, right? That just, we've seen this explosion of demand with things like ChatGPT. You know, we're at 800 million weekly active users now. This product didn't even exist 3 years ago. And we're in a position where we cannot launch features, we cannot launch new products simply because of lack of computational power. And we see these models continuing to get exponentially better. And I think we're just heading to a world where so much of the economy is going to be lifted up and driven by progress in AI. And so we're very much heading to a world by default that I think looks like a compute desert, right? That there's just not enough compute to go around. And so we're trying to build as much as possible, as quickly as possible. So we're starting with 1 gigawatt simply because you got to start somewhere. Right. But honestly, we're building as fast as we possibly can and trying to bring as much computational power to bear for the economy and for the world.
Lisa, this is such a big commitment to Instinct in particular. As a customer, does it make OpenAI the largest for that particular product?
Well, this is certainly the largest deployment that we have announced by far. I mean, 6 gigawatts of compute. As Greg said, we're going to start with the first gigawatt in the second half of 2026 on our new next generation MI450 chip. I think the thing to understand is, these types of partnerships actually take years to really get comfortable with the idea that we're going to, go all in together. And this is an all-in partnership in terms of building out, the AI compute that OpenAI needs for everything that they're offering to the world. So yes, it's a huge deal, and it also says a lot about how much needs to come together for this entire ecosystem to operate. So we are setting up. Certainly there's a lot of engineering work, but our teams are working together on hardware, software. We're ensuring the supply chain, all of those elements are set up and ready to deliver on this massive commitment.
Greg, talk us through a little bit about the players that you need to also lean on. This has been years in the making, as you say, with AMD, but what other cloud providers are involved? How are you thinking about this working with an Oracle or others out there?
Yeah, we really think of this as an industry-wide effort. And in general, we think that compute is something that does require the entire supply chain to really wake up and to really to start building much more than people were planning on. I think this starts from energy to try to get far more power to be built. Things like nuclear, I think, are going to be very important to come online. The cloud providers are an important part of this as well. So we're going to be deploying AMD in our own data centers. We'll be deploying them together with cloud providers. We have a deal with Oracle, lots of other cloud providers out there. You can really see that we're very much in we just want compute, as much compute as possible. We think this is important for the economy. We think this is important for the nation. We think this is important for humanity. And so really, we're working with everyone in this whole industry in order to get as much compute power online as quickly as we can.
Lisa, I'm sorry, specifics. Where is this data center going to be? Is it one single site? Is it Oracle that will partner with you on this?
Well, actually, what this really is an announcement of what AMD and OpenAI are going to do together. OpenAI has a lot of partners in terms of where they deploy. I imagine a lot of it will be in cloud service providers. It's really up to OpenAI and Greg and Sam and the team. But the way to think about it is for this amount of compute, it's going to have to be in a lot of different places. I mean, it's a massive amount.
Multiple locations.
Multiple locations. Right? I would imagine multiple providers to really get this online as fast as possible.
Greg, there is a lot of focus on where OpenAI is going to get the money from to fund all of this. Sam Altman's big picture commitment is well documented, right? And the numbers are, to his mind, are in the trillions. But have you specifically thought about debt financing for this relationship with AMD? Have you thought about doing a specific equity raise? You are very committed across multiple projects.
Yeah, look, the way that I would look at this is that AI revenue is growing faster than I think almost any product in history. And that ultimately, at the end of the day, the reason this compute power is so important, is so worthwhile for everyone to build, is because the revenue ultimately will be there. Now, as a company that is trying to move as fast as we can, we look at everything, right? We look at equity, debt, we look at trying to find creative ways of financing all of this. That's been actually a huge focus of us for the past couple of years, is thinking about how can we possibly build the amount of compute that is required in order to really transform this whole economy into an AI-powered economy. And so I think you'll see lots of creative ideas, but fundamentally, I think at the end of the day, it is because we believe that
I'm sorry to jump in and interrupt, and Kara, just forgive me on this one. The condition of AMD issuing the stock to OpenAI requires you to spend money, basically, because you have to deliver that gigawatt of capacity first. Lisa, I have to ask you if you have assurances that OpenAI is good for it.
Well, let me be clear. I mean, this deal is a win for AMD, it's a win for OpenAI, and it's a win for our shareholders. And that's kind of the way we put this together. I have full confidence in, OpenAI, Sam, Greg, Sarah. I mean, this is a massive opportunity for us. Right now, right here, it's about who has the most compute and how fast can we get it online. And we're committing to doing this together. And the fact is, as OpenAI buys chips, that's great for AMD. Our revenue goes up, our earnings go up. We expect that it will also be, very, very accretive to our shareholders from day one. And as we do that, we're very happy to have OpenAI as a deep partner, and we win together. So it's like a virtuous, positive cycle in how we build out, this big vision for having all this compute out there.
Right.
And yet we still question, as you were just talking about, Greg, some of the other supply chain elements. You're talking about the need for nuclear, for power. What's really interesting is are you feeling confident enough about the rest of the compute, the supply chain is there? Is this going to be US manufactured from your perspective, or are you looking at also building out internationally with AMD?
Yeah, we've been looking at really all options. Our preference and really the core thing that we try to do is build as much as possible in the U.S. And you can see the commitments that we've made over the past year. $500 billion of investment in the U.S. and that's not stopping. We're continuing to build. I do think that international it is also going to be important for the world to have compute. I think that compute is going to become this like national security strategic resource, and every country is going to need computational power. And so that we are really not limiting our sort of sites in terms of where to build, but we do think it is important that the U.S. leads in this technology, leads in computational power, and we're expanding the supply chain. But you can see that we've really been working with partners across the globe in order to actually meet the demand that we expect to be coming in upcoming years.
Lisa, the manufacturing of these chips, will you look to Intel at all for it, do you think, in the future?
Well, as you know, the supply chain is something that we work on, very meticulously. I think we have a very strong supply chain. We're certainly deeply partnered with, TSMC across the supply chain. Just to that earlier question, we're absolutely prioritizing building in the United States because I think that's super important. This is the U.S. AI stack. We want to have as much of it in the U.S. as possible. And, we continue to really look at, how do we ensure that there will be a strong supply chain, going forward.
Greg, Sam posted on X that this deal with AMD is incremental to what's already being done with NVIDIA. But as Lisa knows, I've spent quite a lot of time looking at the MI family and the newer generations of products to come. Is there a very clear, specific benefit to using AMD technology for inference relative to the capabilities of NVIDIA? Or do you just see it broadly as some sort of diversifying factor?
Well, I would look at it this way, that there's a huge fixed cost to getting AI models running on any platform. And so that when we look at what's out there, that actually getting AI training to work is a huge amount of lift. That's something we've really only done the work for NVIDIA. But for inference, that's something that's much more, that there's an easier barrier to entry there. And one thing we found is that I think that the work that Lisa and team have been doing on the MI450 series, it's looking like it's going to be a really incredible chip. I think that there's the way that these things work is that there's niches for different balances of memory and computational power. And so as we have a diversity of workloads, we're finding that having a diversity of chips also really accelerates what we're able to do.
Lisa, at the beginning of this conversation, I said there are both operational and financial milestones to be met. And Greg explained you got to start somewhere. So in the first instance, 1 gigawatt. But would you just sort of draw out the pathway to that first gigawatt? It seems like you're prepared to move quickly here.
Yeah, absolutely. And maybe, Ed, if I can just build on something that Greg said. I think he's absolutely right. We're a believer in there's a diversity of workloads, and there will be a diversity of workloads across, customers, models, use cases. And from that standpoint, we feel really good about how we're positioned. We love the work here because, frankly, OpenAI is the ultimate power user of our chips and tests us in very good ways. So I think that's what gives us confidence that, the technology is there. And then to your point about milestones, yes, I mean, this is, clearly a case where we are tied to each other. The first gigawatt of deployment is super important. We're going to start that, second half of next year, and we're going to build on from there. And it really is not just the technology, but commercial milestones, adoption milestones, and just how we proliferate the capability going forward. But I'm looking forward to building this as fast as possible. We're already working with a number of cloud service providers who are also very active on our technology. And I think this is a great catalyst to get the industry to build faster.
Tied to each other is such an interesting turn of phrase. And Greg, look, you are seeing more AI users and chip makers and designers becoming more financially tied to each other. Is this going to continue? Is this the step forward for how you see this financing going forward?
Well, I really see the world transitioning to this AI-powered economy. And the interesting thing is within OpenAI that we've really seen what it's like when your progress is limited and accelerated as two sides of the coin by computational power. Like teams within OpenAI, that their ability to deliver really is tied to the amount of compute that they get. And I think we're heading to a world where that is how the whole economy will function. And we're starting to see it, right? That people having access to better AI tools, if you're a coder, you're able to do far more if you have access to better AI models. And we're heading to a world where if you can have 10 times as much AI power behind you, you will probably be 10 times more productive. And so I think that we're moving to a world where the whole industry is waking up to the fact that we have just not planned. We have not planned for this moment where this explosion in AI demand is happening. So it's happening all the way from the power to the silicon. And I think this whole industry has to find a way to actually rise to meet the occasion.
Lisa, you have given us a look into the future before about how you see the total addressable market, the industry. Now that the ink is dry with OpenAI and Greg, are you rethinking either your bigger picture analysis of the market for AI accelerators and GPUs, or do you see AMD now having an improved position in that market, relative, of course, to your friends at NVIDIA?
Well, again, I think, and I've told you before, I believe that this is a huge market. We have sized just the AI accelerator TAM being, over $500 billion in TAM over the next few years. I think some might say, maybe I was a little conservative in that TAM analysis. But the way to think about it is there's so much need from compute. I mean, you just heard it from Greg. So, this is a huge pie, and you're going to see the need for, more players coming into it. And, from my standpoint, this is a big validation of our technology and our capability. As much as we love the work with OpenAI, we're working with a lot of other customers as well. There's a lot of excitement in the industry around MI450, so we're ready for it.
AMD CEO Lisa Su, OpenAI President Greg Brockman. It's been a joy having you on the show. Thank you both very much. All right, very interesting conversation here. OpenAI President and co-founder Greg Brockman and AMD CEO Lisa Su speaking with BTech anchors Ed Ludlow and Caroline Hyde on this big deal. I'm just looking at the shares of AMD, Scarlett, up 27% today, 52-week high, added up almost $100 billion of market cap to now about $340 billion of market cap. Just an extraordinary amount of wealth creation with the stroke of a pen.
Yeah. The devil's in the details, right?
Yep.
Tens of billions of dollars. Again, we don't know what that actually means. It could be 11, it could be 99, and we're not going to get details on that right away. I'm looking at some other companies that have also similarly benefited from the AI play that aren't NVIDIA.
Yep.
Broadcom, ticker AVGO, because once upon a time it was Avago. That's only up marginally today, but year to date it's had an incredible run, up about 46%.
Yep, absolutely. And I guess when we first started really talking about AI in a big way, maybe almost 3 years ago, it was with NVIDIA when they raised that guidance so dramatically. Then that kind of opened everybody's eyes to, oh boy, this AI thing
It's a
maybe
complete
is super.
re-rating.
Yep, absolutely. And since then, it's been, I think, a lot of folks just trying to see where else can I get the benefit of what seems to be the super cycle of tech spending.
Yeah, energy companies, utilities.
Yep, absolutely. And of course, the chip companies here, and we'll see that with the OpenAI deal with AMD chips worth tens of billions of dollars in revenue in the future. And that is enough for AMD stock to just be ripping here today. So again, $208 a share, up 27% here to date. And the tech market likes it. NASDAQ, is up 115 points. That's a 0.5%. So
the AI trade is alive and well, I guess.
TSMC, another beneficiary. The U.S. shares, the ADRs are at a record high right now.
Very good. All right, coming up, we're going to check in with Ellen Wald. She's the president of Transversal Consulting. Get her thoughts on a global energy market. I think OPEC is meeting. I'm looking at Brent crude up a little bit here today, but it's around $65 per barrel. It's been a little bit soft recently. Chris Watling, CEO and Chief Market Strategist at Longview Economics, will get his thoughts on these markets. So that's all coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We're being brought to you by Oracle. Attention, growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. S&P 500 up for a seventh straight trading day. This is the longest winning streak since back in May. And the rally in chip makers driving stocks to the fresh all-time highs. Of course, advanced micro devices deal with OpenAI, fueling the artificial intelligence frenzy. That continues. Shares of AMD right now 20 close to 27% higher. And the other standout, Comerica, shares right now, they are up close to 16% with news that they're being purchased by Fifth Third. And Steve Chivarone at Federated Global sees stocks moving even higher from here.
Earnings estimates are not only holding in and rising, but we think they're still too low and likely to head even higher. And I think that is driving markets higher. When you have an environment, when rates are coming down and earnings are accelerating, equities go higher.
And the next earnings season right around the corner. According to Goldman Sachs, companies set to enjoy better than expected earnings season. Gold rising to near record, nearing $4,000 an ounce. Oil gaining, OPEC Plus agreeing to raise production by a modest amount. S&P 500 19 points higher. That's up 0.3% right now. 67.35. That's an intraday record. The Dow's down 59 points, and the Nasdaq Composite Index 115 points higher. That is up 0.5%. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Scarlett.
All right, good stuff. John Tucker, thank you so much. It does look like everything is up, up, up. You have the stock market, the S&P and the NASDAQ higher. You've got the dollar higher by 0.25%. Yields are higher, but that, of course, reflects a drop in bond prices. And we also have oil higher, as John just mentioned, WTI gaining 1.3%. Ellen Wald is president of Transversal Consulting and a senior fellow at Atlantic Council. And Ellen, I want to get your take on the decision by OPEC Plus to revive 137,000 barrels a day of halted supply. What does this mean, big picture-wise, for our demand-supply dynamic?
Essentially, it means right now we're in a holding pattern. That kind of increase is basically meaningless. I mean, it's extremely minor. And I think that it represents Saudi Arabia kind of cooling off on its desire to increase production. There was some pushback for this from Russia, also Algeria, concerns about demand weakness potentially. And so, this increase is really a nothing increase, particularly because right before the meeting, right before the close of the markets for the weekend, there were some rumors that we might see an increase of 500,000 barrels a day, which is a much larger, more significant increase. And so when they came through with this very, very small one, that's one of the reasons we're seeing oil prices rising, because everyone was expecting potentially something much larger, and they got something much less significant. Does it mean that OPEC is really worried about demand weakness? Because OPEC has kind of been bucking the trend here with the forecasts and has really been, seeing a lot more demand strength than demand weakness. I don't think it means that they're ready to reverse course or anything, but they're definitely taking it a little more slowly this month. Wait and see what happens before next month.
So where are we, broadly speaking, Ellen, in terms of supply and demand? Is there a surplus of crude out there in the marketplace?
Well, it depends who you ask, because it's not always so easy to measure consumption, and a lot depends on whether China is importing more and putting it into its kind of long-term storage or strategic reserve, if you call it. Some people say that doesn't really count as consumption. Some people say it does, and so it really depends. I do think we're pretty much in a good place. Some people would say we're actually slightly undersupplied. Some people would say we're actually slightly oversupplied, but I think that really the fact that we're sitting in kind of this $60 area, we're not moving that much, shows that we're probably in the right place for now, but it's very much a wait and see situation in terms of what happens with demand.
How are you thinking about the future of Russian crude oil? Because it's a big talking point every time the president is speaking with trading partners like India, certainly when he talks about China as well.
Yeah, this is a huge, huge issue, and I would say that's probably, I would say that that's a bigger, if a bigger question than, say, turmoil in the Middle East at the moment in terms of oil supply, because right now the president is really pushing these countries, India, Turkey, other big buyers of Russian crude, to stop buying Russian crude. And originally the whole the whole game was that these countries were going to continue to buy Russian crude, and they were going to process it into products, and Europe was going to continue to buy those products, so we'd have plenty of crude on the market, but Russia would experience a drop in revenue. Well, this supposed drop in revenue doesn't seem to really have done any material damage to Putin's ability to wage this war, and so Trump is now taking this stronger stance of, you got to stop buying this oil. if these countries do adhere to this pressure and they stop buying Russian crude, then I do think that while Russia will still have that oil, they won't be able to sell it. I don't think China is in a position now to want to increase the percentage of Russian crude that it buys. It's already buying a very large percentage of Russian crude. Buying more could potentially become a national security issue for them. And so either Russia's going to have to try to process it on its own. It's already got problems with its refineries. We're seeing gas lines in Russia because refineries are out from attacks from Ukraine. And so we could be in a situation where, the available supply of non-sanctioned oil does shrink, and we may need more oil from other OPEC countries like Saudi Arabia and UAE and potentially even Kazakhstan.
All right, Ellen, thank you so much for joining us. Appreciate that. As always, Ellen Wald, she's president of Transversal Consulting and a senior fellow at the Atlantic Council down there in Boca, which is another scam, by the way, like Pacific Beach or whatever the beach is.
There's a theme every time
somebody said
Paul
a
talks
nice
about
remote
this.
location. Yeah, I'm not jealous or anything.
No, not at all.
All right, let's get back on the economics discussion here. Chris Watling joins us here, CEO and Chief Market Strategist for Longview Economics. He's based in London, but joining us here in our Bloomberg Interactive Broker studio. Chris, let's start with France. We woke up to, I guess, yet another premier stepping down from France, from that government. What's that mean for you as an economist sitting in London, thinking about the European economy, the French economy?
Yeah, I mean, it's kind of quelle surprise, isn't it? I mean, it's au plus ça change, as they say. I mean, it's France in many ways is ungovernable at the moment. This is the challenge you have in France, and as we were saying just now, it's the politics more than the economics. It's the idea that politicians have to cut spending by the state or perhaps raise taxes, but ideally cut spending. The French state's very big. It's far too big for the economy. So, but the wonderful thing about France is it's kind of encapsulated by the rest of the Eurozone and gets lost in the rest of the Eurozone in a sense. So the idea we're going to have a crisis out of France is, I don't think so. We clearly have a political crisis, but we don't need to have an economic crisis because, you've got the ECB backstop if things get really bad. You've got that protection for contagion. And you've got an economy in France that's just sort of about muddling through. So, it's not good. Clearly, there's political paralysis. It's not easy to see a way out of it. But I don't think this is not the Euro crisis. This is not a French fiscal crisis in a dramatic sense of the word. It's simply more the same of the last 12, 18 plus years.
Just an ongoing political crisis. I think we're on to our 6th PM in 5 years. I've lost count at this point.
I don't know either. I can't keep up.
Okay, so what does this mean for Emmanuel Macron? Because there is a contingent of the population that says he should just resign as president. He's no longer effective. He has said he won't do that. Short of that, can he fix this? Can this be fixed without Macron leaving?
I'm not sure it can be fixed without Macron leaving, but I think that actually him leaving would be bad, because then you're into political unknown. Who's going to end up governing?
A vacuum.
A vacuum, exactly. And there's a lot of parties out there that aren't even remotely attempting fiscal discipline or even thinking about it. So you could get a worse option. At least with Macron there's a degree of stability. Now, I know you can't get a budget through, but we always used to say in markets, if politicians do nothing, that's great. It's better if they do nothing. Just let the private sector get on with it. So I suspect Macron will stay. I obviously don't know, but I think he's going to see out his term.
So you're over here in the States, presumably meeting with your clients. What's the topic or two you really want to drive home with your clients these days?
Well, surprisingly enough, people are trying to work out whether they should stay with this market or not in the US. It's an incredible market. Yep. We all thought the AI bubble was broken a few months ago in the April sell-off, and it's coming back with more of a roar. And the characteristics, I mean, it really, there's so much of 1999 in here. It's fascinating to watch. And of course, Charles Kindleberger, the great financial historian, was very clear about what drives bubbles and very clear about what ends them. And it's always the removal of cheap money that ends bubbles. So we're in a global rate cutting cycle. Yep. There's a lot of speculation in this market. Wow. I mean, so much. But yeah, clients are interested in that. They're into gold. They don't want to talk about oil because it's basically going down apart from today. All sorts of things, you name it. We do the global asset allocation, the full Monty, basically.
Do they want to be in U.S. stocks at the expense of European stocks?
They feel people are uncomfortably long.
So they're
US
doing
stocks.
it, but they're kind of holding their noses.
Yeah, I mean, you know, you could slice the US market so many ways in terms of valuation, and on every metric, it's expensive. Now, valuation isn't a good market timing tool, but it gives you the sense of what's going on. So, yeah, when something's got this much momentum, it's very difficult to stand in the way of it. Having said that, I do think it's due a pullback for a month or two. And if you look in the middle of 1999, the market sold off for 3 months from July to October by 12.5%. And, you know, and if you're leveraged, that's quite a big hit. So the volume of single stock call options in the US market at the moment is a monster record high. That's evidence of the speculation that's in the market.
And we did see some of that. Maybe the markets overbought earlier this year when the Liberation Day, and we saw a lot of movement of assets out of the U.S. into rest of the world, including European markets, European equity markets. Is that still a trade that's on, or has that reversed itself a little bit?
Well, you're actually, what I call the broadening trade is still on, but it's not so much in Europe at the moment, but it's in China, it's in South Korea, it's in LATAM, it's across the globe we're seeing markets break out. So it's not just, US, it's a broadening.
I'm glad you bring up across the world because we also have new leadership in Japan. Takeichi has won the leadership contest for the ruling Liberal Democratic Party, and Sanae Takeichi is seen as kind of a protege of Shinzo Abe, and the stock market roared. We saw big moves in the yen and JGBs as well. How much more investable is Japan now that they have this new leader potentially?
Oh, I think this is great in many ways, as long as you do it on a hedge basis, because it's not good for the yen, but it's good for the Japanese stock market. I mean, the Japanese stock market is a global cyclical story. And it's a myth that Japanese consumption's been improving in the last few years. It hasn't really gone anywhere in a decade. So Japan's not a domestic story. Japan's a global story. And
exports.
Of course, perfect policy mixture from the new lady in charge, who I'm still working on how to pronounce her name. But
all right, Chris, great stuff. Appreciate you coming in our studio. Chris Wadling, he's the CEO and Chief Market Strategist for Longview Economics, joining us live here in our Bloomberg Interactive Brokers studio. Looking at the markets here, we still have some red and green on the screen. Coming up, we're going to check in with Adrian Balfour. He's the founder and chairman of Envorso on the latest coming out of the auto industry. So that's coming up in just a moment. S&P up 21 points, the Dow off 67 points. But the NASDAQ up 129 points. That's about 0.6%. Tom Keen's VIX sitting right at 16 and change. This is
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the newsroom with this Bloomberg Business Flash, and we're being brought to you by Van Eck, celebrating 70 years of helping investors stay ahead in a world that never stands still. Visit vaneck.com. Well, the S&P 500 and the NASDAQ are adding to Friday's records, and you credit technology stocks, they keep rising. Of course, the big deal, one of them, Advanced Micro Devices, soaring just about 28% right now, to help lead the market after announcing a deal where OpenAI is going to use its chips to power artificial intelligence infrastructure. And Aaron Kennett at Clear Harbor Asset Management says the AI boom that's been powering markets is for real, and he says it will continue.
And it's not a question of just how it's going to impact the hyperscalers, the large language models like OpenAI, but in my opinion, and our opinion here at Clear Harbor, how it's really going to impact and benefit multiple sectors of the U.S. and the global economy.
And Comerica jumping right now over 15%. This comes after Fifth Third Bancorp agreed to buy its rival in an all-stock deal. It's valued at $10.9 billion. The combination will create the country's 9th largest bank. And a quick look at Verizon Communications right now. Those shares, they are down 4%. They replaced the CEO, Dan Schulman, director of the company, former CEO of PayPal. He's taking over for Hans Vestberg. And you know what? According to Adobe, shoppers are going to spend $253 billion online this holiday shopping season. And the checkout options that are becoming more popular, in fact, this is the way to go, according to shoppers. Purchase items, pay for them over time. That is going to
buy now, pay later.
Buy now, pay later, as we also know.
That just feels like it's going to end badly.
You still got to pay, folks. So anyway, S&P 500, 21 points higher. The Dow down 98. The NASDAQ 100 up 182 points. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. What's the big item this year? I don't even know.
Labubu's out, right? We're done.
It's still.
Are we done with that?
I feel like it definitely has peaked.
Oh.
Yeah, we're on the other end of it.
I missed the whole craze.
You're so sad about it too. I know.
Yeah.
Exactly. All right, John Tucker, thank you so much. Appreciate that. Scarlet Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Let's get an update on what's going on in the auto industry, particularly its transition from internal combustion engines to electric vehicles. I'm not sure where we are in the process now, if we've kind of lost some momentum or what's going on there, but let's check in with our next guest. They have some thoughts here. Adrian Balfour, he's a founder and chairman of Envorso, joining us. Envorso is a consulting firm specializing in digital transformation, AI, and software-driven innovation with a focus in part on the auto industry. Adrian, thanks so much for joining us here. Give us a sense of kind of where you think we are here in this country, and then we can go globally if you want, on this, I guess, transition to electric vehicles.
Yeah, no, thanks for having me. I think, you take a look at it, we are transitioning to an electric vehicle sort of infrastructure and a future going forward with software-defined vehicles. Various sort of like companies have got certain advantages over others. Companies like Stellantis have pulled back a little bit. I think some of the traditional autos have spent too much money on it. And have achieved less than stellar results, and they tend to be pulling back a little bit, whereas companies like Tesla, Lucid, Rivian are kind of pushing forward. I think overall, the next sort of 2026, 2027, you're going to see an increasing acceptance of the electrical vehicle market as we go forward in the marketplace.
Yeah, your former employer, Ford, among those legacy automakers that have perhaps spent too much and maybe aren't seeing enough return in the meantime. Where are we, Adrian, now that the $7,500 U.S. EV tax credit is gone? How much momentum did that halt?
I think, you saw like a 7.4%, I think, increase in quarter-to-quarter revenues for Tesla. I think that's going to be hard to sustain going into Q4. So that will be difficult, primarily because it was a bit of a pull ahead. But as you look going into 2026, you're going to see, in particular with Tesla, with the advances of a sort of sub-$30,000 model, Ford are working hard to come out with a sub-$30,000 model as well. So I think there's a big shift to apply software-defined vehicles but the major issue is that the costs went too high. So a lot of the automotive makers are now focusing on the sub $30,000 category to try and get something in there to try and get a sort of market presence. In particular, I'm interested in seeing how Tesla's launch goes with the Model 2. And I think if that goes well, and if you can get some of the robo-taxi legislation / prove-outs pilots to improve, I think you're going to see a really big uptick because the technology is pretty cool.
Right. Well, you mentioned a couple of times a sub 30,000 EV, and of course we're not there yet, but you do see that around the world. Chinese EVs are cheap and incredibly technologically advanced, and they're available everywhere except the United States. Do we get to a point where we might one day see Chinese-made EVs in the U.S.?
I think that's an ecumenical decision up to the Congress. So I think right now there's very serious sort of tariffs on the Chinese vehicles coming into the U.S. And I think the idea there is to give the U.S. automakers a chance to play catch up. I mean, if you go to Europe, you will see sub $30,000 Chinese EVs that are really high quality. And I think it's really, in the US, we're really sort of like playing catch up a little bit. So I think the tariffs there are designed to give us a head start, or to give us, well, not a head start, but catch up time.
Play catch up, yeah.
Adrian, what's this mean for the legacy automakers, the Fords, the GMs, the Volkswagens? I mean, it's a tough game for them because they got to wean themselves off of these ICE vehicles that make a lot of money for them, F-150 trucks and whatnot. How do you think they're going to work this out?
Well, it's like every sort of transition in the economy. You know, the traditional automakers come from a sort of modular basis where they buy modules from multiple suppliers. So you may have 100 modules in a particular vehicle, or 100 plus modules in a particular vehicle, and they have to integrate that together. That's a very complex sort of scenario versus something like a Chinese EV that's a startup, or a Tesla where they have 2 to 3 modules in the vehicle that they have to integrate. So it's a different framework from where you're coming from. And so the automakers in the US have got the capital, they've got the experience, and they've got the knowledge to be able to pull it off. They just need time to get there. They have to move from over 100 modules down to less than 10, and they got to do that within 3 to 4 years. It's a difficult challenge.
It's a difficult challenge. I know you're in the business of vehicles and auto suppliers. I want to get your take on the financial troubles of First Brands and Tricolor, which are, of course, tangentially linked to the auto industry. What does it say about the strength of the auto industry that these two companies have fallen into financial disfavor so quickly and taken so many people by surprise? I know there are some idiosyncratic reasons behind them, but it does speak volumes about a certain segment of the U.S. consumer that is having trouble keeping up in this economy.
Yeah, I think U.S. consumer is sort of like, I think it was sort of pushed towards EVs, and there's been a negative reaction as part of that. But as people buy EVs and become more stealth mode, I think people are going to start adopting them faster and faster. I know the people that I am familiar with that have been very skeptical of EVs, once they get an EV, they start to really like it. The difficulty still becomes down to fear of long trips, travel, charging networks, that sort of thing. But I think as the consumer becomes more confident, and that is only going to happen by stealth. That's only going to happen incrementally. But as they do so, it will be positive. The key thing is the getting Tesla to get out there, because they are the market leader and they are setting the tone for the rest of the industry. If they continue to do that, and then GM, Stellantis, and Ford are able to follow suit, then I think the future is bright for the automotive world in the US, provided the tariffs keep the Chinese out for the next sort of foreseeable future.
Adrian, thanks so much for joining us. Appreciate it. Adrian Balfour, founder and chairman of Envorsa, which is a consulting firm focusing on the technology and how it's integrated in a number of industries, including the auto industry. So, boy, it's tough to be I think a traditional auto OEM here trying to negotiate that transition.
Yeah, it's also tough to be a consumer who wants to buy a car and hasn't up until this point. It feels like every time you wait, it's another $10,000 in the sticker price.
Yeah, exactly
price,
right. Exactly right. And the premiums that in today's market that you have to pay for electric, for a lot of people, just not worth that premium. So again,
also you need a garage.
Yes, you need a garage.
You can't charge it if you park outside.
Exactly right. So there's a lot of issues there. I'm sticking with my ICE car for the moment. We'll see. This is Bloomberg. Good morning.
listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube as well, so head over to youtube.com and search Bloomberg Local Radio, and that's where you'll find us. We had a management change in the telecom space. Verizon Communications named Dan Schulman Chief Executive Officer, replacing Hans Vestberg. That's effective immediately. Looking over at the stock for Verizon, down 4% today, although it's up about 4% year to date. Let's see what this means for Verizon and for the telecom space. We're joined by John Butler, Senior Telecom Analyst for Bloomberg Intelligence. He's down there in our Princeton office. Hey, John, so a change at the top for Verizon. Was this expected, or is this something new for the company?
Not at all, Paul. I mean, you know, when you think Merger Monday, I've had a lot of busy Mondays lately, but the last piece of news I expected was this change in leadership at Verizon. The company had really been sort of, I guess, prepping the head of the consumer business, or grooming is a better word, Somarayan Sampath, who is just a phenomenal talent, in my opinion. And he's been sort of pushed out there doing a lot of investor conferences and giving the investment community the impression that he was the next in line. So when the news broke this morning that Dan is taking over as CEO, it really surprised a lot of people, including me.
So what's the company saying here? Why do you think they chose this outsider versus somebody that, again, an insider that maybe the street thought was going to be the next in line?
You know, I think for telecoms, all three of the majors, the wireless business is slowing very rapidly on them. We're seeing subscriber growth down a lot this year. There's a lot of pressure on pricing. And I think the thought is Dan Schulman used to be CEO of PayPal. He's got experience at Amex in the consumer finance business. So they're thinking in terms of how to monetize the 150 million consumer relationships they have to move into adjacencies. The naming of Schulman, in my mind, tells me they're looking to tap the consumer finance market. You know, they've already got a credit card business. I think it's probably doing pretty well, but they're not actually in the loan business there. But they're doing a lot of device financing. And so I think the hope may be, this is my speculation, may be that they can take that perhaps a step deeper into the consumer finance market and maybe other adjacencies to be able to monetize that base a little bit more and diversify away from the slowdown in wireless.
Yeah, no, Verizon, they've kind of dabbled over the years in other businesses, purchasing AOL and Yahoo. So what's the focus going forward here? Is it to try to just manage the wireless business as, you know, the decline in the wireless business as best they can?
So again, it's the strategy here, Paul, I think, is to sort of build off that base that they have. The wireless business is stable. It's not going anywhere. It's typically a GDP plus business. Again, we're seeing a slowdown now, so it could move down to a GDP-like growth rate. But again, it's all about extensions. So all three of the majors here are pushing hard into consumer broadband. They're doing very well there, both in the fiber and the fixed wireless access business. But even that business is starting to mature a bit as it saturates here in the U.S. So the question becomes, what's next? And maybe the what's next could be consumer finance. If you look at T-Mobile, they've tapped the outdoor advertising market, which actually is growing double digit. I never would have guessed, but yep. The thought is, hey, as people carry around these phones, we know where they are. Perhaps we can leverage that and come up with very innovative ways of increasing eyeballs on our outdoor advertising. So I think they're looking for that type of creative thinking to come up with new ways of generating growth. And again, you're trying to leverage that huge core base of wireless subs that you have.
Just looking at their balance sheet, John, this is a company, Verizon's got $170 billion of total debt there. How does the market feel about their balance sheet?
So I think of the big three,
Verizon is probably at a point where they want to be in terms of financing the business. Can they load on a bunch more debt? It's hard to say. I'm going to defer to our credit analyst for that, Steve Flynn. But I don't view their ability to finance new ventures as an issue here at all. It's a very cash-rich business, wireless, that is. And, I think that will allow Verizon to bankroll any of the new ventures they plan to push into from here.
And one thing I'd certainly pro shareholders is 6.6% dividend yield. Is that safe?
I think it is safe. That's a good question. I think Verizon, of the big three, really sort of gets it when it comes to the importance of the dividend to the investment community. There's a lot of telecoms out there, AT&T included, that have cut the dividend in the past and learned the hard way that I call it the third rail of telecom. I mean, you do not want to cut the dividend.
Yep.
So my call here is that I think the dividend is safe, yes.
Yep. All right, John, thanks for jumping on with us. Appreciate that. John Butler, Senior Telecom Analyst for Bloomberg Intelligence, down there in our Princeton office, looking at Verizon and change at the top here at the CEO. All right, folks, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. Your top stories and global headlines are coming up in just a moment. S&P up 27 points, the Dow down 94 points, but the Nasdaq's up 165 points or 0.7%. Yields a little bit higher here. 10-year Treasury yields up about 3.5 basis points, 4.15%. This is Bloomberg.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. A new lawsuit from the governor of Illinois and mayor of Chicago in a bid to stop the deployment of National Guard troops. CBS's Stacey Lynn.
The suit aims to stop the Trump administration from sending hundreds of National Guard troops to Chicago, alleging that it's unlawful and dangerous. The president's been threatening to send the troops to the city for a while now, but it's still unclear when he'll actually do it or where they would be deployed.
Last night, a federal judge blocked efforts to send Guard units from other states to Oregon. The administration has been targeting Portland. New and more serious charges have just been filed against Mark Sanchez, the Fox football analyst and former NFL player, after a violent weekend confrontation he's alleged to have started with a man in Indianapolis. Prosecutor Ryan Mears.
We have added more serious charges against Mr. Sanchez. At this point in time, we have filed a felony charge, a level 5 felony of battery involving serious bodily injury, which contains a penalty of 1 to 6 years.
Sanchez suffered stab wounds. The other man, 69 years old, is recovering from serious injuries as well. The U.S. Supreme Court's rejected an appeal from Ghislaine Maxwell, the imprisoned co-conspirator of Jeffrey Epstein. Legal analyst Lori Levinson.
Maxwell is staying in prison, although she and her counsel have made overtures towards the Trump DOJ to try to get some benefit from her cooperation.
There's a lot of talk about the continuing government shutdown in Washington, but no real action. CBS News White House correspondent Weijia Jiang.
Each side continues to blame the other one, continues to hope that the other side will somehow come around, but it's not as though they are having robust conversations to try to actually work out a deal.
And experts say a food aid program that helps 6 million low-income mothers and young children will run out of federal money unless the shutdown ends within 2 weeks. CBS's Peter King tells us a new congressional report on artificial intelligence and automation forecasts that progress could come at a heavy price for the American worker.
The Senate Democrats' report obtained by CBS News projects that artificial intelligence and automation could replace 100 million jobs over the next decade. A ChatGPT-based model was used for the report. It says technology could replace 89% of fast food and counter workers, for example, along with 64% of accountants and nearly half of all truck drivers.
And checking Wall Street's, right now the Dow Jones Industrial Average is down 90 points. The S&P is up 26, and the Nasdaq is up 165. This is CBS News. Two American scientists, Mary Brunkow and Fred Ramsdell, and a Japanese researcher, Shimon Sakaguchi, shared the Nobel Prize in Medicine for their discoveries on the immune system. Brunkow is a senior program manager at the Institute for Systems Biology in Seattle.
I'm sure it hasn't quite hit me yet.
On the Health Watch, corn dog recall has been expanded.
California-based Foster Poultry Farms is reporting at least 5 injuries and numerous complaints linked to wood chips in batter used to make more than 3.8 million pounds of corn dogs. They were produced between July 30th of 2024 and August 4th of this year and sold under a variety of names. It comes less than a week after Texas-based Hillshire Farms, a subsidiary of Tyson Foods, recalled its sausage on a stick products. If you have any in your freezer, throw them away or return them for a refund. Deborah Rodriguez, CBS News.
And I'm Steve Kathan, CBS News.
So my mother is thinking of...
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Government shutdown enters its second week. Welcome to the Monday edition as lawmakers return to vote once again on stopgap measures that are expected to fail. It'll happen before our eyes this afternoon. And Nathan Dean from Bloomberg Intelligence joins us ahead with what to watch. Peace talks beginning in Cairo over a potential ceasefire in Gaza. And you thought there was already a deal. We'll get the latest on this from Bloomberg National Security Editor Ian Marlowe. And as a federal judge blocks President Trump from sending National Guard troops into Portland, the music stops as Illinois sues the president over sending troops into Chicago. We'll get into it with our political panel, Rick Davis and Jeannie Shanzano, all after a look at Wall Street. Here's Charlie Pellet in New York.
Hi, thank you very much, Joe Matthew. Happy Monday, back to work Monday, and we are looking at a mixed market right now with the Dow Jones Industrial Average trading lower. The Dow down 115, down by 0.2%. S&P, NASDAQ, they're pushing higher. A rally in chip makers, sending stocks to records. As AMD's deal with OpenAI adds fuel to the AI frenzy that is powering the bull market. The S&P right now up 0.4%. The Dow lower by 0.2%. NASDAQ is up 160. NASDAQ at 22,940, up another 0.7%. Our Mag 7 index higher by 0.9%. The 10-year currently yielding 4.15%. Spot gold is trading higher, up another 2%. 39.66 right now on the precious metal. We're looking at a record on gold. West Texas Intermediate crude up 1.3%, 61.67 a barrel, and Bitcoin up 1.9%, 125,105 right now on Bitcoin. Investors continue to monitor developments out of Washington for any signs of progress toward ending the government shutdown. Cameron Dawson is Chief Investment Officer at New Edge Wealth, and on Bloomberg Daybreak, she was asked, when will the shutdown start to affect markets?
We think it would start to matter if you actually start seeing layoffs. That's when something that is temporary and something that doesn't impact earnings becomes something that actually will be impacting economic data and thus potentially earnings estimates.
Cam Dawson of New Edge Wealth, interviewed this morning on Bloomberg Daybreak. Advanced Micro Devices shares are surging 29% right now after the chipmaker signed a deal with OpenAI for AI infrastructure that could generate tens of billions of dollars in new revenue. Again, AMD up now by 29%. Recapping, S&P up 25, up 0.4%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, good to see Charlie Pellet in New York, and good to see you as well on the Monday edition of Balance of Power. Thanks for joining us on Bloomberg Radio, on satellite radio channel 121, and you can always watch the radio on TV. Go to YouTube, search Bloomberg Business News Live, unless you're already there. You can see all of our shows throughout the day here with a couple of plates that we're spinning as usual here. Welcome to day 6, if you're still playing along on your home game to the government shutdown. Nothing has changed since we last spoke on Friday evening, though there will be another round of voting this afternoon. They're talking about 5:30 or so, right in the middle of the late edition of Balance of Power. Shocking, it's going to fail again, both of them, the R and the D versions, and we're going to do it again tomorrow. Looks like not Wednesday, but Thursday. The House won't even be in town, and so we could clear another week without the government reopening, or not. White House still promising firings, mass layoffs, and they're suggesting the RIFs, which really is no easier to say than reductions in force, could be announced as soon as this vote fails today. That's the new line from the White House. Layoffs are coming. If you can't pass the bill, Democrats don't get on board, we will start announcing the layoffs. So maybe we'll hear something about that in the late hour as well. We're watching, of course, Cairo along the same time here, and the president was talking about this over the weekend before he went to the big Navy show down in Norfolk, Virginia yesterday, asked about this deal. It was 1 week ago today, by the way. That seems like a month ago when Benjamin Netanyahu was here in Washington to meet with the president at the White House. Remember the deal that was announced? A deal was struck. We were going to wait for Hamas to respond. And we did get a response from Hamas last week that it would, in fact, this was on Friday as well, release the hostages. But maybe this isn't as fully baked as the president thought. Here's what he said on his way out of town yesterday.
We had some very good meetings. The countries of the world, a lot of the countries surrounding Israel, frankly, Muslim, Arab, and many others have had great meetings with Hamas, and it looks like it's working.
All right, I hope you heard that. The president saying we had some very good meetings in the countries of the world. Let's bring in Ian Marlowe, our expert on this. And I haven't had a chance to compare notes with Ian for some time. Bloomberg national security editor who's back in the mix in Washington. And it's really great to see you. You've picked quite a time to return here. I have to start with just what exactly is happening today, because a lot of Americans last week thought there was a deal. And then they went into the weekend hearing that Hamas had accepted at least enough elements of this deal to release hostages. Now we're going to talks?
Yeah, I think this is something that has probably shocked quite a few people, because Trump is trying to take credit for a deal being done and kind of wants to push it over the line rhetorically. But Hamas's response really was a yes, but. And we have seen a yes, but response from Hamas before. We've seen it from Israel before, and we've seen it go back and forth and get hung up on that, you know, on those few remaining details. Yes. Everyone wants peace to some degree, but they want it on their terms. And the issue here is that the U.S. terms, the Israeli terms, and the Hamas terms have always been different. Israel wants Hamas to be gone. No guns, no weapons in their hands, no role in a future of Gaza's governance. Hamas, unsurprisingly, does not want that, and they want a Palestinian state. And Israel does not want a Palestinian state. So those are some of the details we're going to see hashed out here, and I think we'll see whether the Trump administration can strong-arm Israel into maybe giving up some of the things that Netanyahu seemed to insist upon in this deal that I think was hashed out a little bit with help from, you know, Gulf countries like Saudi Arabia and Turkey and others.
And apparently Jared Kushner, Steve Witkoff, all at the table here. So if we start with the two big points, number one, the scheduled withdrawal or whatever the withdrawal will be, the format that Israel follows in pulling out of Gaza, but then also the release of hostages. These are the first two big ones. What would keep these two from happening? Is it in fact the way you described, the way Israel sees a future Hamas? Can we not get a ceasefire until that's acknowledged?
I think the issue has always been, to some degree, that Hamas holding on to the hostages is its last, the last card up their sleeve, to some degree. Once they give up their hostages, there is nothing stopping Israel from going in and steamrolling the whole strip and killing the rest of them. And they've tried to assassinate some of the Hamas negotiators before. They tried it in Qatar very recently. They've done it, you know, in Tehran and other places. So I think that's one of the key things here. I think Trump wants the hostages out. Netanyahu has shown time and time again that actually the hostages being released to some degree is not his highest priority, because he wants to finish the job with Hamas. And that is a central tension here.
Central tension inside Israel itself. President thinks he's got a deal for the hostages. Can we say that today or not?
I'm not 100% sure we can. I think there's a deal in place. It's possible to argue that this deal is further along than it has been before, but these are precisely the details, the sequencing of the withdrawal, when the hostages come out, what kind of Palestinian prisoners are released. these are the details that have hung up previous deals. And I don't think we should lose sight of the fact that that nuance and, you know, Trump's huge desire to take credit for this, especially ahead of the Nobel decision coming soon, is those things are in conflict.
Sunday evening, 6 p.m. came and went. Will there be another deadline of sorts to reach a deal, or do we just keep talking?
It's really unclear, and it was unclear to me when they announced the Trump-Israel deal and when Hamas kind of came back. I don't know really what happens if the deadlines lapse, because it kind of seemed from Trump's initial statements that they were going to back Israel to do whatever they wanted.
Yes.
But Israel is already doing whatever they want in the Strip right now, and the Strip is a pile of rubble to a large extent. So they are already there doing sort of cleanup operations on the tunnels, the bomb-making equipment, all that kind of stuff. And they may continue that, although it seems that they've walked a little bit of it back since the Hamas acceptance. So that may continue, but I don't think there's going to be any huge, large-scale, you know, it sounded like there would be some bombing campaign.
All hell, I think you said.
Yeah.
And it already is hell, to your point.
Yeah.
I heard Admiral Stavridis speaking on Sunday morning. He was on Bloomberg Radio on ABC This Week, and he talked about the network of tunnels that you reference underneath Gaza. About half of that network is apparently still intact. And Netanyahu wants that. The IDF wants that to be dismantled. Is that part of what also needs to happen in lieu of a deal, or in advance of a deal?
I think they've always wanted to get rid of as much of it as they can. I don't know if it's realistic to think that they can get rid of all of it before they withdraw.
Sounds awfully dangerous.
The other thing is, in the past, when they have gotten close to tunnels that still have active Hamas agents and hostages in them, Hamas operatives were told to kill the hostages. And that happened before on a previous operation, and I think it was 6 hostages that were killed. We don't want to see that happening this close. So I think there's got to be some coordination there. But I don't know if clearing the tunnels is not necessarily one of the outright war aims for Israel, but getting rid of Hamas.
They had talked about flooding them at one point with seawater, and I think had begun doing that in some areas. But just in our remaining moment here, I mean, you imagine the idea of rebuilding Gaza with everyone still there and the rubble that you describe. Will they create the catacombs of Gaza? Do they just build on top of what's in place now?
Yeah, I don't know. I mean, I think the tunnels have always been a sort of big question here, because as long as those tunnels remain, anyone operating in Gaza, there could be some sort of surprise attacks, there could be some sort of incident. So I think they're very hesitant to operate out in the open, and I don't see how you do any sort of reconstruction. You got to clear all the rubble first. I don't see how you do that with any sort of international assistance.
Could take a generation.
Exactly, yeah.
Beyond today, is there a schedule for talks?
Not really. We're just going to see what happens in Egypt, and Jared Kushner and Witkoff are on their way, and so we'll see what comes out of it.
Great to have you back, as always. Ian Marlowe, one of the best we have on this at Bloomberg in Washington, which is why he's our national security editor. We'll keep tabs on this meeting for you and find out if there will be another, and of course we'll let you know right here on Balance of Power. We'll turn our attention back to the shutdown. That's the other big plate we're spinning in the air today, and Nathan Dean will join us from Bloomberg Intelligence. He's running the odds on when we reopen. This is Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We have got the Dow lower, the S&P, NASDAQ. They are both advancing. Advanced Micro Devices shares up now by 29% as a rally in chip makers sends stocks to records. AMD's deal with OpenAI is adding fuel to the AI frenzy that has powered the bull market. Right now, the S&P up 23 at, again, a record 67.39, up 0.3%. S&P up 149, up 0.7%. Not all stocks are advancing, though. Dow Jones Industrial Average down 130, a decline of 0.3%. 10 years at 4.15%, with a 2-year 3.59%. Gold up $68 the ounce, up 1.7%. $39.54, the precious metal trading at a record. Bitcoin at 124,945. Bitcoin up by 1.8%. And again, crude up 1.7%, $61.92 a barrel. Tesla has managed to pique the interest of investors with a series of social media posts that send the car maker's shares higher. Tesla's up by 4%. The company posted a video clip of a black hubcap-like object with a Tesla logo spinning before flashing the numbers 10.7, likely referencing a product unveiling tomorrow. Recapping, AMD up 28.7%, S&P up 24, up 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, good to see you back from the weekend and in full effect here on Bloomberg Radio. We'll have more from Charlie Pellet in about 20 minutes, watching the Monday trade here. Merger Monday, and everybody's in a good mood, even though the government's still closed. Nothing's actually changed since last week. We were up on Capitol Hill on Friday evening on the late edition of Balance of Power, and it was so quiet in the city. No traffic coming in this morning either. The weekend, pretty chill around here. Not even any National Guardsmen, at least that I bumped into. And certainly no members of the House. They're not coming back for another week. They were supposed to return tomorrow. Mike Johnson said apparently there's no point because we already passed the bill, remembering that the Republican-led CR did pass the House. That's the so-called clean CR. It has now failed in the Senate, I believe, 4 times. So we're going to go for a 5th one today. And Speaker Johnson is in town, and some members of the conference are here, others are not. Some want to just have a show of, let's say a show of force, but at least be present and accounted for as things close up. A lot of senators were at Sea Island, Georgia over the weekend raising money. Mike Johnson this morning speaking through the media to Democrats. Here's what he said.
We have one plea and one plea alone. We need a handful of Democrats to stop the madness, reopen the government so that we can get to these critical debates about the year-end policy decisions with regard to the further reforms to health care. Plain and simple. I'm anxious to get my folks back. And look, I want to bring the House back into session and get back to work, but we can't do it till they turn the lights back on.
Well, he could have them here. And we'll speak in about a half an hour, by the way, with Nicole Malliotakis, the Republican from New York, checking in from the home district. They all probably would like to come here, but it's the Senate that's in play right now. And again, they're going to do it again. They'll take swings at both of these bills. Both are going to fail. And so we've entered this weird Groundhog Day swirl that may feel familiar to some here in Washington. And who needs Bill Murray when you got Nathan Dean? And he's got the vest on, too, even with all the luck of the Bloomberg Intelligence Fleece vest. We're still closed now. Day 6, Nathan Dean, our chief U.S. policy analyst. It's great to see you, sir. Welcome. You run odds on reopening or just closing?
No, at this point,
there's no odds on reopening.
We're not going to do odds on this one because right now both parties still feel like they're winning. Now, I would argue that it's better to, it's more about like the less of the losers. But both parties are feeling good right now. We saw polling over the weekend that suggested that independents were more blaming the Republican Party for this. We've seen polling from Republicans that have come out and said, look, we've already passed the clean CR. We've done our job. It's up to the Democrats. And when both parties are feeling good, you're in a stalemate, and they're just going to sit and wait it out. Now, what can ultimately change that calculus? I think it's the paychecks. The government workers' first paycheck is on October 10th. I don't think that changes the calculus, but the military is on October 15th. That ramps up pressure, I think, to get this done and get this reopened. Now, Polymarket is at a 71% chance of the government reopening after October 15th. I wouldn't take, I think that's fairly consistent with the thinking I've heard around town. But I'll just throw out there the big catalyst that everybody's waiting for is these potential firings coming from the Office of Management and Budget. If you see widespread layoffs, I could see a scenario where the Democrats go back into their shell and just say, we're not negotiating.
So that changes the rules.
I think that changes because, look, President Trump had some Truth Social posts about Grim Reapers and stuff like that. It's a messaging argument. And if independents are going for the Democrats right now, I could see some widespread layoffs ultimately playing in their favor. But who knows? I mean, we'll have to see.
You a Blue Oyster Cult fan? We were playing Blue Oyster Cult on Friday when he posted the video. Russ Vogt is the Reaper. There, if you're with us on YouTube, look at Trump with the cowbell. I mean, that's pretty classic. Unless, of course, you're the one getting fired. The idea, though, was, hey, don't make us do this. We don't want to do this. But when you see Russ Vogt is the Reaper, what are we supposed to believe here?
Well, I think it's also the carrot and stick mentality. I mean, obviously, you have the White House coming out and saying we're going to, play drums and have, the Grim Reaper there. But, you also saw some language from the Senate, John Thune this morning, and even Speaker of the House, Mike Johnson, saying, look, we just need a couple more Democrats. And if you go back to last Friday, I mean, there was a gaggle of bipartisan senators. Sorry, there was a bipartisan gaggle of moderate senators on the Senate floor discussing. I wouldn't be surprised if those discussions continue. Because, look, we know that the government can't stay shut forever. I mean, there is going to have to be a reopening. The American populace does not like it, although I would add right now from a market perspective, back in 2018, the markets were very much more concerned about the shutdown than they are today. How true. I was talking to our equity strategists this morning, and they were yawning about it. So, I don't think the market really, maybe the American populace doesn't care as much about the shutdown right now, but eventually that attitude will change, and they will have to figure out what a solution is. And the thing that I think is most interesting is that I think the framework of the solution is already there. It's an agreement to have a vote on these Obamacare subsidies in the future, and then they reopen.
We could have told you that last week.
But they got to go through the motions.
Absolutely. But they think that about the markets because they're listening to you. You've sat here and told us repeatedly, this is not an economic event. When it reopens, everybody gets their pay. I realize there are ancillary businesses that are not part of that, and that's heartbreaking. But how long would this need to go on for the market to actually feel like it had a front row seat here? I realize another jobs report might be a problem, but what do you think?
So I had a client call this morning with Anna Wong, our chief U.S. economics economist
business
from Bloomberg Economics, and her analysis said 3 weeks is when, if you have a 3-week shutdown, that is when the unemployment rate begins to tick up.
Got it.
I corresponded that analysis with our equity strategists, and at that point, they said, we're going to start paying attention more to this. Because, from the data perspective, you're going to lose all of October's data. We have a Fed decision. The traders aren't going to like that. But also from the economic perspective, that's when the headline risk and fear comes back into things because, there is just this presumption, and I would agree with this presumption, but there's this presumption that Congress is going to figure it out. They'll figure it out within 2 weeks, and then they'll, go on to other matters. But if Congress doesn't figure this out and we go into November, I think the story could change a little bit.
So Blue Oyster Cult is upset? I didn't know about this. We got a statement from the band. Let's clarify a few things. It says Blue Oyster Cult was not contacted or notified in advance. The copyright in the song, Don't Fear the Reaper, is 100% owned by Sony Music. Blue Oyster Cult has no legal right to either authorize or withhold usage, which is 100% controlled by Sony Music, in caps. Think that's coming down?
When you said that, I was afraid that they were complaining about our references.
Well, sometimes they do that.
But, I think, honestly, when it comes to all of this, is that, expect more rhetoric from the White House that is just designed to put pressure on Democrats. Because ultimately, like I said before, both sides think that they have the moral high ground here. Yes. And when both sides have the moral high ground,
it's a true standoff.
It's like my children refusing to say sorry to each other. They just stand there and they just wait for dad to figure it out. And we just have to go through the motions.
Well, it's like this show. We're waiting for dad to figure it out. Did you coach soccer this weekend?
I coached flag football.
Flag football. Did you win?
We did. We ran a no-huddle offense.
Hey, how about that, right?
Yep.
I hear James is running odds on you guys now. This is becoming a pretty big deal. So you're back to work today. Some people are back to work without pay. You've pointed out 2 inflection points here, 2 dates. The 10th is when feds missed the first cycle The 15th is the military pay cycle.
Yep.
They will be both made whole when it reopens, correct?
Well, I'd say 100% of the time. I'd say 99% before any other government shutdown.
Yeah.
I'd be at like a 90%. And look, that's not an official odd. That's just my thinking.
Yes.
You can't guarantee it, but I do think that
that's how
I
this
think
tends to
everybody
work.
Yeah, I think everybody would get
It's
their
that
pay.
second deadline after we saw the president down there in Norfolk talking to the sailors yesterday. I don't know what the exact quote is, but I'll make sure you get every penny that you're missing. Lawmakers don't want that to have to be back pay.
No, and that's why I think Speaker Johnson is keeping the House Republicans out right now because, look, when they come here to Washington, part of their job is to talk to the media. And when you have media asking them questions, including how are you getting paid? But when the military is not getting paid, then you get some awkward moments. So keeping them back in their districts, resolve some of that. And so, but at the end of the day, there are going to be stories coming out about military members not getting paid. And I'll just say that, like, the number one question we got this morning was, will the TSA keep operating? Yes, they're going to keep operating.
That's the number one question.
We had a
by
lot of
Bloomberg
clients going on business trips
How
this
about
weekend.
that? Well,
so-
listen, those are our people.
Yeah.
If you're an air traffic controller, you're being forced to work 60 hours a week without a paycheck, though, at some point.
That's
here, right?
correct. Same with the TSA agents. Our advice to them was obviously be a little bit nicer when you're on the line.
That's good.
But, when it comes to the government workers, the biggest, impact we have on this is just really, do they get their back pay? And from the contractor perspective, we're not seeing it really in the large defense contractor space or even just the large contractors like Sodexo and so forth, because most of their government contracts are on a 2 to 3 year cycle.
Okay.
So yes, if you are trying to negotiate a new contract right now, nobody's working, you can't do that. But, you're not going to see this really reflect the contractor equity prices, I think, until we get into this like 1 to 2, 3 month shutdown. If that's the case, then I think you're going to begin to see headline risk.
Fascinating. What do you think that Navy display cost yesterday? That's all paid for separately, right?
Oh, I wouldn't even know. I'd have
gas alone must. I mean, I can't imagine the bill. It must have been very cool to be there as well. But when you think about lawmakers at Sea Island Resort playing pickleball and golf and drinking wine and taking money from donors, there wasn't even a suggestion that that be canceled last weekend. Do the politics around that not matter to people? That would be the ultimate example of people not caring that we shut down.
Well, I think we have a lot of time between now and November. I mean, if you think about when we go into the voting booth on November, are we going to be thinking about what happened back in October of 2025?
Yeah.
I would just argue, and obviously I'm not a political scientist, but I would just think that most of the ideas that are within the minds of voters are within 3 to 5 months prior to the election. So I think, the political calculus of having that event in Sea Island is, look, we still need to raise money because it's going to cost money to run for the election.
That's right.
The government's going to reopen soon, and any political price we pay, and this even goes to the party that ultimately loses less on the shutdown or loses more on the shutdown. When the Republicans had this issue back in 2013, Senator Ted Cruz led this crusade to shut the government down. The Republicans did pretty well in 2014. So, we still have lots of time.
Well, we sure do, and we're lucky to have you with us here. Nathan Dean of Bloomberg Intelligence, your podcast just dropped, I'm guessing, or it's about to. Find it on the Balance of Power podcast feed and get Nathan's Monday briefing just like all of his clients do. Fascinating. If the Smithsonian closes, you can't see Fonzie's jacket. You can always get this guy and the BI Fleece Vest. Thanks to our friend Nathan Dean. We'll assemble the panel coming up next. Rick Davis and Jeannie Shanzano are with us on the Monday edition of Balance of Power, only on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Just getting word that President Trump had talks today with Brazil's president. They discussed the economy and trade. And on Truth Social, the president said he had, quote, a good call, and he will be having further talks with Brazil and will meet soon with Lula. Right now, we have got the Dow lower, S&P, NASDAQ. They continue to advance. A rally in chip makers sending stocks to records as Advanced Micro Devices deal with OpenAI adds fuel to the AI frenzy that has powered the bull market. Right now, AMD is up by 27.4%. The S&P up 0.3%. The S&P up 23. The Dow, though, in the red, down 135, drop there of 0.3%. NASDAQ up 149 for the NASDAQ Composite Index, a gain of 0.6%. 10-year yield at 4.15%, with the 2-year currently yielding 3.59%. Gold is up $66 the ounce. Spot gold up 1.7%, now at a record $39.53. West Texas Intermediate crude 61.84 a barrel. WTI up 1.6%. Bitcoin up 2% at 125,223 on Bitcoin. Fifth Third Bank Corp has agreed to buy Comerica for about $10.9 billion in stock. Fifth Third down 2.2%. Comerica is surging 13%. Bloomberg spoke this morning with Fifth Third CEO Tim Spence, and he told us he does not see any potential regulatory issues coming out of Washington.
Certainly, the indications that there are accelerated merger approvals are an important consideration here. With that said, Fifth Third was approved to bid on the failed banks in 2023. I'm pretty confident we could have gotten a deal approved, in the prior administration as well. It's just nice to know that the process here will be fact-based, but expedient if recent outcomes are any guide.
You can watch the full conversation with Fifth Third CEO Tim Spence on YouTube on the Bloomberg podcast channel. So a $10.9 billion deal kicking off the week. It will create the 9th largest bank in the United States. Again, Fifth Third down 2.2%. Comerica up by 12.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, good to have Charlie Pellet at World Headquarters in New York. You need him on that wall, and he'll have more on the markets coming up at the top of the hour. 1 p.m. Eastern Time. The great Charlie Pellet, the voice of Wall Street and the New York subway. Did you know that? That's who's talking to you every day here on Balance of Power. Glad you're with us on the Monday edition. I'm Joe Matthew in Washington, where we've got eyes on courts once again as the president tries to deploy National Guard troops to a couple of different cities, Portland, Oregon, Chicago, Illinois. Neither of those should sound new to you if you're with us here on Balance of Power. Enter U.S. District Judge Karen Immergut. No snowflake. If you look at the resume, in fact, an experienced federal prosecutor, worked for Ken Starr. This is the good old days on the Clinton impeachment. Literally interviewed Monica Lewinsky in 1998, as I read in the playbook this morning, and was appointed as a district judge by a president named Donald Trump in 2019. Twice now ruling against the administration in just 2 days against this deployment. The president wants to send 200 National Guard troops into Portland, which he says is burning to the ground. We've got the president here talking about this, about the judges specifically, in this case, when he appointed. Let's listen.
I wasn't served well by the people that pick judges, I can tell you. Things like that are just too bad. I appointed the judge, and he goes like that. So I wasn't served well. Obviously, I don't know the judge. But if he made that kind of a decision, Portland is burning to the ground. You have agitators, insurrectionists. All you have to do is look at the television, turn on your television.
Wasn't served well by the people. Pick the judges. I appointed the judge, he says, goes like that, so I wasn't served well. Stephen Miller was yelling about it on cable news over the weekend, and this is going to set up a big legal clash over the deployment of these troops, which is where we start our conversation with our panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis coming in hot off the weekend. Jeannie is Democracy Visiting Fellow at Harvard Kennedy School's Ash Center. Rick, a Republican strategist and partner at Stone Court Capital. The way he talks about Judge Immergut, Jeannie, you would think that this was an Obama-appointed judge. But the idea of going into multiple cities now, and it looks like the model that was set in D.C. and in L.A. is something that, well, according to Stephen Miller, they want to try in all 50 states. So how important will be this next ruling?
Well, I wonder if Donald Trump realizes that the judge is indeed a woman, not a man. I heard that clip there, and he keeps saying he, but it is a woman who he appointed. And in all fairness, no president can know all the judges they appoint. And I love the end of the clip when he talks about, you know, just look at television, which is very, very much how Donald Trump seems to run his life. But a federal judge can't just look at television. A federal judge has to look at the facts before them. And the facts before her were from the Portland Police Department, officials in Oregon, security forces in Oregon, all of whom said the same thing. There is not an invasion in Oregon, nor is there urban decay. At most, the protests in the last few weeks have been 20 people per night that the Portland police are well situated to handle. And so she rejected the claim. Of course, then they tried to back end around, and she rejected it again and said it's untethered from reality, meaning that the idea that there is so much chaos, you need to federalize the National Guard. There's just no evidence for that. So the judges can't really just look at TV and make a decision. They have to look at the facts, and the facts don't support this nationalization of National Guard troops.
What do you think about this moment in time, Rick? We saw L.A. That was kind of its own isolated experience. Washington, D.C. up the ante, but it was the federal city. These rulings that we're seeing now, 2 over the weekend, 1 looming now from an appeals court, could determine what happens in a lot of other American cities. Is that how you see it?
Yeah, I think that we're headed down kind of a slippery slope on the constitutionality, the legality of deploying troops from, in this case, Texas, to quell protests in cities like Chicago and Portland. It really does sort of stress out your common sense. Why in the world would you need to bring these guys, call them up, get them to leave their jobs and their families in Texas to go fight with protesters in cities that they have nothing to do with. And that's just the common sense side. Then you have Stephen Miller publicly, talking about how this judge, a Trump-appointed judge, as Jeannie points out, is somehow violating the constitutional order and, bumping up against the supremacy clause of the president. Things have got to be tough at the White House when your chief spokesman is Stephen Miller. He has a way about him that is one way or the highway. And American public is all about fairness. They love the teams that come from behind. They want to treat their neighbors with respect. And I think it's only a matter of time where this starts to get picked up in the polling data. It starts to cut against the president's numbers on immigration, because a lot of the premise here is that the protesters or the violence that's happening in these cities is being perpetrated by illegal immigrants. And at the end of the day, this is a narrow thread to pull for this administration. And if they pull too hard, they might find it breaking and losing the support of the American public because of the confusion that they've wrought in this policy.
Jeannie, when we talk about invasions, when we talk about domestic terrorism, and I'm looking at Stephen Miller's tweet in which she said the president won in a colossal landslide, therefore has an absolute moral and constitutional duty to follow through, calling the ICE protesters in American cities domestic terrorism. We just came off a couple weeks ago another terrible spat of political violence in this country that was blamed squarely on rhetoric, and in the eyes of this administration, rhetoric from the left. How do we rationalize this approach now?
Yeah, it's hard to rationalize. I think it was Stephen Miller over the weekend who also, in addition to what you said, he also used the term, described what's going on as a legal insurrection. And of course, insurrection has that is a very serious crime that you are accusing federal judges of. We shouldn't lose sight of the fact that as the first Monday in October, this is also the opening of the Supreme Court's term. And so many of these questions about federal power, especially executive power, will be addressed by that court. But the reality is that there are justifications for nationalizing the federal guard. The problem is no judge yet has found those justifications have been met at the district level. We did see the Ninth Circuit at the appellate level. These things have to be debated in court, and the administration has to prove that there is a reason for doing this. And I think one of the most chilling things I heard over the weekend came from the Minneapolis Star-Tribune. They had some terrific reporting about administration official out there using Signal again to talk about the Homeland Security sending in the 82nd Airborne into cities like Portland and like Chicago. Now, this is a report out of the Minneapolis Star-Tribune. It has to be verified by other networks, et cetera. But one of the chilling things about this was apparently, according to their reporting, Pete Hegseth was not convinced they should do this, and yet they should send in the National Guard instead. In other words, what we're seeing now as so concerning about the National Guard is not only the tip of the iceberg about what people like Stephen Miller are talking about when it comes to sending in troops into American cities. And to Rick's point, this is not something that American public is likely going to welcome with open arms. And it's also something that flies in the face of everything the Republican Party has said for years and decades when it comes to states' rights. So there's a lot here. And I think Stephen Miller has a problem of overreading an election win. And in doing so, he threatens to undermine the president's good poll numbers on immigration and crime.
You know, we heard from the mayor of Chicago as well. The deployment has not begun there, at least in a real way, but it could be coming. And Texas has offered some National Guard troops to help out in that end. But I want to bring everybody back to last week for a moment when the president was speaking at Quantico. Pete Hegseth was there as well. Remember, he talked about using American cities as training grounds for the U.S. military. The quote, though, was to help quell an enemy within, quote, no different than a foreign enemy, he said, but more difficult in many ways because they don't wear uniforms. This is a direct quote. At least when they're wearing a uniform, he said, you can take them out, unquote. Mayor of Chicago, Brandon Johnson, listen.
If we break the law, you should be held accountable. If Congress will not check this administration, then Chicago will. For now, let me just say that we are unequivocally going to continue to reject the military occupation of our city. The Trump administration must end the war on Chicago. The Trump administration must end this war against Americans. The Trump administration must end its attempt to dismantle our democracy.
What do you make of this rhetoric, Rick? At least when they're wearing a uniform, you can take them out. But you hear the mayor of Chicago, he does make it sound like a president that is aiming at his own people. How about you?
Yeah, it's tough to legitimatize. Treating Americans as sort of counterinsurgency strategies is really not gonna meet the moment. You started out talking a little bit on this segment about political violence. We've seen it cropping up almost on a daily basis now since we focused in on Charlie Kirk's killing. And I don't see any effort on the part of this administration to try and tamp down that political violence, something they made great theater around at the time of Charlie's killing, but subsequently seem to only be stoking it up. I mean, I really do worry that people in these cities who are law-abiding citizens, whose lives are going to be turned upside down by the presence of federal troops in their cities, are going to start to react in a way that is more violent. I mean, we're not deconflicting; we're increasing the temperature, and that's something right now this country sorely needs a rest from. So I don't know. It'll be interesting to see if cooler heads prevail in the administration. If Stephen Miller's writing the script, it's going to be a dark day.
Boy, some honesty from Rick and Jeannie. They'll be back in our second hour as we welcome our global television audience to the conversation. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis back with more ahead, and we'll get into the shutdown and what's happening here on Capitol Hill with these two. It's day 6 of the shutdown, by the way. Nicole Malliotakis of New York will be with us coming up on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew.
Day 6 of the shutdown. Welcome to the Monday edition as senators prepare to vote once again on stopgap measures that are expected to fail once again. That'll all happen before the day is out here. And we'll bring you live to Capitol Hill in a moment for a report from Bloomberg's Eric Wasson. Insights ahead from Republican Congresswoman Nicole Malliotakis of New York. They're home for another week in the House, and peace talks are beginning in Cairo over a possible ceasefire in Gaza. You may have thought there was a deal in place. We'll talk about it with David Hale at the Wilson Center. Our panel, Bloomberg Politics contributors Rick Davis and Jeannie Shanzano, and it's all after a look at Wall Street. Let's check on the Monday trade right now with some big headlines to cover. Charlie Pellet has that for us in a Bloomberg Business Flash live from New York. Charlie?
Hi, thank you very much, Joe Matthew. Day 6 of the shutdown. Stocks continue to push higher. We're holding close to a record on the S&P right now, up 25 at 67.41 for the S&P 500 index. A gain right now of 0.4%. We do have that rally in chip makers. That is sending stocks to records. Advanced Micro Devices deal with OpenAI is adding fuel to the AI frenzy that has been powering the bull market. AMD, by the way, up by 26.7%. S&P at a record 67.40. We're off session highs, but very close to it, up 25 now, up by about 0.4%. The Dow lower by 123. Dow Industrials down 0.3%. The Nasdaq Composite Index up 160. For Nasdaq, a gain of 0.7%. Our Mag 7 Index doing a little bit better, up right now by 1%. The 10-year, 4.15%, with the 2-year that's currently yielding 3.59%. Gold is surging $68 the ounce, now at a record $39.55, up 1.8%. West Texas Intermediate crude up 1.3%, $61.64 a barrel. And Bitcoin now up by 2.2%, $125,459 on Bitcoin. Advanced Micro Devices shares soaring after the chipmaker signed a deal with OpenAI for AI infrastructure that could generate tens of billions of dollars in new revenue. AMD up by 26.5%. And Fifth Third Bancorp has agreed to buy Comerica for about $10.9 billion in stock. It is the largest bank deal this year. Fifth Third down 1.9%. Comerica is up by 13.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Balance of Power continues, the Monday edition. Once again, your host, Joe Matthew.
You said it, Charlie. The voice of Wall Street and the New York subway live on Bloomberg. Charlie will have more on stocks coming up in just about 20 minutes here as we follow the beat in Washington. On, day 6, and we knew that would be the case, and we said goodnight Friday. We told you the government would still be shut down on Monday. Not a shocker here because they did take the weekend. Now it's another round of voting today that's supposed to look just like what happened on Friday. About 5:30, we understand that'll be the late edition of Balance of Power. It's the same CR, the same clean Republican CR, and the Democratic version that has other elements that are considered toxic by Republicans. The conversation's not changed. Everyone still thinks they have the moral high ground, and there's no deal in sight. The House, by the way, is going to hang for another week before they come back. Speaker Mike Johnson made that announcement on Friday, right? They're waiting for the Senate to take care of this, so why bring the members back here to sit around and watch? He spoke earlier today, as a matter of fact. The Speaker is in Washington. Here's Mike Johnson.
We have one plea and one plea alone. We need a handful of Democrats to stop the madness, reopen the government so that we can get to these critical debates about the year-end policy decisions with regard to the further reforms to health care. Plain and simple. I'm anxious to get my folks back. And look, I want to bring the House back into session and get back to work, but we can't do it till they turn the lights back on.
Keeping the lights back on, interesting, or getting them back on. Remember how many Democrats here on the program said, sure, we can close the government, but we need to have a plan to reopen it. And there still doesn't seem to be one. Eric Wasson is certainly looking. Bloomberg congressional reporter hasn't missed a beat up there, and he's back on the Hill today with us now live on Bloomberg TV and radio. It's like Groundhog Day up there, right, Eric?
Yeah, it looks to be. It looks like the votes will fail again, barring some last-minute surprise. And, we had a story on the terminal today. The White House is signaling if this Monday vote does go down, they're prepared to announce and unleash a round of mass firings. Not entirely sure what agencies would be targeted, or even if that's an empty threat. We know from past experience that, layoffs do require a lot of paperwork. Human resources would have had to been working overtime over the weekend to prepare and make sure these are legally bulletproof. But that could be the big development today if there are mass firings. We're also looking to see if moderates are any closer to some kind of off-ramp for Democrats. I talked to well-placed source earlier today who said that they're trying to entice just enough Democrats, 5 Democrats, to come over and vote for the stopgap bill by saying, look, we'll pass some of these regular appropriations bills. There's what's called a minibus funding the agricultural, Veterans Affairs, and other departments. We could pass that. Maybe pair the defense bill with the labor, health, and human services bill. You know, that has a big increase for the National Institutes of Health. So that Democrats could say, okay, look, we fought Trump's attempts to cut medical research. So far, that's not getting enough traction. Democrats are still saying, look, we have the larger issue of the Obamacare subsidies, and that has to be addressed in some way, not just a vague promise to deal with it later before we can sign on.
Boy, all right. Well, I don't know if we're going to get a layoff announcement here today, but I just wonder about the 2 dates that everyone's looking at, Eric. The 10th is when federal workers start missing a pay cycle. The 15th would be for members of the military. Would those compel a couple of Democrats to cross the aisle and get this done?
I think it's certainly a very motivating factor, and certainly economic terms. We start to see missed paychecks, real ramifications to GDP start to pile up. The Trump shutdown in 2019 really ended when air traffic controllers said they're not going to work anymore without pay and started to threaten to close down the skies. At some point, you do have essential workers say, look, this is enough. So that could add some pressure. If we go beyond that, though, both sides may even feel they want to dig in. So I think there's a real feeling, we talked to Mike Rounds, who's one of these moderate Republicans trying to negotiate some kind of near-term deal and also a deal on Obamacare subsidies, saying, look, this drags out. The rhetoric could get even more heated. Let's do something now. So far, that plea is falling on deaf ears, at least here in the Senate.
You mentioned the Obamacare subsidies, which is something we certainly chewed on a lot last week. Eric, whether we get there or not in terms of this continuing resolution, and maybe there's a promise to get an up or down vote on Obamacare subsidies, but what makes us think the government won't just be headed for another shutdown at the end of the year here if we can barely get this done now?
It's certainly a possibility, and I feel like, Republicans are hoping they kind of break Chuck Schumer here. If Chuck Schumer sees a defection of Democrats, and is unable to hold the line, then his, future threats, perhaps in December or even beyond, of not, voting for a spending bill may ring hollow. We're also looking into the possibility that the Senate could change its rules. It's done so for nominees. It could change its rules to say, for example, a stopgap spending bill in the event of a shutdown only requires a simple majority. But there's certainly some experts who believe that would be the end of the legislative filibuster. And Republicans are loath to really go that far, because then we'll see perhaps Democrats come in one day and make D.C. a state, Puerto Rico a state, do other things without the threat of a filibuster holding them up.
Keep hearing about a jailbreak, Eric. Right? You got Fetterman, Cortez Masto, King. That means they'd only need a handful more Democrats here. You don't have to have a grand bargain if you can peel off a couple more names, right?
Right, and that's why they're really looking at certain appropriators like Gene Shaheen, people who know that buried in these appropriations bills, there are potential victories for Democrats. There is a potential pushback on White House Budget Director Russ Vought, who's wanted to slash all of these federal jobs. If the appropriations process goes forward and passes higher spending levels for agencies like the NIH, like the Department of Education, then you certainly have a case to go to the Supreme Court and say Congress intended these to be fully staffed. In the absence of any bills, certainly the White House is going to see a lot more flexibility and certainly see its court case before the Supreme Court enhanced. So there is that argument in the backdrop, but the ACA issue is so paramount, and a real sense among Democrats that because as we reported, some 70 to 80% of recipients of Obamacare subsidies are in Republican-won states, that the Republicans will come around on that. We're also looking to see where a deal could be. There's some reporting we're trying to confirm that there's a White House proposal to only allow previous enrollees to get the subsidies, sort of capping and ending the program. We'll see if that plays out.
Eric Wasson, great to have you, Bloomberg congressional reporter, with us live from Capitol Hill. To think we're still talking about this, and maybe we will be a week from today. We thought it would be smart with the idea of a jailbreak at hand here. Apologies to Thin Lizzy. To speak with someone who's actually in the middle of it, Republican Nicole Malliotakis from New York's 11th District joins us now. Congresswoman, it's great to have you back on Bloomberg TV and radio. I know you were probably planning to start packing to return to Washington until just on Friday when the Speaker said it would be another week. So the House is clearly letting go of the reins, saying, we passed the bill, now you guys figure it out, get enough Democrats on board. Is that the most likely way for this to end, that you peel off a couple more Democrats, or does there need to be some sort of agreement in principle on Obamacare subsidies?
Well, this was already the negotiated bill that we passed out of the House of Representatives. Remember, this is a continuation of existing funding levels that Senator Schumer himself negotiated last year, voted for, and then Senate Democrats joined in a bipartisan fashion to extend it 3 times since then. So the idea that they don't want to vote for it now and they were willing to shut down the government was not only a surprise, but I think it was a really bad move on their part, because as you mentioned in your report, it's difficult to get out of this now. And the Senate keeps bringing up the same bill over and over, hoping that 5 rational Democrats will just vote for the same bill that they voted for 4 times already. That is the easiest way to get out of this. And I think it's the way it's going to likely we're going to get out of this. But in the meantime, you're seeing a lot of pressures in the districts. We're seeing, military will not be paid on the 15th. We're seeing the women in infant and children's program will run out of money. That's a nutritional program that is very important to many of our constituents. You're going to see probably delays at the airport as a result of TSA agents who are not getting paid, being frustrated. And you'll probably see a lot of other things unfolding, and the economic impact, of course. The GDP will be affected. Consumer spending will be affected. This is costing the taxpayers $400 million a day. And it's unfortunate that we came to this point. It was absolutely unnecessary. All we needed were the 7 Democrats to join the 53 Republicans to get the 60 votes necessary to pass this bill, just like they've done before.
And to think that the Democratic leader in the Senate is from your state, and you're surrounded by Democrats in New York, maybe not in your district, Congresswoman, but what are you hearing when the cameras are off and guys like me are not around? Will there be some common ground here at some point? Do you see an off-ramp?
I hope there will be, but it's completely in their hands at this point. Remember, this passed out of the House on the 19th. And if Senator Schumer should just vote for the same bill that he supported 4 times before. And the impact here in New York, it's 61,000 military personnel that won't be paid. I went around the district. Our VA hospital, thankfully, is operating as it always is. The clinic on Staten Island is running smoothly as well. The national parks are all clean. I took a look to see if we had any maintenance issues as a result of the furloughs. We don't at this time. But people, I think, will start feeling it more and more as time goes by. And what has changed since the 4 times that Chuck Schumer supported these funding levels that he himself negotiated? The only thing that has changed is President Trump is now the president. We know that they don't like him and they want to, do this to I think, put pressure on President Trump. And the other thing that changed was that Alexandria Ocasio-Cortez and the left wing of the Democrat Party threatened to primary Senator Schumer. Those are the only 2 things that have changed here. Everything else remained the same, including the text in the bill. Now, they're trying to add other types of outside policy initiatives into this clean funding bill. If the tables were turned and Republicans were trying to jam outside policy, the scrutiny from the media and the public would be outrageous. So I just ask people to be honest about what's going on here and say, look, there's nothing wrong with the clean extension of the funding levels that Senator Schumer negotiated and voted for 4 times. He should just give the 7 votes. Let's open the government, and then we can have a serious discussion about some of the other policies, which I agree on some level that we need to do something about, certainly the Affordable Care Act, because it is not affordable as they sold us when it passed. And we could talk about some of those other subsidy issues, but we will not accept by any means $200 billion going to states that make its way to fund illegal immigrant health care. We will just not accept that. That is not negotiable.
Well, okay, so there's a lot there, Congresswoman, but I still feel like I heard the glimmer there at one point that there would be some common ground if the government reopens. With regard to illegal immigrants making their way to hospitals, and the way that you said that, by the way, is duly noted. This is money that comes from the federal government. States use it as sort of a fund to help hospitals from going out of business if people can't pay for their care. What's the option, though? You let them bleed out on the street?
Well, no, but first of all, this should be on the states. The federal taxpayers should not be paying for the sanctuary policies at the state and local level. That's number one. Number two, our emergency rooms should not be utilized for common colds and other things that they have been, which leads to tremendous overcrowding and actually hurts people who are in serious emergencies. They should be going to a clinic, one of the local health centers, and paying out of pocket if they have a common cold or something else. So let's differentiate and make sure that people understand that they are going for emergency hospitals when it's not an emergency.
For
and the
routine
taxpayer
services,
is picking
understood.
up the bill, which is a tremendous burden. In New York
I
alone,
appreciate
it's about
a thoughtful answer on that,
500,000.
Congresswoman. Yeah, the numbers are staggering. I completely understand. I want to ask you about what Russ Vought is talking about and whether an RIF, if that happens tonight, the White House says it could come after this failed vote, if that is in fact what takes place this afternoon. Does that make it more difficult for frontline Republican lawmakers in blue states like yourself? Or does it make it more difficult to get a deal here in Washington?
Look, I think there's no easy answer here, but the reality is that the taxpayers are paying $400 million a day to pay for individuals who are currently furloughed, not reporting for work. And so if Senator Schumer continues this shutdown, we're gonna see the consequences of that. You probably will see some action taken to try to save the taxpayer money. Now, all of this, again, can be ended today because at 5:30 there will be another vote, and they can just vote for the same bill they voted for 4 times, and this is over, and this type of pain will be prevented. And so far, our military personnel have not missed a paycheck because they'll be paid on the 15th. They were paid on October 1st, but they won't be paid on October 15th. And so that's an important deadline as well. We're hopeful that if we can't come to some type of resolution, that Speaker Johnson will bring us back to at least vote for a bill that I'm proudly co-sponsoring that would allow for our military troops to be paid. And you should also know that many members, including myself, have asked the Treasury to withhold our paychecks to be in solidarity with our military men and women. So we're hoping to get this resolved. Again, Senator Schumer is the one that really has the power right now to end this. And then we can talk about the subsidies. If you want to get into that further, I'm happy to discuss it. But the reality is that the insurance companies have profited 230% increase since the Affordable Care Act has passed. The Affordable Care Act was not affordable by any means, and it has put tremendous stress on the taxpayers who are paying those subsidies to insurance companies, not actual individuals.
Understood. Well, I would love to talk to you more about it, and you're always welcome here, Congresswoman. It's good to have you back. Really important legislation that you just mentioned that would, in fact, fund military paychecks. We'll talk more to Congresswoman Malliotakis about that here on Balance of Power. I'm Joe Matthew in Washington. Our panel's up next, only here on Bloomberg.
Wall Street. We do check markets all day long here at Bloomberg. We got a record for the S&P 500 index, now at 6743. The Dow lower. NASDAQ also trading at a record, up another 166 on the NASDAQ Composite Index. NASDAQ up by 0.7%, keeping it all in context. S&P right now up by 0.4%, while the Dow Jones Industrial Average is slumping. Right now we have got the Dow down by about 0.2%. A rally in chip makers is sending stocks to records as Advanced Micro Devices deal with OpenAI adds fuel to the AI frenzy. Advanced Micro Devices up by almost 28%. 10 years currently yielding 4.15% with the 2-year 3.59%. Gold at $39.55 the ounce. Spot gold up 1.7%. And West Texas Intermediate crude oil up 1.2%, 61.61 a barrel. Bitcoin up 2.4%, 125,754 right now on Bitcoin. Paramount Skydance has officially announced that it will acquire the online news site The Free Press and put founder Barry Weiss in the role of editor-in-chief of CBS News, a move likely to stir controversy inside and outside of the news organization. Shares of Paramount Skydance, PSKY on the ticker, they're up by about 0.2%. Recapping, S&P up 28. That is a gain of 0.4%. S&P right now, best level of the day. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet. Yes, here in Washington, where everyone thinks they're right. In fact, they're sure of it. And that's why your federal government is closed. Moral high ground being invoked on both sides of the aisle. Democrats looking at polls just on Friday, and I talked to a couple of them saying, hey, see, look at this. We've got the public with us here on this. We're not scared of Mike Johnson. Mike Johnson's so confident, he told the membership to stay home for another week. We just spoke with Nicole Malliotakis. She was in New York. As senators return to work today with more voting in mind, about 4 hours from now, 5:30 p.m. Eastern, we expect the same ritual that we saw multiple days last week with votes on continuing resolutions, both versions set to fail. We'll see if they pick off another couple of Democrats. Looks like they're going to put the boardroom back together. The apprentice set will be reassembled for Thursday. We've got a cabinet meeting. Just learning about this, by the way, from Press Secretary Caroline Leavitt. She's in the briefing right now and making a couple of headlines here. There you can see her on Bloomberg TV and on YouTube. Couple headlines here. Not only will there be a cabinet meeting on Thursday, but the president is also going to be meeting with the president of Finland, President Stubb, who was here on Bloomberg just a couple of weeks ago during the United Nations General Assembly. Thursday is going to be a busy day at the White House. Just file that away for now. We'll have more on that. As Caroline Leavitt also adds, the Office of Management and Budget, that's Russ Vought, continues to work with agencies on layoffs. Spoke with the Senate Majority Leader. The President spoke with John Thune earlier today. I'm just getting this in real time here as we kind of get a sense of what might happen this week, if anything different than what happened last week. We're going to see these votes on the daily, according to John Thune. Would do it 5 times in a row as he tries to bring members to the table here. And if you don't like it, well, you're going to have to vote against it day after day as the government sits closed. Let's assemble our panel. Rick Davis and Jeannie Shanzano back together today, Bloomberg Politics contributors. Rick is our Republican strategist and partner at Stone Court Capital. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick, you just heard from Nicole Malliotakis, and it just kind of reasserts everything that we've been saying. Democrats and Republicans both think they're right, which means that we could be having this conversation next Monday as well. You think?
Yeah, I think that right now there doesn't seem to be a clear path to get government open again. But I would say it's not getting a lot of attention, but there was an interesting conversation with the ranking Democrat on the Senate Appropriations Committee, Patty Murray, and the Speaker. And Patty Murray basically said, look, if we let the government get back open, you're going to immediately take up, the 3 appropriation bills that we have. Is that correct? And he confirmed that. He said, you open up government, we'll start processing these appropriations bills. Of course, those are the framework with which you would do some changes to fix the ACA issue that the Democrats are holding out for. So I would say that it's unusual for the ranking Democrat on appropriations to call the speaker and get reassurances like that. But I see that as a mechanism, not a policy that will change the outcome of the shutdown, but a process that Democrats could use to then say, okay, we have a commitment to negotiate these ACA subsidies, and we have a commitment to put them on the agriculture bill that's going through the appropriations process and could have a vote in the House in a week. So I do, there's an inkling there that something's happening between the chambers that could be productive for getting this shutdown fixed.
Interesting. I mean, Rick's eventually going to have to be right, Jeannie, whether it's this week or next or whenever a deal like that emerges. But we could be in for a different world if the White House starts firing, right? Caroline Leavitt, again, says OMB continues to work with agencies on layoffs. This remains a threat and nothing more. But if we get, say, a failed vote at 5:30 today, or maybe it's tomorrow or Wednesday, and then the paper comes out, I guess it'll be on Truth Social, right? And then there'll be a document from the White House that with a number that says, we're laying off this many furloughed workers permanently. What does that do to the dynamic on Capitol Hill?
You know, I don't think we know yet. Certainly, the longer this drags on, the more pain that people feel. I thought Representative Maliotakis raised a point that, you know, a lot of people discuss at the water cooler, essentially, which is the irony that congressmen and women get paid during these shutdowns while members of the military don't. And of course, she said she was foregoing or attempting to forego her pay, as many are. But it just sort of underscores, as Americans look at a shutdown, and you add to that people not being paid, and then the potential that they could be permanently fired. These are very real pains that people feel, and a very real frustration on the part of Americans. You know, Joe, because I've told you many times, I think this was not a good move on the part of the Democrats. I think that elections have consequences. The Republicans won. They don't want to extend Obamacare subsidies, apparently, because they didn't do it in their big, beautiful bill. And what Democrats need to do is go to voters and say, throw them out of office in 2026, because their policies are devastating for healthcare. That's what should have happened. That's not what happened. And now we are in a whole heck of a lot of pain. Democracies run on elections, and elections have consequences. Democrats were right. Chuck Schumer was right in March. He is wrong today, and I wish they hadn't followed the Republicans down this 2012-2013 rabbit hole of trying to shut down the government over policy disagreements. It is never a policy winning way to do something. It's a messaging war, and that's what we're seeing today with the threats of of firings, which are again devastating for everybody involved.
Well, we were joking about cowbells on Friday, Rick. Does Russ Vought actually become the Grim Reaper this week, or these are empty threats?
Russ Vought, a.k.a. Grim Reaper by the White House's own standards.
Well, yeah.
Yeah, look, I mean, they like to do these showy things, right? And they like to do them with or without regard for the rules. So, yeah, OMB is working with the agencies to figure it out. They've fired hundreds of thousands of federal workers with the slimmest of rationale, and they wind up hiring a lot of them back. I do think there's a callousness in Congress now about this whole firing threat, because it just really hasn't actually worked. What's worked is the offers that they've made in the administration for early retirement. People have taken them, you know, and they're getting cash payouts, and, you know, it's kind of a trade. But the firings have really turned into just a mess for the administration. They've lost most of their challenges in court, and wind up hiring back most of the people they fired as a show me experience. So I don't think it's going to actually have the sort of really fearful shaking of Congress loose on this one. And then I think Congress knows, too, they've played poorly with the American public, these firings. And so, you know, go ahead, Donald Trump. turn loose the dogs of war and fire a bunch of these folks and see how well you're going to do in the midterms. So I don't think it's quite that callous, but I'm edging toward callousness on this whole issue.
Wow. You know, he probably, I'm sure, saw him speaking to the naval officers yesterday, and the rank and file, the sailors in Virginia, said, quote, "We will get our service members every last penny they are owed." Jeannie, with that said, how important is October 15th? That's the next pay cycle for the military. If the government's still closed by then, it's going to be a big talking point here in Washington. Does that dislodge a couple of Democrats to pass this bill?
It very well might. I think more likely to dislodge the Democrats is going to be really concerted conversations. That's the way these things are resolved, is conversations and promises on issues that they care about. So, but I do think the paycheck issue on the 10th and the 15th, and then again, the threat of firings is going to add a dose of pain that everybody's going to have to consider. I think we should also remember that it didn't take a shutdown for Donald Trump to fire a lot of people. It didn't take a shutdown for them to cancel a lot of contracts with blue states and blue cities. They are using this as an excuse, sort of a don't let a crisis go to waste. But they haven't needed any of that to play this game of firing and cutting as it pertains to states in blue areas. And I think we will likely see more of that, whether the government is open or not. But the reality is that they should not shut down the government, either side. And Republicans have done this for years over policy disputes. This is not the way you run a democratic country. It is not good policy. It is not good politics. And I do hope the voters punish people who are in favor of shutdowns, because this is not good for the long-term health of our democracy.
In our final moment here, Rick, what's going to be the feeling? Let's say we're shut down straight through the week inside the Russell Rotunda on Friday in advance of or immediately after that day's failing vote. You know what goes on in that building, the culture and the mentality. What's it going to feel like after another week of wash, rinse, repeat to no end?
Yeah, senators get frustrated just like everybody else. And if they're just doing these cattle calls where they come in, vote, and there hasn't been any movement, they haven't, Republicans haven't picked up a couple more Senate votes. We could be on the precipice if we only need 2 more votes, that kind of thing. But if it's not optimistic, then it's going to turn into drudgery quick. These are guys who love to have a lot going on all at one time, and they want progress too.
There you have it from Rick Davis and Jeannie Shanzano. Maybe a week from now, we'll be having the same conversation. We'll find out together, because this one it has a couple of different wrinkles here. We're going to be watching the votes at 5:30. We'll let you know what comes of them. And, of course, the White House with its threats for firing. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors. A great conversation. They'll be back on the late edition of Balance of Power when the voting has actually taken place. You want to join us starting at 5 p.m. Eastern. We'll turn back to the Gaza peace plan talks underway today in Cairo. David Hale with the Wilson Center, former Undersecretary of State, will
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Day 6 of the shutdown. Wall Street moves higher. Stocks are gaining. Right now, the S&P is at a record. We've got the S&P up 29 at 67.45, up by about 0.4%. The Dow, though, does remain lower, down 33, drop there of under 0.1%. Off session lows. NASDAQ up 172 for the NASDAQ Composite Index, also at a record up 0.8%. The Russell 2000 Index doing a little bit better. Small cap shares up now by 0.9%. The 10-year 4.15% with the 2-year, 3.59%. Spot gold up $67 the ounce to $39.54. Precious metal now up by 1.7%, looking at a record there. West Texas Intermediate crude up 1.3%, $61.70 a barrel. And Bitcoin up 2%. Bitcoin at $125,283 on Bitcoin. Verizon Communications has named Dan Schulman CEO, replacing Hans Vestberg, effective immediately. Schulman was previously the CEO of PayPal Holdings. Verizon shares, they're slumping today by 4.85%, indeed leading the down lower. T-Mobile, a rival, down 3.5%. AT&T down by 3.9%. Recapping, S&P trading at a record, up 0.3%. S&P up by 0.4%. Balance of power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, we do thank you. Charlie will have more on Wall Street coming up at the top of the hour. Watching the markets for us, 2 p.m. Eastern time, right around the time that Bloomberg Business Week Daily gets underway. We've had our eyes on a briefing at the White House. Press Secretary Caroline Leavitt holding forth, reminding us of a couple of important events that are coming up over the course of this week. A cabinet meeting along with a visit from the Finland president on Thursday. Mark Carney, Prime Minister of Canada, is going to be here tomorrow. So we're already building out a pretty busy week that is, of course, laid against the backdrop of a now 6-day-long government shutdown. There will be voting, if you're just joining us, likely in the 5 o'clock hour in the Senate. And the very same results is expected. They are likely to fail, so we'll meet on day 7. 2 of the big questions at the Red Sea resort of Sharm el-Sheikh today is whether Hamas will in fact free the hostages and whether Israel will withdraw from Gaza. In terms of the former, it's something President Trump talked about on his way out of town yesterday. Let's listen.
We had some very good meetings. The countries of the world, a lot of the countries surrounding Israel, frankly, Muslim, Arab, and many others have had great meetings with Hamas, and it looks like it's working.
We're joined by a voice of great experience on this matter, David Hale, Global Fellow with the Wilson Center and former Undersecretary of State for Political Affairs, former Special Envoy for Middle East Peace, 2011 to 13. I could keep going down the resume here. He was also Deputy Assistant Secretary of State for Israel, Egypt, and the Levant in 08-09, Director for Israel-Palestinian Affairs, 2001 to 2003. So, Mr. Ambassador, we've been looking forward to this conversation. It's good to see you.
Likewise, thank you.
I can only imagine the complex thoughts that you have right now based on your experience. But I go back to where we were last week, just to start off our conversation. Benjamin Netanyahu was in Washington. The American people in a room full, a state dining room full of media, were presented with what was called a deal. No questions were taken. Now, a week later, we're having talks. When people thought that the talks had resulted in a deal, where are we actually in this process?
Well, as always with this administration, things are kind of a little bit disorganized and not necessarily in keeping with conventional ways of doing business. But I think that the important thing to remember is that all these leaders were in New York during the annual opening of the UN General Assembly. So I imagine that behind the scenes there were a great deal of conversations that occurred between Arab leaders, Israel, European leaders, and Donald Trump and his team. So I wouldn't say that this was just, born yesterday. I think the plan has been in evolution. It's actually serious. It addresses the real issues that no one has been addressing about what the day after a ceasefire is going to look like. But it doesn't appear that Hamas was fully involved in this. And of course, they do have the gun to the head of the Israeli hostages. So we've got to get over yet again this obstacle of how do you get a ceasefire and prisoner exchange and deal with that problem.
Yes, right. The president says he wants them to act fast. knowing the Nobel Peace Prize will be announced on Friday. Maybe I shouldn't conflate those two, but is it possible for this to be taken care of this week if we're that far down the road?
It could be. It's not as if this hasn't been discussed forever and a day. I
Yes,
mean,
of course.
this over and over and over again. There's a split between Hamas. They have a more, perhaps realistic, I wouldn't say moderate, but realistic wing, the political wing in Qatar. I think the Turkish President Erdogan has been working on them and trying to convince them to go in. But the military side of the equation, Izzadin is in Gaza and calling the shots. And of course, their only leverage left are these hostages. So they want concrete guarantees about the day after, which the Israeli government is unlikely to provide. So the pressure that the president's applying is the right way to go about this. Pressure of time, pressure of military responses if the Hamas team doesn't react. And pressure is also coming probably from the Palestinian people themselves, who must be more than fed up with this.
You called this a serious plan. Is Hamas a serious player at the negotiating table?
Well, I think if this works, part of why it's going to be difficult to get Hamas to agree to release the hostages is that the plan deals them out.
Yeah.
Right? Politically, they will not have a say-so. And so that is a recognition of reality on the part of where the Israeli public is, even many Arabs, certainly the United States. But Hamas is going to have a hard time swallowing that. So I think that the fact of the matter is that their leaders, if they want to survive, have come to the point where it's time to move out of Gaza.
The accept the plan or all hell breaks loose mantra from the president would mean what if this didn't work out? I mean, you're literally bombing rubble at this point. Did they flood the tunnels? What else could be done by the IDF?
Well, I don't know. I'm sure they have their options. I mean, they were planning to move into Gaza City and occupy it, which would involve a frankly rather risky, building to building, block to block warfare, which I don't think any soldier would relish. So it's a real threat, but it's definitely plan B. I think plan A is that all of these various pressure points put on Hamas may make them finally do this deal. Now, they could get a lot out of it. I mean, if the equation is that, of course, a number of Palestinian prisoners would be released, including very prominent personalities, and the remains of the two Sinwar brothers who were assassinated by Israel.
We've got a bit of a headline crossing the terminal, a couple of them from President Trump, not related to what we're talking about. It's about tariffs. Beginning the 1st of November, all medium and heavy-duty trucks coming into the United States from other nations, he writes, will be tariffed at a rate of 25%. We'd heard about the tariff on heavy trucks. Having the November 1st date is news here. It just went red on the terminal, and it's a story that, of course, we'll be tracking throughout the day here. That meeting a week ago with Benjamin Netanyahu was obviously interesting timing. Did the president have to twist his arm to the extent that reports would suggest to get there?
Well, I don't know, but my guess is he did. I think that Prime Minister Netanyahu is very reluctant to remove the tool of military pressure on Hamas, and he has a right-wing element in his coalition that not only wants to exterminate Hamas militarily, but wants to permanently occupy and return settlements to Gaza. And so he has to balance these political equations. But we also see there's 70% support for this deal among the Israeli public. So I think for Netanyahu, it's maybe not as hard as people are projecting. But President Trump was clearly determined to do this. He's serious about it. And a forceful president like that can accomplish a great deal.
When you're dealing with the matter of hostages, kind of complicates a potential ceasefire here. And I'm wondering how, as a diplomat, how that plays into negotiations. Are there separate teams that work on that? And how formal should be the handing over of the hostages and the bodies of those who died?
Well, I found my stomach turning when I watched those initial images, the first hostage exchanges where the Hamas was allowed to basically exercise theater with these people who have been held in basements and so forth and had their colleagues killed. So hopefully it won't be formal. Hopefully it will be up to the normal international standards. There are lots of ways to do that. ICRC, the International Red Cross, can help with that. Red Crescent Society that honors and protects the dignity of the hostages. But President Trump, again, I worked in his first term. He puts hostage issues at the top of the agenda, Americans or other nationals, in ways that very few presidents in my experience have. And that's part, I think, of why he is so motivated to try to bring this tragedy to an end.
It's really interesting you bring that up. Whether he's talking about the hostages here, he always stops down and says, you know, the families, even with those who lost their loved ones, they still want the body back. He always comes back around to talk about how remarkable that is, to make that point. When you hear him talk about the war in Ukraine and the number of young men and women who are dying each week, he talks about the only thing that can stop a bullet is the human body, the terrible death, the tremendous death, as he puts it. Is this a man consumed with his own mortality or that of others?
I'll leave it to
I
others.
just asked you the wrong question. I find that to be a very compelling point of his personality and character that very few people probably are exposed to, but you worked for him.
Well, you may be onto something. I was just struck as a diplomat that often hostage issues are not always put at the top of the agenda.
How come?
It's just different presidents have different priorities. But this president clearly has prioritized it, perhaps for the reason you said, I don't know.
Yeah.
But what I will say is that his ability to apply leverage to get hostages out may clear the way then for what's even more important than the hostage issue, which is bringing this violence and this situation in Gaza and the insecurity for Israelis emanating from it to an end. Now, I'm not an optimist in the Middle East peace process. I think that optimism is, you have to have your head, examined if you're a total optimist about it. But again, this plan is not pie in the sky. The 20-point plan is about much more basic, realistic, getting basic governance in place with qualified Palestinians and international experts. It's about security provided by Arab states primarily and some international troops there to stabilize Gaza. But above all, it requires Hamas first and foremost to disarm.
Will we get to the end of this, assuming that this ends, and a great deal of credit will be owed to Jared Kushner? Did he end up playing a critical role here?
Well, I don't know again, but I think that the nuances of this plan suggest that somebody with the kind of prior experience that Jared had from the first term was probably involved.
Interesting.
And so my guess is that he probably helped shape it, and the fact that he's in Egypt helping Steve Witkoff with this is also a good sign. It demonstrates it redoubled presidential commitment to this. And presidential involvement in Middle East peace has become the coin of the realm. Without it, it's very hard to get anywhere.
Not right. How often has it been due? How usual or unusual is that to have someone who's actually not a member of the administration step in and provide the insights or the salve that's needed at that moment?
Yeah, it's happened less on Middle East peace, but I think back on Jimmy Carter's retired president going to North Korea.
That's right.
I think of Richardson similarly going to North Korea.
Yep.
You can go all the way back to FDR, even the Wilson administration. That a trusted aide and friend is respected by international partners if he also knows what he's doing.
Yeah, that's a fascinating component to all of this. We haven't talked about Iran. We haven't talked about Iran's proxies other than Hamas. When you consider Yemen, when you consider Hezbollah, will there be a fit of opposition, maybe violence, in the wake of a deal being struck? Because that would indicate that they're out of business, no?
I don't think the Iranians are in a position right now to mount the kind of violent opposition to peace process making that they did in the past. The Intifadas and so forth had a heavy hand of Iran. But they're lying low. They don't want to be whacked anymore. It doesn't mean they've given up. They assume we're going to lose interest at some point, walk away, and then they can rebuild their strength. I think you will find there are going to be elements in Gaza who do not want this. I'm not even sure Hamas is in full control of the bands of armed men who have emerged in the chaos there. And so it's going to be tough, and that's why a stabilization force is going to be required.
Absolutely. Bands of armed men. Whatever fills that vacuum could be actually making it an even more dangerous place, your point.
Yeah, which is one reason why the Israelis don't want a full pullout. That's why they've drawn this yellow line.
Boy, fascinating. If this meeting goes well today, do we meet again? What should be the next step?
Well, if this meeting's successful, then the hard work begins. I mean, we always think getting to agreement is the hard part. Actually, implementing often can be even more challenging.
Right.
So getting a ceasefire, making sure that there is a real hostage exchange, and that, above all, the disarmament of Hezbollah is for real and not pretend.
Well, really great conversation, and delighted that you could spend some time with us, David. He's Global Fellow with the Wilson Center, and I think I made clear his extensive background and experience in this area. Ambassador, thank you. David Hale, the Wilson Center, with us on Bloomberg TV and radio. I'm Joe Matthew in Washington. Great conversation today with our panel and all of our guests, and I'll meet you back here for more on the late edition of Balance of Power. That's when the rubber meets the road here. 5:30, we expect votes once again on the continuing resolutions, plural, that are expected to fail. Stay right here for Bloomberg Business Week Daily, and we'll get another check on stocks with Charlie Pellet straight ahead. Thanks for spending time with us on Balance of Power on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Carol Master, Tim Stanovic, live here at Bloomberg headquarters in New York City. I got to tell you, it's been so busy that I still have my gym clothes on. Yeah, I threw on a jacket.
That's the type of day it is.
It is just a lot coming at us. And I got to say, anything to do with the AI spend trend really fueling a rise in the semiconductor space. I should say, really kind of fueling a rise in a lot of names here, Tim.
Yeah, S&P 500 rising for a 7th straight day. We're going to have the details from Charlie Pellet in just a minute, but suffice it to say, another record day for the S&P 500. So this hour, Carol, we are going all in on what is happening when it comes to the AI trade. AMD CEO Lisa Su on the company's big deal. Or is it a big deal?
Or is it? I want to, there's a lot of money.
Investors certainly think it's a big deal.
Sloshing around. Yeah, that's a good point. We're going to get into that in just a moment. Also, some big news earlier today. Another government in turmoil as France's prime minister quits. President Macron was supposed to be speaking around this time in France, but it's not going to happen. There's a little bit of a delay. 48 hours. Clock is ticking. We'll get into what you need to know. French stocks, though, were under pressure overnight.
Also, from the Citadel Future of Global Markets Conference, we're going to hear from Jim Esposito, president of Citadel Securities. Also, partner at Sequoia, Constantine Buehler, joining us as well.
And then we're going to do a little bit of sports because business is sports. It's a big thing, folks. Rick Welch, CEO of the Dallas Mavericks, on kicking off a new NBA season, I should say, but also just about all of the money that is percolating around media coverage and so on and so forth when it has to do anything with some of the big teams. So we're going to get into that. First up, though, let's get to that trade, that record on Wall Street. Let's head on over to Charlie Pellet.
Very much. Day 6 of the government shutdown. Stocks push higher. We've got the Dow negative, but the S&P, NASDAQ, they are both advancing. A rally in chip makers is sending stocks to records as AMD's deal with OpenAI adds fuel to the AI frenzy that has powered the bull market. We'll have a whole lot more on AMD coming up for you just shortly right here on Bloomberg Business Week Daily. S&P right now up 30. We're looking at a record there, 67.46, up by about 0.5%. A retreat for the Dow, though, down 33, drop there of just under 0.1%. Verizon leading the Dow lower. Verizon shares, by the way, now down 5.2%. NASDAQ up 176. That is a gain of just about 0.8%. And our Mag 7 index pushing higher by 1%. 10-year yield at 4.15%, with a 2-year right now 3.59%. Spot gold up $72 the ounce. The precious metal up 1.9%. $39.59 on gold. West Texas Intermediate crude up 1.6%. $61.84 for a barrel of WTI. And Bitcoin also advancing to a record now at $125,000, trading higher by 2.1%. Fifth Third Bancorp has agreed to buy Comerica for about $10.9 billion in stock, the largest American bank deal this year, and a sign that the logjam blocking big mergers in the industry may have broken under the Trump administration's deregulation efforts. Shares of Fifth Third, they're down 1.1%. They are the acquirer. We've got Comerica, though, surging by 14.2%. Recapping, AMD up 26%, S&P up by 0.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, folks, you might have noticed some news out of Europe overnight. French stocks falling by the most since late August after Sébastien Lecornu unexpectedly resigned as prime minister, sparking worries about further political turmoil in the country. And then French President Emmanuel Macron asked his outgoing prime minister to negotiate a way to stabilize the government in the next 48 hours. It's just another, segment of geopolitical uncertainty that we are seeing certainly around the globe, Tim.
Fortunately, we got Stephen Carroll tracking the ins and outs. He's at the Bloomberg News Bureau in Paris. He's the host of Bloomberg Daybreak Europe, and he joins us from Paris. Stephen, France's equity benchmark, it's trailed European and U.S. peers since President Macron called that snap election. It was a little over a year ago, let's say a year and a half ago, June of 2024. Worries about political turmoil taking hold again this August. Investors have had their concerns. Is this what they've been fearing?
The short answer is not yet, and believe it or not, even though what's into feels like the 6th season finale of France this year, we're still not at a point where this is a fiscal crisis. It's still the same kind of political stalemate, and actually the latest development that Emmanuel Macron is giving the same man, Sébastien Lecornu, another 48 hours to try and come up with a sufficient coalition to be able to pass a budget, because that's what this is all about, tells us that we're not at the end of this season just yet. So essentially we're into another round of negotiations led by the same man speaking to the same people, hoping for a different result. What happened this morning is that those talks had fallen apart and Sébastien Lecornu became the shortest-lived prime minister in modern French history, just 27 days on the job. And actually, the ministers that were appointed last night became the shortest-serving ministers as well. Most of them were only in the job for just over 12 hours before they had resigned, effectively, because the government had fallen. So we're back into a sort of holding pattern for 48 hours. We know already that there are meetings planned for the Élysée Palace tomorrow morning with those parties who have been loosely dealing with Emmanuel Macron's party in France as well. The hope is that they will be able to do better this time round. There's been some caste changes in the cabinet that might help that process along. But where we'll end up by Wednesday evening is now the key question. Emmanuel Macron, and bear in mind we are deep in the annals of political spin here as well, has talked about taking responsibility if the parties can't agree by Wednesday evening. Now, what that means could be really anything that you can imagine. The options he has open to him is finding someone new for the job, so getting rid of Sébastien Lecornu for a second time, calling an election to the National Assembly, although polls indicate he probably wouldn't end up with a result that was that different, or even, in extremis, resigning himself, although that very much looks off the table for the moment.
Well, it makes you wonder if President Macron's request of his outgoing prime minister is kind of a little insanity, right? Asking him to kind of do the same thing over again and expecting different results. What's really, going on in France? Why is, what are the difficulties politically that this nation is trying to figure as it moves to its next chapter, if you will?
So look, since June of last year when Emmanuel Macron called snap elections to the National Parliament, we've ended up with a parliament essentially that has three main blocks. None of them can govern by themselves and they can't agree between each other to govern either. So what's been happening since then is that Emmanuel Macron's centrist group, along with the centre-right party, have been sort of getting some measures passed by getting other parties to abstain, particularly the centre-left Socialist Party. What the hope of this Prime Minister had been would be to bring on board the likes of that Socialist Party, perhaps convince them to abstain on key votes to allow them to get some sort of budget through. But actually the Socialists have been pretty intransigent in the past month, and that's really what's changed in the past month, is that they have insisted they want their budget plans, which involve austerity at a different pace to what's being proposed by the current government, but also things like a wealth tax proposed by the economist Gabriel Zucman. Essentially, nobody in the centre or the centre-right wants those things. Nobody can agree. The question is, within 48 hours, can they come up with what the Élysée Palace is calling a platform of stability to try and keep the, essentially, country ticking over and some sort of budget agreed before they start hitting a whole bunch of constitutional legal deadlines for getting that plan outlined?
Right, sometimes a second chance, and as we all in journalism know, deadlines can make things happen. We all live it every day. Hey, Stephen, last question, and I think it was something we were kicking around here. You've got a president, Emmanuel Macron. You have now an outgoing prime minister. I mean, who really has the power in France, and what do we need to understand here on the other side of the pond in terms of these two positions, and how significant is it when a prime minister leaves?
Look, the Prime Minister has historically in France been this pressure release valve that presidents have gotten rid of them when they wanted to reset their agendas. So we're not used to them being long-standing public figures that would last a whole 5 years in the way of a presidential term. But what's been happening in the past 2 years is sort of the extreme opposite of that, where prime ministers can't seem to get anything done because of the fractured nature of the parliament. So the power still very much lies with Emmanuel Macron. He is the man that can make one of the three decisions that he has in front of him.
Yeah.
You can sort of imagine that he dissolved the parliament the last time. That didn't work so well, so he doesn't want to go down that route again. He's hoping he can find somebody who can do a deal in the meantime so that he doesn't have to think about the more extreme options like him resigning early. His term still runs till 2027, so he still has that hold on power at least for now. But when you look at what's happening to French borrowing costs, you wonder as well how much influence the bond markets are going to be having on these decisions as well. As time gets tighter for a budget to be passed, we know investors are already pretty jittery. They got a shock today.
Right.
How long more will they be patient with France?
Certainly something you will be watching, we will be watching. Stephen Carroll, always good to check in with you. He's the host of Bloomberg Daybreak Europe, joining us from Paris. Now, political uncertainty, it's a theme, as you know, playing around the globe, changes all around the world. So too is the theme, though, a major theme that is this year, Tim, of the AI spend and the trade as well.
On that, semiconductor stocks soaring globally. In the U.S., the stock's up close to 4%, thanks largely to a surge in shares of AMD after it signed a deal with OpenAI that could generate tens of billions of dollars in revenue. Could being the operative word, some might say. AMD Chair, President, and CEO Lisa Su took some time out earlier today to talk to Bloomberg Tech hosts Ed Ludlow and Caroline Hyde.
This deal is a win for AMD, it's a win for OpenAI, and it's a win for our shareholders. And that's kind of the way we put this together. I have full confidence in OpenAI, Sam, Greg, Sarah. I mean, this is a massive opportunity for us. Right now, right here, it's about who has the most compute and how fast can we get it online. And we're committing to doing this together. And the fact is, as OpenAI buys chips, that's great for AMD. Our revenue goes up, our earnings go up. We expect that it will also be very, very accretive to our shareholders from day one.
Our AMD Chair, President, and CEO Lisa Su earlier with the BA Tech duo of Ed Ludlow and Caroline Hyde. Ed, of course, co-host of Bloomberg Tech, joining us now from San Francisco, where he is at OpenAI's Developer Day. Hey, Ed. Feels like we keep getting these big announcements. We're all getting a bit wary of them, what feels like this circular finance that we've talked with you about among those involved in the AI spend and build out. I heard Lisa Su say a win for AMD, a win for OpenAI, feels like a win for everybody. Is it really? Do we know for certain?
Well, she also said that she has full confidence in OpenAI. And the reason she said that is I had made the point to her that OpenAI still has to come up with the money for this. The difference between the OpenAI and AMD deal compared with the OpenAI NVIDIA deal is the structure. So it's almost the reverse. AMD will sign over stock to OpenAI only when they've met specific milestones, both operational and financial. So in the first instance, OpenAI has to fund, finance, and build 1 gigawatt of capacity. If they do that, AMD will give OpenAI some stock, or rather, technically, OpenAI has the right to buy a tranche of shares at a penny apiece. But the burden is still on them. And so the point I was making with Lisa is, have you seen into their books? Where are they going to get the money from to fund this, to bring it online?
Ed, could this be weird on the circular financing thing that, NVIDIA could have this deal that could be worth up to $100 billion with OpenAI? NVIDIA's invested $5 billion, or will invest $5 billion in Intel. And now you have, does that mean that NVIDIA, if they have OpenAI equity, then they're kind of an owner, or could be an owner of AMD?
Exactly. Yeah, it's much more fair to say that the NVIDIA OpenAI circumstance is circular financing, because NVIDIA commits to making a $100 billion investment into OpenAI. We actually don't know if that's in the form of cash or if it would be like chips in lieu of cash, but they do take OpenAI equity. In this case, AMD passes its own shares to OpenAI, but not capital. And so if you're going to build 6 gigawatts of capacity over many years, that is like the peak energy demand of like a major US city. We're talking lots of money up front in capital expenditure, and OpenAI has got to do that. Now, we posed many questions to both Lisa Su and OpenAI President Greg Brockman, who was sat next to her. Will it be debt? Will you issue more equity? Will you do something else? And Greg Brockman said, well, look at all those mechanisms. And so there are many more questions still that we don't have answers to.
Well, that's, I guess, my thing is, like, why don't these companies just do deals? I'll buy you chips, I'll do my build, I'll do this thing the way we do it normally, rather than all of these big announcements with a lot of questions that feel like we don't really know that there's anything there.
The market is simply focused, irrespective of the mechanism for financing, on the revenue growth that comes out the other side, particularly like software names. And so that was the justification that Greg Brockman made. He said the revenue will come. As you know, we've been writing a lot about the debt markets underpinning this, and debt investors feel the same way. All I'd say is there is also a technology story. You know, if you're going to build a data center and one of you is providing the chips and the others is going to use the capacity for software, it does make sense to partner and work together to make the engineering make sense.
If you're watching on Bloomberg TV or on YouTube or Bloomberg Originals, you've got this great graphic up that kind of helps us keep up. This is by no means exhaustive, but shows where some of the money has gone in recent months when it comes to this space. Again, by no means exhaustive. It's kind of like, Carol, we're like at a whiteboard, and we're kind of connecting pieces, because to keep these things straight is pretty difficult.
Well, yeah, I mean, that's the thing, Ed. We need to all be smart. We are smart, and, we keep seeing these deals coming at us. We hear people saying, well, when like a Meta reports and some other, the big hyperscalers, we do see the impact of the AI spend, but I do wonder if it's going to carry through our economy like everyone expects.
Well, in Meta's case, for example, they have a core legacy business that is advertising. And in most of the most recent quarters, they've demonstrated significant top-line growth and to a certain extent bottom-line growth, which is them saying, we invested in AI, AI made our ads better and more valuable, we're making more money from it. With ChatGPT, it's a lot harder to see that, but that's why here at Developer Day, it's really important. So the piece of news that came out from the keynote was they now have 800 million weekly users, active users of ChatGPT. The data point that market participants keep hitting me over the head with is, how many of those free users are converted to being paid subscribers? Because unless you have that data, we can't know what the top-line growth for OpenAI looks like. But look in the markets right now. I mean, you guys will have to tell me. I don't have a Bloomberg in front of me. But I saw a pool of about a dozen stocks that jumped in the last hour just because they got name-checked by OpenAI here today. And it's by association, the idea that if using ChatGPT, you can access third-party apps or third-party company offerings, everyone's going to make money. The market has a pretty simple logic in that respect.
Yeah, for those who do have Bloombergs in front of them, just type in NI movers into the Bloomberg terminal. Cisco Systems shares up to session high during OpenAI event. Figma shares extend gain to 16% after being mentioned at OpenAI event. Salesforce shares also jump up 2.6% during the OpenAI event. HubSpot, Zillow, TripAdvisor, Carol, all moving higher as a result of what was talked about at the OpenAI event.
And this goes back to Ed. You were trying to press Sue, and in your conversation, and
Mr.
I just
Brockman.
Right, and I just think about what are the big questions that still remain for you? You're reporting on these ins and outs. You're there at this event. We think about OpenAI a lot. We talk about ChatGPT a lot. Who's to say that there isn't some other, chat that comes in and takes over? I don't know. There's just a lot going on. What are the big questions that remain in a day when we get this big announcement? What wasn't answered for you still?
Yeah, I think the financing, I think in any corner of the Bloomberg newsroom, you've got to understand the debt markets, because look at the role that debt played in previous financial crisis, the dot-com bubble, what happened with Silicon Valley Bank, what happened in Asia earlier in the 2000s. I wasn't around then, but debt is a big underpinning here. And I think the signal that Greg Brockman gave us was they'll look at all mechanisms, including debt. So that's one part of it. On the other hand, I'm a technology journalist, and technology matters. OpenAI is going to use AMD chips for inference. Inference is where you run the model, not training. You are actually running people's queries and workloads. And if you look at all the movers that Tim listed today, what OpenAI was basically saying is ChatGPT is becoming an operating system. You use it for a number of functions, but you can also integrate it with all the other software you're using. And actually, that's a pretty clear answer to some of the questions about will revenue be generated from this. People use all of these platforms for hours each day, and the market seems to buy that if they can build the capacity of AMD in the timeline that they've said they will, they can actually start doing things of use.
Isn't it wild, though? Ryan Vlastelica has this great story, and the headline on it is OpenAI is fast becoming a whale in the stock market that it has shunned. I mean, OpenAI is not a publicly traded company, and yet Tim put down a bunch of names that are moving as a result of this this deal. Last week, we saw OpenAI sending shares of e-commerce companies like Shopify, Etsy, soaring after unveiling an instant buy option in ChatGPT. I mean, it is remarkable. The narrative, the market moves that are revolving around OpenAI, which again makes me say, what are we missing?
One of the things that I do each day, one of the things I do each day, and I know you guys do it as well, when I first log on to my Bloomberg, I do NI Globe Wrap, and I look at the markets wrap, because they always have a pretty good handle on the sentiment of the morning. And last Wednesday or Thursday, it was equity markets push higher on OpenAI enthusiasm. It was the confirmation of OpenAI's $500 billion valuation in the private markets that was driving sentiment in the public equity markets. And that was well sourced. It's based on lots of conversations with market participants. That is, again, a reflection of the names that Tim read out today. OpenAI, a private company, is driving all kinds of markets at the moment with what it is saying, and to an equal extent, the activity it is doing in both hardware and software.
Well, there's a lot of activity happening behind you, Ed, at the OpenAI Developer Day conference. In just about an hour, we're going to hear from you again. You're going to be speaking with OpenAI COO Brad Lightcap. You're going to have a conversation with him that I'm sure is going to touch on a lot of these themes. Before then, though, the reason all of these companies are moving, can you talk a little bit about this idea of OpenAI, or rather ChatGPT, becoming an operating system, and how these publicly traded third-party companies are starting to use the technology to make their software, to make whatever they're offering, the services, better?
Yeah, for those listening on radio and watching on TV that are familiar with software, what OpenAI announced was very simple: API access for several third parties to ChatGPT, and they demonstrated it on stage. So I use ChatGPT for hours each day, but the idea is you link it to, say, your Figma platform or your Spotify account even, and you can use some of the features of those platforms within ChatGPT. That was a sort of direct catalyst to those stocks moving. But what they also spoke about on stage, and Sam Altman did a pretty good job of kind of explaining it, is that ChatGPT is going to basically act much like the App Store does on OS, right, with Apple. You have a community of developers. Those are all the people that are here today, the thousands of them, that are building applications. And where will they publish those applications? Well, they'll be reviewed by OpenAI, and they will be integrated either as APIs or standalone applications within ChatGPT. That is how the economy around the Android Play Store, the Apple iOS Store works. You have people build software, and then you have a place, a library, a catalog where all of those things list. In some cases, you charge an ad hoc subscription to use those applications. And that's kind of what OpenAI is saying here that ChatGPT can be. Very interesting, although it's also contingent on the developer community stepping up and doing it.
Who needs to be worried? Alphabet? Like, who needs to be worried as we watch this unfold and everything seemed to kind of revolve around ChatGPT, OpenAI, and as you said, like, if this is one of the new big search engines going forward, I mean, Alphabet with its own search engines and making its own pivot, do they need to be worried, though?
Yeah, I mean, you guys, I actually should have checked, and I just didn't, but I don't know what Apple, Microsoft, or Alphabet did during that keynote. I mean, did they go down or up?
Alphabet's right now up about 2%, so it's near its highs of the session. And if we
Microsoft's up 2.4%.
Yeah, so like,
at its high of the session.
All in, right?
Yeah. I don't know the answer to that about whether they'd be worried. I mean, we've done a lot of reporting on OpenAI going its own way and having more independence from Microsoft. The original idea was that Microsoft would use OpenAI's underlying work in models to improve their own software capabilities. Of course, one of the recent developments is Microsoft is using Anthropic for its own in-house software applications and has looked at one of OpenAI's rivals. But you are right. It's about OpenAI wanting to do more across software. One of the other beneficiaries in the keynote was, I think, Salesforce. You can correct me, Tim, if I'm wrong. I saw Salesforce as one of the movers, ServiceNow as well. It's just another sales channel in some sense. You can access another person's software through ChatGPT, and the market, again, its logic is very simple. that it drives use, and that's good, when you have a partnership with OpenAI.
Salesforce shares up 3% right now, up as much as 4.2% during that keynote. Ed Ludlow, he's at OpenAI's Developer Day. We're going to be hearing from him in a little less than an hour. He's going to be sitting down with the COO of OpenAI, Brad Lightcap, just a little later, so stay tuned for that.
All right, everybody. It's the firm that executes about 35% of the U.S.-listed retail trading volume for equities. Today, the company's top execs sitting down with our own Bloomberg TV anchor and host of Leaders with Lacroix, Francine Lacroix. She is there at the Citadel Future of Global Markets Conference in downtown New York City. Francine, over to you. You've got a special guest.
We do have a special guest, Carol, and thank you so much. It was a great conference so far. We still have a couple of hours of it. Jim Esposito, thank you for joining us. This is, of course, a great conference. You're president of Citadel Securities. The conference has been going for a bit of time, but actually you joined from Goldman Sachs a year ago. What's it like now being part of a non-bank liquidity provider?
Okay, thank you for being with us today, Francine, at our Future of Global Markets Conference. I would say my one-year anniversary at Citadel Securities is noteworthy because what we're doing, I think, is in stark contrast to what the big banks do. When you think about Citadel Securities, in many ways, I think we're doing for trading what Amazon did for e-commerce. And what I mean by that is we're meeting our clients through 3 distinct channels in terms of doing transactions with them. On exchange, market making, we represent about 1/3 of the volume on the New York Stock Exchange. We're obviously doing a lot in retail markets where we take flow off the books of Robinhood, Charles Schwab, Interactive Brokers. We're 35% of retail volumes in this country. And more importantly, with this conference, we're directly covering institutions and we're trading their flow both via the electronic and voice channel. I'd point out the big banks are only represented in one of those 3 channels nowadays. So in many ways, when I talk about Amazon, we're creating a network liquidity effect that our clients are benefiting from.
Jim, when you look at asset classes or geographies, is there anything that you're not into that you want to get into or where you want to expand?
Yeah, in equities, we have a very significant position. We account for close to 25% of daily U.S. equity volume, so we are a big, important player in equity markets. On the other hand, in fixed income, we can definitely get a lot bigger. We're just scratching the surface right now in fixed income markets. We trade U.S. rates, U.S. investment grade credit. We're growing a European rate business. But in many ways, we're only scratching the surface in fixed income markets. That's definitely going to be a big part of our strategic build in years to come.
How much bigger? Do you have a target of how much market share you want or how quickly you want to grow?
Not yet. I would say we're trying to apply our skills and experience that made us so successful in equity markets to the fixed income markets. And we're taking our time. It's a very balanced and measured build at this moment. So there's no definitive plan as to what product will be rolled out next. Will it be high yield bonds, emerging markets, mortgage-backed securities? I don't think we're that far along. We want to master the products that we're currently trading, and then you'll see us grow from there.
Because there's quite a lot also on tokenization. Again, if you look at regulation, where do you see the best and biggest opportunity?
I think it's helpful. I think we're about to get a much more defined rule set around the trading of digital assets, and that will be important for the market at large. Definitely be important for Citadel Securities. So that would be a product expansion that you could expect to see us get more active in, assuming we get a defined rule set. At our conference today, we have the founders of Kalshi, who are big, making a market for event contracts. You can think of that as making positions or trades in terms of the probability of a political outcome or an economic release. We're not yet involved in event contracts, but there's no reason why we couldn't consider that in the future.
Jim, when you look at AI and computing, how does it change building out of Citadel Securities, but also hiring?
Yeah. I'd say first with our clients, the topic top of mind right now is clearly how can we support our clients to incorporate AI to either make them more operationally efficient or to make them better investors. And so we're spending a lot of time with our clients around that topic. In fact, as you saw, a major theme really underpinning this conference today is AI. We brought a lot of the best from the West Coast here to New York City. We had Jensen, the CEO of NVIDIA, this morning, and I think that opened up the minds of our clients in a very profound way. And so AI is top of mind for our clients. It's top of mind for us. And I'm pleased to report we are making some progress around that front.
What are clients asking today, actually, of Citadel Securities when it comes to AI, or what are they asking you to try and understand where AI goes next?
Yeah, I think generally, we think a lot about our own content, what differentiates us from the big banks. And so we don't want to be a Me Too bank in terms of the content that we provide to our clients. So we're doing maybe what you would expect us to do. We have differentiated skills around quantitative finance, around leveraging technology. Citadel Securities has been in business for 23 years. We were built as a technology-driven first organization. That's core to who we are. That's what we're leading with in our client conversations. And so how do they get more efficient? How do they get smarter and become better investors from leveraging and harnessing the power of AI?
Jim, we also talked about liquidity a little bit at the conference. I certainly had a conversation with Mario Draghi when we touched on that. You've in the past talked about, for example, teaming up with some of the smaller banks, right, to help your clients with some of, the orders there. What conversations have you had recently that point into that direction?
Yeah, this is no longer a strategic idea. It's actually now playing out. So we are attempting to provide mid-tier banks liquidity from Citadel Securities so they can better service their clients. I think there are probably 100 banks around the globe that want to service their end user client in markets, jurisdictions, in places that we're never going to touch. What are we great at? We're great at making markets, providing liquidity. And so if you're some captive client sitting in Latin America, you might want to get covered by a bank where you have a relationship with. We're never going to meet or touch that client, but we can provide the mid-tier bank the liquidity to better service their client. And we're starting to set up a whole mid-tier liquidity ecosystem to service these mid-tier banks. It's still early days, but we've seen signs where this model can work.
Yeah.
It serves the end user client well, and it's servicing and allowing those mid-tier banks to be much, much more competitive against larger players.
And how do you think about the markets in this kind of environment? So given the volatility that we've seen, will it stay like this, or does it die down from here until the end of the year and beyond?
Yeah, look, there's a lot of talk about, is the capital expenditure for AI running too high? People are starting to speculate, are we in some form of a bubble? I think a lot of the macro discussion in markets sort of correlates to what's going on and what we're talking about at this conference around AI. I think if we can have modest productivity gains in the real economy by better leveraging AI, market valuations look absolutely attractive. You don't need a big productivity boost in order to support these valuations. By the way, there's also a lot of talk about growing stocks of debt in developed countries. How do these countries service their debt? They can grow their way out of it with productivity gains. So I think that's the big bet. Don't think we're in a bubble right now. Reasonably confident we will get these productivity gains, but that's where the macro discussion really hinges right now.
Jim, thank you so much for your time today. That was Jim Esposito there, the president of Citadel Securities. With that, I'm going to send it back to you, and we'll have plenty more throughout the day here.
All right, looking forward to it. We will go back to Francine Lacroix there at the Citadel Future of Global Markets Conference, in fact, in just a moment. In the meantime, quick check on the trade on this Monday as we kick off a new trading week. And we've got stocks pretty much hovering near their best levels of the session, so up just about 0.5% on the S&P 500. We're looking at an S&P up for a 7th straight day, driven by gains in mega caps and also the semiconductor sector. I mean, Tim, we are seeing really some outperformance in semiconductor semis today, with most names in the stocks higher in today's session.
Yeah, I'm looking at the bond market too, where we're seeing yields higher across the curve, especially at the long end, with a 30-year up about 5 basis points. The 10-year right now at 4.16, up 4 basis points today, Carol.
Yeah, and the S&P, just going back to it and what we are seeing in terms of the equity side of things, just fascinating. I mean, AMD is up about 26% in today's session, so that's your number one gainer in both the S&P 500, NASDAQ 100. I mentioned the stocks. We're looking at 24 of the 30 names actually gaining ground in the session, and I'm looking at the stocks right now up about 3.7% in today's trade, off its highs, but nonetheless, some real outperformance this year, folks. You're looking at a stocks that is up nearly 40% here in 2025, so easily outperformance. S&P right now up to date, year to date, up about 15%.
As you mentioned, though, not everything in the S&P 500 is higher, Carol. The second worst performer on a percentage basis today is Verizon. A surprise announcement coming from the board earlier today that Hans Vestberg will step aside as CEO. He's going to stay on for another year as an advisor. In his place, the former CEO of PayPal coming in, Dan Schulman. Verizon shares down about 4.7% right now. Vestberg, as I mentioned, will stay on to help ensure a smooth transition in leadership, including the integration of Frontier Communications. The company's been losing subscribers, though, as other companies have been gaining them.
Listen, I look at us, and we've bounced around from different cell carriers. I think we were with Verizon at one point, full transparency, but bouncing around in terms of better deals or different deals. So I think there's a lot of movement when it comes to subscribers and, you know, maybe more options that are out there. Having said that, we talked about this rally thanks to chipmakers, so very much some bullish sentiment when you look at how the trade has kicked off on this Monday, certainly here in the United States, Tim.
Well, let's head back to the Citadel Future of Global Markets conference underway in downtown New York City. Let's get back to Francine Lacroix. She's with Constantine Buhler, general partner at Sequoia Capital. Hey, Francine.
Hello, I'm so excited to speak to Constantine, and of course it's all about AI. He also had a great conversation with Jensen Huang of NVIDIA. Constantine, thank you for joining us. Everyone's talking about AI. Everyone's talking about also this deal between OpenAI and AMD. Your first thoughts?
Well, it's an exciting new partnership. We were with Jensen Huang this morning, and the relationship between NVIDIA and OpenAI goes back a long way. In fact, we were talking about how their very first AI factory, the DGX-1, was delivered to OpenAI back in 2016 to Elon Musk, actually at the Sequoia offices. And so it's just a reminder that all of this AI revolution is powered by really impressive hardware.
You're very focused on agentic AI. Where are the biggest opportunities, and why agentic AI?
Of course. So agentic AI is AI that doesn't just make a decision, it actually takes an action on it. And we are now in the moment where it's really starting to make a difference in workflows. I'll give a couple examples. One is actually for AI security. We're investors in a company called Expo that started off trying to find vulnerabilities in software and now ranks #1 in the world on global vulnerability leaderboards for finding vulnerabilities and fixing them for the good guys. Now, another example.
How do you know it's the good guys?
Well, we only actually service companies that have shown that it is that we're finding vulnerabilities on their own platforms. So it's for companies that have been approved and gone through the vetting.
And the second, and you were saying the second way to do it?
So another example is our portfolio company, Harvey, which is actually helping lawyers to actually complete their work faster. They're now at over 700 customers in 58 countries. But just to make it very real, my sister is a general counsel at a tech company, and she texted me a couple weekends ago, and she said, Harvey just saved my Friday night. And I said, what do you mean? She said, well, I got a contract from my CEO. Usually it would take 3.5 hours to turn it over. Used Harvey, got it done in 30 minutes. And so that's us actually feeling AI and agentic AI finishing workflows in the real world.
But Constantine, I mean, things are getting competitive, right? So how do you back the right company?
So we always look at the team. And at the end of the day, especially for early stage investing, we're looking for the founders that are going to endure and persist through ups and downs. You know, we know that AI is going to have its moments of excitement, but also moments of difficulty, and we look at the long duration. And in the long duration, we think it's undervalued still.
What are the other impacts that actually this could have on the economy? But also, there's so much spend. How are you sure that whatever you spend on AI, you get the returns in a reasonable time frame?
Sure. So we're here at the Citadel Securities Conference with a lot of leading investors, and they're all talking about what's the return on that AI. And that's what 2026 is going to be all about. How do we actually see that return? And there's a few engines that are going to power that. The first is new monetization strategies. To date, most of the monetization of AI has been subscription revenue. You pay for a subscription and you get a product. Well, there's a couple more ways that companies are now monetizing. One is through usage. So the more you use the product, the more you pay, kind of like a real service. The other is actually through e-commerce. So last week, OpenAI announced that you can actually complete entire purchases on ChatGPT. So you can actually do research for the product you want to buy and buy it through Shopify or Etsy completely on the AI platform. That's something we're excited about. We wrote a thesis that this is going to become an important way to do commerce, and we believe that will continue to be. And the other one is new modalities. So everybody has used AI for text-based modalities. You talk to the AI and it responds to you in text. We've seen voice hit the mainstream. Voice has gotten so good that with companies like Sierra, which is a portfolio company that does customer support, you can have entire conversations with the AI flawlessly, or companies like Listen Labs that does market research incredibly well with voice. And then in 2026, we'll see video start to really take center stage. We obviously have seen Sora and Nano Banana, and those perform incredibly well. It's just the beginning for them.
Talk to me a little bit about the partnership that you have with Citadel Securities. I mean, this was a large amount of money from Sequoia and Citadel. Is this a blueprint of more of these kind of agreements?
Of course. So we were the first outside investors in Citadel Securities in 2021. We're proud to have invested $1 billion in the business. And a lot of the reason we invested in the company was the technology platform that they operate on and have built. And this technology platform has changed an entire industry. So if you think back 30, 40 years, the way that securities were traded was really in-person services. Two people would find a price and then transact in person. And they, especially Ken, had a vision of the future in which you're going to actually be able to discover that price using algorithms, predictive algorithms, and then actually be able to complete that digitally. And we've actually seen that become the way. The vast majority of equities are now traded digitally, and it's just the beginning. So only 8% of fixed income is traded digitally. There's another 92% to go. We see big expanding markets. And frankly, it also reminds us of the AI revolution and the agentic revolution, where it starts off manual and then you get AI to make a prediction, and then like an agent, you actually complete it digitally.
But Constantine, I mean, this is basically an industry being disrupted, right? Is there still one industry that we haven't thought about that you're looking at that will be significantly disrupted?
There always is an industry for disruption, but also for innovation. We want to make people's lives better. I think an industry that could have a lot of innovation and would help everyone is healthcare. Why do I say that? Well, there's a lot of spend in healthcare. It's incredibly important, and we're not all getting the services that we could. So my wife is a surgeon in healthcare. She has, from her health system, hundreds of patients that could come through and get those procedures. She still spends a lot of time writing notes and actually doing tasks that an AI can help with. In fact, now an AI is helping. So her health system, she uses open evidence, which is now used by 40% of physicians. She uses a bridge, which does transcription, and that actually helps her complete that busy work faster so she can spend more time with patients. So I'm very hopeful that one of the areas that AI helps with is healthcare.
Constantine, thank you so much for your time today. That's Constantine Buehler there from Sequoia. With that, I'm going to send it back to you, and of course, we'll have plenty more throughout the day, today and tomorrow, from the Citadel Securities Conference.
Thanks so much, Francine. I do want to remind everybody, 4:30 p.m. Wall Street time, Citadel founder Ken Griffin sitting down for an extended conversation with Francine. We are going to bring it to you live on Bloomberg Radio on Bloomberg Business Week Daily.
All right, as you know, obviously talking a lot about finance, as we do here regularly at Bloomberg, which also means the intersection of finance, investors, and sport in a big way. Rick Welts has been in the job as Chief Executive Officer of the Dallas Mavericks for a little more than 9 months. He took over as CEO of the NBA franchise. That was on January 1st of this year, following St. Marshall's nearly 7-year tenure. His career spans nearly 50 years in sports and entertainment. He has held roles as president and COO of the Golden State Warriors, president of the NBA's Phoenix Suns, the WNBA's Phoenix Mercury, and the NBA's senior vice president, chief marketing officer, and also president of NBA Properties. To say he has seen a lot is not even fair. Let's head to the Bloomberg News Bureau in Dallas. With us is Rick Welts, CEO of the Dallas Mavericks, and Bloomberg News Texas Bureau Chief Julie Fine, who watches and reports and talks about this space so much. Rick, it's great to have you there in Dallas with Julie. I just want to start with that intersection of business and sports, investors and sports. 20 minutes ago, we were talking with Jim Esposito, president of Citadel Securities. Every day, it seems, or every week, we have a story about Apollo, Ares, different investment firms, the money in sports. You've been in the world for a long time, seen the rise of money in sports and the rise of financial firms in sports. Is this a good thing in your view?
Well, it's not only a good thing, I think it's an essential thing. Really, when you look at the valuations of franchises today, there's really a smaller and smaller universe of individuals who would either choose to or have the ability to purchase a Major League Sports franchise today. So private equity's involvement is going to be something that's going to be absolutely essential going forward.
You know, Rick, when you talk about the future of sports, I do want to get in with you the streaming rights. You know, Dallas Mavericks, they have Mavs Television, and you actually are one of the few that also have a local deal, so you can see all the games here as well. But what do you see as the future of how we watch sports?
Well, it's unfolding right now. The NBA's entering into a brand new set of broadcast agreements for this season. So we're adding Peacock and NBC. We're adding Amazon Prime. And we have to go where our viewers are watching us, right? And especially our younger viewers today who are just accustomed to using streaming as their primary platform in consuming sports.
You know, let's talk a little bit about your viewers and your fans. They had quite a shock last year with the trade of Luka Doncic. You start tonight, you kick off your preseason. Do you feel that you really managed to bridge that gap with them?
Well, you know, this is my favorite time of year, right? Because there's optimism. As I checked the standings this morning, we're undefeated. We haven't played a game. And every team feels the same way, right? But we had, you know, that trade on February 1st. And then this is such a crazy industry, right? 100 days later on May 12th, with a 1.8% chance of winning the NBA draft lottery, somehow we came away with the #1 pick and with that Cooper flag. And that's what's starting tonight, a new era of Dallas Mavericks basketball.
You know, when you talk about the finances of sports, last year you did lose some sponsors and there were some season ticket holders that were, you know, very upset about this trade. But where did you land now?
You know, sports is such a wonderful thing because it can change on a dime, and it did on May 12th with the drafting of Cooper Flag. You know, the most decorated 18-year-old player in the history of basketball who plays his first game for the Mavericks tonight. And really everything changes. The optimism going into this season changed the business environment completely. We're third in the league in new season ticket sales. We'll finish this year ahead in revenue and season ticket sales, which, you know, I wasn't quite sure was going to happen on February 1st.
So ahead of the year with season ticket sales now, but on the business question and on the sponsors returning to the organization, can you give us some numbers behind sponsorships or how Flag has affected the way that companies are interested in partnering with the Mavs?
Well, your second point is really spot on because the interest around Cooper Flag and his potential all-star career in the NBA. But here in Dallas, it's combined with the optimism and energy around building a new arena and entertainment district to replace American Airlines Center where we played for the past 25 years. So it's a wonderful combination from a business standpoint because we have the optimism of the team, but also a really exciting prospect about what we're going to be building in Dallas, which will be the future of our franchise.
Well, that's where we want to go too in terms of what you are building in terms of a new arena. Mavs lease is up in 2031, Rick. You share an arena with the Dallas Stars, but you've made it clear that the next arena that you have will be a basketball venue. I think the last time that we all caught up with you at Bloomberg, you said you had narrowed it down to several sites. So what can you tell us? Or feel free to announce where you guys are going to do it. We would love to know.
I really, really wish I could do that. We're hoping by the end of the first quarter of 26 that we're going to have identified a site. Listen, our commitment, we've been very clear. We want to be in the city of Dallas, and the city has been a great partner to this point in helping us identify sites. Not easy to do because we're looking for a minimum of 50 acres to build the arena and an entertainment district. So not a lot of 50-acre parcels that you can even consider in Dallas. But we have narrowed it down, and we're doing our due diligence on those. Very complicated project. These are very complicated things to get done. But again, we're hoping by the end of the first quarter next year to be able to announce where we're going to be.
Of course, the team owners, the Adelson family, they've made no secret they would like to see casino gambling in Texas. You follow the Texas legislature. I follow the Texas legislature. That did not get anywhere this year. Does that affect really the plans and what's going to be next for the stadium?
No, as we look forward, we don't think the prospects for that happening in Texas anytime soon are very likely. So the project that we're going to build has no casino component to it. We're talking about hotels, we're talking about retail, we're talking about restaurants, we're talking about big gathering places and an arena. So there's no casino component.
Something you don't see that often is a team opening their preseason not in their arena. You will be playing tonight in Dickies in Fort Worth, a much smaller arena, and that's really where people will get their first vision of Cooper Flag. You know, can you talk about that decision and what you're hoping comes out of the evening?
Yeah, well, it was really in COVID when the commitment was made to play this game. The fact that it's going to be Cooper's first game in a Mavericks uniform in our home market, and we think of Dallas-Fort Worth as our home market. I think Fort Worth looks at the Mavericks as their NBA team, so I think it's going to be a super exciting night. It's going to be the first time we'll get to see Cooper, and I think there's a big buzz about that.
I think there's people that are interested in seeing Cooper globally. Speaking of global sports, the World Cup will be holding 9 matches in Dallas. That's the most in any city in North America. You know, what does that do for this city in terms, this whole area, in terms of being branded really a sports town?
I don't think people yet realize the impact this is going to have. This is the whole world is going to be focused on this. And I'm a huge soccer fan, you know, maybe this far behind NBA basketball. I own an ownership interest in a couple soccer clubs. So I think what's going to unfold here is really going to put Dallas on the map as a soccer mecca.
Hey, I want to ask a little bit. Julie asked about gambling on site and the potential for that. Obviously, that's not going to happen anytime soon. What about those sports gaming and the way that gaming and the ability for people to actually wager on these games has attracted or increased viewership, has attracted or increased engagement? How do you measure that at the Mavs organization?
Well, you know, I think we're all tracking it and watching this unfold in real time because, you know, the argument, you know, Adam Silver was really the first of the commissioners to come out in favor of it and really talking about the level of engagement that it does provide and how people want to consume our games now. So I think it's been nothing but positive at this point. Listen, it's not, the story hasn't been written yet on how this will completely play out. But I think it's been nothing but additive in terms of people's interest in watching games and staying and watching more than they have historically in the past.
You mentioned Adam Silver. CBS News reporting last week as the NBA continues to grow its presence overseas, Rick, Silver outlining a vision, a bold vision for the future that could see teams from other continents playing U.S.-based franchises in the regular season or postseason. What do you think of that?
I think it's the most exciting time in NBA history, and I think the prospect of that, for me, I was hired in 1982 by David Stern, who was commissioner for the NBA for 30 years. I was the 35th employee of the NBA league office, and he's not with us anymore, but this would really be the culmination of that dream, the path that we went on to really understand basketball is the only other sport played worldwide other than soccer. And the NBA is a very unique league where all the best basketball players in the world play in one league. The idea that we could have another league in Europe, what we're doing in Africa today with